Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
I love that song. Good morning, you knuckleheads. Happy Wednesday to you both.
I love squad goals. I love that we're all wearing like olive green.
It's a season.
Fall. It's here.
Yes.
Oh, yeah, it's here.
We should do this more often. We should coordinate.
We should. In fact, I think the clocks fall back soon, don't they?
I think
Sunday, right?
they sent an email. We don't
They
even
did
know.
send an email.
Our company sends an email. That's the only way that I know. I think
Well, it's soon.
maybe 2 weeks next week.
Oof.
November, first week in November.
That's
Yeah.
mushroom season here in Chicago. You wake up when it's dark. You go home when it's dark.
Yeah.
That's
Yeah.
all we have to look forward to now.
Says
the pool.
half day over here.
Yeah, that's true.
Yeah.
Yeah, that's true.
You mean when you get out of the sauna, it's
Yes.
after your afternoon sauna
Well,
session.
your lights, your eyes have to adjust.
Yeah,
to the
you get,
lights
like,
that you have
yeah.
on the Sonic.
Do you
Yeah,
go home
yeah.
and take a nap? That's what I would do. I'm being so for real. So like you leave here like
When you guys are my age and you've put in as many miles as I have, I hope that you can do the same thing. I'm going to give you a quote that somebody said.
I want that for you. I want you to go home and take a nap.
I don't nap. I can't nap. I don't nap.
You can't nap? You're not a napper? I'm a napper.
I fell asleep in the dentist office yesterday. I mean, if that's a nap.
Like in the chair?
No, like at 5 o'clock. I had like a 5 o'clock teeth cleaning.
Oh.
I got there like 15 minutes early because I thought maybe I could, get in a little bit earlier,
Yeah.
get out of there earlier. So I just sat there and then I must have dozed off. I'm getting like.
Oh my God, you're
I'm
the
getting like my father-in-law, but he was 85.
yeah.
Sure. Well,
63.
The nice receptionist come up and be like, "Sir."
No, from the doorway she said, "Wake up, Sleeping Beauty."
that's funny.
So that's happening. So I got that going for
Oh,
me.
great.
That's good.
Yeah, it's a little early.
Just, you know what? You're looking in a mirror. I mean, she can make fun of me, but
I
you're
know.
looking in the mirror.
I know. I know.
This
Yeah.
is your destiny. Unless you do something like right now to reverse it.
Listen, when I talk to Gus and he's sitting next to me, I think that to myself all the time. I'm like, oh my God, this is what it was like when I, talking with you.
Yep.
I'm turning into you slowly.
I know. It happens. You better start doing something about it real quick.
Yeah.
Who you turning into, your mom or your dad?
Me? I'm a little bit of both. I'm a mix of both of my parents.
Yeah, it's because you're an only child.
Yeah.
You had all their attention from both of them.
Yeah.
You got a little bit from each of them.
Yeah.
Makes sense.
But that's fine.
Yeah. My dad wasn't around, so I didn't get too much.
Okay. All right. Nope. Here we go. Nikki, how was your evening?
It's good. Didn't really do much.
Nothing.
That's it, huh?
You don't turn up on
No
a
more
Tuesday?
pickleball, no more. Golf is too cold, getting too cold for that. You can't find your balls where you hit them anyway with all the leaves on the ground.
They have all those indoor
With my new
simulator
clubs,
places.
I go out to Des Plaines.
Oh yeah, there's a
Des Plaines
golf dome
Center.
too. Yeah,
Yeah.
there's a whole bunch of
That's where I met Thomas, our intern,
Oh yeah.
Yes.
for the second time. That was before he was our intern.
Yeah.
Way back when he was just a little. He wasn't as,
He came in hot.
He came in hot. He was a little more reserved, kind.
I adore him. He's such a funny kid.
He is. He's quite the character.
But did you see they're setting up like when I drive in, so I come off of the Dan Ryan, and I go west on Lake, but they're building like a outdoor Oktoberfest right there on I don't know if you've seen it with like all the lights and all the.
Is it going to be November soon?
I don't do that.
No, but it's October. Well,
They have that one that's like by the salt shed too. That's like a year round.
it's like a pop
That
up.
one on Lake Street too? Like, isn't there one on Lake Street?
That's
well,
what they
that's the
said.
pickleball place.
Oh, it's
it's
a
on.
pickleball place.
Yeah.
Oh.
Yeah, they convert that into like a.
Yeah, it's a seasonal thing, and then it'll be a Santa's Village thing, and
yes. And
Yeah.
You go, you take your pictures. They got the sign up.
look, you're in a relationship, Mr. Harvest Bowl. I thought you would like
but I'm
this.
Your harvest.
But I'm also turning into my father, where I don't want. To
Oh, you don't
do
like crowds.
Kitschy stuff.
Oh, I
anymore,
see.
You know,
I gotcha.
like, I don't need to go to the fake pumpkin patch.
But at least it's in the city. Like, at least you're not driving for hours to go.
That's true.
That's true. Apple picking or to the pumpkin patch. It's just
like walk home from there too.
Right. It's literally under the L tracks.
You go in there. It's like a $25 ticket. You get a $15. What's the warm wine?
Oh, not the cider, but like
the
grog or whatever they call it.
They do it at the Christmas thing.
yeah, just the mulled wine.
Mulled wine.
The mulled wine.
Yeah, you got one of those things. I was going to get that.
I thought you were going to be like, Gewürztraminer.
No.
Just a German wine, that's all.
Is that how you say it?
Gewürztraminer. Yeah.
That's the one.
I thought you were just like making that up.
No, it's Gewürztraminer. It's an actual. It's a
she's
sweet.
Fluent
it's a sweet
German too, but that's the tall, skinny bottles.
You're like Amon-Ra St. Brown.
yes.
You know that?
I do. I get it. I see it on Instagram, and I was like, yeah.
He does
he speaks German really well. Yeah.
I think he was like either born there or like adopted.
Yeah, or like one of his parents.
Yeah.
I don't know his whole backstory, but.
Yeah, he does after the games, he speaks with like a German reporter in German.
Pretty cool.
And they like broadcast it there. It's pretty sweet.
Yeah.
Did you ever learn a language in school?
I don't have that brain. I don't have that.
You got that from your father.
Yes.
By the way.
No, I just don't have that brain. Math, great.
But
Language
you took it in
is
school,
not
right? You must have taken something.
I did 2 years of Spanish, and then in college I took Swahili.
Swahili.
Yeah.
Oh, what's up, my brother?
I could not. It was all the football players. It was known as the easiest class, and if you needed
Swahili was the
you
easiest
needed one
class?
elective of a language, and that was like the class where it was an automatic A. It was all the football players. It was.
You went to Kansas.
You only had to be better than the worst football player, so you were good. I mean, you were the curve. You were the bar that they set the curve by.
You went to Kansas. Some people don't know that, right?
Yes.
I'm learning so much about my son by having him on the show. Yeah, so Swahili.
Well, you were footing the bill for the Swahili, so that's on you.
Did you learn? Give me a word. I mean, I learned chiude la porta in Italian. Close the door.
I don't remember anything.
Nothing.
I literally don't remember.
You don't remember
not
one?
a single one. Not a single one.
Like hello, beautiful, or something like that. Nothing in Swahili. Nothing.
No, I don't remember anything.
That's okay.
Yeah.
All right.
Yeah. But it was
You retained absolutely zero.
Absolutely zero.
Why'd you go?
Because I literally had to get my silly degree that
Yeah, but
got
you
me
can't
here.
even say like my name. Like that's they teach you in all that like je m'appelle,
It was not that kind of class.
Oh yeah.
It was not that kind of class.
You didn't have names in the class?
It was
Usually
not.
they would say like Antonio, Nicolas.
It was one of those like automatic A's. You didn't even have to show up. Like it
Wow.
was. Yes.
It's kind of like the varsity blues scandal there, kind of. Where no, I'm just kidding.
What position did you play in football? I didn't know you played on the team.
I didn't. I made friends with them. So
it was good friends to have, I'm sure.
Yeah.
It's a good time. Would you want to learn Italian? Like
a lot of things. I was telling this to my other son last night. Yeah, I would like a lot of things. You know what I mean?
But if you had to pick a language, would it be Italian? Like I don't want to assume. Like is that racist?
I would like, no, I don't think it is. No, Italian, Spanish. Yeah, something that I think probably Spanish before Italian, just because I think I would use it a lot more.
Oh well, you're best friends with a Mexican billionaire, so yeah, of course. You need it.
There we go. I can know when he was talking about me.
Right, yeah.
That's the only reason why I want to learn Spanish, for sure.
That's.
Yeah, I would think.
But now though, I think it's so interesting that we're at like this weird crossroads because literally the new Apple EarPods they could translate language. So I mean, is learning a language, is that obsolete?
Right. I can't wait to get a more than an afternoon off so I can go to some place where they speak a language and actually use that. I want to use that.
Yeah.
I want to. Yeah, well, I think that's like amazing. I mean, being able to understand, almost everything everybody's saying, that's got to be...
Sure.
That's got to be outstanding.
Sure.
Yeah.
I just want to know who the cab drivers are talking to on the phone at like 3 a.m., like all hours of the day. When they're driving you to O'Hare.
They're probably not talking to anyone. They're probably talking to themselves.
But I want to know. So I put my earpods in.
That's good. That's good.
Anyway. Figure it out. All right.
Stuff. Good
Well, you're headed to Charlotte not tomorrow.
We are. Well, I'm leaving tomorrow.
Yeah, you are leaving
afternoon.
tomorrow.
I got a
Okay.
1 o'clock flight or something like that. Yeah. So.
Are you going to get some barbecue? Are you a Carolina sauce kind of guy?
Carolina sauce is more like is that a
vinegar?
I think it's mustard
More
based.
like
yeah.
a mustard.
Oh, it's not the vinegar one?
I think Carolina.
Where's vinegar?
Mustard.
Is mustard.
Aust-
Someone can write in. Ask the chat.
Yeah.
The chat will know. But I think Carolina's mustard based.
More
but
mustard.
I don't know.
I mean, I like all barbecue. So
Yeah,
it doesn't
barbecue's
matter.
barbecue.
Carolina does the white sauce too.
Alabama does the white sauce.
Is that out?
You like the white sauce.
It's Alabama does the white sauce.
Uh-huh.
I'm from the South, but yeah.
But it's like a spicy white sauce. Kind of.
I don't think it's that spicy.
What the hell were you in Alabama? I'm learning so much.
I've never been to Alabama.
Oh, okay.
No.
All right. I didn't think so.
Yeah.
I was like,
I like to eat, so but I'm
Yeah.
getting them mixed up a little bit.
Yeah.
are you? It happens,
Yeah.
son. You see, you
All right.
are really turning into me.
Yeah.
It's sad but true.
But yeah, no, North Carolina, it's so pretty, and you
Yeah.
get barbecue and
Yeah.
a bunch of.
No, I'm looking forward to it. I've been there before. I'm looking forward to going back.
Oh, to Charlotte? I've never been to Charlotte. I've been to Asheville, but I've never been to
I
Charlotte.
loved it. Good weather. I mean, mild. you
Sure.
know. Yeah, I like it. Yep. All good. All good. Can't wait. We've got a full house, but we still got a couple more tickets. So please go to tastylive.com/events and sign up there. You can sign up for Austin. You can sign up for the whiteboard tour. You can sign up for everything we do right there. It's all free.
It's free. It's
There you go.
free. There
October
you go.
24th. That's this weekend. Right
Yeah.
now. Doors open at 8. The feedback I get from people, the show is great and everything else like that. Tom woos them and it's fun. He's a good showman.
Amazing.
On stage, yeah, some would say he was gifted. I'm not one of them, but some would say he is. But it's the hour before and the hour after that, we get to talk to people. It's fun. It's good to press the flesh and get to meet everybody that, you don't see through the camera. So it's
Because it's so close, will you and Tom be wearing costumes? It's so close to Halloween.
I'm really sad because I'm going to be flying out to San Diego for.
You can wear them on the planes. We used to do that. It would be great. You would.
Oh yeah, I could do an airport type skit. Like I could wear my Tom outfit. I'll
Anything.
shuffle through the airport.
Do it. I will
Mike.
post it.
Yeah.
Yes.
I'll have Mike. Okay. Let me
Yeah.
think about that. Good. I don't want to spoil it.
Yeah.
I'm gonna be a bear.
I was gonna say, I have cat ears if you want to borrow my cat ears.
No. But for my grandson, I'm gonna be a bear this year. I got a zip up bear outfit to wear from.
Slutty bear?
I would have no clothes on underneath the jumpsuit.
Wow. No, you Winnie the Pooh it, so it's just the top half.
No, just a normal bear. He's not even 2 yet.
Oh.
But yes, I'm gonna be a bear. Mama and me are gonna be bears. So.
And wait, what
Nice.
is the baby gonna be?
I don't know. I think he has like 3 or 4 outfits.
So you're a furry.
I'm a furry.
Yeah.
Yes,
So you're a
I'm
furry. You're whipping out the bear costume.
I'm whipping out the furry.
Yeah. You're like, oh yeah, I got this bear costume in the closet. I'll just wear that one.
Hey, their culture is not your costume.
What are you gonna be?
For Halloween?
Yeah.
I'm too old to get
Oh, you used
dressed
to
up
come up
for
with some good
Halloween.
ones.
I know, but it's on a Friday, so I don't think we'll be in studio.
What was your? That's true. What was your theta? You did one when you were.
It was Optimus Prime interest rates once.
Yes.
and,
Yeah. That was good.
It's That's
Some
pretty
interest
good.
rates were moving
Good.
all over the
Yeah.
place. Yeah, it was pretty good.
I love Halloween though, but just the fun parts. I don't like haunted houses or scary movies. I can't deal with that. Are you a scary movie guy?
I actually did watch 28 Years Later
Oh,
over the weekend.
how was that?
Scary movie. It was great.
Yeah,
Great,
real gruesome.
Did you watch the first one in like the early
I
2000s?
won't watch any scary
No?
movie. No.
It's kind of a
Halloween used to
classic.
be your favorite when you were a kid. Your favorite
Yeah.
holiday.
Yeah, I like a scary movie. Get some snacks, watch a scary movie. It's fun.
I saw Instagram or TikTok or whatever it is, TikTok on Instagram. The best thing that they've ever done was they brought back not the best thing they've ever done, but for me on my For You page, is that what it's called?
Yeah, your For You
Yeah.
page.
For
Yeah.
You page.
After you scroll past all the other stuff that you can't really talk about.
Sure,
Yeah.
sure.
Nope.
It's very embarrassing when I'm
nope.
scrolling and your 15-year-old brother's looking at me like this.
Wow.
I got to.
Oh, I've seen that one too.
I follow her too.
Yeah.
I got to the like Halloween from the early 80s and the late 70s where they had like shaving cream and the police officers were taking the shaving cream.
Oh, yeah.
Kids in
They wouldn't even
Brooklyn.
let us buy shaving cream like the week before Halloween. If you went to CVS and you were like under a certain age, you couldn't buy silly string or shaving cream or any of
Stupid
that.
police state.
Yeah, right. Kids had eggs. We got eggs, you know.
Yeah.
It was really brought me back to a great moment.
Yeah,
we
that
used
was
to.
fun.
So for those kids who might be listening while their parents are watching the show or something in the background, you've got to get an aerosol top to your shaving cream. So
That's how you spray it.
spray for you take that off. And you take off the shaving cream top and you put the aerosol top on.
And then you launch
It'll
it.
shoot out 25, 30
What are
feet.
you doing?
Yeah.
It's the best. It's the best.
He taught me that 30 years ago.
Cool.
Yeah.
Cool. Mass destruction.
Yeah.
And a sock with flour in it, so you can go around beating everybody with it. And you leave like.
Why are you beating people with a sock
That's
filled
what you
with
did.
flour?
I didn't do that one. I didn't do that
It was
one.
the greatest.
Yeah.
It was the greatest thing in the entire world. It was
Hooligans.
So much.
That was.
Hooligans, all of you.
And I would save my eggs for like 6 months. I would save up and buy eggs and then leave them in this little area underneath my kind of porch. So for like
So they get rotten.
6-8 months. Yeah. Anyway.
See, but now,
You
like,
have to prepare for Halloween.
now it's all just like trunk or treats, and I'm just like,
Yeah.
I don't
That's
know.
where like all us suburban
Kids-
people,
yeah,
we
kids
line
are
up
soft.
and we open up
Yeah,
our
you open up your
trunks
trunk and, yeah.
kids come by and get keys. Nah, man, you can't do that. You gotta you gotta put the work in.
Yeah.
And that's the problem. Kids aren't putting the work in. If they have to walk through
Yeah.
all of those blocks and everything like that and have the
Yeah.
bigger kids steal their candy, it's a rite of
Yeah.
passage.
Then there was one.
Find the house with full size bars. What's up?
And then me and my friends were like teenagers, and we always had we would make like the dummies and have them there.
Yeah. Because my
So-
mom did it with me. We would always like stuff like,
Yeah.
his old clothes
With all
the
the leaves
Yeah,
and stuff.
sure.
Yeah, and then we would be fully dressed up, and I'd put the bowl of candy like on my lap and sit in one of the chairs and like pretend to be
Oh, and then like scare the
and
kids.
scare the shit out of those little kids as they would come. It was great.
That's terrible.
But that's character building.
Memories.
No,
That's character building.
terrible.
That's character building.
Come on.
Well,
I
you
Kid
would
hasn't peed himself by
You'd
11.
only do it.
hate
You'd only do
that.
it if they were a little aggressive with the
Oh,
candy.
okay.
You take the right amount of candy, and you're
No,
okay. You're
you
safe.
did it to everyone. No, you did it to
I
everyone.
did do it. Probably everybody. But,
You didn't.
You know,
there was no
but that was the-
rewards for being
Yeah.
kind.
Yeah.
But no kid was kind anyway. If you had a bowl out there,
Oh, it's
first
gone.
kids that came up there, especially if they were in a group of 5 or 7, they got
Monsters.
group muscles. Well, you get beer muscles, they get like group muscles.
Yeah.
Because they,
Yeah, but in this economy, I don't
This
think
economy?
anyone's just leaving out a bowl of candy.
I'm leaving out full size.
Like,
I'm going to show off. That's it. I'm going to.
You're just gonna leave out full- you're gonna be-
bowl. No, I have my whole thing. So Nick's been there. So I put out a table. I got my little guys out and stuff like that. So when they walk by, they make their noise and stuff like that. And I put out a table, and I put out all the different candy that I have, the full size bars and stuff that I have, and I tell them only one. And then they all take one, and they.
No, but then I'm saying unattended. Like no one's.
No,
gonna
I don't
just
do
be
unattended.
leaving-
I don't-
Right. No one's just going to be leaving out
I
candy.
say only
and
one,
shit.
and there's always the kid that like takes something like gummy and then puts it back, and then takes a chocolate thing and then takes it back, and then puts a gummy, takes it back, and I go, you can have both. And he's like, I can. Like, and that kid makes his day. So that's what I always do.
Little peanuts.
I smoke a cigar and get drunk, and then by the end of the day, I'm just like, please, just take it all.
Yeah. Well, we got a great show for you today. It is all treat, no tricks. Oh, see what I did there? That was pretty good. On today's wonderful Wednesday show at the top of the 8 o'clock hour, we're going to have an options jive, Takashi's Japan, what it means for U.S. investors. So Japan got a new prime minister. It's a lady. But what does that mean? We always talk about the yen. We always talk about other stuff that's happening globally.
Carry trade.
But yeah, the options drive is going to be all about Japan. So that's cool. For options, or I'm sorry. At 8:40, we have What's Your Assumption? This is where we get viewer-submitted trades. They have an underlying, but they also have a directional bias. So the bats are going to be putting on viewer-submitted trades today. Then 9 o'clock, we got Jacob in the house, skinny on options math. How much to model? How much to be a model? No. How much to model?
Once you had a model, you never go back, you'll see.
What
Good.
does Jacob what is he going to try to explain to you today?
He's going to try to annoy us, which is really just going way over our head.
Okay.
But then he'll bring it down to us, and we'll understand.
We'll answer some emails. He'll talk.
It'll be good. You'll see. It'll
30 minutes. It'll be perfect.
He'll tire himself out.
Yes.
And then we got live from the trade desk with special guests Quentin and Ryan. So Quentin going over everything that's happening on the tasty trade side of the business, and Mr. Ryan Grace breaking down what's going on the tasty crypto side of the business. And then today at 10 a.m., Liz and Jenny live from the floor of the SIBO. It's electric when the ladies are live.
Yes.
Also, Liz and Jenny are hosting Last Call at 2:30 today, and Tim Knight will be joining them.
There you go. Perfect.
For the last call?
Yeah, that's what I said.
Yes.
Amazing.
It's the crossover. It's the crossover you were waiting for.
It's a dream come true.
Yes.
It is a dream come true.
Yes, there you go. Like a Chicago PD, Chicago Fire crossover. I don't know. But that is our run of show for today. We got a really good show, a really big show. You want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming
news.
across the wire. Leading story. Top story. Jump in.
Today's headline.
This just in.
Breaking news.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's October the 22nd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
What's on deck for earnings?
Well, we had Netflix. It's down $85. I know you'll get to it. But we have Tesla coming up. I have to mention Love because sister's long that pig. American Airlines, IBM.
Oh, Big Blue.
General Motors had a huge day the other day. 4.5 standard deviation move. Ford's coming out today. Maybe something in there. See if they can do it. FCX. And your beloved Alcoa, AA.
Oh, okay. That's a lot.
There are more, obviously.
We're in it now.
Those are
Sure.
something.
Sure. Yeah. Just be careful. The September Consumer Price Index report that's coming out on Friday will command the full attention from the financial markets, even as some investors will view the data with a skeptical eye. Though still considered part of the gold standard of U.S. economic data collection, the Bureau of Labor Statistics has been criticized for its analog approach. How are you intending to use this data, and what effects, if any, will it have coming late? We don't get it at all, and then it's late, and then it's like, do we believe it?
I take it and then I go to my own Trader Joe's and I look at the report. I make sure that the prices are the same as what's on the report there. So that's what I do with that.
It might make your show interesting on Friday, though.
It could. It
Maybe.
could move the market.
Yeah.
The way volatility is right now, under 19, I think it's pretty much status quo, but we'll see.
Okay.
Are we actually getting it though?
Yes.
They say we are.
Yes, on Friday.
Hopefully we should. Yeah.
What?
Well, I mean, with the shutdown and stuff.
Sure. Yeah. Well, they assembled a special team to put it together just for you. What are bonds doing?
That interesting that you mentioned that. Over 119, they got up to 119.19. They're 119.14. They've been on a historic run over the last 2 weeks or more, going from around 116 to 119. Now that's a full $3,000 move. Big move in bonds. Bonds go higher, rates go lower.
Yes.
So probably another cut coming soon. At this
Gold logged its biggest one-day sell-off in years. Is this a bump in the road, or have prices topped out? Gold's latest move was massive, taking a notable hit yesterday. It was the biggest one-day percentage decline in more than a decade. What do we learn from that massive move, or what do we do? Where are the opportunities?
The markets are so trying. I mean, I talked about them raising the margin requirements for the metals. And we had that big move lower, and then the following day we actually rallied back about half, maybe even a little bit more than half, and then we sold off from like 4,300 to 4,050 where we are right now. I mean, it makes it so difficult to hold sometimes. You were able to sell gold overnight, which was a great trade for you on the futures, which was nice. Now you got gold down another $64, which is a 1.5% move.
Oh, wow.
We've gone from 4,400 to just about 4,000. I went from my call side being well in the money and tested to now my put side. If it goes under 3,900, my put side's gonna be tested. Gold continues to be a thorn in my side.
Yeah. the skew there, they've pumped juice into both sides.
Yeah.
Even into the top of, a couple days ago. You typically have upside call skew. I'm doing my little thing again here. I'm sorry.
I didn't say anything.
Fly.
But they've been pumping juice
Fly,
into the
grasshopper,
put side
fly.
too. So
What has also been the effect on silver?
Silver's having a similar type move. Similar type
more
move.
so. I mean, it was down to 8%.
Step for step.
Yeah.
This morning, it's down half as much as gold is, but it's been moving step to step. If you were to put the two graphs over each other, they basically mirror each other.
Okay.
Highly correlated to each other at the present moment. Down 27 cents, trading 47.42.
This is weird. I saw this on Twitter and I was like, what? So a guy named Kyle Mitchell, he's 35, he works in finance, and for some weird, wacky reason, he stockpiled $250,000 worth of nickels. Yes, nickels, as an inflation hedge. He says he's currently storing them in an undisclosed location on his 150-acre farm somewhere in the U.S. Why does this sound like a date that I have been on? He's like, look, here's what I'm doing. I'm optimizing nickels, right? And what would be the point, if you had to surmise, of this strategy?
I saw this.
Me too.
It was basically the metals. It's a play on the metals.
Okay.
Higher because
Right,
nickel has-
silver.
Yeah,
Right,
a little bit of silver, but also some of the other
Palladium or something. Yeah, I don't know.
So
They make nickels out of.
yeah, I mean, I think it's wild, but yeah, if you got 250,000 laying around to buy nickels, I'm sure he's not wanting. This probably
It weighs almost 30 tons.
yeah, I don't,
55,000 pounds.
Yeah.
That's what. That
30
was the first, when I saw this too.
Yeah.
And I'm like, okay. Like I always wondered, because the joke on the floor was, what did you want? $1 million or Tom's head full of nickels.
Sure.
So we knew that there were a lot of like nickels and they weigh a lot. So how much would this weigh? 55,000 pounds.
It said it took him and his paid helpers more than 4 months to
he has-
acquire.
yeah, did he have to kill him afterwards?
He
'Cause
had
it's not
more
a
than
secret's
4
not a secret
months
unless one
to
person's
Like Blackbeard.
acquire 5 million coins, like we said, weighs 30 tons. So
The helpers are buried with.
Godspeed, Kyle. Godspeed. Hey, Coinbase has acquired a crypto fundraising platform, Echo, for $375 million. The deal marks Coinbase, another major acquisition for Coinbase this year, as they build out infrastructure spanning token creation, fundraising, and secondary trading. Oh, what's going on, Coin?
Down around $6. I don't think it has anything much to do about this purchase, which is relatively small.
Sure.
Things, all things considered. I mean, what is Coinbase? Almost $1 trillion stock. I'm sorry, $100 billion stock.
Sure.
Anyway, it's down about $6 or so to 332. I think it has more to do with Bitcoin being back down at 108, down around $3,800 this morning. So Bitcoin not catching a bid anymore. Tried yesterday.
Speaking of which, and maybe you'll get into this because you're talking about Japan later, Japan's financial regulator is mulling allowing members of banking groups to launch cryptocurrency trading services in a move to expand market access and foster competition.
Ooh, what do you think about that?
I mean, why not? Everybody else is trading it.
Yeah.
I mean, like,
Get in,
Yeah,
Japan.
it's great.
Come on, let's go.
mean-
Water's just fine.
You got to do something to lift Bitcoin and the Japanese yen and everything else, which the yen, by the way, basically.
yeah, Bitcoin reversing all of yesterday's move.
What's IBIT doing?
Oh, we can look at that. That's a good one.
It was up at like 64 yesterday-ish.
61 and a half,
61 and
just
change.
under now.
I mean, Bitcoin had a huge move over the last 2 sessions or so. I mean, we've bounced from, the low 103, 4-ish kind of is the low of where we got
Yep.
on the initial sell-off, and then we bounced right back to 110, and then now we've been kind of chopping around there. 108 and change right now.
Okay. Hey, getting to earnings from last night, shares of Netflix fell after the company posted a third quarter earnings miss. The streamer cited an ongoing dispute with Brazilian tax authorities. Girl, what? And revenue for the quarter did rise 17%, which was in line with analyst expectations. Netflix brought in revenue of $11.51 billion, which was right in line. What The stock was down like 6%.
Down about 100.
Yeah.
A little over the expected move in Netflix. So trading 11.45, closed at 12.42. I'll round up. So
What'd you do in there, Nikki?
I didn't do anything.
Oh, I thought you were going to do like a diagonal little.
I was looking at it. It's tough. I mean, at
Sure.
1,200, they still haven't done the split.
Yeah.
yeah.
So no split.
We don't
this
know
morning.
if there's going to be a split.
Well, they would announce it on.
Yes.
earnings
Yes.
call.
You said they still haven't done the split. Like that's looming. I just didn't.
No.
I think
But that's always the play. Is like
Yes.
playing the upside for the split. That's you think
imminent,
it's coming.
although it's not imminent.
But yeah, it's just it's an expensive play, and I sold some Nasdaq futures into it.
Okay.
So I took a
Markets
couple
are
bucks out
wide
of
in
that.
there.
Yeah.
I mean, I think the play, if you really want to trade it bullish or bearish, was to go with the Nasdaq, which I think is the right way. Which makes it a 50-50 shot, not a play on premium, but again,
Sure.
$1,200 stock. What are you going to do? Or what was it? Almost $1,300 stock.
Netflix did post their best ad sales quarter ever, though, during the period. The company did also announce a toy merchandising deal with Mattel to license a line of toys for K-pop demon hunters. So.
That sounds ominous.
Yeah.
One of my friend's brothers is like a manager at a Mattel. Anyway, it's $18. Mattel down
Yeah, they also had earnings, I think, last night.
75 cents. Yeah. Stock goes nowhere but sideways.
Hey, big news in the search arena. Anthropic and Google are in talks on a cloud deal worth tens of billions of dollars. AI startup Anthropic is working with Google to secure additional computing power valued in the high tens of billions of dollars. Initially, when this news came out, Google's stock went higher. But then immediately on the heels of this news, OpenAI came out and was like, hey, guess what? We're launching our own browser called Atlas. I'm on the next story now. And that is going to challenge Google. And then that sent the stock lower.
And now today, this morning, the stock is back up. It's even higher today than it was yesterday at the highs, 255, 256
Sure.
right now. So it was up, then down, then up higher.
Yeah. What a crazy
Markets are
cycle.
dynamic.
Yes.
Yeah. What are we doing in Google?
It's got earnings coming next week on the 29th. Ivy rank goes 52 is pretty good. It's up around $5 or $6 this morning. So even the S&Ps are up. Nasdaq's a little down. This I guess would be a little bit of a bucker to the Nasdaq since it's up.
Nikki, would you use OpenAI as your search engine?
I like Chrome and Google. So I mean,
but
like, but I
search
do
is so
use like.
bad though. Like I'm so frustrated with Google. I'm like, what is this slop? I'm like, I just need the answer to like, it's not as good.
Yeah.
I don't know.
Yeah.
But
No,
I like Chrome. I do like Google.
I use ChatGPT and Claude. I got
I know.
for that one. But yeah, I would use it. I closed out of that oil put spread. That was in the cherry picks yesterday.
Nice.
$100 out of that.
Oh, very
oil
nice,
have a
very
nice little move today, up $1.22.
Yeah,
Okay,
that's a 2% move in oil back to 50.
Needed that.
Change.
Needed
Yes.
that.
Yes.
Good job, Oil. Hey, Amazon plans to replace 600,000, yes, you heard that right, human workers with robots. The retail giant has used robots in its warehouses for years, but it appears the company is ramping up in a big way. According to a report that was published in the New York Times, Amazon is seeking to ramp up its robot army at the cost of human jobs.
Ramping up the army.
Yeah, but look
600,000.
at his little face.
How many robots do they need, though?
I don't know. I don't know what
that's
the
a big
robot to
question.
human ratio is. I don't know if it's like 4-to-1 or 5-to-1. I don't know. That's a good question, though, Nikki.
That's an interesting question. And
this is by 2033, because I know you always
yes. You can put any number into the future.
Sure, any number
Right.
you want. And just to put in perspective, I think they have 1.5 million workers.
I'm sure. I think it's more than that.
Okay.
Yeah, I don't.
Yeah.
Oh.
Worldwide.
Yeah.
I mean.
But they really could have a robot army, which
Sure.
is also scary. Like if
I welcome our robot overlords.
Oh, I don't know about
even if they're owned by Amazon, that wouldn't scare you. They come,
I don't know.
Come to your
One
house,
thing that drives me nuts about Amazon is like they're this, global dominant power or whatever. But I have packages delivered to a UPS store, right? Because I'm not home. I'm here all the day, and it's a secure location. I can get them whenever I want. And in
you're like a president. They bring you to a secure location.
I know,
Yeah.
but in my Amazon profile, I'm like, hey, this is a business. These are the hours that the store is open. But time and time again, they try to deliver a package at like 7 a.m.
Give it a
and
shot. I mean,
But I'm like, but it it says, hey, enter the hours here. And I was like, Amazon, how are you going to dominate the world when you can't even figure out business hours? So,
Well, they're
what's
delivering.
Amazon stock doing?
Yeah, they got whatever you need overnight coming to you at 7 in the morning. So I
That
think
is
they're doing
true.
okay. I know that they missed what time your specific delivery is needed, but
But it's a bit.
pretty wild. You can get toilet paper and.
What is Amazon stock doing, or what are you doing?
Amazon closed at $222. It looks like it's going to open closer to $219, which is down around $2.50 to $3.
And when are their earnings?
Had a good 2 days, by the way, going from around $212.
And we hit it to the long side. It's all diagonal spread.
Yeah, October.
But we had the strangle that we took off into the massive vol crush that we had a couple days ago. And then hit it to the upside. Go on.
It's called finding the strategy that fits what's going on with the stock's volatility and taking advantage of that one worked out nice for you.
Yeah.
Amazon $219 down around $3. October 30th earnings.
Perfect. Facebook founder Mark Zuckerberg, as well as Snapchat's Evan Spiegel and Instagram's Adam Mosseri have been ordered to testify at a congressional trial over the adverse effects of social media on younger users. The trial is one of many alleging that social media technology companies have deliberately created platforms to be addictive, and that the platforms include features that can cause harm to younger users. They must take the witness stand at this social media safety trial. Sorry, it's not in front of Congress, but it's a trial that's going on in Los Angeles.
Meta unchanged earnings October 29th. IV rank of 38. Okay, not great. Meta going kind of sideways. The higher end of its most sideways.
Can't put the genie back in the bottle.
No.
Well, once these
Doom
things are
scrolling
out
is
there,
here.
yeah.
Here to stay.
Yeah, but aren't you worried?
You know what? It's almost, so here, my not my parents. I shouldn't say that because I don't think they really worried about too much. You would have a candy. Did you ever have a candy drawer? Did you have a candy drawer when you were growing up? Or anything? You didn't have a candy drawer? Did you eat a lot of candy at somebody else's house? That's what usually happens. Like, you know what I mean? Like, if you don't want kids to have something and you kind of, keep it from them, they find some other source. If the kid goes to school and everybody has phones, they find it and then they want it and then you're doing.
Then you can't say no, and then they,
Yes. I said no last night.
No, you didn't. I don't.
Yeah, to Vinny, I did. I really did.
What was it?
Yeah, I don't
What did
believe
he
you
ask
either.
for?
And then I started talking to my wife about it, and she's like, "You make like this is the first time you said no to him." And I was thinking back, I go, "I believe it is the first time I said no to him."
What was it?
Car related. Related. Yeah.
So you had to break it to him that he can't get the Porsche.
No.
He's not getting a ring.
No, Vinny, that's where I draw the line. Porsche, that's the one. Can't have that.
No, he actually wants a car that is a third of the price that I want to spend for the car.
That's good.
Because he says, I shouldn't get a nicer-ish car because, my friend's in there and everything else like that. But, I don't want to bring this up, but, I didn't want to get him an older car.
Sure.
Because I went through that experience
Yeah.
with somebody.
His safety paramount.
Why do I feel like I'm at couples counseling? I'm going to just keep it moving here.
Yeah.
Microsoft CEO Satya Nadella, his pay jumps to
You like that?
$96.5 million for fiscal 2025. The Microsoft CEO is going to earn almost $97 million. That's up 22% from a year earlier. 87% of his pay for the year came from stock awards. What are you doing in Microsoft?
Microsoft going sideways. It had a biblical move from around in April there, from like around 360 to about almost 560. It's hanging out at 517. It's just been going sideways in about a $20 channel, top to bottom. IV rank of 33 in Microsoft. As you would guess, it has earnings coming soon, October 29th also.
Nikki, I put this in for you. Oklo's stock has surged 736% since April, but the company, just no one can figure out how this company makes money. The entire industry is skyrocketing, but small-scale nuclear power is a hope, but not quite, in actual practice yet. What are you doing in Oklo?
I have some short delta, and
Down around $4 or $5. Look at you.
it was giving me fits to the upside. But yeah, I mean, we've been taught there's a lot of these spaces in the market: quantum, small nuclear reactors, fake meats. I mean, these things are flying around, and it can't go up forever. And volatility has just been through the roof there.
Yeah, what's the IV in there?
Well,
Ivy rank is 64 right now, which is down
implied
a little
volatility,
bit, but monthly
130%.
Oh,
and that's come in. It was 200%.
Yeah.
Sure, yeah.
So, if you rode these things higher, you gotta get out at some point.
Manage your winners.
Yeah.
General Motors lifts their forecast as the tariff outlook improves. Shares surged to the highest level. I think GM hit an all-time high. Stock surged 15%, the biggest single-day jump for the shares in nearly 6 years. GM.
And GM's up another $1 this morning. You're right, going from 57 to 67. Huge move in GM. I mean, GM, if it moved a buck, it was a big move. Now or $2. This was maybe 5 times, 5 deviation standing, a 5 deviation move here, up to about 67 where it is this morning, up around another 40 cents. Ford has earnings coming out today.
Tesla.
After the close. Tesla after the close. All car manufacturers.
Speaking of Tesla's cheaper EVs might revive their sales, but squeeze profit. The profitability of Tesla's so-called affordable new cars will be in focus when the EV maker reports quarterly results today after the bell. What are you going to do, or what would be some strategies for Tesla earnings?
Ivy rank at 25, not the highest it's been. Earnings are coming out after the close today. You're looking at some of the, if you're trying to go diagonalize, November, December's got 3 vol point differential. That might be good. Obviously, front month, you can go like, 9-day, 23-day, which would have 10 vol point differential, maybe something there. You can go really shorter, 2-day versus 6-day, which is going to have 30, 40 handles of vol differential.
Okay.
So,
Probably got to do something defined risk.
yeah, you're going to have to do something defined risk. That's why I was going diagonalized, yes.
Okay.
Yeah, I mean, it's a $400 stock. Just looking at the markets in November, they're good. So you can do anything you want, really.
Just be careful, because
It's going to use a lot of buying power. It's earnings. They usually raise the requirements for naked options. So it's going to use more buying power.
Beyond Meat stock soared 146% yesterday after a 1-2 punch. First, it got added to the meme ETF, and then they announced a partnership with Walmart, and that sent shares of the fake meat company higher. What are we doing? What a time to be alive. I don't know.
I mean,
they just financed a debt deal, so...
This was a 50 cent stock.
Oh, I know.
And then it went to a $1 and change, and then it went to $3 and change, and now it's $6 and change. So hard to borrow stock. This is gambling. Like people ask, is this gambling? I mean, at 50 cents, what was your risk? You could have said the same thing at $8. What was your risk?
Right.
At $40, what was your risk? I think. When this stock went from,
and it's had splits and share offering, the value is not. It's not like it was at 50.
This is gonna eventually blow up again, but until then,
Well, the
ride the wave. You manage your winners.
Yeah, Roundhill had actually shut down their meme ETF, but then they realized people want to lose money in new and astounding ways, so they brought it back.
And those things are the silliest. I mean, like if you're going into a managed fund for memes, that is like, why not just buy the memes?
Like what are you doing?
Like why not pay the 50 cents for the Beyond Meat shares?
Yes.
Hey, I put this in for both of you because just what a time to be alive. OnlyFans CEO says the company has paid out $25 billion to creators since the company's founding in 2016. Kelly Blair, the CEO of the X-rated social media platform, was at a speech, a Bloomberg tech speech in London, and she says the company only takes around 20% of the profits that creators are generating. But this young lady here, her name is Sophia Rain.
That's with 2 eyes, I believe.
And no, Sophie, i.e. Sophie Rain. And it's spelled
no, but if you're going to follow her, there's 2 eyes in
Oh, I got you. Well, she earned $43 million in 2024, and she is on track to earn $63 million. Good Lord.
Why are you still doing this?
50
Come on.
I mean, I can't believe this is true.
$63 million. So obviously the income distribution among creators is not
The
equal.
chat would like some more details on this one.
I can give you the top 5 creators.
Throw them out there, please.
But hey, good for smashing the patriarchy. I don't know.
This is the new. Didn't they have the old like? What's the strip club?
Why are you asking me?
The one that's publicly traded.
What strip club?
I think it's
from New York.
Rick's. Rick? Isn't it Rick's?
Sweetie, this is
Cabaret?
not my wheelhouse.
I think that's
Like
what
the
it is.
40-40 club or something.
But they have that like index when the stripper income goes down.
the economy is-
the economy is ready to roll over.
Oh, that is a good index, though.
Yeah,
The
it's like the
stripper-
lipstick index.
Yes. But this
So-
is the strippers and blow
Yeah,
index.
yes, exactly.
We used to have a skirt index
Yeah,
too.
it's
until we
Rick.
went to leggings and stuff.
Yeah.
RCI Hospitality. Rick.
DraftKings has acquired the predictions
Peeps are
platform.
following me.
Railbird, the sports betting giant, is preparing to launch a new platform in the coming months called DraftKings Predictions. Predictions markets allow customers to trade on the outcomes of various events in the world of finance, culture, and entertainment. What are you doing in DraftKings?
You were really deep into the weeds in DraftKings at the beginning of your trading career.
Mm-hmm.
I think with a lower price stock still is $33 and change.
It was one of the more successful SPACs. I mean,
Yes.
it was
Yep.
in that SPAC period where everything like 4x'd and then now they're all like at zero.
Yes.
DraftKings is not in that bucket. Stock's up $1 right now, but they've been.
Oh, it's down near its lows. Yeah.
Yeah, I mean a lot of these. There's a lot of uncertainty around prediction markets taking some of the share from betting market, from stock markets. That's something that's happening right now. So
Everybody's trying to go into everybody else's.
Have you ever made, Nikki, for money a prediction trade?
I have not.
Okay.
Not yet. I'm certainly open to it.
Sure.
I'm open to any sort of degeneracy.
Degenerate gambling, yeah.
I mean, the way the world is going, we're going to have minute by minute. I saw Coinbase or one of the firms did like 15-minute perps for Bitcoin price. So like, will the price be up or down in the next 15 minutes?
How are people supposed to hold down a job?
Well, I mean, who needs a job? AI is going to
Right.
make it all like,
So
yeah. But yeah, I mean, I'm certainly open to it. The rails to get Railbird,
Sure.
good name. The rails to get on the prediction markets have not been easy prior to the last couple months. I mean,
Sure.
that's really when all this stuff has kind of popped up.
No, you're right.
Before it was the funding was weird. Some of them were in
You need an
crypto.
offshore
Yeah, you got
account.
offshore
Right.
because it was but it's getting more accessible. So it's an interesting market for sure.
Things that are interesting. I mean, the internet was just wild yesterday. Like I'm scrolling on Twitter and I see that story about the guy, buying all the nickels. And then I see this story that Travis Kelce is buying Six Flags. And I'm like, what? But this is true. Travis Kelce is joining activist investor Jana Partners in a push to revive Six Flags. That sent shares of Six Flags up more than like 17% following the news. Look, he's going to buy Tay her own amusement park. I can't even get a text back.
Well, she's gonna have her own like rides and.
I would go to Swiftyland.
Can you
Oh my
imagine
God.
Swiftyland? Yeah, that could happen.
Shut up and take
He's a
my
smart
money.
guy.
Shut up and take my money.
Yeah.
I think it's fair or
Fun, I
Fun.
believe, at Six Flags.
Yes,
Oh.
there you go.
Trade as low as $20 about a week or so ago.
Have you
That's like
taken Vinny to Six Flags yet?
Yeah, he's been to Six. He goes a lot by himself now, but yeah. No,
Oh, I'm
It's not
so
far
sorry,
from you.
Dad.
Yeah, it's not far.
we go in after him.
Oh, do you
Just
do you
to
like
watch? We just stand
trail,
far
like-
away.
yeah.
We watch them.
Yeah.
We watch them, make sure
Yeah.
it's okay and stuff like that.
I'm excited.
Fright Fest is coming. That's what he wants.
Oh, that's
That
fun.
is that was always a
That's fun. But now I think kids under like 17 or 18, they have to be accompanied by adults. Like I think.
Is that true?
I think so.
Then I don't
'Cause
think they'll be-
they've had some issues. So, what's the stock doing now?
Traded as low as $20 about a week ago, which is I think a yearly low for fun. It's $25.50 right now. taking a look at the markets in there. Monthly implied volatility is in the 60s. No weekly options. And the options themselves are kind of wide.
I mean, we love a jobful man. Look, he bought Taylor a house 3 months into their relationship. He built her a restaurant with its own private entrance and private dining room. And now he's buying her an amusement park. Nikki, step your game up.
He's just trying to make sure that he stays off the prenup, because whatever he's spending right now, he'll get a lot more when they split up.
What is wrong with you?
It's
Why?
just an investment in the future.
Hey, finally today for my viral video of the day, as Halloween comes closer, Americans are expected to spend $1 billion on costumes for their pets. Walk with me. That was a long journey. And then I saw this video. Chef's kiss. Watch this.
Guy Fieri and we're rolling out, looking for America's greatest diners, drive-ins, and dives.
Good.
Nicely done.
We get a couple of these in the office. Tracy does this every year.
Yeah.
Pretty much.
Yeah.
The classic.
Oh, a couple of Guy Fieris, you mean?
Yeah, we get a couple Guy Fieri.
Yeah.
I like it.
Thank you, Beth. I mean, it's so cute. Anyway.
That's definitely a good one.
Oh, well, we can't get rid of Guy Fieri.
Yeah.
He's in our system. Oh, no. Pat, what's coming up next?
Do you know who the Fonz is?
Yeah.
Okay.
Yeah.
Make sure. Make sure.
Why would I not know?
My wife was trying to get me to dress up as like the Fonz or something like that for some party. I'm not usually.
That's not hard. It's just a white T-shirt and a leather jacket.
I know. I was just asking, and I said,
"Oh, you finally got the Scott Sheridan party invite or something? Is that what happened now?"
I mean, I don't know that the young dads in your neighborhood are gonna know who the Fonz is.
What kind of party is this? Is this a little swinger party or something?
Is it a key party?
Swinger party?
Yeah, do you have an upside down pineapple?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send next.
Hey.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin, number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University, number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
are back, son, and it's time for a little bit of confirm and send. But before we do, let's take a quick look at the market. Even the S&P's up $7.25, not on their highs, but about $8 off of their highs. Pretty tight range here of around 20 to 25 handles, top to bottom. They were mostly unchanged for the night, slightly red, slightly green. NASDAQ down 33 on the heels of Netflix, which is down just about $95, trading $11.46. NASDAQ down 33. Russell down 8, and the Dow up 18. Kind of a mixed bag of tricks here with the Russell again. The Dow was the strongest yesterday. GM kind of lifting that one up. GM's going to lift it up a little bit this morning again this morning, up another 40 cents. But Russell is the weakest of the group, and the Dow, which would be the second day in a row, kind of the strongest of the group. But as you can see here, basically unchanged. Let's not anoint any kings quite yet of the market. Volatility down 15 cents to 19, maybe opening us up to a 0-day trade here today. We'll see what that looks like. If you're going to do it, probably need to do it earlier rather than later with volatility so low. Expecting volatility stay that way with earnings in Tesla and IBM coming out after the market closes today. Bonds are only up one tick now after being 119.19 on the highs. They're basically unchanged, one tick above that. Bitcoin down around $3,800. Bitcoin can't catch itself a bit. It tried for the last 2 days. Got up to about 12, I believe. That's 112. No, it got up to 114. I'm sorry, 114,000. Now 108,000. Big move in Bitcoin. Ethereum also down around the same percentage, around 3.5%, almost 4% for Ethereum, back near its lows. Oil finally catching a bit, although it is 40 cents off of its high. You closed one of your defined risk put spreads, taking advantage of the move higher. Up 1 and almost 0.75%, 1 and 5/8%, 97 cents. Gold down $62 after being up this morning. I believe when I woke up this morning, I saw gold was around unchanged to up small.
Yeah, it's at $150 intraday range so far in the overnight session, including right now. So it's
right here, right now.
Yeah, it was up 70 from where it closed yesterday, and now it's down 70.
Unbelievable.
It's crazy.
Silver doing the same, although it was unchanged just a moment ago, only down 1/4 percentage point. That's 11 cents on silver. So silver trying to get a little bit of legs underneath it. Gold so far has not. Nat gas now over $4, 4.09 after going under 3. Now the futures have rolled, so you're looking at a different future. The old future went under 3. Now you're back up around 4 and change. Netflix was your big mover for last night. That's really all for earnings. I mean, I think Telephone had earnings too. If you really care about that, it was basically unchanged. But Netflix still down around $95. That's all we got. Confirm and send on this Wednesday, October 22nd. We got an option jive on about Japan coming up after this.
Yes,
and we've got
the carry trade.
Assumption, the carry trade. Beautiful, beautiful.
And we got big heavy math segment with Jacob.
Yes.
To get your thinking cap
Yes.
on.
Hump day, Wednesday, no rest for us. We're going right to the heavy stuff on hump day. How do you approach selling premium when the VIX is low relative to historic levels? You can say that VIX is low right now. Not talking about VIX at this moment, which is historically low too, but I'm talking more about /VX, which is a good indication of the daily move in volatility. As you know, 19 has been the low. It's really at the lows right now. What do you think?
Obviously, you got to be more directional, and you have to pick your spots a little bit more if you're looking for higher implied volatility underlyings. But I think the other side of the coin, too, is just managing positions quicker. So if you are selling put spreads and you're getting a directional move in your favor, you're being more aggressive with those closing positions, because that vol component that you're looking for, that vol crush, isn't so much part of the trade anymore. I mean, like if you're directional and you're getting paid on that trade, you're being aggressive with those closes. So I think that's, a big part of when volatility is low. You take what you can get, and you make sure that you have powder dry for when volatility expands, because we know at some point it will.
Yeah, I think the first thing you approached there, the first thing you said when you answered this question, is really about getting a little bit more directional. You tend to maybe even calendarize stuff with a directional bias to it. Even if you don't want to do a straight calendar, you're doing like a diagonal, which would work. You can still sell both sides if you're looking at this with low implied volatility. Remember, If volatility is low, the market's implying that it's going to stay in a tight range. The only factor is, which you also hit on, you don't get that volatility crush. So maybe something that you would have been able to sell high implied volatility that was $10 wide might be, $3, $3.50. It might be $2.75, $2.50. But the probability of success is still the same. You got to manage your winners a little bit quicker, I think, too, when volatility is low. Or go to products that you don't trade as much, just make sure that they're liquid enough. So you start broadening your horizon, start looking at more stocks when volatility is low. That could get you in trouble sometimes, so make sure there's liquidity in the stocks. That's the key. That means liquidity just means a tight bid-ask on the options. Doesn't matter what the stock's bid-ask is. We're trading the options. We want the options to be tight and liquid. Next question, please.
Next question. Yes. What strategies do you prefer for hedging concentrated stock positions with options?
What strategy do you prefer for hedging?
Yeah, you got like
a portfolio of everything.
What would you say to your sister who's just statically long, one of the dogs of the market, Love? How would you hedge that position? Would you tell her to take some off the table and put it into something else?
If she had profits.
No. Oh, she doesn't want to take it off because she has
works
profit?
for Love, so she loves it.
Okay.
Loves love. So that's her.
Does she have any gains elsewhere that she can offset her tax implications with?
She's not the best investor that I've ever seen walk the planet Earth. I mean, what do you say here? I think she's a bad example because she's got the S&P and Love. So I mean, I guess that's diversified. I mean, I don't know if you only have two stocks. How can it be diversified?
Before you, it was just Love.
Before me, it wasn't just Love. You are correct.
Yeah.
If you have a portfolio that's going to mirror the market, which a lot of us do, even if you're trying to be diversified, because it's hard to get diversified. When you start going into oil-related stocks or fringe stocks, OKLO, and you start going in that direction, it's hard. I mean, usually, if the S&P 500 is higher and you're trading stocks in the S&P 500, your stocks are going to be higher. If the S&P is up 1% today, chances are your portfolio of stocks you have are going to be leaning towards the upside, the bullish side. So it's hard to get diversified, but you can easily get strategy diversified inside that portfolio. And that's the key to everything we do here. We talk about diversification from a strategy point of view. You could be long ABC stock like a Netflix or short a Google, which have a high correlation to each other. And you can get a little bit more of a back and forth kind of portfolio that's not hinged on one direction on the market. So that's what I would challenge people to do, is get strategy diversified. If it's strategy diversified, you can trade liquid products, and you don't have any problems with finding long or short delta, because you can put a strategy on that gets you long or short delta in anything.
Next one, please.
How do geopolitical events affect short-term option premiums and implied volatility?
It's all priced in. I mean, geopolitical events, earnings events, uncertainty, new technology, all that stuff, everything is priced into what is trading in the market right now.
Right.
I mean,
that's here and now.
The here and now. People get obsessed with is this cheap? Is this expensive? How do you know if it's cheap or expensive? The price is the price. You can trade pretty much everything if it's liquid with a penny-wide bid-ask spread. It means you could sell it at $1, you could buy it at $1.01. I mean, that's the spread, and that's what it is. And there's one side isn't better than the other. It's priced to perfection right now. You can do either side at basically the same amount of value. There's the probabilities are inverse. What changes is volatility and time and all those other factors that we focus on trading. Like, that's what you're trading. You're trading volatility, you're trading time. Directional assumption is another thing that you can trade. But yeah, I mean, in the short term, you can see volatility or these sort of events affect volatility in the markets, volatility in moves in the market. Yes, of course. But you don't know, unless you know the future, you don't know, these events are coming. Nobody knows Trump is going to tweet.
What about that unknown event that comes out intraday or during when the market's open?
Well, we know that possibility is possible. And so everybody that's trading right now, the market is pricing in the possibility of a Trump tweet at 2 p.m.
That's priced into the market right now. Whether you think it is or not is your opinion.
Sure.
But it's priced in right now.
And you can play for that, right? You can buy volatility if you thought that was going to happen.
Yeah. But also sell volatility, and it trades at the same exact price. And that's, you could say that it's not going to happen at 2 p.m. today.
Mm-hmm.
And so it's all priced in.
And the 0 days, I mean, if you're going that short, I mean, that's a directional play. I mean, volatility plays a part on the opening of the trade, but intraday, I mean, it's a directional bias.
Yeah.
I mean, that's
or non-directional.
Or non-directional.
Range bound.
Well, I mean, the geopolitical event, if it comes out during the middle of the day and you have a 0-day trade on and it moves the market more than what was expected, there's nothing you can do about that. I mean, that's just, in the 0 days, you're going from, 100 to 0 in that day, meaning in that velocity of the move. So there's nothing you can do there. Next question, please.
What are the key signs that indicate it's time to exit a long volatility trade?
A long volatility trade for us, or for me at least, would be a calendar, diagonal more than a calendar. I'm not naked long options typically. I'm not. You could be long volatility /VX. You can put a synthetic covered call on in there. You can do it that way. On that type of spread, it would be just looking at it like a covered call. I mean, I would treat it exactly like you would treat a covered call. In a calendar spread or diagonal spread, I mean, it's such a small trade for us. It really doesn't change our volatility or gamma exposure to the overall portfolio. So it's not that big of a factor, but everything's set on entry. By trading small enough, you can, or large enough, if you're trying to change your gamma here, you can do that. I don't really, for me, looking on how to answer this, a long volatility trade, I think that's the $64,000 question. When do you get out of your hedge kind of thing? When do you get out of your? I guess when it works. If it works, you got to take your profits at some point.
Yeah, for the most part, if you're trading long vol, it's a short-term trade. You can't. You can't be long VIX calls for duration. I mean, it's priced in already. And so if you're trading long vol, I think it goes to your point. It either works or it doesn't.
Yes.
I mean, if it works, you're happy and you take the position off. If it doesn't work, it pretty much goes to zero, and that's it.
You're right. All right, my friend. Let's take a quick 90-second break and come back. We got an option jive right after this. This is Tasty Live.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's option. Jive.
Nicky, we are back, son, and you know what that means. Time for a little bit of an option jive. Even the S&P is holding steady, up 5. That's about where they were the last time I quoted them, about a half an hour or so ago. A NASDAQ down 33. The only thing that's really changed is gold. Down 30, was down around 60 a moment ago. And silver, which was down around 10, I said it turned green for a moment. It's back green, up 29 or so. That's a half a percentage point move or more to the upside. In silver, we'll see if gold can follow it, or even if it wants to.
And those are massive moves.
Those are massive.
I mean, those are if you're trading the micro contracts, they're big moves. I mean, a $30 swing in a minute in a micro gold contract is $300.
Yeah.
On a futures contract, $3,000.
Right.
And these are flying around.
Right. Usually the IV rank is somewhere around, 30-ish in gold. It's 90-ish in gold. So to your point, you're getting a 3 times, 4 time move intraday than you normally would get if you were trading gold futures. And if you hadn't traded gold futures before, you would think this is like a Bitcoin. I mean,
I was just about to say, because right now you have gold implied volatility is like 36, 37-ish, which is is 2 or 3x what it was a year ago.
Yep.
When gold was just chopping around. I mean, gold and bonds have historically been those kind of low volatility underlyings. Do you think after an event like this that gold volatility going forward, at least for let's call it the next year, will stay relatively high? Like, will stay closer to this 30-40 mark than it will go back to 17, 18?
I don't think it'll stay in this 30-40 mark, but it'll stay in the mid-20s, somewhere in that range.
So you think it'll have a higher floor?
Yeah.
I would expect. I would think so too.
Yeah. Especially if it stays, what's it historically been around? Historically, the last 6 months prior to this move higher, in the low 20,000s.
Oh, yeah, price. Yeah,
priced in the low 3,000s. So if it stays in the high 3,000s, it'll stay elevated. If it goes back down to the low 3,000s, then it might.
Does it get grouped in that, like, Bitcoin high vol risk asset now? Or is it?
I think so.
You think so?
I think so.
I agree.
Yeah, I think
so too.
Yeah, I think so.
Interesting. Well, we'll see. But who cares about that when we have Takashi's Japan?
Yes. Let's take a look.
What it means for U.S. investors. Let's take a look here.
I remember when Japan used to move the markets in the middle of the night, 3 a.m., it would move the markets like crazy.
Well, we had the carry trade unwind.
Yes.
And that was something. I don't think that was talked about much until that happened. So, very much in play.
Yep.
So let's get into it. First slide here. So the Japanese yen has become noticeably more volatile. In early part of October, it dropped about 1.9%. Making it the largest one-day decline in 5 months. And when you think about currencies have single-digit implied volatility. You do not expect to see 1 or 2% moves on a day-to-day basis. These are huge moves that you've seen in the Japanese yen. This move and the moves in October ranked in the 0.6% percentile. So you're talking about the top biggest moves in the currency. In the past decade, which is a rare occurrence. And, there's, like we just mentioned, the carry trade unwind that was in August of last year. That was, a huge event. So these things do matter. Getting to the next slide here. So the main driver was the political change that's happened. So they have some change in leadership. The new
position leader, the prime minister, is looking for money printing, basically. More government spending, looser budgets, which means higher bond issuance, which can raise the long-term yield. So you have greater money supply, inflation pressure, which tends to weaken the yen. And the yen has been just absolutely killed over the last month or two.
Yes.
So getting to the next slide here. So the markets currently expect or price in a weaker yen and higher Japanese long-term yields. And the yen carry trade is a big kind of part of this equation. We're going to get into it a little bit here. But, basically the yen, more government spending, the yen will go down. It's the same thing that's happening with the U.S. dollar. I mean, the U.S. dollar it's down 15 to 20% this year. A lot of that is kind of priced in here. So just going through some of the things that happen with rises in interest rates, depreciation of the yen. Getting to the next slide here. So how might these developments affect U.S. or global investors? To keep this simple, we'll focus on two areas that matter most for trading and portfolio decisions: currency movements and interest rates. So getting into the simple terms, investors generally expect a stronger U.S. dollar and higher U.S. Treasury yields, assuming current policy trends continue. So this is getting into the next slide here.
And getting a little deep into the weeds too, right?
Yes.
I mean,
you can take your own assumptions here. So U.S. dollar would appreciate versus the yen. So the yen is going down. That means anything that's priced in as the denominator is going up here.
And you've taken advantage of this, not looking into all this geopolitical risk, really just by price on Forex, some of the trades that you made, dollar versus yen, dollar versus euro kind of thing, just playing the move, which is really a contrarian move. If it goes too low, which you perceive to be too low, you typically get long it in a small fashion. If it goes too
like
high,
a little Johnny, and the FX boys make fun of me.
Right.
It's okay.
You're allowed to be a Johnny.
The next slide is really what everybody cares about. And so this is an example of the carry trade and what is actually happening with these currencies. So the carry trade is one of the main reasons the yen keeps falling, and this is how it works. So we're talking about borrowing yen in Japan where interest rates are low. So you are buying X amount of dollars, and the rate that you are charged to get that money is very, very low. You exchange the yen for US dollars. You invest in higher yielding US bonds or other assets. A lot of this, when we had the first carry trade unwind, a lot of people blame the stock market move because of that kind of unwind of capital. And you basically earn the difference in the interest rate between the yen that you are borrowing and the US dollar that you are buying into. And so you have this spread, and you could see on a 2-year base, 5-year, 10-year, and 30-year, they're between 1 and 2.5% yield, which is your carry. That's value that you're getting just by exchanging yen versus US dollar and then buying the bonds on that position.
Very nice.
So getting into the next slide here, so a weaker yen increases the profits from these trades. So when investors convert the dollars that they get and the return that they get and the interest that they get from those dollars back into yen, you get more yen. So you're getting a bigger carry here as the yen weakens. So the yen weakens, you get more carry, more yen selling, which begets an even weaker yen. So it gets wider and wider and wider until something inevitably blows up, like we saw.
That is right. And you're waiting for the shoe to drop.
Yeah, and then everybody says, "Shoot, we should have seen that one coming."
Of course, it was so obvious.
So the history shows that when Japan loosens policy, both Japanese and U.S. bond yields tend to move higher. So investors price in more borrowing and the potential inflation, which widens the yield spread and puts additional pressure on the yen. So you can just see here, just long-term yields. This goes back to 2022. Next slide here. So cheap yen funding doesn't just affect Japan and U.S. investors, also using yen loans to buy emerging market bonds and equities which support global liquidity and risk appetite. And then these are just, these trades are highly sensitive to policy shifts and can quickly reverse, as we saw last August when that whole unwind happened. So a couple takeaways here. Japan's easy policy is leading to a weaker yen and higher domestic yields. The U.S. dollar and treasury yields may stay supported as global capital seeks higher returns. Currency markets can shift directions quickly, especially when sentiment changes and policy changes. Some of the yen's weakness is likely already reflected in the currency prices. So, you get the big move and then we talk about the yen. That's usually how it happens.
Usually you get the move and then you talk about the subject. It's not predictive in nature because you don't know about it. And it can go in one direction for quite some time. So you are right. It makes content after it happens very hard for before it happens. Even the S&P's up 7, small little bid. NASDAQ down 24. Are you surprised at the market hanging in here with Netflix down 100? Does it and some of the other stocks, some of the high flyers like the OKLOs of the world down $7 and change. Are you a little bit surprised by the strength of the market, the rotation of stocks?
Yes. I mean, I think yesterday was one of the weirder days that we've had in markets, and today is kind of a continuation of that. But I mean, gold down, silver up, Bitcoin giving up the entire move. I mean, it's been a big, wide chopping range in everything other than equities. I mean, the indices have gone nowhere. Volatility
nowhere at highs, which is unusual.
At highs,
you usually get some sort of,
And the move in volatility, I mean, there's
no worry. There's no
worry. It's a 1%, 2% down move, and that's it. And nobody cares. It's over. It's been a wild one. But it's good to see some of the frothier stuff kind of coming off the table here.
Do they become a little bit attractive? The volatility is high in there. You talked about the vol curve getting a little bit two-sided now on both of them.
A little bit. I don't know. We'll see where they open. Like Aklo could be down another. It's down $7, $8 pre-market. I might be taking. I have some short delta and short upside volatility. I'm hoping to be taking that off the table and taking my ball and going elsewhere. That's my hope. That was a painful trade. Took a little intestinal fortitude. I'm still waiting for BE to come in. That's down $5 or $6. I need another $5 or $6. I'm going to do the same thing with that one.
How bad are you? It's gone from 120 to 100.
Yeah, well, I know. Well, when you got vol exploding and you're getting $20, $30 up moves, they're both going again.
You're right. The prior month went from 50 to 100.
When you're short delta, short volatility, and both those things are like doubling, it's a little bit.
It's a hard carry trade.
Yeah.
We're going to take a quick 90-second break and come back. We got more Tasty Live with the opening bell coming up next. It's Tasty Live.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
It was a great show. It was very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event.
I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, son. We got about 2.5 minutes before the market opens here. Not too much to talk about. All status quo with the S&Ps up 550. NASDAQ basically unchanged, down 27. You could see it was up at 338, which is about 70 handles higher than that. It was down around 70 handles lower than that. Really mid-range-ish for the day. Even the S&Ps maybe doing exactly the same. Tight range last night. 25 handles right there in the middle of its range right now. Russell down 10. Dow finally turned around a little bit. It was the leader in the clubhouse, or at least it was green. It down 15 or 20 right now. Volatility up by 5 cents. That's the first time I've seen it up, reversing its move lower under 19 to 19.25. We'll see if that catches a bid. Bonds were higher, up about about 13 ticks higher than this, completely unchanged like the market right now. Bitcoin 108,000 after trading 114,000 yesterday. Below yesterday's low, it looks like there when you look at the move, 108 and change. You can see a big move from 107 to 111 on the Bitcoin futures. Big move there. Ethereum doing the same thing, down around the same, almost 4% on Ethereum. Gold back up $1, over $1, $1.24, about 10 cents off its highs. I know you needed that rally there. And gold down $40, even though silver is up around 20 cents, but gold is off of its lows by about 40 handles. Interesting market. Netflix still lower. It's been lower right after earnings and then continues to slide. Down around 100 now, 99.
Yeah, they pumped a little bit of volatility into the close yesterday, and then Netflix reported it was down, and NASDAQ was down like 60 or 70 handles, and they were putting a little bit of juice.
Yeah, even the S&P sold off about 20 handles too, right after the market closed too.
So
right there.
I think today we'll have a little bit of a pullback. A little bit some to the downside. A little bit of pop and volatility. I think the vol crush was too much.
Yesterday?
It was too much, and I think people are going to be hedging a little bit today.
You got Tesla coming out today also, so that will be on the radar. It looks like Tesla was completely unchanged, I believe, this morning. It is up about 80 cents, which I think on a $400 stock is
nothing.
Pretty much unchanged. IV rank at 25. We'll see if that grows. You could take a look at the implied volatility. It's about 116 in the front month. November is around 66. So we'll see if that expands, if that IV rank expands at all. You got about just a couple of seconds before the market opens here. The only thing you've really done pre-market was you closed your oil spread. That's all you've done.
Yes, that was it.
As we come spinning out of the turn here, sold off a little bit on the close yesterday, as you just mentioned. Even the S&Ps are completely unchanged. It almost seems like a place your bet moment here. Volatility up 10 cents to 19.25. to your point of view. NASDAQ down 54, not much movement there. Let's see what's moving the market overall. Netflix down 105, 106, maybe putting a little bit of weakness into the NASDAQ, which should put a little bit of weakness into the market. We'll see there. MSTR down 8 and change, makes sense with Bitcoin lower. What else is there out here? OKLO down $5 and change. Coin down 4 and change, makes sense with Bitcoin lower. Marvell getting hurt lately. Marvell was trading up near 95. It's about 80 and change. IV rank at 35 in Marvell. Earnings are coming after November expiration. You just did something in IBIT that looks like a close.
I closed out so I sold in IBIT and ETH into the move yesterday. I'm long stock and short put, so I'm just leaning long in both these. And into the move yesterday, I sold calls in both. So I sold in IBIT, I sold them at like $1.50 and change, and I just bought them back at $1 and change. So I took like 50. I took 50 cents out of those. In ETH, it'll be about 40 cents. If you're
an easy trade to make when you had long delta, right? I mean, you're mitigating some of your delta risk there. That's really what you were doing.
Yes, and I want to lean long here, and because of the volatility skew that you have here, you have a lot of upsides.
Not in the market. You want to lean long in these cryptos, IBIT.
Yeah, and ETH and IBIT, you have so much volatility on the upside that you're getting a 30% move in the options value overnight. You got to take the money and run. You get another. If they're up, $2,000 from here, those calls will be back to $150 again.
Yeah, IBIT down $2 and change. CRM down $1.70 and change. Carvana down $6 and change. Let's see what the movers to the upside are. AppLovin finally catching a little bit of a bid. Has earnings next month on the 5th. You can see here AppLovin sliding from around 700 and change to 560. But really, the markets are horrible. In AppLovin to trade. I guess it's a small stock play if you did anything in there. AVGO catching a bid. That's been one that's been a leader in the clubhouse. And as of late, it's been going sideways to lower. You can see all the red bars here. Trading 346 is up $4 and change this morning. Google up $3. Microsoft up $2 and change. Apple used to be a lagger. It's a leader now. It is down $1.80. You can see Apple here. I think the Dow has had 12 lead changes, new highs for the year.
Oh.
I think that's one of the more frequent highs for the year. I think that's the leader in the clubhouse. Not 100% sure, but I think so.
I'm going to try and get out of this OKLO position.
OKLO?
Yeah.
Markets are a little wide in there, aren't they?
Oh, they're super wide. I have this butterfly on the downside. You know what? I'm going to leave the butterfly on. We're going to let this. We're going to let that one.
You look at these markets: $9, $11,
Yeah.
7.5, 9.5. You don't want to. You don't want to involve yourself in there unless you're going to do a defined risk trade. And these spreads, since the volatility is so high, is going to trade quite low.
All right.
You're going to trade cheap.
I closed out the wide call ratio. I sat there debating if I was going to leave it on. I mean, it's a big wide 145, 170 was the call side. I've been holding this for 20 days. I did this, I think this was like a fast market or what's your assumption type trade. We did it at $1.65. It was the Batwing trade. And that thing, it was trading at $2,000. You know what I mean? Like it goes
now it's trading at $200.
And now it's trading at $200. But I traded it at $1.50 credit.
Right.
It goes.
So you're taking a small 60-cent loss or whatever, 70-cent loss.
It went to $2-3 grand.
Right.
And I'm sitting there holding that position. I'm like, the volatility is exploding here. I mean, you got to be.
It had a big wide spread. I mean, on 100 and
how could it possibly hurt you? How could it? I mean, the stock here. We could actually look at it. I'll pull this up on my platform here. So
OKLO down $10 now. Big move in there.
So this is my market snapshot. So we did that. So the stock was at 110 when we did the 145, and we could see it here. I'll give you my order chains here.
Oh, I like this little snapshot.
So yeah, so we did this
on the 1st, on October 1st. The stock's trading at one.
Everybody has this in their platform. It's not something I've looked at a lot, so I love it that you're showing.
You know, you're learning new things. It's amazing.
I am learning new things. As a boomer, as an old guy, yeah, I'm learning.
So we did this at the stock's trading at 110. We're long the 145. That's $35 out of the money, and short 2 of the 170s.
How could this go wrong?
How could this possibly go wrong? I mean, when we made that adjustment,
$25 wide on a $110 stock.
It was 110% implied volatility. We just closed it out. It's still very high at 130, but
volatility went up, which you don't want on a trade like that.
The stock
price went up.
The stock went up. I mean, what's the high here? 200. It was 174 was the high that I'm seeing, closing high. It got up to 183. So you took 30 points of heat to the upside on that trade.
Yes.
Hey, you take the money and run and just get out of that trade. Do I take my NASDAQ off too?
I would. Down 100. It's a decent size move. Volatility is up 15 cents. Nice call on.
I think you can get a little more today. All right.
Beautiful. Good little scalp.
Do I take my E-minis too? Nah, let's leave
E-minis. I think
E-minis have been a lot stronger relative to the Russell and the NASDAQ have both been much more volatile.
Yeah, and you could make the argument to peel those off too, but I mean we are at highs, and they keep some of your shortish delta. You just took some nice profits on the Nasdaq.
Yeah.
You think about doing anything in the 0 day?
What do you want to do?
I mean, come on. I think we have to do what we've always been doing, just go into
20 delta
to SPX and going into the 20 delta options. 0 day implied move $27, relatively. Remember, these were under 20 at one point, not too long ago. If you're going to go down to something, maybe you do your $10 wide, 80, 90.
Yeah, I don't want as much risk to the downside. I think we do the
60, 70. I don't know, maybe.
Yeah. What are you thinking?
I have it up there, 67, 60, 70, 90, 80. Small little Johnny trade, 270, 265.
Yeah, I had it at the 95.
You could do that. You could do that. Depends on your, you kind of skew your little market opinion. That would be around $2.95, $3, $2.90, something like that.
All right. I'm going to do.
That's classic 1/3 the width of the strikes.
Yeah, I'm going to do the 90, 80, 55, 65. It's relatively flat delta.
65, 50, 65, 75, you said? On the upside?
No.
Sorry.
67, 55.
I got
55, 65 on the upside, 90, 80 on the downside.
Got it. That leans you a little bit.
Little short delta.
Short, yeah.
That's kind of my thinking is we get a little bit, maybe stay here, go a little bit, tiny bit lower.
Okay. Yeah. Beautiful. I mean, listen, there's no wrong answer. You need the stock to stay inside the expected move. You're a little bit inside the expected move to the upside. You're a little bit outside the expected move to the downside.
What do you want to take on this?
$4, even though you only sold it at $3.50.
No, I meant profit-wise. I'm going to put the GTC in.
Yeah, I mean, I don't know, 20% is 60 cents or so.
You want to take 60 out of it?
I mean,
I think that's probably a good mark.
Look to manage the winners here. I mean, volatility is not high at 1925, so I
did it at
315.
At 315. We'll put it in at 250, which is 65.
Okay.
$65 profit, which is a little over 20%.
Yep.
Probably going to have to hold this, for at least a couple hours.
Gold catching a little bit of a bid, down only $20. If that sounds like a lot, but it was down $70 earlier today. So gold catching a little bit of a bid.
I needed this oil move too.
Oil up $1.28 to 58.50 and change. Where'd you buy your futures? I know you did a little bit of small futures.
My NASDAQ?
No, your NASDAQ was a good cover. That was my idea. I'm kidding you.
It was your idea.
No. It was all yours.
No.
You did it.
No. It's team.
No.
The bats. The bats. It's a team effort.
When it works, it's a team effort.
This
when
is a team.
Loss,
you don't have to
do a thumb war for see who takes the losses.
Hey, you won't have to do how does Daddy do it, and I certainly won't do it because
that would be
I think it gets a little weird.
Would be weird.
I think it gets a little weird.
Let's take a quick 90-second break. We got What's Your Assumption? We're going to see 10 more trades, look at 10 more trades, see what's going on there. We'll take a quick 90-second break. We got more Tasty Live. What's Your Assumption next?
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We are back, son. You know what that means. Time for a little bit more Tasty Live. Even the S&P's down $1, gold down 12, NASDAQ down 62 or 63. Good cover there. But you volatility up 10 cents. Again, kind of a...
Would you like...
You do have the roll in the VIX futures?
Yeah, in the VIX futures, a little bit of a bin volatility. I would like to acknowledge a fantastic trade. Diamonds. 50 cents. You'll see that come through on the follow trade. Very quickly.
Trade today, baby.
Yep, that was yesterday. I mean,
how much you want on a
that's a great trade.
It's
a great trade. I love it.
$1 over, 30, 40 days. I don't know.
Yeah. Most popular podcast in the financial space.
In the podcast world. Even better than OnlyFans. Option trades today every Tuesday and Thursday.
Might have to start getting into that realm there. Tasty After Dark.
Oh my God! What's your assumption? Put it in there.
Here, I'm pushing that one through. I also have. I'm going to get out of this INQ put diagonal spread that we had. This stock is coming off too, which is nice to see. Some volatility coming in as well.
I like it.
Yeah. So.
It's okay with
these markets stink
up too. What are you trying to close?
The 60-50 put diagonal spread in INQ that I have. These markets stink.
I was going to say, you're going to have to leave
They're
that.
so wide. You're like $2 wide here.
Mm-hmm. Volatility now unchanged, man. You can't keep a good market down.
Yeah. Good scalp.
Yeah, good scalp.
On
good
the
scalp.
NASDAQ futures.
On IONQ.
Well, that one, but also on the NASDAQ.
Yes.
Was that kind of at the lows?
Listen, you have to manage your winners on scalps, and when do you do that? I don't have that answer for people. I wish I knew. When the market moves in your direction is when you manage it.
Yeah, and you got to be able to hold them.
Mm-hmm.
That's the biggest thing.
Yeah.
Good stuff. Let's do it. What's your assumption?
What's your assumption?
Yeah, we got a bunch of trade ideas. Let's do it. Forgot about the music. Shoot.
It's all on you.
I'm sorry. First one, please. We got the rut. Damn, I haven't traded the rut in a while. Neutral, about 45 days.
Vol is up, but market doesn't seem to be falling apart just yet. I also see limited upside for the rut. This is Andrew in Clemens, North Carolina. Maybe he's coming out to your show.
Now, you've got to take a look at the rut and, 45-day time frame. So he's probably going into December options, which would be closer to 57. You look at these markets, they're not bad, but look at the volume in here. It's basically zero. I'm going to put it up there for you right now. 6 contracts of puts, 5, 14. I mean, I think you're much better off staying in IWM. You might have to do more contracts. I mean, this is 10 times the size of IWM. I don't know if Andrew realizes how big one contract is in the rut, but it's a big contract.
I agree. And
the IV rank of 18, not up.
Yeah.
I mean, we missed that. I mean,
yeah, I sold a SPX.
Not we missed it. I mean, that ship
2
has
or 3
sailed.
days ago.
2 or 3 days ago
was when we should, and we had a bunch of segments on VIX versus VVIX. We talked about volume and implied volatility, how those two things kind of go together. And I mean, we didn't trade rut, but we did an SPX wide iron condor, which I was looking to take off yesterday, but might look at it today. We did a strangle and spy. We did an iron condor in the Qs. So we did this. So I agree with you. I think we've kind of missed that boat. But if we get a little bit of a pop and vol, we will certainly look at this one. So we're gonna pass on rut. Next.
And I might challenge you to look at IWM.
Yeah.
This gentleman.
Yeah.
You can find it a little bit easier to manage.
Yeah.
ANET.
Arista. Bullish. Brennan,
Chain
close
of
to
dollar.
Mesa.
Hasn't gotten hit like some of these other high flyers. I mean, it is off as high of 160 or so. IV rank of 63 is good. It does have earnings November 4th. November 4th.
What about just doing the put side, just selling a November? So 25 points from high in the last 2 weeks. Oh, 2-by-1 put ratio. Are they talking about like buying 2, selling 1?
No, I think
Or
they
they
have it reversed. I would imagine because you want to do a bullish trade. So that if you buy 1 and sell 2, a classic ratio spread the way that we would do it, that would have long delta. Here's another one where the
Markets are not great.
I please, ladies and gentlemen, I think you need to. We want to put these trades on as much as you want to see them on, but $1.50 wide markets, 1 contract trading all across the board here. Let's look at even.
I was looking at buying the 135, selling 2 of the 125s. I mean, that spread is $1.40 wide.
Yeah, you have.
I mean, you got 40 or 50 cents on each of those options. You got 3 options.
If you're going to trade anything here, you have to trade the nickels, meaning like the 135s, the 140s, the 145s, the markets in between. At least those have, I don't know, 50 to $1 wide market, where the other markets have $1 wide or more markets. But I would probably abstain from that.
I agree with you. I'm usually ready to sling them, but I think those are.
Sometimes you can't.
Gotta sit on your hands a little bit.
Yeah.
All right, 0 for 2. This is a classic Batista showing. 0 for 2 here.
It's your time to shine. You can do this. UPS.
Oh, man.
That'd be another tough one for you to do.
November, December expiration. Lyle, Baton Rouge. It's at a 5-year low with earnings October 28th, 50% IV. Consider selling a 16 delta put on either expiration. Is there a trade here?
Earnings in 4 days on the 28th. It has come off of its lows the last week from 82 to around 88. It's 87 and change right now.
So look in November. I think you go to November if you're going to do this into earnings. What do you think about like just the 80 strike puts?
80 strike puts in November?
Yeah. The 52-week low is 82.
Yeah, markets
you want to sell the 82?
They're 20 cents wide, so stock's down 72 cents. It's just rallied. I put something closer to the offer. Like, I would improve the market, but I wouldn't go in mid-price here. I would let it come to me. I got the E-mini S&Ps down $1, NASDAQ down 40.
What about a diagonal spread? Like that or no?
I think you'd be hard pressed to get in and out. I mean, you can do November's got 46.
They're thinking longer term here.
They are. They are.
Yeah.
So if you want to do Nov-Dece diagonal spread, you could, because the setup is there. I'll put it up there on the screen for a moment.
39%.
November 46, December 39. You'd be buying December, selling November. You're selling 5 vol differentials. After earnings, it's going to go down to basically zero. Now,
go much lower than the the mid price here because this was marked. I did this at 450, and I went in, I went in at 450. It was marked at like 465. The market's now moved to 441. You go in
the mid price, yeah,
because you got like 40-cent wide markets here.
Yeah,
I did not think
the best. This is
another one that's not that liquid.
What's that?
Another one that's not that liquid.
Another one that's not that liquid. Yeah. But you have defined risk on here. Directional trade, you got 33 long deltas in here. Their bias was basically zero, so you took a little bit of a long delta.
Well, they had the 16 delta put, not zero.
They want to do 85.95. It's got long 30.
Yeah, no, my trade. I thought you were talking about our from Lyle.
No, you took a long bias here. Theirs was I don't know.
Yeah.
Next one, please.
SLV Silver. All right, this is from Reddit. Neutral, November, Delta Neutral Strangle, SLV. You got any interest? We closed one.
Yeah, I rank a 69 is pretty good. Silver was making new lows. It's come off of that. Silver's now up 40 cents, trying to lift the gold market with it here. You look at November with 31 days. Markets are definitely tight and plenty of liquidity. IV rank is high. You want to put on a neutral type spread?
So I had the 42.47 strangle yesterday. I closed it at $2.51 debit. It's now at a $2.33 debit. So it's moved about 10% just overnight. I'm basically a nothing move here, just to give you an idea of how much volatility has come in.
Right, and you look here at the IV rank, you could see that coming in significantly.
Yeah.
So does that shy you away from making a trade, or do you go? Do you sell premium in another fashion? Do you do something with defined risk as like an iron condor? Do you do a ratio put spread like a 1x2?
We could do that. You want to do like a 1x2?
You might have to go 1x3 kind of thing, like a 42.40 if you're doing the put spread. Just to get some sort of small credit, unless you want to get much tighter. That's the problem there.
I kind of like that. You could do like the 1x3 43.40 trades at about a 24-cent credit in November. Gives you a break even down around 39-ish. A small amount of premium. If you get kind of a sideways chop here, that would be like the perfect trade. Sideways / slightly down.
Yep.
I kind of like that.
Okay.
24 cents.
Perfect. That's mid price right there too.
Yep. Cool.
Awesome.
All right, we're in.
And you're going to push all these trades through, right?
Yes, they're coming through right now.
Someday you'll deem me worthy to get that.
I'm working on it, all right. All the things in the background, I don't know how to code like the great one does.
I got it.
I can't make all the new features myself. So
I understand. Even the S&P is basically unchanged, up $1. Dow down 111, Russell down 9, and Nasdaq down 21, basically unchanged. Volatility unchanged too.
Yeah. Next one here. CME bullish. Roberto, south side of Chicago and Netherlands. Or maybe they're calling the south side of Chicago Netherlands.
I'm not even going to touch that.
Yeah, I don't.
CME down $1.50 today. CME has had a kind of a great run to the upside, trade up to 290. It's kind of sold off a little bit last couple of months, down to 260 and change. The lows are in the high 250s. The highs are in the high 280s. Let's just call it mid-range to lower end.
For an exchange, these markets stink. Bless you.
Pardon me. Yeah, you're 100% correct. No weekly options here. Earnings October 22nd. That's today, this morning. That means the earnings came out already. Monthly implied volatility at 23. Stocks down $1.
Look at these December options. Put the 250.
You can't trade this.
You can't trade this. The 250 puts are 245, 510. I mean, anything you do here you got to go way off the mid price. But I don't even think.
No
I
bid
don't
at
think
260. The marks are going to be horrible. This becomes a.
You can't trade this.
Becomes a why.
Damn, you guys are killing us today. Need something liquid. So we got to pass on this one, unfortunately.
Next one, please.
GH. Wow.
Never heard of it. HGH. GH, $68. Up 49 cents. Earnings are on the 29th of October. Okay, you don't have to go any further here, son. Everybody looked at December markets.
Is this one no good too?
$4.70, $7.90, $2.30, $5.
But Ron got these pre-IPO, so he's printing some cash here.
Okay.
Not too bad here. But how do you play this to all-time highs before January 2027? 2 years out. A year and a half.
Why is January 2027? Why 2027?
How would you play this?
I wasn't reading. I just said before January. I didn't read his comments.
Yeah, if you were trying to play it for that long of a duration. I mean, look at the call. You can't even do like leaps in here. These markets are just no good.
$4 wide, although there's not any volume, but there are people trading it. There is some open interest. Open interest just means these are how many contracts that are not matched up with somebody else, meaning how many are open and not closed.
Yeah.
That's what open interest is. Volume is intraday trades. How would I play this to January?
Upside calls.
Yeah.
If you're playing it for new highs here.
I would probably look to, you're going to probably hate this, but I would probably look to do some sort of, spread in here, like an at the money spread, because I could price it like a $20.
Because they're going to trade at 50% of the width.
Yeah, like a 60-80 should trade, a little bit under $10. $8.20 is mid price. I'd probably go in at $7.50. And if I didn't get filled, I would move it up to, $8. And if I didn't get filled, I'd probably leave it there, kind of thing, and see if I ever get filled. That would just be like risking one to make one kind of thing.
We're getting stumped today. This is, what are we?
Not our fault, I don't think.
I don't
think
these
are a little
we're on the
questionable. Let's go to.
Is that indicative of the market though right now?
Yes.
You have stuff that's flying around, and now you're looking for like the next kind of wild one.
Yes. Most definitely.
Next one here. We're 1 for 6. This is a tough day. This is a tough day. I think we were 1 for 6, right? Only
Bonds, bearish.
Oh no, we're 2 for 6.
2 for 6.
We got the SLV position in the UPS trade. Bonds, bearish. All right. We kind of missed it this morning.
We did. They traded up to 19 or 119.19. They're down 4 ticks right now.
Short call spread?
Yeah, you could
121, 124.
Yeah, you can do that on the November 21, the same strikes, same month that he's looking at. Sure, you could do something like that.
Yeah, I think we need a position on here. We'll put that in 27 ticks. We'll see if we get filled on that. Wait for an uptick. You get an uptick, you hopefully get filled on that one.
Yeah, and I think that's the way to trade it. After it's already moved, bonds are down 3.
Not going to chase it.
Yeah. I agree. Good call out of you.
And we need that to up our spread here.
Yes.
We need this fill. We need this fill before the end of the show. Next one, please. VST. Okay, avocado. This is coming from Reddit too. We're starting to get a little bit more active on Reddit. Are you going to get on Reddit?
I think I should.
You would be good with Reddit because you got the Twitter. Twitter and Reddit are in the same.
Are they?
It's not like the TikTok.
Right.
That's a different. Not to hate on the TikTokers. We love you TikTokers too. But there's our bonds. All right, so we got our bonds. Nice.
Good. And you only needed a one tick move in the bonds, so that was good.
Yeah. The Reddit crowd and the peeps on Reddit, they have the same sense of humor that we show on Twitter. So I think you would be good.
Okay.
We'll see. We'll see.
Will you show me how to sign up?
I'll walk you through that. No problem. It's tough. We're gonna
listen. This is a precursor to helping me on with my diapers. This is a small thing.
That's true. That's true.
This is a small thing to ask.
No, I'm leaving Vinny to that job. Okay, I did this job.
I did it for you.
I did this job. Carrying
I did it for you.
VST. Trading low end of the range last 3 months, down from 215. Yeah, this stock has gotten whacked a little bit. You did have earnings in GEV.
It's on a 6-day slide of biblical proportions from 220 approximately down to 185.
All right. You want to buy a little dip here?
I'd be ranked at 29, although that is upticking. Earnings on November 6th or so.
All right, so they're looking at just selling the November 165 puts.
Yeah, markets are a little bit wide in here too. Open interest is okay, but markets are a little bit wide. So again, you got to go in at your price. If you can, dollar wide markets in here, you really got to want to trade this.
Yeah, I'm gonna try and see if I can get like $5 on these.
You see, the problem here is there's so much implied volatility that the vertical spreads are going to trade cheap.
Trades for nothing.
They're going to trade for nothing. So you're either going to put in at your price.
I put it in at $5 and it got filled. And that spread's at 540 right now, and they just moved it to fill my. That was me.
Yes, a little way of looking at this for the future. You see the ones that are colored here. That means that the market has been price improved. You look at this one, 590, 695. That doesn't have any customer orders.
Yeah, there's nothing in there.
Right, there's nothing in it. So if I saw this and I saw somebody like bettering the markets, I might go down to 530 first. And not like into the mid market of like $5 where you were looking at.
Well, no, this was $4, 540.
Okay.
Your mid price of 460, 470 ish. I went at $5. I let it sit.
Yeah, there's no way of finding the mid price is what I'm trying to say. So I would be a lot more. I'd be a lot less aggressive with my roll downs just by noticing that. Just a little way of looking at things. Good
All
one.
right.
So you got filled at that $5.
Yes, we're in.
I can feel you.
$5.
Perfect. What else we got?
Next one, please.
SPX 0 day. Oh, we did
All
that.
right.
But what do they want to do here? And buy a 15, ask put. If put bid doubles, close the spread and do the call.
You got to say it louder. So, so we're buying, what are we doing here? So you're selling the $1 put. You're going to buy it back at 15 cents.
No. You're going to sell it.
Oh, you're doing a spread. You're selling the $1, buying the 15-cent option. So you're doing an 85-cent spread. If the put bid doubles, so if the put goes from $1 to $2, you close the spread and do. Oh no!
Right, that's where I got you when I was.
You're gonna close the spread and then do the call side. So basically, what you're saying is you're gonna sell a put spread, and if the market goes down, you're gonna take the haircut on that and then sell the call spread into lower prices. And then if the call,
you're selling into the move the opposite move of what you're
going to get long, and then it's going to go against you, and you're going to say, "Oh no, I'm taking that one off. I'm now going to be short into lower prices." And then if that one goes against you, you're going to take that one off and then flip it. Joe, you got to make the trade a little bit smaller and hold a little bit of directional exposure.
Yeah,
hold a little bit of
what
risk.
He's doing here. I mean, he's playing the upside move in the market, so
trying to scalp it.
So trying to scalp it, taking a small. I mean, let's just take a look for a second.
I think if you're looking at this sort of thing, you'd almost be better off trading like the micro E-mini contracts and trying to scalp 20 or 50 cents out of those.
Like right now, he'd be somewhere in the 66.40 range. Let me just give you what you would be doing here. If you're buying a 15-cent put, I'll go to the 6,500s. I mean, you're using $10,000 in buying power. That's a lot of buying power for around 85 cents, which you make around 60 some odd cents. I know the probability of success shows 99% plus or something like that.
But your probability of success is changing because you have such a tight exit parameter. Like you're turning your trade into a 50-50 pop.
Yeah, you're going to eat like a bird and poop like an elephant is what's going to happen here. You're going to...
Well, no, it's death by paper cuts here. It's like you're putting a lot of capital up to make a small amount, but you're setting very, very tight parameters of exiting, and you're flipping the cards, and you're doing all it. So you're gonna get nickel and dimed here all day long.
If it's been working for you, please continue doing it.
Yeah.
I think that's a type of trade where you're going to have to sit in front of the...
we got our SPX.
Oh, good job out of you.
There we go.
He's down $1.50, haven't moved. So that
came in
would
way...
trade the 0 days that way.
Yeah, that spread came in way quicker than I thought it was.
Yeah, volatility's up 10 cents. Even the S&P's down $1.75.
We had a little bit of short delta there.
I know, but when you put it on, even the S&P's were down like 5. They were down like 7, 8, 5, something like that. They actually rallied a little bit. Into your trade. So that was really just time going by. I guess that's what I had.
That was less than 30 minutes. I mean, that was a 20-minute trade.
Yeah.
That's not too bad.
Nice little move.
Last one more. So we're gonna pass on this, but we're with you, Joe.
But we did do the 0 day. If you haven't watched us do the 0 day, you can take a look at that earlier today.
Yes. Intel weekly options. I'm starting to learn about diagonals, and I've been working on training my own custom GPT using tasty material. We're already getting replaced.
I know, isn't this
This
crazy?
is scary.
Wait, Ocnove. There we go.
Ocnove. Okay.
Ocnove. Got it.
All right. So you're doing you're selling the October 24th, which is do they have earnings coming up here? That's
they do October 23rd after the close. So that's today.
That's today. Okay,
That's
so
tomorrow. Sorry, tomorrow. That's why I don't have it on my list.
So you're doing a 16-day 2-day. So it's a pretty short duration trade.
Yeah. And I might wait until tomorrow. Earnings coming out on the 23rd. If your assumption hasn't changed, that the market doesn't move. You got 24 hours before.
Doing these into earnings, I think you got to go a little further than the November 7th expiration. Like I would lean towards going to the November 21st, just to give yourself a little bit more duration. If you get the sideways move and you're 2 weeks out on the long versus the weekly here, they're both going to get vaporized. Like you're going to lose too much on both those options. If you go further out in time and you're buying a lot of that extrinsic value that's at the money that has lower implied volatility, because like if you look at the November 7th implied volatility, 86%. If you go out to November 21st or even December, you're talking about 70% implied volatility. So you're not as exposed to the non-move. The benefit of a diagonal spread is that you don't get whacked by the non-move.
Right.
And so you gotta kind of pay up and go a little further out in time. That would be my suggestion here.
I agree with you 100%. I think you have to wait till tomorrow.
Yeah. So we'll wait.
That's my story. I'm sticking to it.
So wait, I thought you said the earnings. Oh yeah, they're tomorrow after the close. So we'll look at this tomorrow after in the morning, and we'll look to do something in there.
Very good, very good.
Cool.
How many did we do? What?
Ooh, this
not our fault.
This is not great. We're good. We're giving.
I think you did the 5 trades that you could do, and I think you actually pushed it on 1 or 2. So.
And we did an SPX trade this morning, and I have an Intel position on it, and we're going to do that tomorrow. So really, in my book, we're 6 for 10, which is relatively typical for a Batista. 60%.
We're going to take a quick 90-second break and come back. We got more Tasty Live. What comes up next?
We got Jacob in the house.
That's
market
right.
measure.
The skinny on options math. Right after this, we're going to talk about models. We'll be back in 90 seconds.
Not the kind that you want to talk about.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
That's right. That music can mean only one thing. It's time for Jacob the Skinny on Options. Matt, how are you, my friend?
I'm good. How are you two doing this morning?
You are good, Jacob. You are good. I'm doing fine. Nikki's here.
There we go. Yeah.
Oh, no.
Nikki's overperforming, carrying the show. It's been good.
Yeah.
I'm trying. I'm just taking stuff off. I closed out of that put spread in Meta. Took $100 out of that.
Nice.
Been a good day. I mean, massive vol crush, a little bit of a bounce, getting some of the high flying stocks to chill out a little bit. Your INQs, your OCLOs, your MP. I had positions on and all that.
Let's calm down. They've chilled out for 45 minutes.
That's true. That's true. It's
really
45 minutes. Yeah.
Well, when it happens, you got to take advantage. Had a 0-day SPX trade that we took off already. I mean, this is, you got fast markets right now, despite nothing happening.
Right?
That's right. That's right.
Yeah.
You got to catch the windows.
You do. You do. Unfortunately, you do.
But today we're not going to talk about anything from the last 45 minutes. We're going to talk about about 2,300 years of history on today's piece.
Whoa.
Whoa, that's a lot.
Which, I mean, my primary point today is that the whole sort of dynamic volatility revolution is not particularly unique to finance, right? The fact that Black-Scholes was the dominant model and was taken as the absolute descriptor and then had to sort of be thrown out and reevaluated, thrown out, but then you don't actually want to throw it out. It's still very useful. How does that work? Well, there's a whole parallel to this story that takes about 2 millennia to play out that describes the evolution of geometry. So we're going to go over that history and then try to show the parallels to how it applies to the financial math history.
Cool.
So this is a sort of a rehash of last week's opening slide, just to remind people that we're talking about models, and that the key thing here is that mathematics can seem very complicated, but in a very real sense, it's the description of the world that you can actually say definite things about, right? It simplifies things down so much that you can have absolutely true statements in a way where, the contents of a drop of water, if you take it out of the sea, is full of tiny, thousands of tiny microorganisms. You can't track them all, and it's very complicated. So you make a much more simplified model to describe how it works. The purpose of the mathematical model is what makes a model? It's a sort of an explicit collection of definitions and assumptions that you can then derive results from. And the idea is it's a setting where you can do rigorous reasoning, and then you hope that anything you get as a result will apply to real world situations where those assumptions are pretty much true. Right? They might be slightly wrong, but they're at least mostly extremely accurate, and therefore your results that you got by pure theory can be applied to the real world. So let's talk geometry.
Let's talk geometry.
Yeah,
if we must.
The chat's saying general relativity. That's what we're going for here.
Well, yeah. Einstein will get a call out in today's piece.
Perfect.
Right after Gauss. So probably the earliest sort of rigorous mathematical model that we have any records of is Euclid's geometry. Euclid published his very famous 12-volume series called The Elements, the first 6 of which are about geometry, or the first 4 and also number 6. The ordering's a little strange, but the first half of which is roughly on geometry. And from what he did there was he put forward some definition. There's like 21 definitions. What is a triangle? What is a point? What is a line? And then 5 axioms or postulates about how these things relate, or what are absolutely true facts about them. And I've given them here in sort of their directly translated original Greek version, so they don't read that cleanly. But right, to draw a straight line from any point to any point, right? This is usually phrased nowadays as 2 points determine a line. Right, for given to 2 points, there's one and only one line that connects, straight line that connects them. You can extend any line segment into an infinitely long line if you want. That a circle, just as 2 points determine a line, a circle is determined fully by its center and its radius. And that all right angles are the same as each other. Those all seem very solid. Those are Euclid's first 4 postulates. No one has ever really had any question about any of their validity. And then he's got this 5th one that seems like it's much longer, it's more involved, it seems less obvious, right? And it's if a straight line falling on 2 other straight lines makes interior angles that are less than 2 right angles, then the 2 lines have to continue. If you continue them indefinitely, they'll eventually meet. This gets rephrased a couple hundred years later into a sort of a simpler equivalent form, but it's still more cumbersome than the other 4. And it's that this is the one that people hear in their geometry class in high school, that given a line and a point not on the line, there exists exactly one line through the point parallel to the line.
I keep this printed out in my bathroom. Just every time when I brush my teeth before I come to work,
you want to review.
I make sure that I get these right.
Well based. So these resulted in dozens and dozens of theorems and results and questions about how you can measure the height of the pyramids by measuring the shadows that they cast on the ground using these results. You can do all sorts of things. They're incredibly accurate and powerful. And for about 2,000 years, they were taken as just being an absolutely correct model of physical space. The idea was that these 5 rules describe how distances and shapes just work. Full stop, period. But that 5th postulate really was sort of a sticking point. Let's go forward one. Because it's just not as nice. And the reason that it's the way it is because it shows the fact that this model was not originally developed to be a full description of physical space and reality. It started off as an attempt to give a rigorous, axioms, postulates, reasoning basis for what were some ancient Egyptian techniques in just doing geometry, measuring shadows and figuring out lengths, which were all developed because the Egyptians had a very particular problem, which is that the Egyptians farmed the Nile Delta. The Nile Delta farming works because the Nile floods seasonally, and so everything gets covered in water, which makes it very hard to tell whose farm is whose and what land belongs to whom because everything gets covered in water once a year. And so we've got this, 1650 BC papyrus that was titled "Direction for Obtaining Knowledge of All Dark Things," right? Which is a very fancy way of saying to figure out what's underneath the water and to determine who owns what and which farmlands belong to who, so that the pharaoh could know how much taxes to charge the various farmers. Right, and this was the development of all these things, and they came up with all these, sort of very practical geometric techniques. And then Euclid wanted to give this rigorous founding. He invented this idea of rigorous founding, possibly. Euclid also may not be one person. It might be like a collaborative name for a group of people. This is historically debated, but we'll say Euclid and he, despite this. gave this sort of this very formal basis, but the point was to give a framework where the Egyptian methods could be applied. And if you're determining parcels of land on a big flat plain that periodically gets flooded, then this fact about parallel lines is true, because it's really a fact about flat space. And you might think, well, everything's flat. Isn't everything flat? And the answer is no.
No, I would.
Almost nothing is flat, actually.
Right.
Let's go forward one, and we'll someone said it's going to be Einstein. Right. So the first four are succinct and seem obviously true, but the fifth has given millennia of scholars consternation. There's about 1,000-ish years of people trying to prove the fifth postulate using the other four before it's eventually shown that if you don't have the fifth postulate, you can't get to things like the interior angles of a triangle should be pi or 180 if you don't speak radians, but should be pi. Now, that seems like a really obvious fact, but even in the Renaissance, ship navigators knew it wasn't true, because if you're drawing lines on a sphere, if you look at the top of this picture here, that has a triangle where all three of the sides are bigger than right, where the total is more than 180, because you can make 390 if you do it from the corners. Right, that on the sphere you get larger angles on your interior triangle, and so it's not actually the case, right? That the straight line triangle would be if the triangle went through the interior of the Earth, but if you're confined to the surface of the Earth, like a ship sailing, you'll notice the difference. And now, on a very small scale, it's a very small difference, but if you're traveling across the Atlantic, it starts becoming relevant. So let's go forward and see sort of what. So it's 1790 to 1810, Gauss develops what's called nowadays non-Euclidean geometry, where he shows that if you take this fifth postulate, you can negate it in one of two ways. In one, the interior of a triangle comes out as more than 180, and in one, the interior of a triangle comes out as less than 180. In spherical geometry, it gives you more than 180, and this finally gives you sort of a rigorous foundation for how navigators already had to do their charting to measure shortest distances for sailing. And then hyperbolic geometry, where Gauss spent most of his time, doesn't actually have a real application. That's where it's negatively curved, and triangles are pinched at their corners, so their interior angles sum to less than 180. It's that saddle shape in the middle. That seemed like just a purely theoretical exercise. It was kind of fun. What if we did the opposite reversion? Right? We're not on Earth, we're somewhere else. But then Einstein shows that actually the vast, vast majority of the universe obeys hyperbolic geometry, because gravity creates curvature. Right here on Earth, we're in a lot of gravity, so everything's very curved. So we get the spherical geometry. Very far from Earth, right, in sort of the vastness of space where there's very little gravity, you actually get hyperbolic geometry. And then there's this perfectly thin shell between the two where it transitions, where flat geometry actually correctly applies. But that's almost nowhere, right? It's this, this infinitely thin shell between the two regimes of spherical geometry and hyperbolic geometry. And in the same way, think of the Black-Scholes model as our flat geometry. It's older, it's simpler, you can think about it pretty quickly in your head, you can get results from it pretty easily, but it is, in a sense, wrong. It doesn't actually describe reality. However, it does provide useful things, right? These geometric techniques from flat geometry that everyone learned in high school and middle school, and engineers the world over continue to use every day to build buildings and planes and all sorts of things, and works super well. It's incredibly accurate, because until you get to a really large scale, the effects of these curvatures don't come into play. Let's go forward one. And in a sort of a similar way, the discrepancies between Black-Scholes and reality are going to only come into play sort of on larger scales. Now, of course, those larger scales do come up more often than traversing the Earth. But so the Black-Scholes, when they presented it, did not phrase it this way at all. Their presentation was, we'll make a couple assumptions, which are kind of like these, and then we'll construct this, hedging portfolio to find the fair value options. But in the decades since, there's more ways to develop the Black-Scholes model, and one of them can be done as you start with some postulates, right? The assets should accrue or lose value in proportion to their current value. And this tells you that log returns are sort of the fundamental object of study in financial math. That there's no arbitrages available in the market, right? That current prices are correct. This is the efficient market hypothesis, as I often point out. If you don't have this, there's not really any math to do. You just should do the arbitrage. That there's no friction in asset transactions. This makes all the math much simpler. There have been a number of PhD dissertations showing that you can relax that without changing very much, right? The actual reality is that there is slight friction in the market. You do have to pay out a little bit of a vig to the holders, but it's fine. It doesn't really move things very much because it's relatively small. And then the last one is that time is homogeneous, right? Which is that while things might eventually, like in the past, will be different from each other, the probabilities that went into them are the same, right? You might flip coins and get different results, but the coins are always the same coins that you're flipping. And this winds up being equivalent to a constant volatility assumption and winds up being the untrue one. Much like with Euclid, scholars have questioned these, and in particular, it's the last one that they've sort of thrown out. Let's go forward to talk about some dynamic volatility issues. So in 1987, we have the market crash where everyone, abandons the Black-Scholes model, or at least prices leave the Black-Scholes model predictions, right? Which causes people to throw out this idea of constant volatility. Now, the thing is that Gauss showed that there were only two alternatives to Euclidean geometry. There was spherical geometry and hyperbolic geometry, and that's it. Unfortunately, in finance, there's a sort of an infinite number of ways you can throw out constant volatility turn into a dynamic volatility. And we've had about a little over 30 years now to produce just a wide range of different volatility models. And it's even confounded as a difficulty in that it's very hard to evaluate which of them is better, because people following models then trade on the prices that the models give them, which means that the market reflects the models, which doesn't necessarily mean that the models reflect reality, right? If reality copies the models in a way that geometry never does, right? The triangles and circles and ships traveling straight lines and whether or not the buildings stay standing never asks how good your math was. It never checks to see, it never goes, oh, were you using different math? Well, let me change how tall I am as a building. Right? The building is how tall it is. But the prices in the market aren't just given by reality. They are determined by traders, and traders might be listening to models when they decide how much they're willing to pay for something, which creates this sort of circular feedback, meaning that all of the alternatives to the Black-Scholes model are really hard to distinguish between and give particular value to. And for that reason, even though the Black-Scholes model isn't true, it still is really useful in sort of even a slightly deeper way than Euclidean geometry, because Euclidean geometry isn't true, but it's useful because it's a very close approximation to truth in most day-to-day situations. On the other hand, the constant volatility assumption isn't true and is only a close simulation in really, really small time steps, right? Once you get a big move and you start seeing the effects of put skew, you will notice that volatility is not constant. But unlike geometry, where the alternatives were very clearly laid out, in finance, we don't have a really clear winner for what to do when we relax Black-Scholes. So we need to sort of stay with Black-Scholes as our sort of center point for our reasoning, recognize that it's not true, and then be willing to sort of relax our view of it, but not commit too strongly to any of the alternatives.
Before we go to takeaways, Nick, why don't you give us the takeaways? You probably got this.
I was going to say, this is a lot harder than my Swahili class, my elective that I took. This one is certainly harder than that.
Do you have any phrases that you can say in Swahili?
No. I was asked that this morning. I don't remember a single thing. I don't remember a single thing from that class.
You can't ask where the bathroom is?
No.
Can't order a beer?
Nope. Can't do any of that.
Someone that their eyes are very beautiful.
Nope. I don't have anything.
Well, then you can't speak the language.
Yep. No, I can't. Do you have some notes?
Say it again.
Do you have some notes?
I don't want to share my notes. Let him get. I don't make sure that they're accurate. I've taken many. I've taken copious notes here.
We'll go to takeaways, and then
go to takeaways, see if they match.
Conclusions. So for most of history, Euclid's flat geometry was taken as the absolute description of reality, similar to how for about 30 years, or for about 20, 30 years, Black-Scholes was taken as an absolute description of the market. But this was thrown on its head when Einstein showed that reality is, in fact, curved almost everywhere. But on small scales, the results of flat geometry remain incredibly accurate. And similarly, the simplicity of the Black-Scholes financial model is disrupted by the reality of dynamic volatility, but on the small scale remains very accurate. And the thing to remember when you're evaluating these things is that models are not true or false. They're only different amounts of useful. And so while the Black-Scholes model isn't true, that's okay because it's not a thing that it should try to be. All it can try to be is useful. And it remains very useful because we get from it implied volatilities and expected moves and all these things that we use on the day-to-day basis, even though they're not fully accurate, right? We know that the expected move shouldn't be the same to the upside as the downside because there should be some skew to it. But that's more convoluted than it is useful. And so if you're going to be staying active enough to be responsive on sort of small scales, relying on the Black-Scholes model to help you do sort of day-to-day decision-making, your strike selection, your trade management, isn't wrong, right? It's probably the most useful thing you can do. And that's my this is largely, as so often, a defense of Black-Scholes despite its inaccuracy.
Wow. Okay.
That last part kind of fits. Models are not true or false, only different amounts of useful.
Very politically correct there.
Yes.
Any model I listened to throughout my life led me down a path of not righteousness. Let me put it that way, the opposite of righteousness. So I you got to be careful. They're accurate until they're not. Good job out of you, my friend. But we're going to take a quick 90-second break. Even the S&P is trading on their lows, just making new lows, down 22. NASDAQ down 188. Leader in the clubhouse to the downside is actually the Russell, down 26. I thought it was going to be the Dow today. Dow is down 155, but only a third of a percentage point, just like the E-mini S&Ps. Volatility up 35 cents. We made some nice scalps today, some good trades today. Bonds are down 4. Bitcoin down 4,200, flirting with making new lows, about $1,000 off of new lows. Ethereum down 200 and change. Oil is up. Your high flyers are down.
Yeah,
they're taking those to the woodshed.
Those are getting killed. Yeah.
The BEs.
BE is down $7 and change. That's helping a lot.
Yes. Let's take a quick 90-second break. Good job, Jacob. We've got Quentin and Ryan coming in next to this Tasty Live Trade Desk.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in-the-money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with this man. Tasty Trade Desk, my man Q. Did they call you Quentin? Did they call you anything when you were a kid? Did they call you Q?
No, I've got like an infinite amount of nicknames. So I've got like Q is like the most common one. Oh. But we'll do like Q Dog. My dad will call me Q Pup, when I was younger.
Okay.
Q Tip. Big Tex calls me Guantanamo Bay.
Okay.
We got a lot of nicknames.
Quentin leads itself to a lot of names.
Yeah, right. So and then the Q, it's unique, so people will, just have fun with that.
Okay.
Yeah.
All right, cool.
Q's a good one.
Yeah, nice and simple. The one-letter moniker.
Right. That's hard to get. I mean, you're right up there with like J-Lo. You know what I mean?
Yeah.
Yeah.
I like to think of it that way.
Right. Me too.
Yeah. And then so this weekend,
like L McPherson. You don't remember L McPherson?
Yeah, I don't know who that is. Yeah.
Yeah.
Sorry.
Even though it was spelled with more letters than just the L, it was magnificent. We were
Yeah.
just talking about models, so I was thinking about it.
Okay. Gotcha. When I heard McPherson, I was like the football player, like the kicker.
Oh yeah, Evan McPherson.
Yeah.
That was Bengals.
Yeah.
Right? Yeah.
And then so Thursday and Friday, I will not be here on live.
Where are you
Trade
going?
Desk. We're heading to Charlotte, baby.
Ah,
We're
there
on the
you
road.
I gotta buy him dinner. That's what he's doing.
Do you guys have dinner plans already?
Do we have dinner plans? Brittany makes dinner plans. I don't.
No, I know what's on the menu.
I don't know. I'm not that guy. I don't care. Wherever she tells me to go, I go. I don't question it. I don't
That's
ask.
fair.
She makes all the arrangements.
That's fair.
Whatever the food is, I eat it. And
I'm just happy to eat.
Did they
get what you get? You don't regret.
Did they cut back on the stipend though for you guys a little bit?
No, we're upper echelon. You know what I mean, there's no cutting back. There it is, the Fillmore, Charlotte. And if you want to have something to eat with us, we'll probably have like donuts or bagels.
Oh yeah,
or
some
something.
pastry. I mean, the pastries we order for these events are like some of the best pastries I've ever had.
Brittany too, who dressed up as Guy Fieri one time, by the way.
Yes, she did one too.
Yeah, about 2 years ago, she dressed up as Guy Fieri. She will be there too at the Fillmore. That's Friday, not tomorrow. Sorry, we're traveling tomorrow, but I'll be here for the morning show. Friday, October 24th.
Did you want me to give you like a, oh my God, hardest working man in show business? Like, oh yeah.
For decades.
I'll be here for the morning show.
Thank you for his applause. Yes, amazing.
Decades, by the way. Decades, yes. Limited seating, but there is room for you, and I will always make room for you. So please sign up at tastylive.com/events. Trading
and then
all day long.
Tickets are free as well. You don't have to. That's something I love about like everything.
There's a door
that
charge.
we do.
We'll talk about that when you get there.
I love that like everything that we do, is free. We've got, the free events, the free network.
Yep.
I mean, that's just so nice that like, we do things like that. We're just trying to educate the retail investor.
Awesome.
Always.
Awesome.
And we'll love to see you guys in Charlotte. I'll be there. G Money will be there.
Yes.
Ooh, he gets the invite too? Damn.
Yeah, G Money
Where
will
was
be
my
there.
invite? When do I get to come on these too?
You have to. There has to be value for you going there. Like Dave will do a software demo. You will be doing software demos. You have to have some value.
Damn.
To come. We just don't.
Low blow. Low blow.
Oh, don't you have your own tour with like Katie and Mike?
Yeah.
I know. I don't get the invite to those.
They're cutting back. We only got 4 events. Dinner.
I don't know. I don't get the invite to those. Where's my invite?
You get a $20 voucher. You can go to like McDonald's, Chipotle sometimes if we're in one of the
meal
cheaper
voucher, like
cities.
when you're on a trip or something, like to the water park.
Yeah,
the little meal voucher.
It's not the same. It's not the same, but it's okay.
Man, get me hanging out with you guys. I don't need to hang out with the old farts anymore. Get
That's
me
right.
on those.
See?
Yeah.
I'm still young.
You are.
Apparently. That's because Quentin's getting up there now.
Yes.
No, not yet.
I'm getting up.
He's not even
We're still we still have to pay an extra fee to rent a car.
Right.
That's
so I'm not up there yet.
Was it over 25?
Yeah, over 25. I'm 24.
Soon.
Is it 25 and above? So you're like right there, or is it?
I'm almost there.
Have to be.
I'm almost there.
Okay.
Yeah. So like when we went to Alabama, my girlfriend had to rent the car because she's 25.
Wow.
And so no extra fee, which is nice.
All right.
I like it.
Yeah. All right, let's get to the top 25 symbols. And then I will not mention percent. I'll just go through the numbers.
I didn't mean to.
I got people calling in saying like, hey, don't let them beat up on you. You're
No.
doing a great job.
Were we really beating up on you? I mean,
I needed the words of encouragement. I needed the words of encouragement. Let me know that I'm doing well. All right, enough out of all of us. Top 20 symbols going through the system in their IVR. We've got Netflix, 19, Beyond Meat, 98, GLD, 75, Tesla, 23, NVIDIA, 25, Oklo, 62, iBit, 72, Amazon, 46, AMD, 52, SLV, 68, TXN, 16, Robinhood, 38, Apple, 23, Meta, 38, Microsoft, 35, Google, 54, RGTI, 41, MP, 63, ISRG, 17, and PLTR, 39.
Oof. What do you think about that list?
A lot of the high flyers on that
Beyond Meat, Beyond Meat's seen the, that big spike.
Have you had any of the Beyond Meats? I don't even want to call it a meat, but have you had the product before?
I don't think I've had the product. No, I mean, I've had like veggie burgers, but I don't know specifically like from Beyond Meat. Are they good? Have you had them?
I remember we had them one time when Chris went through like a little phase with the like imitation meats, and we had them
only
once.
Your mother wasn't around. I mean, she would have been there too, I'm sure. I mean, they all did this. But go ahead.
She does the chicken seitan, which is okay, which is soy. That one is like doable. I've had it. You can fry it up with like
doable, but yeah.
You can fry it up with like soy sauce or like something, and it kind of fits. But
the Beyond Meat one was a mistake.
That was a mistake.
And when they made it look like real blood,
and they had the beet juice in it, it was like,
I know you're talking about. Yeah. Wow.
You can't do that. Give me some real beef.
It lasted a very short period of time.
Yeah. No, I'm
come on. Give me a nice, juicy, greasy.
I'm not even a big steak eater. That's the funny thing about it.
Yeah.
Well, that's because you cook them like hockey pucks. You've never had a good steak before. I will say, you have gotten better in your old age. They're edible now.
Thermometer. That's the key.
Yeah.
Well, wait, how are you cooking them? Are you grilling it? Are you pan frying it? Reverse sear?
When we were younger, he used to cook them.
I like them well done. My mother made them well done.
Yeah, they were so well done. It was like chalky.
Yeah.
It was really tough.
But I liked them like that.
You have gotten better though, and I will say it's probably the thermometer. That's probably what helped.
Thermometer.
Yeah,
it's the thermometer.
Because now you look it up, you're like, where
more medium.
ChatGPT, what temperature should my steak be?
145 makes it too much.
Yeah, used to be at like 200. It used to be at like.
I like it when it gets charcoaly.
I like a little.
Well, I like the outside.
Yeah, you get a char on
nice
the
and
outside.
crispy, but I want the inside. I still want it mooing.
Yeah,
I'm a like medium rare, but like closer to the rare side.
Yeah,
I like it when it's like nice and tender when it's really rare.
I think you're kidding yourself. Yeah. Although Wagyu rare is good, I will give it that.
Yeah, well, I just work on the trade desk. I've never had that. I've never had that. But maybe one
Born under a bad star, my man. Born under a bad star. That's all. Have you gotten any questions, shifting gears here for a moment, about the CME filing to try to get cross-margining? Have you had any questions about that yet? I think
features, like a portfolio margining.
Yes.
So if you're long gold, short silver.
That's right. Yeah, I think that's
interesting.
I think that's going to go through, and that'll be a boom for cross-margining of these products. A lot of times they won't give you cross-margining, like, bonds versus gold kind of position. So that'll free up some money for people to trade with, which would be nice too. So we'll see if that goes through. I think they had to do that with the FICC, which is like...
that's actually really interesting because, you see people put on a lot of those pairs trades and they like to use the futures because of the leverage already.
Mm-hmm.
And also you mentioned portfolio margin, but futures aren't considered for portfolio margin because they're something separate. And they already have a lot of leverage. But hearing that cross margin would be interesting, like the NASDAQ versus the ES, something
if they
like
get that done, and on the other side of the coin, the equity side, they get rid of
PDT
trading.
PDT, that's the big one.
Yeah,
that's
be
the really
beautiful world.
Have you heard an update on that? Of timing wise, or anything?
Still going through the SEC, as far as I'm aware.
Tried to do this before, like,
It's going to happen. I mean, that's happening.
You would think.
I'll believe it when I see. I mean, I'm just waiting for the day when we can send out that email. I mean, we've got the system in place to send the email out right away.
You already got it. The email template is approved. It's ready for the send.
We'll be partying in the office. I mean, everyone's going to celebrate when the PDT rule.
It's got to be the number one call.
I mean, I would actually say that's probably like the number one call. If we're talking about like segmenting things, like, I mean, because if you're talking about just everything trade related, that's too big of a segment.
Yeah.
But if we're saying like, I mean, pattern day trading is a big one. People are like, I haven't done a day trade in so long. Why am I classified as PDT? My account's over 25,000, but I trade futures, so the account equity is below.
It's the silliest thing too.
Yes, extremely true. Yeah, I mean, I've got all the rules in my head. It's super easy to explain for me, but it's like, I mean, rationalizing it. It's like we hate it just as much as you, as the customer, if not more.
And sometimes I think the brokerage firm is behind it. It's not the brokerage firm that's behind it.
Yeah, people will be like, you guys are classifying me as PDT. What's wrong with you guys? I mean, I wish we didn't have to.
Yep.
But it's something we have to do, unfortunately. But hopefully gone soon, right? Hopefully gone soon.
Good job out of you. I got to let you go, though, because I've got this man waiting in the wings.
E-mini's down 30. NASDAQ down 200.
Yeah, even the S&P is down 27.30 just a minute ago.
They're still not pumping
October
vol.
himself.
Hello, Tony.
We still got time, okay? You still got 2 more weeks.
I hate that.
You got 2 more weeks.
You do.
Okay.
108 or just under on Bitcoin. Not near its lows of 104 that it made a few days ago. Tried to catch a rally. Yes, most of the cryptos tried to catch a rally yesterday. Dikembe now, most of them below their lows from yesterday. Seeing volatility uptick in these products, I would imagine, across the board.
Absolutely, yeah. And I want to talk about that as it relates to Ethereum today, too. Have a trade idea for you guys. Today we can walk through that with the expected moves. But yeah, definitely seeing volatility pop a little bit. A bit of chop here. I think last I checked, Bitcoin down about 1%, maybe ETH down about 2%. Higher yesterday, as you mentioned, Tony. I think we saw 114 for a second, right around the Federal Reserve's conference around payments and innovation there. The Fed opening up its accounts in some capacity to crypto firms and likely stablecoin issuers. So those sorts of things maybe don't even go noticed by most people, but have a very big impact over the long term, right? I think you're seeing things such as crypto and alternative assets in 401ks. The Fed embracing crypto. I mean, we came from a place where arguably the regulators and the administration were anti-crypto in the United States, pushing the industry away, to now the Federal Reserve in some capacity embracing it. I don't know what the price is going to do day to day, but long term, I think that's pretty supportive and pretty bullish for the space, for the technology.
I mean, IBIT has been one of, if not the most traded ETFs since basically its launch.
Yeah, it's been very popular since launch.
Yes. So, I mean, it tells you that people are interested, no doubt.
Well, if you guys want to talk volatility, expected moves, I've got a slide here for you, and then we can talk a trade idea.
Cool, let's do it.
Let's do it.
Yeah, IBIT and ETH both have, mid 70s IV rank, or I should say ETH is at 91. So volatility is certainly picking up in those two products, even into the down move.
Unrelated, what you're talking about, gold trading near its lows again, down 77.
I just closed out of that butterfly. Remember we were talking about how I was like, it can't possibly go 3,900. I mean, this was when it was at 33 or something like that.
Right, it got to 43 and change.
And then I'm like, I can't believe I'm 400 points in the money on this gold butterfly. I just closed it at $2.50.
Nice, which was on for zero, right?
Yes, or like the dollar or something like that. It was basically a scratch, but I thought this was, dead in the water.
Dead money.
You get nothing from it. Anyway, sorry, Ryan.
Sorry, Ryan. We're patting ourselves on the back.
It's his fault.
I apologize, guys. I don't know if the production team here got my slides.
It's up there.
There we go. We got it.
Put it up on a screen. Sorry that we were talking.
No, all good. So, as you mentioned, an increase in volatility there. So our move in Bitcoin on a 1 week forward kind of look here
has increased by about 600 points. So we're looking at almost, a little bit over 7,500, not quite $8,000 move there. It takes you up to 116 within one standard deviation and still holding on to 100,000 on the downside there. The ETH level has been trading around 400 here in terms of the expected move over the last, really over the last week or so. So that gives you, 34.50 right now, 42.50 on the upside. The way that I think about it, even if you just used a $4,000 ETH price, you're trading about a $400 range in ETH right now. And that 3,800 level that we're at right now is about 25-ish% off of the all-time high, which is an area where I've mentioned before that's a spot of interest for me. You typically see these sorts of pullbacks in this asset, in these sorts of markets. And so we'll keep an eye on it, but it's at a level where I'm interested in buying personally. That said, the implied volatility gives you a one standard deviation move on a 1 week basis of 34.50 to 42.50 on the upside. Got Solana, SUI, and XRP updated ranges there as well.
These are basically all the levels. I mean, ETH into the liquidation was right around here, was at 3,800. Like this was kind of the spot where you put a low in. So we're right there right now.
Again, doesn't mean we're not going to go lower.
Yeah.
But we're there again. Yes, you're definitely not buying the highs.
Yeah.
Yeah. I think, look, you need to have an opinion. You've got to lean one way or the other. I still think that there's some room to run to the upside, but that price gives you new information too. If we take out some of those levels and you do see some volume behind it, a little bit of momentum behind it, you might have to rethink this. And now that's unfortunate for anybody if you were buying it at 4,800. But if you're long, like a lot of people that have been in this for a long time and you were long earlier in the year, maybe you want to capture some of those gains if you start to see some of these things break down. That said, I think the outlook, whether that's from a kind of fundamental regulatory perspective, is bullish. I think the economic environment is generally bullish for this asset. So I'm still pretty constructive on it, I guess, at this point. But we'll just see how it trades.
Yeah, that's all you can do, right?
Yeah. On the downside, Bitcoin, 100,000, nice big round number. You think that's a psychological spot? Like, you think if you get below that, that's kind of,
definitely
that scares the children?
Absolutely, but it's like anything else where there's a lot of fear, there's a lot of volatility, and quick decisions that are made in that short-term time frame. And then once that dust settles, if you again have some capital that you can put to work, you probably have pretty attractive prices if you have a longer-term outlook. You could argue the same thing around. Remember when Meta got cut in half?
Yeah.
These guys are idiots.
Meta traded at 80.
Yeah, they're going to spend $10 billion on the metaverse. What do they know? They're idiots. Tesla got taken down on Trump and Elon Musk having a spat on Twitter or X. And so if you get those, I kind of see some of those moves as opportunities because I have a long-term time horizon. But if you're, a short-term trader, maybe this is a short, and you can do that through the options on ETH or IBIT or through the CME listed futures. But you also might get some prices where, if you watch this go from 75 to 126 and you're back at 85. I don't know. You wish you would have bought it at 75 in hindsight.
Becomes interesting.
Yeah. So I think my point is underneath 100, it gets very interesting. That said, I got a trade idea for you guys. I don't have a slide here, but
do it. I'll put it up.
But what I do think is interesting is when you look at the increase in implied volatility, specifically in Ethereum. Look at ETH. I think if we go to the platform, you've got an IV rank of 90 or so. If I look at implied volatility for spot crypto, for spot ETH, I've got an IV rank closer to 80. And that has been the top of the range if we look back over the last year. You do have some spikes above that temporarily. You've seen, I think, 90. But 80 is kind of the high where every time you've been up in there, you do see that reversion in vol terms. So what might be interesting to people here outside of trading spot is going into ETH and going into the November expiration. So that's about 30 days out right now. I believe it's exactly 30. And looking at roughly the 30 delta strike, which I think is going to give you an implied volatility on a per strike basis right around 80%, maybe a little bit above that. So it's going to give you a $26 strike. Now, $26 is a little bit less than an equivalent $3,500 ETH price. And the way that you can calculate that is just multiply whatever your equivalent ETH price is by 0.0075. So essentially dividing the current ETH price by the price of Ethereum currently, that'll give you that ratio. It's not perfect. But then if we want an implied level, 2650 roughly is the ETH price that is the equivalent $3,500 ETH level. And you can go a little bit above or below that. Obviously, your break even is going to change depending on the premium that you bring in. But given the fact that you have, much higher vols and premiums in these put options, especially given the move here, that might be one way to play it.
And that was that area, that big jump up. Ethereum got down to around 3,500, and then it rallied its way up to about 4,500. And that's kind of, that moved from back in, August or something like that.
Yeah, that would be my level where, again, people like those big psychological
I learned
numbers.
something. I multiplied by 0.0075, you said?
Well, you can divide them.
0.0075. Yeah, I would just divide the ETH price by the price of Ethereum to get the
you could do the
ratio.
same thing with Bitcoin and IBIT. So you would take the price of Bitcoin and just divide it by the price of IBIT. That'll tell you how many shares that you need to have equivalent to one Bitcoin.
Good job out of you two youngins.
I'm
We're in good shape.
So I'm routing an order here. What I'm doing is I'm actually doing the put spread, just because the margin requirements here are basically cash secured. So it uses a lot of capital. You can buy a cheapy put on the downside. It also defines the risk in case you think that ETH goes to zero.
Sure, but that's not why you're doing it.
No, but I'm just cutting buying power down by about half. But the spread trades, it's around, I'm doing the 26-16, so a 10-point wide spread. It's looking to be around 125, 124-ish, depending on where I can get filled here.
Yeah, I was going to say, I do about 10 points wide there.
And it's bouncing a little bit. ETH just rallied like $20 or $30. Bitcoin's rallying a little bit too. Market's kind of bouncing a little bit.
Yeah, even the S&Ps off of their lows, down 21 right
Volatility
now.
coming in.
15 handles off of their lows.
Yeah. So I like it. Call diagonal spreads are another way to trade this. If you want to play into that upside skew, you could buy December, sell something in November. Cheap way to get long there as well.
Yeah, we talked about that risk reversal, I think, either this week or last week. We've seen that whole dynamic in the market shift now. We're back to a bid in those call options where, there's that skew again. So maybe that's a semi-bullish sign. I don't know. But people are looking to bet on some upside here. And again, the fourth quarter has historically been somewhat positive, but obviously a lot of volatility here after hitting an all-time high earlier in the month.
Good job out of you, my friend. I'm going to let you go back to work. I'm going to let you go back to work over there, son, too. Even the S&P is down 19. I guess the weakest of the group, obviously the Russell down 32. That's 1/3% when everything else is down around 1/3%. But you do have some movers. Obviously, we've been talking about Bitcoin down 3,200 now. Actually caught a small little bid. Ethereum down 170. Trading off of its lows by about $50, but still down a little over 4% here. Oil caught a bid up $1.36. Gold down 81. That's flirting with making
4,000
new lows in gold for the day. Silver not moving, basically unchanged. A little weird dynamic there. Volatility futures did roll yesterday into today, so that's why /VX is over 1937, up 22 cents. Relatively small move for some big moving
over the last 2 or 3 sessions too.
It's been that kind of weird movement when you look at some of these stock moves. Carvana down $28, Oakley down $18, BE down $10. Big move in some of these high flyers. Palantir down $7, Hood down $7, VST, which we just made a trade in, down almost $7. A lot of the high flyers on the back end of this market.
A little air coming out. That's
coming out of them, yes. Let's take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Florida CBO.
Live from the SIBO.
Yes. Peace.
Peace.
Good job. Thank you, my man.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. you'd use up much more buying power and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
And welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. The beautiful brunette to the left of me is Jenny Andrews, and it's one of our favorite days of the week, live from the SPX pit.
We are live from the SIBO, sitting in the middle of the SPX pit, and it has been a busy morning. SPOOs are only down 11 right now. They're making a little bit of a comeback, Liz, but I saw them almost down 30, I think.
Yeah, when we walked in, they were down 30, and you could hear a little bit more of a rumble when they were down 30. There's a little bit of a lull now that they're only down 10.
I know. There's a rally. Get your rally cap.
Get your rally cap. Get your stock.
There's a rally in the alley. Get your stock.
One day they'll join us. One day, ladies and gentlemen.
One day we could. That would be nice if we could get the entire pit singing "There's a Rally in the Alley." We'll see.
Okay. Do you know what I want? I want a rally in the alley, but I would also like them all singing Christmas carols with us at one point.
I think the odds are we're more likely to get them to sing the rally song than Christmas carols.
Maybe if we can just get them to do the clap.
We were lucky that we had a magic trick on the show.
Oh, we did. It was amazing. It was one of my favorite segments by Mr. Ed Berry. He was wonderful.
Okay, today we are packed. We have an amazing study from Jacob, our PhD, University of Chicago.
Springboarding off last week's, which I love.
Yes.
We're keeping these tight, compact, and in a series. So one will springboard off the next, and I think you're not going to want to miss this one.
Another put spread segment, and we love it. Great. Yeah. And wait till you see the results. Mind-blowing. We are also taking live tweets. Send us a tweet. Include the hashtag LIZJNY. Normally Frank's manning YouTube. I don't know if he is.
I think he's there today. I'm not exactly sure. I think he was gone yesterday.
He was traveling, so I wasn't sure where he was.
Well, his nephew Jeff loves him. We talk about him. He saw his nephew Jeff this weekend.
He did.
Went to go visit his sister.
So what else?
We also have a lot of earnings. Lot of earnings. Today you've got Tesla and IBM on deck. Big dogs.
And the big mover and shaker today was Netflix.
Oh, or Beyond Meat, whichever one you want to do. Do you want to jump on the platform and take a look?
Yeah, sure. So one other thing that's on our schedule today. What's your assumption? So jam-packed show because we have an SPX study, we have live tweets, we have what's your assumption? We are busy today. Yeah, busy, and they're quiet. They're calming down. I think they're like 10 o'clock. It's time to listen to the Liz and Jenny show.
It's time to listen. They're all tuning in, trying to see what we're doing.
All right, let's jump in the platform and take a look at what's going on. I have Netflix pulled up here. Netflix down 118. Didn't see that.
I wish I would have seen what the expected move for the cycle was.
It was not 118. It wasn't.
I mean, that's barely even 10%. Like, we've looked at things, so that's probably 8% move.
It's a 9.5% move.
Yeah, thanks.
It's a 9.5% move, but it is beyond the expected move. I heard them talking this morning when we were down just 100. It was beyond the expected move. I think the expected move was maybe around 89 or something.
Okay.
I don't know. I'm guessing.
Okay.
But it's from listening to the boys this morning, it was beyond the expected move.
I mean, it's a $1,200 product, so a $100 move isn't a crazy move.
Well, 10%.
It's beyond the expected move. But you see that sometimes. The Ivy rank is now down to a 17 with the tipping handle.
Yeah.
And we had a big Ivy rank yesterday.
So,
now, to the flip side.
BYND?
Yes. I put this in the report that I gave to my son JD this morning because I said I think he's going to like this one. It went from 58 cents to what is it now? Oh, it's up 63%. It's up 63%. So Beyond Meat, this was crazy. Okay, so here you had this has been a three day move. So look at that big bar up. It got up as high as almost 7.
Oh yeah.
Yes, that's where I was. That's what I was looking at this morning. It went from 58 cents to 7.70, and that's what I wrote in the report. That's why I was like, wait a minute, was I wrong?
And this might look good for Beyond Meat, but I personally know someone who's been in Beyond Meat for the long haul, and I want to say he got into Beyond Meat at like 150.
Oh, Beyond Meat was your original meme stock. It went when it IPO'd, it went straight up. All the non-meat eaters went crazy for it.
So and he was a vegetarian, and that's why at the time he was, and he was all in on Beyond Meat. But you could see it was as high as 200. It was in the 200s.
So my brother-in-law, the world's largest vegetarian, as I like to call him, because he's like 6'8" and doesn't eat meat. I was like, how are you maintaining your calories? He was a huge proponent of Beyond Meat when it IPO'd. Mm-hmm.
Well, our friend, and you may remember him, Summertime Ken. He used to be a viewer. Now he actually has to work. COVID's over, and he's got back to work.
It's unfortunate.
But you would go to a party at your house, and the appetizer platters were all made with Beyond Meat.
So it's making a comeback. There was a string of events that brought it to this. I only know this for the research for JD. We don't really look at this. And when the news says it's up 3,000%, and then I opened it up and it went from 58 to 7. It's true. The numbers are accurate.
Yeah.
But it's 58 cents to $7, and now it's back down to 5.
Right. So I wonder if people are still holding on who bought it in the hundreds.
I hope not.
I don't know. I mean, I've ridden some stocks to zero.
Yeah, but you didn't buy them at 200. There's debauchery. There's debauchery going on behind.
I don't know what's going on.
But you can tell when it's a trade and when it's not a trade, and that is not a trade.
This is not a trade. The last thing that traded, October 28th, 67.25 calls. That's the last thing that just popped up, the last trade on the board.
Jenny, why don't you share with the class what we learned today? How many... Do you remember?
You're going to put me on the spot. I cannot. That went in one ear and out the other.
That's what I was asking you, because they were giving us the numbers on how many SPX contracts. No, that's trading. You can tell the difference.
It was like 3.5 million.
Yeah.
Something like that.
Something close to that.
So speaking of...
Through open outcry, right? Not through just total. Or is that...
No, I think that was total.
Okay.
I think it was 800,000 traded. So a day, maybe around 800,000 contracts traded here on the floor in the pit.
And 3 million, something
like that. Speaking of SPX, 0DTs, let's...
we're going to do it?
Yeah, let's look at the study today, because I'm excited. I'm excited for it. Jacob's been really coming through for us.
He has. I like these. And, we ask and he answers. So let's pop into the study. This is something that we've been doing. We've looked into it. We actually took some of his other studies before we jump into it and decided to just do the puts, because when they were going neutral, we asked him to break it up. And we're like, wait a minute. Now, we've been in a bull market.
Okay. Yes, we've been in a bull market, but whatever. These studies are for the day. They're not for a long period of time. They're for the day.
And it could be for a minute. It could be yesterday I was out in a minute. All right, let's pop into
before
it.
we get into the study, let's go to Twitter. I just posted this for anyone who missed last week. So last week this was the first of the SPX put spread studies. I shared it on Twitter, and reluctantly, because I hate that picture. I hate that outfit. I hate that picture. I reluctantly shared it on Twitter. This is what we did last week, and today we're building on that study.
So you know what's interesting? I think we should name the entire study Impatient Bulls.
Yeah, I like it. Impatient
I do too.
Bulls.
Now, it's a different name today. Maybe we can get that changed. I don't know how to do that. The powers that be. But it would be nice to keep it Impatient Bulls.
Yes. Impatient Bulls. Today, Impatient Bulls, part 2.
Yep.
All right, Liz, are you ready for the study?
I love it. All right. So this is 0 DTE put spreads, Impatient Bulls, profit targets for narrow wings.
Perfect. At Tasty, we often like to avoid a directional bias and have focused our 0 DT research on delta neutral trades.
Okay, and this makes sense because most of our research is done with 45-day options. This is only 2.5 years old, so it's new, right?
And most of our 0 DT research has been on selling both sides. Doing iron condors or strangles, synthetic strangles.
Yeah, and so we're learning. The steady upward movement in SPX, however, is leading us to look more closely at into being bullish in these extremely liquid markets.
Today, let's analyze the data to evaluate how various combinations of short strikes and profit targets have performed when selling narrow 0 DTE put spreads. So this came on the heels of last week's study on spreads that performed very well. And we talked to Jacob, and he said, he's nervous about the drawdown. If we get into a period of a bear market where people would have multiple losses, the drawdown could be too much on those wider spreads.
On the wider spreads, if you're $25, $30 wide, all those things. So when you're looking at it from 2.5 years, the massive drawdown or the cumulative drawdown could be big.
Right. So we asked, okay, if we're worried about a big drawdown on a wide spread, let's do a study on a narrow spread with a smaller drawdown.
Yeah.
Okay.
Sure. And they are picking up back there. I hope you can hear them.
I know they are. They are. It's getting busy back there.
Back down 16. Okay. Using over 2.5 years of data in the 0 DT SPX options collected every 10 minutes.
Consider the results from selling one $10 wide put spread every day at 9 a.m. plus or minus 5 minutes. So the study only looks at $10 wide put spreads. That's it, $10 wide.
And I think it's been established from other studies that the time is 9 a.m. give or like 9-ish, right? That's the established time frame from other studies.
Plus or minus 5 minutes. Mm-hmm.
Okay, short strikes evaluated range from 50 delta, meaning at the money, down to a 20 delta.
So if you're selling a $10 wide at 50 delta, you're going to collect more and have much less risk than if you're selling your $10 wide spread and starting at the 20 delta, you're going to have more risk on that spread.
Yeah, and the charts actually explore that a little bit.
Okay. Explored a range of profit targets from 10 to 50%. I think when you're selling a narrower spread, I think I like to go get a bigger profit target.
When we sell a narrower spread, we do have a higher percentage, but we've been doing it by dollar amount. So this is an interesting study. You can extrapolate it out.
And I think when you sell one side, you could look for that bigger target because you just need movement in your direction, not time to pass.
Not time to pass.
Yeah.
So they examine the total number of winning trades, the total profits or losses, and the maximum drawdown. That's the key from last week, too. Mm-hmm. The largest amount someone could have lost if they lost following these mechanics every day by starting at an unlucky time in the study.
Okay, all trades were assumed to exercise at mid-price. All times are Chicago time. Okay, so here we go. This is a 0 DT put spread starting with the 50 delta. So you're selling the 50 delta put on the 0 DT, making a $10 wide spread. And we're looking at closing it at 10%, 20%, 25, 35, and 50% profit target.
And so let's take a look at this. My eye line, Jenny, and maybe yours is going to be a little bit different. Take a look at the average P&L for trade. You notice that it goes steadily up. You're going 27, 41, 50, 63, 79 as the profit targets go up.
Yes.
So to me, I know, and you know, because we've done this so many times, if you're selling that at the money, which is the 50 short strike, $10 wide, you're going to get between $3 and $4 for it.
Right, exactly. $3 and $4. Selling it at the money, $10 wide, between $3 and $4. So 10%, $35. And then 20%, $70. So as you go up,
This makes sense to me because you're getting, so if you're doing the $50 strike, so this is the same trade. If this is your $50 strike, $10 wide, this is just profit target difference. It doesn't have anything to do with collection. I just wanted that to be very clear.
So one thing, when you look at this, you might say, oh, well, just close at 50%. That's the highest average P&L per trade. But I will say that win rate is the lowest. So there's a fine line between, do I want to go all the way for the 50% profit target, but then I only have an 81% win rate, or do I want the 25% profit target with the 86% win rate? So there's a balance, and I don't know that there's a exact this is the answer.
I don't know. I consider this a menu. I just know when I'm trading and I have a narrower strike, I have a tendency to put it in for a higher percentage. So kind of extrapolating, I land in probably the 35% profit target. So if I sell something for $3-ish, I did it or something today, I'll put in a dollar amount in there, and it usually winds up being around 35-40%.
And originally too, I am in about 30%, right? So if I sell something for about $3, I'm usually looking for $100 on one spread.
Yeah.
So we've got one $10 wide spread. You sell for about $350. Taking 30%, you're getting about $100.
Yes.
That's usually what I go in with. I don't necessarily hit percentage. I try to take about $100. It falls in the 30% range.
And we'll post all these charts up there. There's one other thing that I want to mention on here that wasn't mentioned in there, but we just know this from Jacob studies. So just because you're closing it at 10% profit, or just because you're closing it at 50% profit, that doesn't mean that all of the ones that aren't the 81% were closed at max loss. I just need this to be clear.
Right.
That just means it never hit your 50% max profit.
It didn't hit your.
You could be winning 10% and it goes into that loss column.
Right.
You could be winning 30% and it goes in that max loss column, because the SPX they are cash settled. So even if it's a win, if it didn't hit that 50% profit target, it's still a win in your column. Now, that's why that $79 is higher.
I want to talk about that max drawdown. Now, I know a $10 wide spread, if I'm collecting $350, my risk is $650.
Ish, like wrapped around, yeah.
Ish. So for all of these trades, your risk is, even if your risk is like $600, $650, and the max drawdown $3,900, $2,900, $2,600. This is if you start and have a streak of losers.
And that would be a streak of what, 4 or 5? I mean, that's a lot. That's a lot to that's if you got in and your first is a loser, your second's a loser, your third's a loser, and you keep going back at it. But that average P&L nets out all the drawdowns in the wins.
Right. So this one is what we usually trade more often.
Which is why
if we're just doing the put spread, the 50 delta. We're going to take a look now at using the 40 delta, which would be moving. I'll pop in the platform here.
Well, no, we don't want numbers on this, so don't.
I'm going to give a roundabout. How far? I just wanted to see how far.
The 40 delta is the just out of the monies.
And it's only $5 away. It's $5 away from where SPX is trading. So you're not really that far.
No, you're not. Well, 40 delta shouldn't be that far away. You're going 10 deltas down. So it's a strike and a half away.
Okay. So
from your 50s.
You're very close. And the 40 delta, Liz, how much are you collecting on a 40 delta?
$290. So wait, hold on. So it depends. If you want to go with you got to choose $245, $250.
So instead of collecting around $350, you're collecting around.
It's also 10 o'clock, so it's a little bit later. You might as your deltas, you might get more for the 40 delta if you do it at 9 a.m.
At 9 a.m. So I just wanted an idea of drawdown. If I'm doing a $10 wide spread and collecting $250, my drawdown could be $750.
Yeah, and you can see that. So take a look at the P&Ls. They go up exactly the same. No, they don't start at that point because you're collecting less. So 10% of that is going to be less than 10% of your $50.
Right, and the win percent moves almost the same too.
Just slightly.
Yeah. So your percentage is a little bit lower if you're waiting for 50%, but that's the highest average P&L.
I'm surprised. Well, yeah, you're right. That is the highest average P&L.
And your least drawdown. So when we talk about, there's a fine line between managing winners too soon and waiting for the right amount. Because if you're risking, let's talk about this. If you're risking 700 to make 300, and you just take 100, 100, 100, but you lose 700.
Which you don't always in this case.
No, but that's why I think the max drawdown is much less if the closed at 50%, because your winners, you're taking so much more on your winners.
It takes less amount of winners, which is a study Jacob did, to recoup your losses. That's why your drawdown is less with more profit.
So I've been putting in take profit around 30%, but maybe I'll switch it to 50 if I'm just doing one side.
But Jenny, I agree, you could switch it to 50 if you want. I don't don't see that much of a difference. I really don't. I mean, I know the drawdown is less. I think that's kind of a fluke. I mean, it is what it is.
Well, in the previous one, the drawdown's less than the 35%.
Yes, that's what I'm saying. So it kind of moves. And then if you go to the next one,
where we have 30 delta, drawdown's a little less than 50%. But that makes sense because you're taking in more, you're keeping more, you're making more per trade, so it'll take less winners to make up for losers.
Correct. And we should see this. And then if you're going to the 30 delta, I'll give you a roundabout prices.
Now, when you're going to the 30 delta, what I find interesting here, if you're
getting
starting
$1.70 right now, today.
$1.70, and if you're starting at the 30 delta, look at your win percent. The win percents are all over 90%.
All over 90. But this makes sense. If you're getting $1.70 and you look at your 10%, you're getting about $15.82. There's a couple losers in there. Like, this is 10%.
So I'm curious to hear what Jacob's takeaways are because I guess there's no clear winner. I think any of them.
I think you can wait. My personal opinion is when you don't have that wide of a spread, when I have a very wide spread, I'm taking in a very small percentage. But we do that all the time. The narrower the spread, the more defined risk you have, you can wait a little bit longer for a little bit more than 10%.
You could wait for more than 10%. Definitely. I would say, somewhere in the range of 30 to 50%. Like today at 9 a.m., SPOOs were unchanged, maybe down $1. Now we're down 20. But if you would have started with the 50 delta, that wouldn't have come off. But if you would have started with the 30 delta, that might still be okay.
That might still be, or it might be okay at some point during the cycle.
Yes. So I think there's a give and take. And we have a lot of viewers who like to go further with the 30 delta, 25 delta.
And a lot of them do both sides. We have a lot of viewers that do different things. Let's see Jacob's takeaway. Oh, there's the 20
and then here's the 20 delta. Here's the 20 delta. And very high win percentage. So you've got 97%, 96%, 95%. Very high win rate.
And once again, you're collecting just roundabout numbers, about $1.15. So that's exactly what you should see.
Yeah. Now that drawdown is going to be more. If you have a $10 wide, you're collecting $1.15. Your drawdown is about $900 per trade.
But the drawdowns don't change that much.
No, not terribly. I mean, the lowest I saw was about 1,900, and here we're in 3,000.
Yeah,
but not terribly.
They don't change that much.
Okay, ready for the takeaways.
Can't wait. Takeaways. The typical reason to lock in profits early is to help maintain a high proportion of winning trades.
But as SPX climbed from 38.35 to 66.44, the vast majority of short puts were winners regardless of management, especially with with out of the money trades, especially with those out of the money.
And we saw that because everything was a winner. You saw no negative signs. As a result, being more patient and waiting for larger profits generally was more profitable.
In terms of downside risk, as measured by maximum drawdown, there was not a consistent pattern. Lower profit targets are better at avoiding serial losers, but bigger winners means it takes fewer of them to make up a loss.
That's true.
And I kind of like that. I like that to make up my loss quicker. So I might start switching to the 50%.
I mean, we're right there. You're right there.
30%, 50%.
You won't take 50% if you're using the 20 delta. Because you're not collecting enough. I mean, the farther out of the monies you go, you're going to take a higher percentage.
Yes, right. Yeah, I was going to say you would be more likely. Right.
Yeah,
if you're going to start with the 20 delta, you're more likely to wait for that 50%.
It's kind of like the more you take in, the less of a percentage you need.
Yes.
Okay. While the larger credits from two-sided trades makes taking smaller percentages appealing, with directional trades, it may be best to be a bit more patient. Now, in conclusion with this, the reason one-sided, you need one move. I've been out in 6 minutes. I've been out in 3 minutes. When you do both sides, you got to sit there. If you don't get the move, you don't get the move.
And he says be patient because we're waiting for a bigger percentage. We're waiting for 30% or 50%. So that's why Jacob says be patient. But to Liz's point, you might not have to be patient. You get a quick bounce and you could be out of this trade so fast, much quicker than when you're selling both sides. When you're selling both sides, if you're selling both sides and waiting for 10% or 20%, that takes a lot more patience than this.
Because time, you have to wait till time goes by.
Yes. So I've become a fan of just one side.
I did too.
You've brought me over.
I want to be consistent. And this is something that, like I said, something I do with my son. So consistency for me is key. And so that was a great study. I'm glad it's going to be housed with our other one.
Yes. So this study will be archived with our show today. We're also going to push it out on YouTube, and I will post it on Twitter for anyone that misses it.
Yeah, perfect.
Okay. Excellent. Are you ready to get into, let's take a look at our account before we get into...
Let's manage the account. Let's look at Twitter before we jump into what's your assumption. I've got an eye on the time. It's 22. We're good.
All right. So SPOO's down 29.
Can we take a look at gold? I want to see what it's doing today. We put on in last call yesterday. Public Public service announcements, only down 1% though. That's not bad.
No.
Public service announcement. We've got the amazing Mr. Tim Knight on our last call segment. We're planning on taking his directional. We have no idea how to use charts. We're going to take his directional bias and put high probability trades on top of it. We're very excited to have him join us.
Looking forward to it. Hopefully today will turn into every Wednesday because we love Tim Knight. We'll see how it goes.
Well,
hopefully he doesn't mind
We're trying
being on
to
with
ease
us.
him in, and hopefully if we say it on air, we can get him every Wednesday.
Yeah.
But yes.
So gold's down today, but like you said, only 1.5%. But on the heels of yesterday's big move in gold,
so gold's drop yesterday. It dropped more than it has in 15 years or something to that effect. That's the biggest drop it's had. However, but in the same breath, you have to say it's up higher than it's ever been, and even if it goes back a lot, it's still up 60%.
So we're only back to where we were October 9th.
Yeah.
To put it in perspective.
So look at the beginning of the year. Can you put your cursor on the?
Oh my gosh.
Yeah. Go to 2025.
Gold was 243.
Yeah, 243 to 371 this year.
I know.
A pullback is warranted from a gold bug. Silver had a 9% move down yesterday.
We'll see. This was tough because I told you over the weekend I got a phone call. It was and what do we have? What's day? Wednesday?
Yeah, but
Wednesday?
wait, look at
Tuesday,
Friday.
Monday?
Look at Friday.
And over the weekend I had that phone call from someone.
Monday it gapped up. They could have bought it and gotten right
said,
out.
should I get into? No, they called on Monday. And over the weekend they said, should I buy gold? Which means they would have been buying it here. And I said,
no, it went up when we were talking. It was up when we were talking about that.
That was Monday though. They asked me on the weekend.
Yeah,
they would have been coming in on Monday.
It was Tuesday and it went up. They would have been fine. But
I say I'm not making any recommendations to anyone.
So we put in a neutral trade using the implied volatility yesterday. Let's take a look at it. I mean, down 1% is nothing in a 400.
No, and the IV rank is still 75. So I don't think it came in a little because IV rank I believe was about 90. We made 10%. We sold both sides. We sold an iron condor.
How close are our puts? Because I'm more nervous about the puts than I am the calls.
349. It's trading 371.
Yeah,
I think we're all right. We have a GT. We put in a GTC for 50%.
And take a look at the silver move because I took off that gold silver ratio or gold silver pair when TP was on.
It's not down as much.
No, silver was down 9% yesterday and gold was only down 5%.
And it's not down that much today though.
Yeah, silver was down 9% yesterday and gold was only down 5%. Massive moves. But it's interesting. I didn't expect to see silver down as much as gold.
I'm curious. What does that pair look like now?
It's 16 to 2.
Okay, so 2 gold.
You're selling gold, buying silver, right?
Well, we'll see. When we originally put it on, we bought gold, sold silver because silver had rallied so much more.
Yeah.
When we put it on down here, so you can see. That's why you guys took it off. That's why you and TP took it off.
I mean, look at how little that is. We were 2 by 16, and we took it off for about a $60 or $70 win.
Right.
Which was a lot.
Because we had a really small position. So that's good. And now I wouldn't get into this trade one way or the other, not at this level.
I feel like they're coming back in line because silver has fallen. If silver fell 9% and gold only fell 5%, that's what's coming back in line.
And now this pair is coming back. So I wouldn't do anything there. Have you been watching it all? Where's our Tasty FX? Have you been watching it all? The dollar, the yen, what's going on?
I mean, I look at the dollar every day, but I look at the dollar euro every day. I don't look at anything else usually.
I was just curious. I haven't been. So here we see the dollar's been, here's the dollar yen, dollar's been rallying.
Yeah. What do we have in there? What positions do we have?
And is it still here?
Go to our positions.
Oh, it's still here.
Yeah.
So we just have what is this? The Swiss franc?
Yes.
Right? CHF?
So. Sure.
I think we still have a few. If they were missing, we'd be out of it. Which means,
one's a scratch. The profit loss is like 35 cents.
Yeah, we just put that one on.
We have our working orders in.
But I was just curious to see what the dollar's been doing. And the Euro USD. You can take a look right here. We've had, because we'll have Glenn on tomorrow.
No, we won't.
Oh, he's out of town. He's on the road.
Everybody, public service announcement. They are going on the road.
And honestly, I know it's a full house, but if you want to see Tom and Tony on the road, I believe there's still a few tickets.
Charlotte.
I
think so.
Yeah, Charlotte. I know that Tony was talking about what kind of barbecue sauce they have in Charlotte.
Yeah, if you're near the Charlotte area, go check it out.
Okay. So you can see the dollar's been rallying a little bit.
I mean, not really.
Well, look, this week.
It's still within, like I said, I look at it every day. It's very minute in the actual numbers of it. I get that. That's like the minute chart or whatever, the day chart.
This is, this is how many days? This should be a daily.
I guess I look at it for this.
This goes all the way back to.
This is what I'm saying. Like when you actually look at the numbers, because I'm doing the conversion with the silver pence to the U.S. dollar, it's a moot point.
Oh. Yeah. But as far as if we have traders trading FX,
yes. So the euro is 1.16, which is exactly what it was when we were in Germany. Yes. And the sterling silver pence is 1.34.
All right. Okay, so I don't think we have anything in this account to manage. Crude oil is up, but we got into crude oil early. When it was hitting 60, we were getting it. Now it's creeping back up. So we did add on. We had a big lizard type position, and then we added on that downside ratio spread, that 56-54. So we could, Liz, look at butterflying off this downside ratio spread, because you can see that trade is up, $30 or so on that downside ratio spread we added on.
Oh yeah, let's do that. That was great.
We took off the call spread. So we're up. We're not too bad in crude oil because we took off our call spread when it was down and added on that downside ratio spread.
Can we butterfly it off? I can't
56.54. 56.54.
What did we collect for? So you're going to buy a 54 and sell a 52.
Let me see. We added that on.
Excellent, because TP and I talked all about this. 30 cents.
A 39-cent credit we took in.
So if you
56, 54, 52. Yeah. So we could turn this into a butterfly, but we wouldn't.
Hey Jenny, you should tune into the show TP and I did. On Tuesday. It was all about the dreaded embedded, how there's a spread embedded in there, and this is exactly what it is.
So normally, Liz, we would want to say, okay, let's turn this into a butterfly if we could lock in a decent profit. But this trade, we didn't put it on to add credit and make a profit. We put it on to protect our other short put.
I would for sure butterfly that off.
Yeah, since that was on, ratio spread was on as protection, I would butterfly it off if we
took
could.
a little bit of credit. For sure you can, because it's only 32 cents.
Yeah, so we'll have locked in a credit, have that butterfly, which is just meant to be a little bit of protection for that 61
And do you see how it's giving you back $500 and some dollars? So do you know that it was TP that fought to get the margin relief for butterflies?
No way. That's amazing, TP.
Yep.
Yeah, slow clap.
Slow goes like this.
Slow clap.
That's a fast clap.
All right, 32 cents. I'm sending this.
And it takes the risk off the table. It's still there to protect our put. That's doing its job.
I know with our natural gas spreads, we'll say like, well, we want to lock in at least $50 to butterfly this off. Here, I don't care if we don't lock in anything. This is protection. This is protection.
Totally different. Jenny, take a look at Delta Airlines and our position, because I would like to close it. We're close. We're about a quarter away, but we might as well.
Delta, we have on a strangle.
That's what I'm saying. I always open that up. We've been in it for 13 days. We're up $50. I understand it's only 32%, but
it's strangle. 33. It's not very often that we do a strangle.
I don't know what possessed us.
I don't know. So I'm going to take this off. I know it's only 30-something%, but we're up $50 on a Delta strangle.
And then do you mind pushing it through on the one side so I can do it on the side?
Sure.
Did we get filled on anything yet?
Yes, we have today. We did get filled on butterflying off our MCL.
Okay, perfect.
I'm glad we didn't end up in Netflix, because that would be
it would have been a debacle.
Not good. Delta, we're still working.
Okay, perfect. So that's pushed out.
Okay, and I know everyone wants new trades. Guess what? It's what's your assumption.
It's what's your assumption, and we're on last call.
And we're on last call. And I do want to make sure I get to anyone on Twitter. Look, Eric coming in an hour ago. Happy Wednesday. IB rank at a point lower than 19.6.
That had to be more than an hour ago, because you sent our thing more than an hour ago. So he's probably a while ago.
And I wonder where VIX is now with the little bit of a down move. VIX,
1923.
Yeah. So he's down 36. So good luck, Eric. He's got a pretty wide iron condor here.
Yeah.
And Frank came in 4 hours ago with the economic calendar.
And then you should go above yours, because I think they're coming in.
Yes. Frank, this was so Frank posted here the OEX pit, about 400 traders in 1986.
I love when Frank posts old pictures. That's great.
I know.
Yeah, so that Tony Crone was upstairs explaining that it used to be shoulder to shoulder, and what they did is they spread them out. Because I always say that's how I explain it. Like, the old pit used to be a bowl like
and
this.
The steps were very narrow.
And the steps were I know, I've fallen down them a couple times.
Yeah.
So
I used to have to, I would stand on my step at my little quote, that's how I started, in the OEX pit at a Quotron machine, and when the market makers would yell out their markets, I would update them on my little Quotron, and I would get banged around and banged around because the steps were so narrow.
And the steps were narrow, and everybody was shoulder to shoulder, and that's what they were explaining upstairs. It used to be a bowl where everybody was tight, and they flattened it out to a tray because of COVID. I didn't know that.
I didn't know that was because of COVID, but now they're further apart.
They gave them about 6 inches in between.
Yeah, they give them some extra space.
It's like premium economy. They have extra legroom now.
Oh my gosh. All right, look at these earnings today, Liz. Tesla, IBM, KMI, QS, AA. Did I hear them say Alcoa is like getting into the minerals?
Something, yeah.
Yeah, I thought I heard them talking about that.
And then did you know that Vanetta's dad used to work for Cleveland Cliffs? CLF?
Yes. I you know what? I knew that. I knew that because I've driven past it. I've driven past it just having a place in Indiana.
Oh, so you've seen where he used to work. The thing that I think you might be interested in, and we can take a look now instead of last call, or last call, well, Intel's tomorrow, but Love, because you're getting on a Southwest plane tomorrow.
I hope so. I hope that we're going to take off okay. I don't know what the deal is now with the air traffic control.
Well, it was getting out of Atlanta was cray.
I know.
So the security took 9 times as much, and I have TSA pre and clear. And we were delayed about 2 hours.
So Lily's bringing a friend, and they don't have TSA pre or clear or anything.
It's more air traffic controllers. You can get there early to go through.
No, we can't. We're going to pick them up after school. We're going to be racing to the plane.
Leave without them.
I
would have been like, Lily, you're on your own.
So, yeah, I don't know. I'm a little concerned about getting out. I hope we get out in time.
It's more the air traffic controllers than it was. Like, Atlanta, I guess, is very notoriously bad for the, what's it called, security.
Well, you heard what happened at O'Hare. 2 planes, because there's such a shortage of the
air traffic
people and the people on the ground this, 2 United planes, clipped each other. And, just driving around at O'Hare.
That's not good.
Okay, everyone was safe. Nothing happened to the people.
Yeah,
but still, then those planes are out.
Oh, on ours, we were delayed for 2 hours, and then we're taking off. I'm asleep, by the way, because I was after a wedding. So I'm asleep in my chair, and then I hear thud, 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 thud. They forgot to pull something off the nose. I was like, we're not going anywhere. Then they had to pull us back in. I was like, this does not end well for me.
So that it is a little, but hopefully I get there. Hopefully I'm in Disney World tomorrow night.
I think you will be. And I'll be with your son. I'll send you pictures of your son. How about that?
Oh, yeah. Okay, so we've got lots of
you want to take a look at Love right now?
Sure.
We just took off a Delta. We're taking off a Delta. And I'm not saying they're 1 for 1, but you don't want to load up on airlines.
No, we do not have a Love position. It's trading 34, and it's had a little bit of a rally.
Yeah, I think a lot of the airlines have gotten a lift.
You love that.
What?
Gotten a lift. Weren't you?
I actually didn't even know I said that.
I thought you made a joke the other day about.
Oh no, the vertical
aviation.
Archer. Yeah, that was Archer Aviation. I actually didn't know I did a pun. Thank you for catching it.
Okay, 42 rank, earnings are coming out. It's had a little bit of a rally. There's not a lot there.
I mean, when it's this cheap, you know what I might be doing is taking and doing a downside ratio spread at the expected move. But I mean, it's going to be like 33, 32. You're not going to collect much, but you're hoping to capture a downside move. Do you know what I mean?
If we do the 33, 32.
But let's do this at last call.
Yeah, we're on last call. So honestly, if I put on earnings trades, if you put on earnings trades, we put them on at the end of the day. Since we're on from 2:30 to 3, you can see us put on earnings trades, and we will. I do want to look at.
And I think Tim Knight is not going to. In my heart of hearts, I don't know this. I didn't talk to him about this, but I don't think we can ask him about any earnings trades.
No, we're not going to ask him about earnings trades. We're going to be talking gold, silver. We can talk.
Palladium,
maybe FCX. Maybe Alcoa. Who knows? We'll see. We'll see what he's going to bring on.
Yeah, but it's not. He's not with his charting. From my understanding, when they used to do the soft handoff a long time ago, he's like, the charts don't. Earnings are not chartable.
Yeah, so we're not asking about earnings, but I do see that Dow Chemical is on here, and we have short puts in Dow. I know I have short puts in Dow. I think you have short puts in Dow. Dow has earnings. Yes, they have earnings, and we do. Here we go.
So I think that's worth taking off.
We sold the November 20 put in Dow for $87. It's trading 67 right now. We could take it off for about 23%.
So I normally wouldn't take that off, except there's earnings tonight. So I don't know that we would leave it on and go through earnings unless that wants to be your earnings trade.
Okay, then let's just take it off for a win. And
I mean, we could open it up if that's something that you wanted to keep.
It's not worth. Honestly, the $66 is not worth taking on the earnings risk.
And that's not what I would put on for earnings.
Right.
If you open this up and you can see it's in the expected move of the cycle, let's take this off. We got our $20, and I don't mind it. I'd actually like to put this on again after the fact.
Well, we'll see what happens on earnings. We can check in tomorrow.
Yeah.
This was one of those that had the higher dividend. We said let's sell puts. It hasn't really moved too much lately.
But this is proof though too. It actually kind of.
It was at the bottom of its range, so we thought, well, we'll sell some puts. But I'm going to take those off. Why ride them through earnings?
No, I agree.
Okay.
I agree. That's a good catch.
Next, what do you think? Let's go full screen again. I'm going to organize my platform here so we can get.
Let's take a shot at the traders and see what they're doing right now.
I just want to.
They're being pretty. There's Keith. Hi, Keith.
Just wanted to get my what's your assumption up and running.
So you know what was you keep doing
it's
that
ready.
when I talk. Oh, you're ready? Okay.
Yeah.
So what was fun was when today we had some visitors, so we actually went upstairs, and it's pretty interesting when you go from the upstairs level. It's a lot more crowded than it looks like from here, doesn't it?
It does look more crowded from the upper level.
Yeah.
Yeah.
Like way more crowded from the upper level.
I know, it does. But hey, it's busy back there. It's busy. And I haven't seen anything big trade except Nov 6th, 6,200 puts. But the crowd bought them. Ooh. Nov 6, 6,200
How can you tell?
What says bought or sold up there? BOT or SLD? And then it'll list the
if
badges.
If you look at my view, please turn to your left. There's a camera that is in front of it.
Yeah, it's in front. And then it'll list the badge of who
So
did
that
it.
is the exact middle that I cannot see.
Nov 6, 6,200 plus.
And every time you would say that, I would be like, we don't know what's happening.
Oh, here, 2,000 just went up of Nov 21st, 5,000 calls, 6,000 puts. And the crowd sold them.
Interesting.
Yeah, if you want to know if they bought or sold, just ask me.
I'm going to have to ask you, or we're going to have that move that camera.
All right, 10:40. Do you want to jump in? Do you want to get into what's your assumption?
Yeah, let's do it. 10:40 is perfect time. We might not get through all of them, but we're going to get through as many as we can.
All right. Yeah. We're ready,
Jack. What's your assumption?
What's your assumption? Hit me with their theme song.
I'm pretty sure they're playing it right now. We're imagining it in our head.
I can hear it right now. First up, we have Andrew from Clemens, North Carolina. And I wonder if he's going to the Charlotte show.
Oh, I hope so.
Maybe.
How far away is Clemens from Charlotte?
No idea. No idea.
In the same state, though. How about that?
All right, rut neutral, 45 days. Vol is up, but market doesn't seem to be falling apart just yet. I also see limited upside for rut. So, sure, let's take a look at rut. And can we scale it down into IWM?
Yes, we can.
Yeah.
So we're going to take a look at IWM. IWM is the ETF that tracks the Russell, and for small fries like us, and I believe it's a little bit more liquid.
We could do RUT if we wanted to. We can define our risk and do a spread.
IWM is more liquid.
Well, the RUT trades. The RUT trades right around the corner over here. And which is exciting to walk by the RUT pit. But I think for small fries, we'll stick to IWM.
So anytime, I was in the RUT pit for a little bit. I was in every pit, but every time, and it was Cutter that was the broker in there, every time he'd have a RUT trade, he'd go, RUT row, we need the RUT row, we need this. And so that's how he would do it.
Cute.
Yeah, it's fun. Okay, so if you're going to define your risk, neutral, 30 days, regular no.
So would you just go like 20 delta, $10 wide? I'm going to look. 20.
I might bring it in. You've got a high, so it's only a 20.
Well, it's only a 20 rank.
Yeah, if the rank was higher.
If it were higher, I'd bring it in. But if I go 20 delta, 230, 220.
Okay, you're getting 114, not bad.
And then 20 delta on the upside, 257, 267. So we're getting $1.30 on the upside, $1.10 on the downside, 240 on a $10 wide. That's not bad.
Go for it.
Hey, this brings me back to, are we back to an era of, do you remember when Robin came in as a rising star? And
she would iron condor everything.
This was her MO. This was her MO. Iron Condor, these ETFs, and I think the Russell was one of them.
And there's no, I mean, when you can get in the era. Now, there has been times we've lived there so much where even though the IV rank is at 21, there's still a good implied volatility here. We've lived through times where at 20 delta, $10 wide, it's going to get you 79 cents.
Yeah, right.
And that's a problem. You need to make sure you're getting enough for your risk-reward scenario.
So going to the 20 delta, getting 240 on a $10 wide, your risk isn't bad. I mean, risk is $760. Making
not bad at all.
240, and it's only a 30-day trade. This isn't even a 45-day, or it's a 30-day trade. I'm going to sell this. And I'm just curious on the analysis page here. I want to see how wide it is. So we're trading 243, and our short strikes are the 230 and the 257.
I'm fine with that.
Yeah.
And we'll manage this in both directions. Take a look at it. So honestly, when we're looking at this, we have been getting two-sided actions.
So, and typically we don't do that with iron condors.
On as a package, off as a package.
But in this market, I agree.
In this market, I might do something a little bit different. You have to give with the market. You have to. You almost have to be a good improvisationalist with the market. You can't be like, no, I'm not doing that. Because it doesn't matter. Like, this is what's happening. So what are you going to do about it?
No, I like that idea. With the two-sided action we've been seeing, let's take the put spread off one day and the call spread off another day.
We're not going to take it off for 50. Maybe we'll take it off for 50 cents. We'll keep an eye on it, but yes.
We'll see. Okay, so I just pushed that out too.
Okay.
And then Dow, let me push that out. So we closed we butterflied off our crude oil. We closed our Dow put, and then we just put on an IWM Iron Condor. That's our first What's Your Assumption trade.
Perfect.
Next up, we have Brennan from Costa Mesa, ANET, A-N-E-T.
Are you not going to sell your joke?
No, I'm not. I'm not. Like, it falls flat every time.
It does. I didn't even know you were telling the joke until you went, but
no expiration. ANET, down 25 points from high in last week. 2-by-1 put ratio spread.
Let's take a look.
Do we ever trade this?
So I am in...
Arista Networks. I've seen it before. Okay. So, yeah, it's fallen, sure, but it's still pretty high. They want a downside ratio spread. Is it going through earnings? This is tough.
1.82 million shares have traded. You got a 63 rank. The reason the rank is so high is because you're going through earnings.
If I stayed ahead of earnings, and did...
I would go down lower.
143, 135.
Are you collecting anything?
Take the... There's a... I think, are you playing for this to keep on falling? This isn't bad because this is just a 9-day trade.
It's not bad. I mean, it's usually $2,200, but $2,200. We're not going to keep this trade up.
I like ratio spreads very short term.
Oh, you don't like them long term.
I don't like them long term. And I kind of would...
But there is something to be said. I mean, not in ANET, I don't want to do this, but there was something to be said. Like, you could butterfly off ratio spreads like we did in crude oil.
If you collect enough. So... I don't know if they were. Did they? Oh, they said bullish. Okay, if they're bullish, then
this is not it.
Then this is not.
This is a bearish trade.
Then you guys,
if you're bullish, the only thing you're going to take is that 20 cents.
But they mentioned ratio spread. So here's a ratio spread where you're taking $1.40. So if it goes up, you keep your $140.
Yeah,
that would be more bullish.
I don't know that we need to put this in.
Well, ANET's $2,000. I don't mind the 9-day. I want to see, what kind of risk do we have?
You know what I was going to say? Here's what I was going to show. Like, if you take a look at this, you're getting 110, and it gets your break even to the 130. Look at the 130. It's 110. There's no gaming of the system here. It's just, when you're putting a ratio spread in, it's going to get you to a roundabout what it would be if you just sold that one put.
If we had the $2,000 to spare, I would put on this ratio spread.
And we do have money, but this isn't something. I would rather use the $2,000 somewhere else.
We're not going to put $2,000 into ANET. Now, if I look at buying something, the markets are too wide down there.
Oh, good God, 126.
Yeah, you can't buy anything. You can't buy anything. But if I have the $2,000 to spare, sure.
Christopher Columbus, are those markets wide?
UPS, Lyle, Baton Rouge. They have no directional assumption.
It's at a 5-year low with earnings October 28th. 50-plus IV considered selling the 16 delta put on either expiration. Is there a trade here? So let's take a look at UPS.
UPS, Lyle from Baton Rouge.
In Baton Rouge.
That's all. Operator, won't you put me on through? I got to send my love down to Baton Rouge.
Hurry up.
Put her on the line. All right, 5-year low with earnings. Hey, 5-year low, you're speaking my language. With earnings October 28th with a 50 plus IV, considers selling 16 delta put on either expiration.
So let's go. November or December, 16 delta put.
It's at a 5-year low UPS. Did you know that?
No.
Yeah, look at that. Okay, yeah, I'll sell puts in UPS. Earnings.
But so they were saying December or November, 16 delta put.
November.
That was just them. Okay.
So November puts, I'm going to go to the 80s for $1.50.
No, they said 16. I mean, I understand what you're saying.
I didn't.
What's your assumption? Said 16 delta in either December or November.
Okay, the 22 delta gets me $1.50. The 16 delta gets me $1.10. Sure, 78 put.
And take a look at that return on capital. You got the 30-day trade on. You're using 700 and change. I don't know if that's a 6 or an 8. I can't see that far.
Using $780 to take in 112. This is a 30-day trade. Our break even then is below 77.
Can you close this up and show the earnings cycle? I just want to show how far, kind of like snake oil salesman, how far the break even is that we have.
Not that much further.
We have 81 to 77. So it's
I'm not afraid of UPS. I'm going to go to UPS today, right after the show.
You know what? I will too. I actually have to go.
I do have to go. I do have to go.
I have to stop at home first, then I'm going to UPS.
And hey, shout out to my UPS buddies because the guys at UPS watch our show.
Oh, do they really?
What up? What up? I'll see you later. Okay, that's in. Let me push that out. Hang on.
I mean, I couldn't get our UPS drivers UPS people to watch our show if our life depended on it. They're so mean at my UPS.
Really?
Yes.
Well, I've never.
Like, she's like, next. Like, she doesn't like people standing next to the counter. It's like when you do returns, they get very mad.
Well, this is what happened at my UPS. I was mailing something to Tasty Trade. Now, I go into UPS quite a bit.
My lady's like the no soup for you. She's like, kind of me. I'm worried about getting banned, so I was like, yes, ma'am. Yes, ma'am.
Well, I'm always mailing something to my son in college. He always needs something. Like, Mom, I need this. I need these brown shoes. I need this belt. I need this suit. I'm always in there mailing him something. And I went in there once and had to mail something to Tasty Trade. And the guy who I see every week is like, oh, you're mailing something to Tasty Trade? I watch Tasty Trade.
We're like, have you seen me?
Yeah, I was like, I'm on it. And he had no idea that I was Jenny from the Liz and Jenny show from coming into you, because you should see how I come into UPS.
That's good.
Yeah. Yeah, so UPS puts are out, sending to the follow feed right now.
So you actually admitted it was you? Because remember the one time I said, are you Liz? Nope.
No, that was when I had that was Costco.
No, when I said no, it wasn't me. I was in my bathing suit at a water park in Wisconsin. Nope.
Yeah, are you Liz? No way. No way.
No idea what you're talking about.
One day I was at Costco. I think I had crazy stuff in my cart, and they're like, "Are you Jenny from the Liz and Jenny show?"
Nope.
No, never heard of it. Never heard of it. Never heard of her. All right.
So funny.
SLV neutral.
Delta neutral strangle.
And this is from Disastrous Price on Reddit. So this came from Reddit.
Yeah, this came from Reddit. So Nikki's taking ones from Reddit now.
Nice.
That's good.
Okay. Neutral SLV. We put on a neutral trading gold yesterday, so I don't want to double down because I feel like that'd be doubling down.
Yeah, I think that would be doubling down.
But I get it.
I mean, they're different, but it's still doubling down.
Yeah. CME bullish. Ooh, CME.
Ooh, okay. Roberto, south side of Chicago, Netherlands. I don't know if they
should keep some post-earnings volatility at open and reasonably liquid, playing the upside. Okay, zebra call. Oh, I like he mentions the zebra. Zebra call, poor man's covered call, diagonal. So he's bullish. Let's see, CME. Did they just have earnings? They had earnings today, this morning. So they're up a little bit. They're up $1.35 on earnings, and they're bullish. Diagonal, zebra, poor man's covered call. Those were his choices.
Can I go rogue?
Yeah, sure.
Let's put this, type in CBOE and let's make a bullish trade.
No. I mean, he said CME. That's okay. That's really getting crazy. It's really straying from.
The only reason I'm saying that is because I look at the 750,000. CME is notoriously not a liquid stock.
Oh.
And I've always known that. It's a great stock for people that have the stock because it's gone up, but it's not as liquid. You can see it's $10 wide strikes, and they're pretty wide. That's the only issue. And you can see, even look at the open interest. It's not, you're in the 30-day regular Nova options. There should be a little bit more open interest.
So if I'm bullish and it's not that liquid, I might just, and if you want to give yourself a little bit, one thing
you have
would
to
do,
define your risk.
Like
one way to fight illiquidity is defining your risk.
So let's say I put in this $10 white spread for $4. I paid $400 for this, and then I put it on and I leave it. Right? You could leave it, and if it doesn't work out and it's out of the money, you lost your $400. And if it works out and it's expiration and it's all in the money, one will exercise, one will assign, and you'll make $600 on it if everything's in the money.
If everything's in the money. Yeah.
So you can put it on and leave it, and I think I'd probably do something like this. I know it's not unlimited profit potential 1-for-1, but fooling with so many options and something that's not liquid is tough.
So, and do me a favor, just for intents and purposes, you can put on the zebra as well if you were going to leave something.
Yes, sure.
Do the 60-70 zebra because it's expensive. So if you're going to sell one, buy 2 of those. It's
expensive,
to be
$2,000.
So yeah, you're using $2,000. You're washing extrinsic value, but that's the way to do it. It's a $270 product. You're using $2,000. You have 1-for-1 upside potential, but same with a call spread. If this goes your way, you have to close it because they're all in the money.
The call spread, you don't have to close it. And the zebra, it'll exercise and assign. If they're all in the money, they'll exercise and assign. But the thing with the zebra is the zebra requires management, right? We don't leave a zebra on until expiration. We're usually rolling it
because otherwise you'd come in long the stack.
If they're all in the money. The zebra you would, but the call spread you don't.
The call spread would exercise and assign. That's fine. It's not the out of the money. But I was going to say, if you're bullish, just do the put spread because then you could leave it. Instead of the call spread. That's what I was saying. I thought we were talking about from exercise and assignment perspective.
My point with the call spread was if I'm wrong, I don't have to do anything. I don't have to do anything. If I lose, I don't have to do anything. If I win,
if you're right,
I don't care. You charge me with the exercise assignment fees. I don't care.
Okay. I was taking the point backwards.
But with the zebra requires too much management to be used in a liquid product. Because the zebra, we're like ratcheting, adjusting, moving, rolling. You're going to give up so much every time you're adjusting it. I just think there's too much management in a zebra for a liquid product.
And they also said, and the other thing too they looked at was a diagonal. So you can also take a look at a diagonal. You'd sell the 280.
It's going to be expensive.
They're all going to be expensive because it's not that bad actually.
270, 280.
That's not bad.
662.
You're making $4 no matter what you're doing.
Right. Yeah. I don't know. Do you want to try a spread in CME?
My personal opinion is I like liquid products.
I agree. I
mean, especially with our account size, we don't have the affordability to leave things on because with illiquid products, you kind of have to leave them.
So Roberto from Southside, we're with you.
We appreciate it, but thank you.
Okay, GH.
Let me tell you what that is.
Bullish before January. How to play this to all-time highs before January? Ron, pre-IPO shares. Oh, so he got in pre-IPO. GH. What is it? And he thinks
it is Guardian Health.
Okay.
And this
Guardian
has
Health.
less shares traded than CME.
So good for
pre-IPO.
He's pre-IPO price. So let's see. Good. So congratulations because at IPO day was like 20, opened at 27, and he's pre-IPO. So congratulations. Now it's 68. That's great. He thinks it's going to go to the moon by January. And
so if you're already in a stock and you think it's going up, what would you do? Sell more puts.
Yeah.
So if I'm in a stock and I think it's going up, I would sell more puts. And that wasn't a trick question. You just waited.
I was like, I don't know what you. I mean, he's already in the stock. I'm not going to sell calls against my stock.
I'm not going to sell calls. But if I'm in a stock and I think it's got more profit potential, I will use the puts to chip away at my cost basis. Look at how
this is not bad. I mean, the market's wide, 80 cents to $1.15, but it's only using $550. So that's what I think is not bad. It's only using $550. I don't hate that.
They're all doing 300, 500.
It's something big. Something big's happening. It's real big.
They're all trying to get 300 and 500 lots, which is a lot in SPX.
I know.
That's
right?
a lot. Think about it. It's SPX, a 500 lot. That's a lot.
Yes. Who is doing it?
I don't know.
It's not posted yet on the board.
And now what's even better is now my thing is blocked with lights.
Screws are down 20. I'll tell you, as soon as
1925. I can only see
6680. 66 October 31st, 6680 puts.
October 31st.
Oh, and October 30th, 6400 puts. I mean, wait, 2300, 6000 puts. November 21st, 6000 puts. November 21st.
You're going November 21st now?
Yeah, that's all over. There's like so many orders popping up on the board, but a big
6,000 is pretty far down.
There's a lot of orders popping up, but it's got busy for a minute.
Yeah, it did get busy. SPOs are only down 20.
All right, so can I sell these GH puts?
Of course you can. We said no to the last two. Illiquidity be damned.
97 cents.
Only because it's holding up 500.
It's only using 5. Yeah. Now, this you can tell it's quoted in nickels, so it's 97 cent offer.
Quoted in nickel, traded in pennies.
Won't go up. So if I sell this 97 cents, it's going to go up for $1. My offer will go up at $1. So I'm going to see. Review and send.
It might go up at 95.
No, because I won't. Yeah, the dollar, because it'll go like if I want to sell at 97, it'll go up for.
So you gotta leave that. If you get filled, great. If you don't, great.
Yeah. Okay.
2 minutes left.
Bearish ZB. ZB was up to 119, I think.
Let's take a look at ZB. This will be our final thing we look at because it's already.
I've got an exciting phone call right now. The Port Authority's calling me. I got the boat slip I wanted. I've been on the waiting list for a new boat slip.
Oh, good.
Just wait till I take you out this summer, Liz.
No. Are you back to the one where you can ram into the concrete?
No, I left that one.
Survive?
I left that one. So I had a little accident with Liz on the boat at one of my
we
marinas.
joked. I mean, everybody was fine. It was just pretty funny. She hit the gas instead of the brake, and we went flying into cement.
It was too long of a day. We had some wild people on the boat. I was trying to park it. It was very tricky, and I accidentally hit forward instead of reverse. We hit something that was concrete. Everyone survived.
My favorite was there was another girl on the boat. Her name was Julie. We're all good friends. And Jenny's like, hold on to these. You gave us like these buoys. They were this big. Julie's like,
Defenders.
Like, I think I'd prefer to have both my hands.
So I did that. That marina was a little too much for me. So I was on the waiting list to move to something that's going to be very easy. A floating dock. If we hit it, no big deal.
I love it. Okay, let's take a look at ZB, and then we are done for the day.
Yeah, then we are. Okay, ZB is 119. So I get it. I get why people are coming in saying they want a short position in bonds.
I get it. 2.6 rank, so all rank has been removed.
I don't know what to say, but I do want to make sure I get...
Bonds go up, rates go down, so apparently.
The good news is, oh, look at this, Hibachi. Jenny getting ready to go to UPS.
Yes.
That's pretty funny.
It is hysterical.
And then this came my first day working for Smith Barney. My sole responsibility was running orders to the OEX. So this was from Richard Russell.
Oh, I love it. That's awesome.
Yeah, to the one and only Frank.
That's Frank the Great.
And this came from YouTube. How do you both manage your Zebra trades?
Zebra trades, and I actually sent this person an email too. I said we're going to go over it on. This was Lisa, I believe.
How about tomorrow?
I said we're going to go over it tomorrow, and they were asking on managing losing zebra trades.
Okay, we'll go over managing losing zebras tomorrow. I know we have some in here. I know we do.
Oh, well,
we have 2 losing zebras, so we've got plenty of examples for you.
Perfect.
All right, we are out of time, but we will be back at 2:30 on last call.
All right, everybody have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you at 2:30.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Hello, everyone. Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. And, of course, Glenn Freiberger. Freiberger.
I can't read that.
Unfortunately, there's no turkey for us today. I know you're a big turkey guy for lunch.
I know. I'm historically, I've always racked up nicknames. I don't know what it is, but they're skewing a little in maybe the wrong direction. Tony now calls me Noodles.
Noodles.
You're calling me Turkey Boy.
Yeah.
You know, you didn't have to say that on air. That was just an in-house thing. Now that you said on air,
about it.
now you have no idea what's going to happen.
Noodles, huh?
I was watching playoff baseball. I was watching the Blue Jays in Seattle, and I saw this dude come to play. It's not Freiberger, but it's close. It's Addison Barger.
There you go.
Yeah.
Putting on for all.
Do you know that guy?
Yeah, that's Big Bro.
Yeah.
It's Big Bro.
That's what I thought.
Either that or like your dad went to Canada way back in the day and like had a kid and then left and like not fry, just take the fry off and just left Barger.
Not out of the question.
That was a sick game, though.
Yeah.
That was sick. George Springer, 3-run homer.
Wasn't it,
just
though?
an absolute dinger.
Yeah, right? I mean,
perfect trajectory, too.
Totally changed
45-degree angle, just nuked.
First pitch, too.
Yeah.
Totally changed the momentum of that game, and it was over. It was a wrap.
Unfortunately, they're going to get slaughtered by the Dodgers, but
I know, right?
Maybe they won't.
What? I haven't even looked at any lines or anything on that series. Actually.
Oh, I mean, the Dodgers are like minus 200 to win the World Series 6 months ago.
It sounds like that's when you're supposed to bet, right? When it's like somebody's supposed to get slaughtered. I remember this.
I would bet Toronto right now.
I remember when in 2007, 2008, whenever that undefeated Patriots team was, they went to the Super Bowl and they were going against the Giants. Nobody bet on the Giants. Nobody. Nobody. So these are the times.
Yeah.
Is that when you were under the table betting?
Yeah, of course. Exactly. Back then, yeah. Actually, I didn't used to bet that much. I actually didn't used to bet that much at all. I was never really, that was the funny thing about it. Like at a trading firm, I was the only person who really didn't bet a whole lot. And I also didn't play, I still don't actually really know how to play poker. I know, it's weird. I know.
Troubling.
I know, I've just never been into it like that. I know.
That's fine.
Poker
Everyone has their game of choice.
Well, what's funny is poker is an absolute gateway to options trading. I've talked to many options traders that are also poker players, but especially the tasty, high probability options trading strategy.
Yeah.
For sure. But yeah, that'll be a fun series. I believe it starts on Friday.
Jamal, I'm going to the Homeland tomorrow with Tom and Tony. Charlotte.
Charlotte, yeah. It's one of the places that I claim as home. There's Miami where I was born, lived as a kid, and then there's other places. Charlotte's definitely one of them. My mom, I don't even know if I should say this, but I guess I will. My mom's actually going to be at the show. So
Let's go. Nice. Fantastic. And your brother was at the...
He was at the Miami show. Yep.
There you go. Represent everywhere. Yep. I'm excited. I grew up in Durham, but
right.
really haven't spent a whole ton of time in Charlotte as a young adult.
I think you'll love it.
It should be fun. Yeah, I have a couple friends around. So if you're in Charlotte, at work by 11, Friday morning.
I know that's right. I've known you so long. I totally forgot that you're from North Carolina. That's right.
North Kakalaka.
Yeah, the tobacco state. Yeah.
But yeah, you can sign up for free. tastylive.com/events.
If they're not already sold out, they might be waitlist only.
Hey,
one of the last.
That's actually a good point.
Tom Tours.
You're right.
I mean, it's one of the last ones. It's one of the last ones.
in
Come
Austin.
see the legend live. Come see the legend live.
Yeah. But the Fillmore, Charlotte, North Carolina, Friday, October 24th. And tastylive.com/events. It's the first one visible there. You can sign up for free for the wait list, or if it's not waitlisted, grab your ticket while it's hot.
Oh my God. BE. Wait, real important question. Are you Duke or North Carolina?
Duke.
Thank you.
All the way.
Yes.
Dookie?
Oh, yeah.
Yes.
In a big way.
Debut tonight for
Uber Flag?
Uber Flag.
There you go.
I knew where you were.
Love that kid. Yeah, you see, we're getting here, man. We're getting here.
Boozers, the Boozer twins
The Boozer
yesterday.
twins, too.
They had a little exhibition versus Central Florida. Cam Boozer had 33 points. Pretty good. Pretty excited.
Yeah.
Should be a fun year.
That's good
Basketball's
stuff.
back.
Oh yeah.
It truly is. Truly is. All right. Little market update for you. E-minis down 30, NASDAQ down 10 times as much almost, down 200. Bitcoin sliding below 110 yet again. Some other futures moving in a pretty big way though. Ethereum down 4%. This is a big slide in Ethereum. What is this I've got here? That is not the chart I'm looking for.
It's not good.
There we go. But yeah, lots of things moving in the futures space. You've got the Russell down over 1.5%. You've got gold continuing its slide. What a move this has been. 10% discount 2 days ago. Kind of crazy to see. Kind of crazy to see. We had Thomas on yesterday talking about gold and silver. And yeah, he did say that silver, if you look at a near-term post-big move in gold and silver, you kind of have mixed results until you get to like the bigger downside moves. But yeah, crazy to see gold continuing its little slide here. Silver moving in the opposite direction. But silver had a much bigger move than gold yesterday. It was like 7% to the downside, which is crazy to see. Not much is up on the day other than crude oil. I closed that micro crude contract we had on.
Yep.
That was like a $160 winner. Took that, ran like a thief in the night.
As you should.
In this market.
As you should.
But yeah, wheat and corn and soybeans all getting boosted. That's kind of crazy to see. Kind of crazy to see. But the FX space, I will tell you, things are looking a little bit better here.
We're turning around a little bit.
A little bit better. Austrazealand.
Here we go again. You could go. This one you could just say Aussie Kiwi.
Aussie Kiwi.
That's
easy.
not
One click
that's not
close?
sexy enough. It should be like, like I don't know, the Aussie Wee or something. I don't know.
Aussie Wee.
I'll come back with nicknames.
Yeah.
There are some
Yeah.
fun. There's some fun ones.
Yeah, I bet. But yeah, seeing the U.S. dollar slide a little bit today. This was a $100 loss yesterday. It's now a $50 loss, which you love to see.
There you go.
But we're going to click the one-click close smash on the
one-click close.
Aussie Kiwi. Short Aussie Kiwi, $23. Pocket it. Short the pound dollar. Pocket that 10.
Gotta love
Short
a
the
one-click
euro dollar. Pocket that 15.
There you go.
And here we are.
Doing
left
pretty
with
well.
just the USD CAD position, which I've had on for a little bit.
Yep, and one of those little tranches of yours now flipping green. One thing for position management, if you are looking to manage these positions very actively, if you were to make these position sizes unique, therefore saying one of 0.06, one of 0.05, one of 0.04, then you'd be able to close these out in any order that you'd like. Right now, all at 5 microlots, you're a little bit handcuffed with having to close that your first 5 microlot position first, and they'll unlock in that order. But yeah, things turning around. Dollar softness today, which was a little surprising because that pound dollar and the euro dollar, if you would have come in at 6 a.m. this morning, would have gotten a lot more bang for your buck. We had softer than expected UK inflation data. That sent the pair to a 1-week low, below 133.50. Now back above. So throughout the U.S. session, kind of erasing all the overnight gains. We've seen this kind of back and forth in the gold market a lot of, until these huge slides of kind of overnight session saying one thing, U.S. session taking some of that price action back. We're getting that classic flip-flop here. So if you missed the euro-dollar sell-off this morning, not anything extreme, but dipped below 116, got all the way down to 115.80. Now we're back above 116 in the spot market. So a lot of good back and forth, but U.S. dollar, Canadian dollar dipping below 1.40 for the first time since last Monday. So yeah, that one's starting to turn around for you. But everything else, we're still a little range bound. Dollar Swiss franc is posting some consistent gains, which is nice to see. That one's moved very closely with euro dollar in recent months. Now a little bit of divergence as we start to unpack this kind of risk curve or what have you. So a lot of moving parts, not as drastic as the gold market. So a lot of places to look these days. Not a lot of clear answers.
No.
But yeah, a lot of
foggy as can be.
Yeah, something needs to be calm because the markets, I think, are teetering a little bit here.
You were saying last week, you said if we get a gold red, indices red, something
I thought
else.
it could be ugly. I thought it could be ugly. I thought the move that happened in gold yesterday, I figured that was coming. I actually thought it would be accompanied by a market down. I'm actually surprised the market wasn't.
Yeah.
But it's happening today a little bit. And this is probably the third day in a row that we've had. We'll talk more about that later. But yeah, there's a lot of things happening right now.
Yeah, I mean, we're seeing a little bit of an uptick in vol with this micro sell-off here, but not as much as you would think. And I'm a big vol head. If vol's in contango, I'm buying every dip. If it's not, I'm not.
Oh yeah, and we had
Simple
VIX
as that.
expire this morning. I totally forgot.
Yeah.
Yeah.
But yeah, decent contango. I mean, we're pretty flat relative to where we were. We were in backwardation a couple trading sessions ago when we had the big market sell-off. But yeah, still a lot of uncertainty in the air. You can feel it.
But you look for that
flip
back to contango in VIX.
Yeah. Contango in the VIX is just, you'll get your chop, but generally up and to the right. Of course, that can be flipped in one day, which we saw last Friday, I believe was the day.
Yeah.
But yeah, as long as we stay in, if we chop around here and we see this VIX, the vol futures continue down to 18, 17, 16, like that's when throw in the towel. And I'm looking to get long personally in that environment.
Interesting. Yeah, I think regardless right now, you need kind of an extra day buffer for any sort of confirmation signal because we've seen so many like wonky one-day moves and snap back, which honestly surprises me, the gold move continuing today because you would have expected,
not me.
Some.
I'm just telling you, not me.
All right.
This is what I was expecting to happen. After what happened on Monday,
Mm-hmm.
I was expecting a 2-day sell-off in gold. I just didn't know when it was happening. Yeah.
Love it. But yeah, big move, consecutive move. It is a little surprising to me that we're not getting any dip buying in gold.
Mm-hmm.
Seeing it a little bit in silver, but
because I think it's waiting. So again, I think it's because we're right around 4,000. Like the low from October 13th is 4,011, and I think right in this area right here, we're gonna chop because there's a lot of buyers who want higher. It's mixed here, and so it depends on how these next couple of days are going to be very fragile. I mean, if we break 4,000, I think it gets a little ugly for a little bit.
Mm-hmm.
If we don't, it stabilizes.
We shall see.
I was reading some things in the tweeter sphere that were saying, initially in this gold buildup, there's some speculation that it was a lot of central banks, institutional players, and then some report released that it was a lot more speculative, a lot more retail than previously thought. So, I mean, that alone tells you that, once you get a shakeout of 4%, that could be 6%, and some of those leveraged buys can get shaken out.
I kind of pounded the table on Monday. I talked about it, like when I was on overtime, and I pulled up.
That's the place to do it.
I pulled up these headlines, and it got to the point where like Ilya and even Dylan were like, wait, we got to get short this thing. We got to get it was
nice.
The headlines were just so crazy, like why you should be looking in your closet right now, and it was so silly. It was like they were so crazy. I was like, this is stupid.
I mean, nice, you nailed it.
Hey, if you would have found some gold nuggets in your closet a few days ago, you'd be looking good.
I think still, historically, you're pretty good.
True.
I'd take any gold nuggets you have.
So wait, as a result, and this is a good point, like to FX style, like have you so you have not seen anything like with Aussie or anything as this gold move has happened?
Yeah, I mean, relatively muted for what historic correlations would bring to mind. We've seen some of the reaction play out in like dollar Swiss franc, some kind of pressure alleviating there. I mean, the Swiss franc the dollar's been pinned to the downside in that pair especially. But yeah, no real solid movers with Australian dollar, just because you also have kind of some of that Chinese equity story in there. You have just some general risk sentiment. We're seeing that kind of lift up with, if things move in the pair that you were short, Aussie Kiwi, that can be kind of seen as a trickle down in the risk sentiment curve. So it is surprising, but so many variables that play here, whereas it wasn't, one storyline that shook the gold market. It was just kind of a shakeout in its own right. And so with the lack of things fundamentally changing, you didn't see as much of a reverberation as maybe you would have seen. But yeah, like I said, with every asset, it's a little up in the air right now as to what's driving what, where, when. But that's what makes it fun, right?
Yeah. Big brain Joe, the gold cockroaches.
Yeah.
Mm-hmm. Well, I've got some slides if you want to get into.
Yeah, we can do that.
Slides.
Yeah. If you want to join us on the YouTube channel, we're streaming live there. Just go to Tasty Live, throw in your trade ideas, questions in the chat. We'll get to them shortly, especially any Tasty FX questions. We can take a look at some pairs. But yeah, click the link at the top of the chat. Money match promo, 1% cash match.
Yep.
Any and all deposits up to 30 days. And also 30 days commission-free trading.
It's pretty good.
Pretty nice. Pretty good. Nice. All right. Does technical analysis matter more in FX? Yes. The end.
That's pretty good. I mean, yeah, today talking about technical analysis, love it or hate it, a very divisive tool in the trader toolkit, looking at various markets. But if you've ever wondered why so many FX traders obsess over chart patterns and support levels and whatnot, there actually is some structural reason behind it. And I thought this would be a good audience to tell it to, a possible reason why some of these indicators and levels might matter more in FX markets. So the core difference here, I think, is that when you're valuing between stocks and FX, is when you're analyzing stocks, there are a ton of factors, of course, and nobody can call the wind, but it is rooted in some sort of fair market value. It is a company that is doing things that drives revenue in some cases, and there are different ways to analyze it, but it's fairly one-dimensional when you compare it to something like currency pairs. And the pairs, I think, is what really adds that level of abstractness and obscurity, because you still have some fundamental drivers in FX pairs like GDP growth, inflation, import exports, all of that stuff. But when you have it pegged against another currency, then all of that suddenly turns relative, right? So you could have strong US GDP growth. Okay, but is it stronger than the euro? Is it stronger than UK growth? And that's where you kind of get that added level of murkiness where, there isn't so much reliance on that fundamental value that you can see in the stock market in particular, and more supply and demand acting more like commodities, right? And then going over to the next slide, what I wanted to talk about first is technical price levels. So technical analysis can go down a ton of rabbit holes, right? You can get technical indicators, you can analyze chart patterns. But one of the simplest ways to kind of go into this whole nature of thinking is just support and resistance levels. And those are key levels where you'll see historic performance either turn around or break through. So if you see something like this dollar yen got these levels supplied by our lovely Ilya Spivak, who's looking at this market very closely. But you can see, especially on the left-hand side of that graph, a couple of times where these ranges are really established in these currency pairs, where they'll try levels, get rejected, and really start to chop back and forth. And FX markets overall are more historically mean reverting than things like stock markets because of the kind of relative value, again, of this exchange rate, because that's all it is. But when you start to factor in, what the products associated are with things like FX, you have, a ton of participants where leverage matters a lot. And that's where you start to factor in the real buyers and sellers of, market participants here. And so it's one of those self-fulfilling prophecies where these levels might only matter because everyone is looking at them. And for leveraged buyers, that could mean, you have your stop orders all clustered at a similar place because you have some of this group thinking. And then, like we talked about in gold, you can tend perhaps play breakouts here because you can have some of that leverage shakeout where moves can be exacerbated because of so many positions closing and forced closings as a result of leverage. And then lastly, just wanted to factor in on the next slide how you can kind of contextualize this in an actual trading plan. On the next slide, please. And the way I think about it is kind of a where and when versus the why, because zooming out, when you're looking at currencies, these are, the national, sometimes even multinational currencies for a whole region. And there's so many factors in that. And so a lot of fundamental analysis is definitely important, perhaps as to your why, and especially with spot FX products where you have to be directional. There is some level of conviction as to the why that should be required for a balanced approach to getting into these markets. And that's kind of your overall thesis of, I think over the short term, medium term, the US dollar might strengthen in relative value to another nation like the euro dollar or like the European Union. And so that's where your fundamentals come in with the why. But then you can get a little more granular with the when and where meaning what price level, when you start to factor in some of these historic trends as it pertains to technical analysis. So looking at the graph here, if you were to speculate that the euro would strengthen against the US dollar, you have that thesis, but then you're looking at the price action, and of course this is leveraged at 50-1, and so you could be directionally right. But if you're directionally right from the middle of the range and the move starts to go against you, it's hard to stay in that position very long for very many price levels without your hand really being forced at that level of leverage. And so that's when your timing starts to really factor in or should factor in for robust risk management. And so you could see on this level, of course, past performance, much easier to monitor. I would have done this. But here, just using an example, is this pair tried, the 116 price level a few times over I think this is June. So tried it 3 or 4 times before trading very strongly through it on one day. Here, looking at the daily candles. And so if you caught this move, you're monitoring this move, you had that why, and then you had a possible confirmation of trading through that level. In this example, you still had more than 100 pips to the upside that you could have taken profit on, but just by waiting for that confirmation, perhaps would have saved you from, if you were looking at it 1 week earlier, you'd have taken 1, maybe even 200 pips of pain in the other direction before being right, not more than a week later. So going to the key takeaways, I think that's the most balanced approach that makes sense to me. You can get into other technical indicators like moving averages, RSIs, very popular, but a lot of the weight behind them and the reason they're popular is because they're already popular, if that makes sense. The great Pete Momat from show fame here on tastylive, said he still monitors, the 200-day moving average because of his time on the floor. That's what everyone was looking at, and so there's still people out there that respect some of those levels when it starts to hit one of those moving averages. And beyond that, it starts to become a little more subjective of how much you weight it. What you don't want to do, in my opinion, is give all of your decision making to a technical level indicator, but it definitely is another piece of information like you would get with stock news, new stocks valuation, a new valuation method. It's all similar there in factoring into your picture, and especially with trade timing. So that's all I got for you, and a possible thought process of why technical analysis might have some more weight in FX markets as opposed to other assets.
Bravo.
Thank you.
Bravo. Yeah, I think for me the most. There you go. Yeah, I think that's super powerful stuff. I think there is something certainly to be said about the groupthink aspect of it, especially Pete's comment of like if a number of big volume traders are looking at a daily chart, 200-day moving average, that can create opportunities when you have potential touching points or breakout points. But yeah, another thing is just like correlation, you need, for these things to make sense and be taken seriously, you need a ton of data.
Right.
And you have a ton of data with these continuous markets. Something that's an IPO, like you can't use these tools on something that's brand new with no data. It's really just, shooting in the dark.
There's a head and shoulders pattern in the first 3 hours of the IPO.
Yeah.
This is going to the moon.
I've always thought of technical analysis as an area. It basically identifies greed and fear pockets. That's the way I've always thought about it. And because again, there's multiple people that are looking at these areas, and that's why honestly, it doesn't really matter what method you use. In my opinion, I don't think it matters if you use Bollinger Bands, if you look at just simple moving averages or EMAs. As long as whatever you're doing is consistent, they're all kind of identifying similar areas.
Yeah, great point.
And then weighing something against another creates that relativity. So when you were talking about stocks, the first thing that came to mind was Tesla. Like 5-6 years ago, Tesla had negative EPS, like they were just burning cash, but the stock price was ripping higher, and that's because people weren't necessarily investing in the current structure of their company. They were investing in the potential future value of the company, knowing that they can take over the EV space, knowing they're going to space. They could be the number one, like right now, like SpaceX is space in terms of all the stuff they're doing. So things like that can push and pull equity markets and drive them out of things that you're looking at, where the more people that are looking at FX markets with specific tools or indicators, it makes more sense to use them and watch them at the very least, for sure.
Yeah, I mean, the only question I really have for you is, did you technically analyze that ass whooping I gave you in fantasy football this week? Because I laid the smack down on you, Glenn. Yeah, hey-o.
Yeah, that one hurt. I even played all my players. I played all my players, which hurts 10 times more, and the league that Jamal and I are in, you get a bonus loss tacked on if you don't score enough. So
he's in it too. I mean,
yeah.
he got a little bit of the train, a couple weeks back.
Yeah, it hurts. All right. At least it's not one of the ones where I'm in one where I hold the money, and it's like you just know at a certain point, like, okay, now I know I have to give that back.
You give it back? Yeah.
It's gone.
It's true. Yeah. Holy cow. Did we just drop like 30 handles?
Yep.
Holy cow.
E-mini's down 65 now.
Whoa. Crazy
move. It is 11:30. Something might have just happened here.
That's what we get for trying to shoot them.
Whoa.
Let me pull up the calendar.
I tell you, dude, this is three. Well, that's what I was going to say earlier. I just want to make sure we got Glenn's piece in. But what I've noticed is this is the third day in a row where you got, forget like stocks, like the rare earth metals, the energy names, the Oklos of the world. And, it's going down, bro. It's going down right now.
Yeah, this is a pretty big liquidation event here, at least 30 points of it. Only thing I can see on the economic calendar, Michael Barr speaking right now, but I'm not sure. That's supposed to be in 5 minutes. I'm not sure what could be happening before that, but yeah, big move in the E-minis NASDAQ. Bitcoin still where it's at. NASDAQ down 400. E-minis sliding aggressively here, down 72.
Whoa. Whoa, bro.
Yeah, I'm not seeing.
This is what I was thinking.
This is it?
This is what I was thinking of.
The end is nigh. Nothing really happening here in these positions I'm in. Netflix down 125. They had earnings yesterday. Big move to the downside there. But let's see what else is moving in the NASDAQ specifically.
I just think it's a little bit of the pressure again. It's been, this is the third day in a row that you have those rare earth names down, that you have the nuclear energy names down, and the quantum computing names down, and that's where a lot of attention has been focused recently, more so than like Mag 7 stuff. So I just think it's kind of that, along with the gold and silver move more recently.
Yeah, you're seeing some of these chippies to the downside. Palantir, Texas Instruments, I think they had earnings yesterday.
Yeah, they did.
But AMD down 10 points.
Mm-hmm.
That was this was a 11:30 liquidation here.
Nancy Pelosi set to make an announcement.
The greatest trader of our generation.
Yeah, it looks like let's even just look at like Tesla.
The Trump administration is considering a plan to restrict globally produced exports to China.
And we just jumped back up 20 handles.
Made with or containing U.S. software.
Gotta love this market.
Okay.
So that might take the tech.
Yeah,
explain why NASDAQ's leading that a little bit.
Yeah, that was a quick little sell-off here, but vol futures aren't really moving. They're up a little bit more, but 70 cents ain't nothing. VIX is up a little bit more, up $1.70, up 10%. So spot and futures seeing a little divergence here.
I wish gold fell below 4,000 during this. I would have bought it, because then people are going to get scared and then it's going to jump. But it didn't. So,
hey, you win some, you lose some. Mm-hmm. Natty Gas, sell off a little bit. But yeah, give us your trade ideas. Let us know if you're looking for anything specifically. But before we let you go, Glenn, what are the pairs we need to be keeping our eye on today? Like you said, it's been pretty muted even still into this move. I'm not seeing really anything that's down or up more than 0.25% in the popular non-USD and popular USD.
Yeah, I mean, if this news is China-centric, I'd look to the Australian dollar for sure. I can't see. Yeah, I mean, if Australian dollar, US dollar is not as interesting to you, one that's been a more minor pair but been interesting to look at is Australian dollar, Swiss franc. That one was posting good gains off of its, let's see how low, lows dating back to April. It was on track for its fourth straight green day. Now that's turned around, but that's an interesting play on, not only China, but some risk sentiment, with Swiss franc being one of those traditional safe havens.
We should add to this platform. This is a suggestion, take it or leave it. I'm going to tell you, and you can tell them, and they're just going to be like, screw that guy. But on the far right here, we could have like a 52-week, like how close or something is to a 52-week higher low.
Yeah.
I was really hoping he was going to say, just to the right of this, just a little description of the pair,
No, that's already already slated.
That was Nick's. Nick used to just yell at him every day on the show.
He still does. I'm on with Bat and Bat Tuesday, Thursday, and it's still. He's like,
what description does he?
Can you help me find this one? Because I can't tell because there's no description column. It's coming very soon and coming to mobile very soon as well.
Love it. So Aussie dollar, Aussie franc.
Yep. Yen will be interesting. I mean, they had their news early this week on their new administration. They confirmed the new prime minister that, if history is to repeat itself, would lead to a weaker yen. We're already up at, much more elevated levels in dollar yen than we were in 2013 when alleged similar policies were enacted, but that led to a huge slide in the yen. So perhaps there's some more room to run there. So definitely looking at the yen. I hate to say your Canadian dollar. I don't know what would make that interesting. We have seen some interesting, Canadian data, but we've got Japanese inflation Thursday night, I believe, and we've got U.S. data finally back, CPI set to release on Friday. So those are the big headlines, at least the ones we can track that are not ad hoc, that might give some volatility juice into these FX markets.
Make CPI great again.
Yeah, I'm already short the dollar CAD, which is painful for now. But I just got long 5 microlots of the dollar franc.
There you go.
And this has a positive carry, which you just love to see.
Nice.
Doesn't hurt you.
Does not. In fact, it helps. Throw some change in my pocket.
All right. Thanks, guys.
Yeah, thanks for coming on. Thanks for that info.
Always fun.
Yeah. If you want to reach out to Glenn, you certainly can bother him on the Twitters. He is at Glenn Freibarger with an A. Give Tasty FX a follow as well. And check out the website, tastyfx.com. You guys have a newsletter you can sign up for too. I'll throw a link in the YouTube chat to that. But yeah, enjoy lunch.
Thank you.
And protect it for the next 30 minutes for us.
Okay.
Yeah, do us a
it was
solid.
here before. I don't know.
Just do us a solid, Glenn.
Yeah.
Glenn.
All right. Thanks, guys.
Thank you. E-minis removing that little sell-off we saw, only down 40, NASDAQ down 300, Bitcoin catching a bid too. It feels like it was a knee-jerk reaction, and now we're kind of flattening back out to where we were. Vol futures coming back down, basically where they were 20 minutes ago when we looked at them. But yeah, kind of an interesting move there. But that's
fun.
I think that speaks to the feistiness of this market, where it feels like it's teetering, and any bad news could send it moving to the downside.
Yeah, I mean, and again, I think let's just call it what it is. I think there's a decent amount of crowded trades right now, and I mentioned in what they're in. And look, I love that. I'm in some of these names too. We got short puts in a couple here and there. But, you talk about the SMRs, the Oklos of the world. I mean, just look at them. There's been a 3-day move, and it's been, wow, Oklo is down $22, bro. Like, it's been ugly. And I think when you start seeing groups of things move together, it's fun on the upside, and it gets a little scary sometimes on the downside. And I don't think these things are going away as of right now. There's too much invested in the rare earth metals. There's a lot invested in the energy sources that are supposed to supply AI and quantum computing as well. So I think that's kind of a part of what's going on here, along with a bad day in Netflix, and gold is still kind of fading as well.
Yeah, Netflix, huge move to the downside. Although, it's certainly down more than the expected move. The expected move was not 125 points. Mm-hmm. I believe it was closer to 90. We can take a look. We could actually take a look at the 2-day where it closed yesterday, and then just look at the net change. But I'm pretty sure it was like 90 points. This thing closed at 1238. This is what you can do to just like gauge what the implied move was. So you go to the near-term cycle, 2 days, go to the 1235 or 1240 straddle, and just look at the net change. So this has lost 50 points. That's gained. So yeah, it was pretty close to 100 points, we'll say. But yeah, crazy move to the downside.
Yeah, somebody just talked about Carvana. I mean, I guess I should just expand what I'm saying here to just high beta. High beta right now is getting a little whacked, it would seem.
Yeah, it's a huge move. Carvana down bad, down 40 points, 11%. And yeah, I think you should expect, based on that headline that we just read, you should expect that any company that would be at mercy of that to have some liquidation here. A-mini's rallying, NASDAQ rallying a little bit though. E-mini's only down 39 now. NASDAQ.
Wait, what was the headline again?
Restricting U.S. and China companies, like if they're using Chinese products.
Ooh, oh yeah.
We can pull up the full headline, but yeah, that's kind of like with the tariff stuff. When the tariff stuff happened, you saw a ton of companies that would have been worse off from those tariffs in specific countries get hammered to the downside. So, yeah, crazy move. But if you weren't paying attention for the last 10 minutes, don't worry about it. Nothing happened. But yeah, a lot of single name stocks falling out of bed today. But that's kind of been the MO of this market. It's been very sector specific and concentrated in those moves with those sectors. So gotta keep your eyes peeled for that.
Yep.
Okay, going over to the YouTube chat now. Let's see what we got here. Questions. Any research you can recommend on adopting a zero-day iron condor strategy? We do have a lot of content on tastylive.com. If you just go to the website and search for 0 DTE or 0 days, you will see a ton of content. But really for me, I go way smaller than you would think. I like to do chicken iron condors. So SPX, for example, if I were to place one tomorrow, or right now leading into tomorrow, I like the 1 day to 0 day iron condors, and I just do them 5 points wide. I go straight to the expected move, orange bar here, and pick up $200. If you pick up $200 and there's a huge gap down overnight, you have $200 to offset your $5 of risk, so it's really a $3 max loss. But $200 is a nice number because if you wake up and the market's up or down like 10 or 15 points, you'll be able to close that for a 50% winner pretty shortly after the open, as long as you don't have a continuation move to either side. And I'd rather just collect more than less, because if I'm doing these every day, my risk is a big blowout move in either direction. So in a lot of cases, if I move this a little bit further out of the money and only collect $1 or $1.50, it's still going to be a loser. If it's like 10 or 15 points of difference and I'm giving up half my profit, that's likely still going to be a loser. So I like to do the chicken iron condor setup where I'm collecting like 40 or 50% of the width, and I let the losers run because I don't want to close a loser and then watch the market reverse and have it be a full winner at the end of the day. Let losers run, and I have a GTC at 50% if I'm filled on these. But yeah, you got to go way smaller than you think. My normal trade size is like $1,000 up to $1,500 if I'm being more aggressive. These trades, my risk is $300 because I'm doing these every day. That's the key, is realizing if you're doing these every day, you can have 10 of them be losers in a row. You can't be doing your normal trade size for a 45-day or 60-day or longer-term trade with these zero-day trades.
Yeah, exactly.
Because of things like what we just witnessed.
Yeah,
can happen in a second.
And that's exactly it. Like, and that's the only thing I would think of, like doing them regularly, is just consider the environments at times that we're in. Once things start to move a little bit more, it's a little bit harder for those iron condors, right? I mean, it's hard to determine. I think paying attention to like the range on the days too, like. If we're in a situation where we're having 100, 150 point ranges, it's going to be a little hard to like do those.
Mm-hmm.
But again, I think even just being as small as strikes wise, as Mikey said, just kind of helps limit your risk some.
Indeed. Yeah. I think staying super small, and that just removes the emotion from it. And it allows you to not worry about a loser that's teetering on your strikes. Like, you got to be able to hold them through that expiration day, and if it's a loser, it's a loser. But if not, you have it open and it can be a quick reversal. And you want to have that on if you're doing these. BE, deep out of the money call ratio.
I just sold a put in there.
Down 13 points.
Yeah.
Dang. Yeah. BE, Oklo losing all of their steam. Kind of a crazy move. 1121. 135, 140. 135, 140. Yeah, I mean, this is so narrow that I would just sell the call if that's what you're doing. Like this call spread, you don't want this to come into play, and even if it does, it's only going to yield you $250 of hedgeability until you get to expiration because you're dealing with 140% IV product. So I would just sell the call in this case, because if you sell the call and you get a sell off or a vol crush, you're gonna make a lot more on the out of the money move versus owning this call and selling two, where you're losing value because this call is losing value too. So I would just sell the call if that's what you're trying to do. If you wanted to make it wider, I think that's a different story. If you give up all your credit and you do a 120, 140, now I think you're in business for you want the upside move, because now you have 20 points of profit potential and your break even's up at 160 instead of having your break even be at 145. So giving up the credit and making them super wide, I like that a lot more than having a narrow one with a credit that's equivalent to the short call itself. How do we... Actually, let me do this one first. We're on BE still. 10-point wide inverted strangle in November, 80 called, 90 put. Should I wait for the earnings crush to roll or be trying to uninvert and roll out now?
80 call, 90 put?
Mm-hmm.
Oh, inverted strangle.
Yeah, so this move is amazing for you. Great move for you. You made back $500 today just on net change, probably a little bit more because these markets are wide. But yeah, you're right where you want this to be now. If you're trying to move this out to December and hedge, if you're buying back the 80-90 for $3,300, you just need to put yourself in a position where you're making $3,300 in credit or more. If you go to December, you could go to a straddle and pick up a credit, or you could go to a 5-point wide strangle. That's where you would land while still picking up a little bit of a credit. So I think you could do that now. If you wanted to go even further out in time, if you wanted to go to like January, that's possible too. That gives you a little bit more wiggle room in terms of strike selection. You could go to 85, 100 and pick up a small credit, but that's pretty much it if you're making the adjustment. If you stay in the earning cycle, it's definitely more of a aggressive trade. I find myself getting distracted by shiny objects, different strategies. What advice would you give someone that's fairly new to all the strategies? I do prefer high probability trades. So I think a cookie cutter strategy that has long-term success with less volatility, not volatility, but less rooms for error, I would say is like a short put. Selling a short put in a product that you don't mind owning and you can afford to own, it's the easiest strategy that you feel fine with, because if the short put expires out of the money, you keep the premium, you can just keep rolling it forward. You can adjust the strike to the upside or downside if you get tested. And worst case scenario, you pick up the shares at a lower basis than where it was. So the wheel strategy, short put turning into a covered call, super high probability, conservative strategy. And if you do that in your correct sizing, which is super small, it can be a great strategy, especially for equities that are flying around and ETFs as well. So yeah, I would just keep it simple if you are new-ish and you want to have a strategy that has long-term potential. Undefined risk, short put, turning into a wheel strategy, that's where I'd go.
It's a great question. Great answer, too, by the way, Mikey. But it's a good question because early on, I mean, once you find out, you realize the power of options, you get to the point where you're like, you realize you can make money in anything or any strategy, and it does become distracting. So, yeah, try to keep it simple.
Yeah. And think of like the worst case scenario, too. I think people, that's a miss on a lot of people. They do, like, let's say we're selling a strangle in SPY, and then you go and sell a strangle in GameStop or AMC. It's like, it's not the same thing at all.
No.
You have to realize that these are very different things, and you're just not going to get a 30% rally or dip in the E-minis in one day. The trading would halt before that happened, where equities, you can get a 40%, 50% move in a second.
Yep.
So Just keeping that in mind too. Sticking with ETFs will be a much smoother ride. There's a question about your trade.
iSurge, right?
Yes.
Yeah, so in iSurge, we are short the 500 call in the OCT24 cycle, and we are long the 500 call in the OCT31 cycle. And so I think somebody was asking, how are you going to manage the trade? Typically, I would have taken it off already, but since it's slightly in the money, and I say slightly because after a $60 move, it's $20, at this point, in the $25 to be exact, $26 in the money. This could possibly pull back, so I'm actually holding on to this one. I do understand that right now I'm up. I'm assuming you're the same as me. It is a 92% gain. I'm up $240. Maybe that's a little off because these markets are a little wide. So, you can certainly take it off. That's one way to manage it. Obviously, just take it off. You don't have to think about it. The other way is to see if there's going to be possibly some pullback over the next day towards 500. Because, look, that'll be the best case scenario. If this pulls back towards 500, this will be worth even more at that point because that 500 call in the front month will literally melt away to some degree. Mm-hmm. So right now, I figured, in my mind, honestly, it's like, okay, I'm up $200. I mean, that's nice. But it's and that moves the needle. But at the same time, I'm willing to play some pot odds here and see if this pulls back down, and I can make even more money. So that's how I'm managing it right now, all while knowing I don't think we'll get assigned. And if you do, I don't believe so. Let me look at the open interest here, actually. That's the other possible risk, right? Somebody could decide to exercise this. The put is only worth 65.80 cents. So, possibly that's another potential risk for sure. If somebody decides to exercise this call overnight, we get assigned on the OCT24 500 call, and then we're just long this 500 call, which again, that does not work for us if it pulls back. So I am aware of all of that, but I'm willing to take that risk without somebody exercising on a Wednesday night. I don't necessarily believe that's going to happen. It's potential, but I'm willing to take that risk and just see if this pulls back to 500.
Yeah, and 60 cents, 70 cents is, I think, plenty to offset assignment risk. But even if it doesn't, and you were assigned, you could just close the same day. You would be at the mercy of the extrinsic value gain or loss in your long call. But 60 cents you would get in your pocket immediately because this has over 60 cents of extrinsic value. Mm-hmm. Do you ever roll down a short call in a long call diagonal that's moving against you, assuming the debit of the spread after the roll is still less than the width? Yeah, that's the key. If it's like a one-day iron condor, if it's a one-day diagonal for earnings, I usually don't, because if the move is against me, that means my long option is losing value, let's say in December, and rolling into the short November isn't going to yield much. But let's say I have a call diagonal spread in the Qs, and I had it on yesterday, and I was long December, short November, and let's say I put on like a 20-point wide diagonal for $10. Now you can do that if you want, because you have 20 points wide for $10 that you paid. You could move your 20-point wide to a 10-point wide, and you would still land at a debit less than the width of the spread. So that's the whole key. If you can roll for a credit that makes sense, that's like 50 cents to $1 at least, and you can still land on a situation where you have a debit less than the width of the spread, the new width of the spread, then it's totally on the table. Let's see. A couple of minutes left here. If I adjust to strangle, should I still take profit at 50% of the total credit or the original 50% profit before the adjustment? I say the latter. The 50% profit before the adjustment, because if you're defending a trade and you're picking up more credits, if you're increasing your profit target by keeping it at 50% of your total credit now, it's going to take you a lot longer to get to that point. And on the other side of the coin, let's say you have a 50-cent profit target for $1 credit, which is a 50-cent profit. If you turn that dollar credit into $3, $4, $5, $6, and your profit target is only 50 cents on that credit, now you're only looking for like a 10% on your new credit received. So I like to keep it the same from a monetary standpoint, that will get you out of the trade much sooner and allow you to go into something else. Because trades you're defending, you don't necessarily want to increase your profit target unless it's like a year-long trade, like my IBIT position. But I already knew I was going to be in this trade all year from the get-go, so it's different. But yeah, keeping it the same monetary value is what I like to do. I'm at the bottom of the chat. What time of day do I put on one-day iron condors? Usually like 2 o'clock, 2:30, just before the close, just so that I avoid the day-to-day chop, intraday chop, and then I can set it up at the new expected move. But yeah, I'll look to do that maybe a little bit later today.
Oh, somebody asked about CVAR. Where can they find the CVAR on the platform? It's at the bottom of the trade.
Yes, if you have a position on, CVAR is on the left here. So a conditional value at risk. It's flying around, but it's basically a real-time look at projected P&L. And it's usually going to be less than your buying power and certainly less than max loss. I think that's it.
Yeah.
Let's get out of here. Go get some, what is it today?
I know. Greek food.
Greek food?
Yeah. I know, right?
Love to see it.
I know.
You just love to see it. Thanks for tuning in. If you have any follow-up questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. And, of course, Glenn is at Glenn Freibarger with an A. Give TastyFX a follow as well. I've got the newsletter in the YouTube chat. I'll post it again at the bottom if you want to go sign up for that for free. And check out the Money Match promo if you don't have a Tasty Trade account. That's pinned at the top of the YouTube chat. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
This is Breadwinner Trivia here at Tasty Live. I'm here with Nick Batista. We're going to present him 4 questions. If he gets all 4 correct, I have to make him a peanut butter and jelly sandwich. Let's dive right into it.
And I'm hungry. I want 2 of those.
Which commodity is often considered to be a safe haven asset?
Gold.
Gold is the correct answer.
The shiny rocks, boomer shiny rocks.
What does the Sharpe ratio measure?
Return relative to risk.
That is correct. What is a credit default swap?
It's a credit that originates somewhere else, and it's traded for different amounts across many different parties.
That is correct. That's not gonna exactly match what they have on screen here.
No, come on. I'm not the smartest guy here.
For all the marbles, for the PB&J, what is the national animal of Scotland?
It's the Highland cow.
It is a unicorn.
What? That's a trick question. I hope nobody heard that because I want to see a peanut butter and jelly sandwich get made.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Howdy, everybody. What's going on? And welcome back to another wonderful episode of Risk and Reward. I have an opener question for you all today, as I usually do. Does anybody play any instruments? If so, follow-up question: is reading musical charts the same thing as reading trading charts? You tell me in chat. I'm here joined today, as always, by my wonderful co-host Errol. Errol, how are you feeling? What's happening?
I'm feeling great. I used to play the saxophone growing up, so in 6th grade, really? I chose the alto. Shout out to Kenny G. He was the OG soprano saxophone. It looks like the clarinet, but a way upgraded looking clarinet, which was a soprano saxophone. But I played the alto. I don't know how much of those skills translated into trading, but there's got to be some type of connection somewhere. But I'm doing great, brother.
I'm sure that there is. I'm sure that our chat will pull out some wondrous connection between those two things. I do not play any instruments myself. My parents did a good job of getting me exposure to music when I was young and like seeing if that was something that I wanted to pursue.
Okay.
And I did not. It never really struck me. I love music now. I think it's really impressive when people can play an instrument, but it just, when I was a kid, wasn't interested.
I feel you. It looks like Beth was a trumpet player. I remember during that age too, like they had tryouts for jazz band. I remember I got into jazz band a little bit. I felt cool. I just wanted to be Kenny G. That
you guys
guy.
have a band versus orchestra sort of dynamic going on, or was it just like one?
It was completely separate.
Like it was separate.
Orchestra and band was completely separate.
Yeah, my school it was one unit. Like at my high school.
So those performances must have went crazy though. A lot of collaboration.
Well, there was some people who were in marching band who were not in orchestra.
Yes.
But then like anytime there was like a large performance or whatever, like in the theater, they would say band and orchestra together. It was like one cohesive thing, and their class was together at the same time.
Yeah.
But not everybody that was in the orchestra marched, I suppose.
No, I love it. I do remember having my computer down in college and people thinking I was a producer making beats or something like that. So that's the only connection I've heard of or saw with the music.
There you go.
At least.
Guitar. Can't read music anymore. I just listen and replicate or jam. Oh, you can like just sound replicate. That's pretty impressive.
I don't know if I can read music or the notes anymore either off a sheet of paper. To be honest.
Choir. I'll float that. I did choir. I was not. I must admit I was not super into it. It was.
But you understood notes.
Yeah.
Fluctuating notes and all that.
I was able to read sheet music at that time. Yeah.
That's fire.
Yeah.
That's fire.
We had to. We did all kinds of performances. It was kind of a fun class.
Yeah.
I only took it as a requirement, but I play drums as Big Deal Donuts.
Drums is fire.
I can play the drums.
Yeah.
It just will not sound very good.
Right.
I take it Big Deal means something else. Anyone wrestle? I wrestle with my sexuality.
Big Deal or Gumpy might be coming in with those comments that throw you off. Like, hold on.
All right. Jumping over, we have a quick little segment today on reactive trading. This is really going to be more of just a Gus venting session because it's just the stuff I see on social media, as of late, and just all the time. This has been a problem for years now. It just makes me so mad. So we're gonna talk about it a little bit today and how to avoid being a reactive trader. Although I'm sure that most of our tasty audience knows most of what I'm going to talk about already. I got some funny examples in here. It's worth sticking around for maybe some good reminders. So yeah, we can jump straight in here. I have called this the reactive trading epidemic because that is what I believe it is. It is something that is growing in prominence every single day for which we have no cure at this time. Social media is causing retail traders to trade reactively, and often they get burned. So first, let's establish what I mean by proactive versus reactive traders. Put some characteristics of both here that I think well encompass what I'm talking about. So obviously, everybody knows proactivity essentially means being prepared, doing things in advance, while reactivity means reacting to whatever's happening right in front of you and trying to make the best possible move. Proactive traders, which is what obviously all of us are they're placing trades ahead of potential catalysts. They have an exit plan when they enter a trade. They're not soliciting advice on social media, at least not often. And they know that if the media is talking about it, it's already too late. Lastly, they slowly make profits and grow their portfolio. Nobody's expecting to get rich overnight if you're a proactive trader. Reactive trader is essentially the opposite on every front. Waiting until catalysts happen and stuff's already moving to jump in. No exit plan, just trading on vibes. Frequently soliciting advice on social media, jumping into stuff after it becomes trendy, after the media begins talking about it. And I do include social media in the media, just blanket statement for the rest of this. I mean both. And they take a lot of all or nothing trades that will blow their portfolio or worse, or their house if they do not work out, whether that's blowing their house through taking a second mortgage to get money to do something stupid or by getting margin called. And I don't think some people realize the severity of margin calls as it pertains to naked options, particularly if you are selling naked options. Things can get dicey on you really quick if you are heavy and wrong
100%
in that regard. So you got any comments? Anything I missed? Is there any proactive trader traits?
I feel like you've hit pretty much every nail on the head. I mean, to the point that you made, it's quite literally opposite, the exact opposite of each other. And I think being a little bit more proactive allows you to be, it allows you to not react.
Yes.
Right?
Yes. And this is a good lesson for broader life as well. You should be proactive and not reactive as much as is possible in broader life. Obviously, in life, sometimes things happen, and being able to react and make the best decisions under pressure is an important skill.
Right.
But in trading especially, you really shouldn't have to be reactive too often.
Yeah. I mean, when you're, I know when I'm reactive in trading, it's typically when I'm unprepared or something catches me off guard. And that's typically when trading is a little bit more tough. It's when you aren't, very proactive about what you're doing.
I don't know that I have ever in my life had a reactive entry. I have had lots of reactive exits because, due to the nature of the market, sometimes a new catalyst emerges that you simply weren't prepared for or could never have calculated. Sometimes a CEO gets shot, whatever it may be. Sometimes, we put giant tariffs on people, and we have the little, April sell-off that we had into the recovery. And there are times when you are forced to be reactionary, but you should not be ever doing reactive entries.
100%.
That's sort of my thesis here.
No, I like this. I like how it's set up. I think this describes two traders very, very well, especially the traits.
Yes. Here is a good example of a reactive trader. I went to Wall Street Bets to find an example of a reactive trader. This was the very, very first post that I laid eyes on, was this guy who bought 10,000 shares of Beyond Meat this morning at $7.50. This, I think, peaked at $7.71 and is now down to sub $5, maybe sub $4 by this point. It has cratered today. The momentum has run out. And that's a large part of this thesis as well, is that people on social media, particularly on Wall Street Bets or similar, dare I say, degenerate communities, have this belief that they have the power, and they've proven that to an extent they do. We proved it with GME and AMC in 2020, and there's been numerous instances since then where retail traders have proved that they have the power if they band together to get at short squeezes and make things move.
Yeah.
But what they do not understand is the limits of that power. There is only so much retail money. The banks and institutions will win every single time. You've seen margin call, and only so much can happen. And so when you leg into Beyond Meat at $7.50 after you've pushed it from 50 cents to that point already, and only then do you decide to get, what's that, $75,000 long.
Right.
That's a problem.
Right.
And the momentum runs out, and this person, if they're still holding this position, which if I know Wall Street Bets, they are saying hodl in Wall Street Bets right now, they're down 50% on that 75.
Well, I just think, what is the entry trigger in the world of Wall Street Bets? It's like the entry trigger, the entry signal is the fact that this has already caught a lot of attention, or else they probably wouldn't be buying whatever it is they're buying, or they wouldn't be using that much capital to buy, X amount of shares at $7.50 if they were first. I don't think they'd be comfortable doing it if they were first. So it's an interesting mentality. very herd mentality in that Wall Street bets kind of community, but I feel like it's like a self-fulfilling prophecy. It's like that herd mentality is like what you need for that niche of the market, but it always ends the same, right?
Absolutely, yes, but it always has to end, and at the end of the day, things wind up trading back at their fundamentals. Wandera chiming in chat here with a very important disclosure that I should have mentioned already. Yes, a lot of what you see on Wall Street Bets and on social media at large, and this extends beyond finance, is fake, is fabricated for engagement. People...
That's true. Even the
sad.
red trades.
Yeah.
People will probably make up the most craziest stories with like details you wouldn't think are made up, but with details just to make it a little bit more believable.
Oh yeah, and I myself have been using Inspect Element to create funny screenshots on the internet since I was like 9.
Yeah.
It is not a hard skill. Anybody can do it. This could very easily be this guy bought one single share and did an Inspect Element and threw 4 more zeros on there.
Yeah.
Let's be clear about that. But behind all of this, there is some truth. It is too prominent. There are too many people. I mean, and this is not just not at all just an issue that is localized to Wall Street Bets. This is a broader issue in the financial space right now. On Twitter, on Instagram, you name your community, there are people with this mentality, and this is how they view the markets.
Yeah, and I mean, I feel like the volume tells the true story, right?
Yes.
It's like if we look at the options chain, there is so many out of the money calls that are going to expire worthless. Right before we got the crack on Beyond Meat, a lot of people were thinking this could be something that catches a lot of momentum, and I think people really put their money where their mouth is because you can see there's going to be a lot of out of the money calls on Beyond Meat that could expire worthless by the end of the week. So we'll see.
Absolutely. So that leads us to the problem. I see this problem as being two-sided. One side is social media glorifies and amplifies horrible trading strategies in risk management because they work for an incredibly small 0.001 subset of people who are in these things early enough. Number 2 is that social media is the primary news source for many people. And now, I'm not condemning that at all. Social media is probably my primary news source as well, but you have to, especially on social media, use an abundance of caution with the sources of your information and their sources of their information, because misinformation on social media is at an all-time high, and I think that we are going to continue heading towards the moon in terms of social media misinformation, especially in the age of AI.
We're just getting started, am I right?
Yes.
Yeah.
So to that first point, when people see someone YOLO $10,000 in naked calls into some meme stock and turn it into $300,000, they also think that they can do that. And to the second point, when people see, and this is the critical one that I'm really referencing more so here, when people see a stock trading on social media, they believe it is a good time to buy. That's critical. Is that, and I see this every morning. I go on Google Trends to figure out, what's kind of jumping, what's the discourse, and the trending stocks, the trending tickers that are being searched are always things that have already moved. Yeah. I've never ever seen a ticker trending on there and gone in and it hasn't moved yet and it's being talked about for some other reason. It's always because things are running. And now a large part of that is people searching to see why it's moving in the first place. They don't want to trade, they just want to know what the heck's going on. But I am compelled to believe from evidence on social media that there is also a large subset of people who are looking up these tickers to figure out what's going on and then buy in after they are already trending and have already moved up orders of magnitude higher than where they began. So I think those are the two kind of sides of this issue here.
100%. And I mean, I feel like it's another good point. Like, right, works 0.003% of people, better odds than the lottery. New motto, YOLO for life. You agree with that? Nico's putting in the 2 cents.
I suppose. I mean, my number was arbitrary. That's not empirical. Probably a slightly better odds than the lottery. And yes, big deal to your point. This is why I like being a contrarian, a group of people, or anything a group of people like. I usually don't. I have a great point to that end here in a moment. But yes, you are. That's absolutely correct.
And to the point of the lottery again, that's something I actually always thought was like, why wouldn't somebody just like? I would rather blindly buy some calls than buy lottery tickets. I feel like the odds are more in your favor buying certain calls. Well, even if you do it with your eyes closed.
The odds of not losing your money are definitely way more in your favor, even if you just close your eyes and buy some naked calls. But the odds of making $1 billion are much more in your favor with the lottery ticket, I would say, assuming that you put the same price into both positions.
Right. $500, you buying as many lottery tickets as you can, or would you use that $500 in some random calls with your eyes closed? Let's call it that. Which one would you lean towards?
Oh, well, I would. That's an interesting question, actually. You could do the math and figure out the EV on that. But yeah, I mean, I would choose the calls.
Yeah.
But if the stipulation was I have to either hold the calls until I am $1 billion green, or I can buy the lottery ticket and make $1 billion that way, then that's different.
I think the $1 billion benchmark is what makes it a little bit more unrealistic.
Sure. Yes. But yeah, but that's the trade-off. Yeah. I have a separate account for YOLO meme stocks. You know what? That's effective. I like that. That helps you manage your risk, allows you to have a little bit of fun. I think, a fun account, there's nothing wrong with that at all. But a lot of these people, it's their entire main portfolio.
What is the word? Compartmentalize your psychology per account, depending on what you got. You know, I like that. I like it.
Well, yeah, and I mean, I do that too. Just to the other side, I have a safe long-term account where I'm comfortable with things on.
I hope we all.
So it's there's a spectrum. But if
you're right, the psychology is completely different.
It is.
No doubt.
So, the solution. I have put 5 points here. I know this is a wordy slide. My dearest apologies. But I've put 5 points here that I think are the solution to this. So, they are: trade ahead of potential catalysts, have an exit plan in place at entry, do not take advice from social media, plan to make slow and steady gains, and if the media is talking about it, it's already too late. That's basically the 5 points to avoid being a reactionary trader. So I have some sub points there, but I've pretty much said it all already. You just you got to be careful. I would like to draw attention to this point specifically. Remember that all of Jordan Belfort's victims wanted to get rich quick. When you watch, if you are somebody who is constantly blowing up portfolios over and over trying to get rich quick, and you have seen Wolf of Wall Street, you are the victim in that movie. You are not Jordan Belfort, as many of them think that they are.
100%. And I think we've understood in the market.
And again, I want to emphasize, I'm not talking about having a little fun. I'm not talking about tossing 3% of your portfolio into some naked calls and something that's trendy and having a little bit of fun.
Full porting. Full porting is like, should be in the dictionary.
I'm talking about the YOLOers, the full porters, and the people who are jumping into stocks that have moved from 50 cents to $7.50 at $7.50.
Like, you guys don't even know what Generation X is up to. We're talking about full port Fridays. Like, so it is kind of funny that lingo catches on.
Yes. So, how can you monetize this information? That's obviously the most important part. You can make money on these people. Every single day, there is a new company that is mooning on social media hype. I know it. I see it with my own 2 eyes. Go on Google Trends in the morning, click business and finance, last 24 hours, and the top 3 trending tickers right there are going to be on the moon right now. You have to be very careful to make sure that is not a substantiated move. Often it is. Ford Motor was trending yesterday. That's a very substantiated move. But when it's companies that nobody has heard of, particularly pennies that have rocketed to like over $10, those are kind of the spots that you're looking for. Wait for confirmation that the top has been reached, and then get short. Selling call side premium, even better. There's going to be a ton of it in the situations that we're talking about. Some of the best trades I've ever made in my life came from this strategy. Yeah. I shorted GME in 2020 for an 8x. I shorted Plug Power this year. That had 2 short opportunities, actually, but I took the latter of them from like 480 down to like 220. And I'm short RGTI right now and cruising to max profit. It would take a like 20% move back to the upside to bust me on that pause, and it expires on Friday.
To the points that you're making about a lot of those names, not like Plug. I guess they could Plug. That's literally what was going through my head. But happy to be the counterparty to the fools at Wall Street Bets, and that's such a good point because I think about all of this degeneracy that does go on in certain areas in the market, but it is providing an opportunity for somebody, and somebody is taking advantage of it. So,
absolutely. And what the Wall Street Bets people really don't want to hear is that that's the institutions. 1,000%. All you're doing is creating more short opportunities.
But you know what's hilarious, right? I even think at the institutional level, I think retail grabbing a little bit more of a foothold in the overall market and industry is hilarious to me, and I love it because I think the industry wants to act like retail is nobody as much as they want. But they're paying more attention to social media. They're building algorithms to scrape what the consensus is off of Wall Street Bets and other social media forums. And I think Melvin Capital was just such an example to the industry and the suits that it's something you have to take into consideration because that 2%, 3%, 4% when you're dealing with that kind of capital, if it catches you off guard, it catches you off guard. So I think we made enough of a dent to where they have to acknowledge. They're probably still taking advantage off of all those moves for sure. But the fact that they're acknowledging retail, I think is really interesting.
Yes, absolutely. 100%. So, that's the conclusion here. Don't be reactionary, guys.
Don't be reactionary, guys. Get a crystal ball.
Wall Street Bets is pretty clear they're gambling. They call it a casino. Yes, absolutely. But there is, and I've met people like this in real life before, many of them. Some of my friends are like this, where it's not that they are in Wall Street Bets. It's that Wall Street Bets stuff gets screenshotted and recycled into other social media platforms and then is just presented as, oh, look at this guy who put $10,000 into XYZ and made $300K. Oh my gosh. And that comes without everything that you know you're getting into when you get into Wall Street Bets specifically. And like I said, this is not a problem that is native to Wall Street Bets specifically in any sense of the word. It is very broad, sweeping across more social media platforms than just Reddit and across way more subreddits than Wall Street Bets within that space.
Yeah, 100%. I know eMedia had said trading could also be classified as gambling too. I will say, I mean, into technical terms, I think we could classify so many things under the guise of gambling, which I'm not going to act dense. I'm not going to act like there's not a little bit more traits that could align with that industry within the stock market. But I will say, what is the definition of gambling? It's taking a risk with an uncertain outcome, if I'm not mistaken.
I think that we're actually taking this the wrong way. I think that gambling and trading are both subsections of speculation. I think that speculation predictions is the broader term here, and that trickles down into traditional casino gambling, into sports betting, even into trading, where it is just speculation in a prediction market. And I mean, especially like, I mean, you could break down most casino games into an options context, like a game of blackjack. Very, very loose numbers here. You are a game of blackjack. Every single hand of blackjack, you are taking a trade that has a 48% probability of profit, and you will, or no, other way, has a 50% probability of profit, and you will win it 48% of the time. Right. And if you backtested that, you would find that it's a losing strategy, and that's why the casinos offer blackjack. Right. But you could take the terms from one thing and put it into any other thing. It's just, I mean, if we obviously you have a way better chance of getting an options trade right, where you can actually make a read and have a thesis than a blackjack hand, which is totally random cards.
100%. I mean, even in the sense of, to the point here, right, driving is a gamble, right? I mean, there is a percentage that we could find. We could quantify the probability that you get to work alive. Like, we could quantify that. Or even, let's say we have 10 colleges. We fill out an application for all 10. We pay for the application for all 10. We're paying for that application because we're assuming we're going to get a return on investment. Sure. And also, you're willing to accept that I only need one of these, and that's going to pay for the next 9 that I'm not going to go to. You see what I'm saying? So I think, in a sense that gambling, I mean, that's always an interesting conversation, dealing with uncertainty, making decisions in the face of uncertainty or in the face of an uncertain outcome. But I don't think we really look at it in a sense of in those ways.
Yeah, well, and it's just I think that when people say gambling, you think inherent randomness. Like there is, like when you go to a casino, there is an inherent randomness to everything. And while that's true in trading, it's a much more controllable, much more predictable type of randomness.
Depending on how you... Yeah.
Yes,
depending on how you approach the market,
depending on
right?
of course, depending on your strategies and how you choose to go about it. But it's far from completely random. In fact, you can form good theses and be profitable. Save for counting cards, you're never going to be a profitable blackjack player. The math isn't there. If you play enough hands, you will wind up down. But with trading, you can take a trade that has a 40% probability of profit, but feel and have conviction that the percent chance is actually higher than that, and that's why you're going to take it in the first place.
100%.
They felt like a gamble with the Trump news coming out midday. Isn't roulette the best game to play at a casino? Single zero roulette, betting red or black, is incredibly low house edge. Yes, that's correct. But your single zero European roulette's really hard to find. Speculative trading has existed forever. Before Reddit, we had email lists, and before that were faxes. Sure, of course. And yes, and I don't think that this is going to go anywhere. I just think that it has become a lot more pronounced in the age of social media. And there are lots of new people, young people entering the market that choose to look at it this way. And I think that Gen Z, and this is empirically backed, is just an inherently more speculative generation.
Oh, 100%.
It wants to do riskier
100%.
things that have higher upside.
100%. And I also think that, I do think Gen Z's, I think they see what's out there a little bit more. I think that has a lot to do with it. I think the spread of information. Again, like my mom and I always have the conversation, she wishes she would have known about certain opportunities at our age that she didn't have at their age. And it's just a lack of education, a lack of knowledge. And depending on what our generation does with it, I don't know, like in terms of us being knowledgeable on things, but I think it exposes us to a lot of what's out there. Like, I don't think there would be as many young people in the market right now if it wasn't because of social media. I don't think there would be as many people sports betting right now if it wasn't because of social media.
I am in the market because of social media. Right. I discovered stock trading through social media, through Discord is how I first stumbled across, I shouldn't say stock trading, I knew stock trading was a thing, but I discovered options trading through Discord. I happened to stumble across a Discord community in 2020 that taught me what options were, and that was like my first thing, and they actually put me on tastylive in the very beginning. They were like, this is a great educational resource. You should be using this for everything. And that was like how I got my start. But I also am exposed to it in the guise of social media. It's just that there's the disconnect that I seem to have with everybody else in our generation, and this extends to anything that's speculative or a prediction market, is that our generation really wants the incredibly high returns. They want the low post up and the incredibly high returns. Something that frustrates me endlessly is the way that our generation sports bets, and they just love their parlays. Everybody just wants the thing where you put in $5 and if 10 people catch a touchdown, I'll make $100,000. And it frustrates the heck out of me because sports betting should be about taking good straight bets that have 1, 2, 3% EV every time and making money in the long term in aggregate.
Yeah.
And that is actually an effective strategy. People are professionals at it. Nobody is a professional parlayer. It does not exist.
So
it is not a thing.
What I recognize as more of an issue too along those lines is not really that younger people want high risk, or I'm sorry, probably take on higher risk, higher reward. I don't think that's the issue. I think it's wanting that and then not recognizing the type of hard work and work ethic that comes along with wanting something that offers a ton of reward while still taking on risk at the same time. And I think that's, the Wall Street Bets is a perfect example of wanting it just to happen.
Yes.
Right, without any type of difficult mental thinking of how this can be done, the logistics behind, like none of that, just like buy, sell, hopefully this blows up. Hodl.
Well, yeah, and people are skipping the middle step too. Like for me, there was never any point in my trading journey where I was like, I hope I can find that one trade. Like for me, when I first started trading, I was like, I think it would be really sick if I could do this so well that I can just work for myself and I can sit at home in my comfy pants and trade. Like that was the end goal. I was like, I would love if I could do this full time. And yeah, there was never any part of me that was like, oh, I gotta just make the one trade and then I can retire. Like the viewpoint the entire time was, this is something I want to do profitably for a long time and retire at a relatively normal retirement age on this. And so many people just don't think like that. People are thinking I want to retire tomorrow.
And the thing is, I think it's just I think it is just ignorance, not even in a bad way, but it is just a lack of education. Because I remember my girlfriend's friend one time had made a comment about how she's in the market now and she's trading, she's doing this or that, and she had made the commentary talking about how like, oh, I just need one trade, like I just need one good one, and one good one is all it takes. And I never understood that mindset, but I think it is just a lack of knowledge, a lack of education, and a lack of a sound approach on how the market actually operates for individuals to come in thinking you just need one trade and one trade changes everything. I never understood that or where that's coming from.
Yeah, no, I agree. I agree. People want to be they have their life changed tomorrow, and there are very few people who can pull that off, and such has been true throughout all of history. Get rich quick schemes. There's a reason they're called schemes, is what I'm saying. There's a reason that term exists, is because they typically are schemes that are designed to make the originator of the scheme get rich quick.
Yeah. With that being said, we can dive into the trading view for a little bit, see what the market's been up to. Took a few trades today. Today we took 8 trades, okay? Out of the 8 trades, 2 are green, 6 are red. We got a 25% win rate on the day. We were able to walk away with a profit. So let's break some of those down, because it was a difficult day to trade. It was a little bit more directional, a little bit more volatile, but we picked our spots. I think we could have done a little bit better at picking certain spots, and I think we could have mitigated risk in a couple areas on the chart a little bit better that we'll get into here in a moment. But the first trade this morning, right out of the gate, we got that extreme sell-off. Didn't even wait for us. I mean, the first minute of the day on that candle, we dumped right to the downside. Down here, I was looking to get long, right? We're trading towards the extreme of this level of value. I was looking to get long. I got stopped out initially on the first trade, which was about 5 points. I re-entered, was able to add to the position, scaled out on the first push after taking out these highs. And then once we got near the next level of value, I scaled out the last position, and then we were able to scoop up about 64 points. What was nice about this one was, we took a 5-point loss on the first trade, but that was with one contract. And the second trade that we caught, it was 64 points. Not only that, we were able to use 2 contracts rather than one. So that was a nice start to the morning, not catching the sell-off in the morning, but being able to catch that pop. And then right after that, we're trading at our level of value on the opposing end. I look to take a short. This little pop stops me out of the market, so we were down another 6 points. I then flipped long here. I was like, you know what, let me flip long here, manage our risk. Decided to get out of that trade, kind of break even, -1 point. So this just helps us gauge how many points we're up on the day and like what opportunities we want to take, after the few trades that we've taken. So far, we're about 4 trades in, 3 losses, 1 win, but we're managing our risk best as possible. We sell off to the other end of value. At this point, it's like, is the market going to take out new lows? Is the market going to take out new lows? We use this level of value as a support briefly. We come back down. I look to take the long. I'm like, you know what? I'm extremely bearish right now. Like the narrative is like, I think we could probably head lower. I've been very bearish anyways, but I didn't want to impose my own bias, so I decided to take the long. I get stopped out immediately. That's another 5 points down the drain. But the one thing I want to point out that I think is really cool is because these are the same levels we've been working off of last week, right? These are going to be the area of interest. Although I was wrong, it's like if we were looking at the same level and we had a different bias, I wanted to get long, somebody else wanted to get short, your short would have paid you. And I mean, the short would have paid you almost 100 points within literally 5 minutes. But I got stopped out immediately, but whoever was on the opposite end of the trade literally caught a 100-point move. So that's kind of how the cookie crumbles sometimes. But that was another minus 5 points. I wanted a dip buy. This was a terrible dip buy, I will admit, and it was early, and I'll explain why it was early. This dip buy was more of a guess. We're going from value to value here now, so let's break down this logic just a little bit more. Let's zoom out. This over here is when the market is within balance, right? When the market is within balance, we can expect mean reversion strategies until proven otherwise. And I happened to take the long where it proved us otherwise. And then that's when it broke down on me. So that's the whole reason why I was looking for longs here and looking for shorts here, right? The longs played out really well. I got stopped out of the shorts early, but the shorts still would have paid. It always comes down to execution and where you're putting that stop loss and kind of how you're managing it. So it was a difficult one. Another thing that was in the back of my mind that I gotta admit is like, if I take this short and it stops me out again, like I really gotta come over here live on stream and explain why I took this and why I took 3 stabs at the same level right here. So I'm over here trying to do my best to not look like a degenerate. But at the same time, there is another element of that psychology that offers another level of growth, because like even here, sitting here, breaking down the thought process in every trade does affect when I'm placing trades in the live moment, because I know I'm gonna break this down later. So it's another opportunity for growth, because whether I'm breaking down the trades live or doing them in private, they gotta be the same anyways.
Sure, yeah. So with that, and that's, it's unclear which side you're even erring on here, whether it's you're placing trades in private that you wouldn't do otherwise, so or if it's the other way, if the show is making you not take trades that I think it's placed in private.
Yeah, that's a really good point. I think it's more of like, for example, this trade right here. This is typically another short that I would have stabbed at just because the trade thesis is not really invalidated. But on this account, it's not like I'm trying to run this account up to 100,000 or 200,000, or that would have been a different story. If that was the case on this account, then I would have taken the opportunity again. But because that's not the goal of this account, it was like, you know what? Let me pump the brakes a little bit better. Let me not overtrade best I can. But really good point that you made there, though, because you're right. Anyways, we sold off down to our next level of value, right? The market is range bound here. That's why we're looking for mean reversion type strategies. We know at this value area low, the market doesn't have to, but we know that the market could shift from balance to imbalance. And if the market does that, we expect more of a directional type market behavior for an imbalance. And when we shifted to imbalance, we definitely got that straight directional move. I was playing the mean reversion, didn't get it, managed to stopped out. Glad I stopped out at 5 points, because I would have been down 100, almost 200 points after that sell-off. I also did figure out if you just hit this like reverse button up here, it just takes off the drawings, which is so much better. There we go.
Oh,
yes,
yeah, look at that. You've been needing
I was playing with it. I was like, there's no way they don't have this feature. They got every feature known to mankind in this thing, except that one. Anyways, we were looking to go dip buy down to this next level of value. Sometimes when there's enough momentum and you're reading the order flow, sometimes you can dip buy that. I wasn't too confident in it anyways. That's why I stopped out of the position fairly quickly. -7. This is probably the worst trade of the day that I'm going to show next. And it was this trade that I chased to the downside. And that's why you can recognize it's -39. That's probably one of the larger losses that I've taken outside of all my trades. And typically I'm risking 5 points, 10 points, 15 points. This one was 39. I was a little bit emotional here because I didn't catch this amazing run to the downside. I didn't catch the dip buy. So I wanted to catch the run to the point of control, which was down here at these price levels. So trying to catch that run to the point of control, I chased the move. This is why sometimes it's better just missing out on the move that you were looking for rather than chasing it, because since I chased it, my risk was wider. And because my risk was wider, if the market bounces against me, I can't absorb that because I chased the entry to the downside. Now I have a terrible fill. I have a terrible average entry price. So that was a tough one. And I know I'm kind of just going on. Feel free to interject at any moment. Cool.
I'm just listening.
I know I kind of just go on a little tangent here, but we're almost done. We got one more trade left. So stopped out of that one. That was unfortunate. The market came back to our value area low to retest. Now our mindset is thinking here now, okay, this could be a continuation type move, because number one, we always have to ask ourselves, are we trading right now within balance or imbalance? And when the market sold off from this level of value up here, and we sold off down here, we never got to confirm that we're trading within balance. And because of that, we understand we're still in an imbalance mode, meaning we could still be directional. So that was the reason for getting short once we retested this value area low. Was able to hold to the new lows on the day and then got out from there. And then that was about 144 points. And that helped clean up a lot of the not necessarily bad decisions. I think the risk was managed really well, but it did help clean up some of the mistakes. And we were able to end the day, pretty green because of that. And then there was more opportunities throughout the day that we were like, you know what, hands off the wheels. Let's do our best to not overtrade. But, those are some of the opportunities today. It was a little bit more volatile.
Yeah, it has been volatile. I was actually laughing to myself this morning because I pretty much always have hourly candles on, sometimes dailies if I'm going to do something a little longer, but I'm seldom ever looking at shorter than hourly candles.
Right.
And I was looking at my hourly candle as all this morning chop was happening, and it's so funny because it's just obviously one candle that's like, filling up and then filling down a little bit, moving around. And I was like just laughing at how peaceful my chart looked with my one little candle, thinking about what you were looking at the same time. Like as this one candle is just making little tiny moves in the grand scheme. I know you're like totally locked in and trying to capitalize on everything. And I mean that's good. It's just funny how we're stylistically different like that. Had to laugh. Circle back on a few comments here. I wanted to get back to this one from way up here from Carp Dog because I thought that this was incredibly well put. Gamblers take risk for the thrill. Insurance agents sell mitigation for profit. Options are agnostic to which you want to be. I think that's incredibly sharp. I like that. Which I believe you're supposed to pronounce this Theata from Decatur. This is absolutely correct. Craps pass line and craps pass and don't pass are the best odds in the entire casino. Wanted to acknowledge that one. Your second comment was correct, was spot on as well. Bets with dependent probabilities can be plus EV. Poker and blackjack and some slots are examples. Yeah, the advantage slots are getting cut down on. I wonder why they're doing that. But you sound sharp and like maybe an AP Theata. I don't want to put you on blast there, but get at me on Twitter if you ever want to talk shop. Gains by Gus. It sounds like you'd be an interesting one to talk to. Lone Sofa, it's good to see you. Happy to hear everything's going well. Sounds like a beautiful day you got lined up for yourself here. Anyway, back to the markets.
Yeah. What is this, a 5-day chart? No, we were looking at the day. We were at the 1 minute, 1 day. So we were looking at this day's price action only. As we make new lows on the days during our segment, once again, we're getting the volatility during this hour.
We do. Yeah, we have. Yeah, I was joking yesterday that we were actually chasing some highs during our segment, but that has quickly turned back. I guess that was 2 days ago, but that has quickly turned back over to where we are now chasing some lows.
If we sell off another, we sell off another 150 points within the next. No, we're not selling off another 120 points within the next 20 minutes. That's not happening. I was gonna say we might take a long live on stream if that happens, but I don't think that's going to be the case until. Armenian Muscle, Lone Sofa sells all his positions to pull it to the downside. I was able to get an out of the money call spread on. That one expires by the end of the week. We were able to get that one on. But other than that, I know the quantum computing stocks, my goodness, those have been getting hacked.
Yes, they have.
I mean, straight up, straight down.
Yes, I've been short RGTI, which is going swimmingly, but yeah, Quantum. The run really seems to have stalled here. Gold also being mentioned. We got to do our obligatory gold mention on this stream. It does continue downward. We're nearing 4,000 an ounce. Whether that will be a psychological bounce spot or not, I would kind of speculate it would be a dead cat bounce if we do get any sort of bounce. But we will see. But the run might be over for gold.
I'm in a predicament right now in gold. So yesterday, we're short gold already, but we also sold an out-of-the-money put spread on gold yesterday, right near the close. It's a tough one. I mean, today I thought it would have given us a little bit more clarity on what it was going to do if we were going to actually bounce here, sell off more. But we almost have a doji on the daily. So we're almost literally flat on the day. So it's given us almost no new information besides the fact that we might close flat on the day on something like gold. So we're still hanging in there.
Yeah, that's... what do you do with this thing, man? This is so crazy. Is there a way to show the volatility on the chart?
Volatility, as in the VIX. Oh, yes, absolutely. We can pull up the IVR. What is that one on?
I don't know. Did you mean the VIX or big deal, or did you mean the volatility of an individual name that we're looking at? let us know. Wanderer, well, thank you. I know I've asked this before, but if a gentleman wishes to maintain a mustache like this, is there a routine or brand that one should adhere to? Honestly, I don't really take as good of care of it as I probably should. I don't have any oils or anything fancy I could recommend like that.
He's gatekeeping, guys. This guy's gatekeeping.
I have my One Blade by Philips Norelco, greatest electric razor ever known to man. I love that thing. I'm on my 4th or 5th one. They kind of last you 2 years before that battery starts to go, but I run through those. But they're just so good. But yeah, I just do that little trim. I do have a comb, like a mustache specific comb that I will use when I trim it up. But no, that's it. Nothing super sophisticated. I didn't really know what I was doing as I got into it, and I've just watched some YouTube videos and learned along the way. Tasty also has the implied vol in charts as an indicator that we do. VIX is what Big Deal meant, if we want to pull that up.
VIX, yeah, we'll look at VIX right now.
In my opinion, if gold doesn't reclaim 4,100, we're going to go down significantly below 3,500. I think that's 3,500. That's bold.
That's gold. Wow.
Yeah, below 3,500 is a bold prediction. I agree. I absolutely agree with your logic. I think if we don't get a confirmed bounce quick, that we drop. But 38, 37, 3,800 is kind of the range that I think that we would land in. Below sub 35 would be. I would give it all back. That would be giving back the entire run, which I suppose is also possible. We're talking about spot price of a metal, so it's interesting.
Vol expanding a little bit on the day as we make new lows on the NASDAQ.
Yeah.
All right, Dan, out of pocket. I'm just kidding.
Oh my goodness.
Think of the
Omaha, Dan.
Yeah.
Need a mustache sponsor. That's a good point. We could maybe. Yeah, I should reach out to some people.
There's got to be a Manscaped, bro.
Yeah. Oh yeah. Manscaped. They sponsor everybody.
Manscaped.
They sponsor everybody.
And you got a better stash than anybody I've seen on there.
Just giving my giant Philips razor plug probably isn't going to help our prospects on the Manscaped sponsorship. Manscaped, I will switch. Sponsor me. Beyond Meat going crazy. What's the trade? I fear I have missed the boat on Beyond Meat unless we have recovered. Yeah.
We missed the boat. That's what the segment was over today.
Yes. That basically is it. Is that the origin of the segment that we did earlier in the show was because I turned to Errol this morning and I joked because I opened CNBC and I saw a title, a headline that said, Beyond Meat soars again, a meme stock rally, blah, blah, blah. And when I saw that, I was like, okay, it's time to get short. That set off the short detectors in my brain because I was wanting to get short into close yesterday, but I wound up laying off because this was still too crazy and memey, and I'm happy I didn't. So then I go hop it over to see this 120% gain so I can get short, and it was already back to $4. The sharps and the institutions beat me to the move on this one big time. So I'll be watching Beyond from the sidelines. If you put a gun to my head and made me trade it, I would definitely get short. But I'm not particularly interested in getting involved with this. I think we've probably already had the vol crush come through on the call side premium.
Yeah, we're pulling back pretty aggressively now here on Beyond.
Sub 3,500 GC to the submarine. Can we get a submarine emoji on it?
I guess we'll look for one next time.
We'll have to circle back. We will get a submarine emoji on the gold chart. Love it. Yes, we did, Dan. We read the Kardashian post. That is what we're talking about. Beyond. What about a short put spread? Short the 2, long the 1. Short the 2, long the 1. So that would be back to the upside? That's what you're saying?
And we still got a lot of vol pumped in Beyond. It's trading 1.83 billion shares today.
Short the 2, long the 1. Am I stupid? Am I misinterpreting how that?
Which one is that? Holy moly, Beyond went to $3 today. Yeah, no, it got hacked. It got absolutely crushed.
Yes, yeah.
This was one of those in trading circles that was like the talk of the town. Even on Twitter, I've seen other professional traders talking about Beyond. That's how you know.
Yeah, and I don't think this will settle all the way back into the 50 cent range because the catalyst for this move was the Walmart news. It was that they had broken into 2,000 Walmart stores. And so when this move initially began, I was like, okay, we're just pricing in very bullish news. That's respectable. But then, yeah, it turned over into meme type rally as we got to near $8. I don't know that that's necessarily substantiated. They haven't sold a burger in a Walmart yet. Yes, looking to get long Beyond. That's interesting. If you are going to do that, I think that it would be best to wait until EOD, probably. I just have no idea how this thing is going to move. I guess if momentum is going to come, then it would be people pushing back right now intraday. I don't know. That's a good risk-defined strategy, especially for something with this volatility. I can't endorse bullish Beyond right now. I cannot in good conscience do that. But if you want to have some fun, I definitely think defined risk is the way to attack it, and that seems like a responsible way to go about it. I'm with it. Yes, Krispy Kreme is the new meme stock. Donut, DNUT.
Get a little dead cat bounce on Beyond.
Can't they sell Beyond at Costco? I do not know.
All that false meat for. Yeah, I'm just never been a big fan of Beyond Meat. I knew there was something up with this company when it was popping off on its IPO.
They do have Beyond Meat at Costco.
Now we've seen what they've been up to. In other news, we added a little bit more short delta to the portfolio. What's new? But we sold some more out of the money calls on QQQ. This is one that we added to.
This gold position gets a little larger every day as well, it seems.
Oh, what did we do?
Is there 2 new contracts in that equation?
No, in gold we sold one of the put spreads. So nothing has really went anywhere. But if we look at some of the contracts.
No, I just mean every time you pull it up, it seems like all of a sudden there's another 2 contracts on there.
No, that's funny.
It's expanding.
I kind of legged into like a weird kind of iron fly thing. I just wanted to get some more long delta on gold, so just in case we get that pop, I'll take off the puts, and then I'm going to leave the calls on. We got like a month out in there. And then QQQ, this one was an out-of-the-money call spread that we put on a couple days ago. And then once we sold off near that point of control and we bounced a little bit, we added another one to it. So we're scaling into some of these premium trades too, which is pretty fire. I don't really do that very often, but it is nice to utilize some of those techniques within premium too.
Absolutely, yeah. You gotta stay well-rounded,
Yeah, like for example, like 3 of the trades that I got chopped out of today on the scalps, it's like I didn't get chopped out of that premium position, and they're both expressing the same opinion, So that premium and not having to be so surgical with entries and exits is definitely another play.
Yeah, absolutely. Putting on my Wall Street Bets hat, if they liked Beyond at $7.50, they would love it at $3.50. Only up from here, right? Yeah, that was sort of what I was getting at in the middle of my spiel there, is that I guess if buying pressure comes, it would come right now. That was what put me off of saying wait until EOD, because theoretically they should come flying in droves. We'll see. I got a lot going on in the port.
What you got going on?
Let's see. Finally exited Amazon this morning. Had some stuff expiring Friday. I was going to need it over 225 by Friday, and it made a run at it yesterday. We closed like 222 yesterday or something like that. And I was thinking that we were going to have a good shot, but it's come right back down as it continued to collapse. I got out of that at about 219 spot for I wouldn't say sizable loss, but a not insignificant loss. That hurt a little bit. I put on UNHG while we were on the show yesterday, and then Philip Morris is the biggest sweat that I have going on right now, PM. This was a earnings trade that I threw on because you guys in the chat are bad influences, and it has not quite panned out, although they are all of a sudden, even today, against this very bearish market action, are looking to make a run back here. So I have a naked 210 call that expires December of 2026. That's just going to be a leap, and I'm planning on letting that run. But what I'm sweating is I have a short put vertical I'm long the 155, short the 160. So I would need this over 160 for max profit, or at least to make some strides towards it before the end of the week. We are sitting at 155. We opened today much lower than that and closed yesterday even lower than that. So the market seems to think that we beat this down a little bit too much after a less than desirable earnings call. Whether it can get back to 160 or not, I do not know, but I do think that maybe being able to get out for break even is in the equation. I'm really, really close to expiration now. Theta is going to demolish me overnight. So, and not good Theta. And that's the thing too, is I might get out of this before the end of the day, because I think I'm going to wind up in the middle of my vertical overnight, and that would be really brutal, because then you're talking the put that I'm long, it's out of the money and loses value, and the put that I'm short is in the money and loses value overnight. So it could be a very penalizing night if this is going to be between those ranges. So I think if we're gonna, I don't know, jury's still out on this one. It'll depend on the momentum today. If we get like another $2-3 today, and I feel like the bullish momentum is there, I'm willing to eat that. But if not, that's going to be a little bit dicier. We'll see. Because like that would be the worst case scenario, was like what it is right now, 155.03. Like that would be terrible. So hopefully we will get some kind of bullish momentum going.
Yeah, their chart is looking like Verizon right now.
Known to be bad for your health. I'm in it too. Yuck. Yes. Decidedly bad for your health. Donut is up over 10% today. I see. Oh, PM recovering pretty good. Did you say that before I started talking about Philip Morris? You read my mind, Mr. Gupta. What else we got? Just wait till I get my mom to cancel. It's going to crash. LOL. I'm not sure. Oh, are you talking about Costco membership? I'm not sure what your mom's canceling, but let me know so that I know to get out of that before she cancels. AMD earnings October 29th. Yes, big earnings week coming up in general. I mean, this week and into the next week. It's
goodness gracious, they're getting slaughtered. 57.5 IV rank, 40 million volume. Earnings November 4th after the bell. Dad's birthday November 5th. So depending on how AMD performs after the earnings will depend on what my dad gets for his birthday. I'm just kidding.
You and your zoomed in charts, man. I came racing to AMD. I was like, that's really beaten down. That's got to be a buy spot. And it's just, but then I pull it up on the daily chart. And it's
I'm on the hourly. The hourly looks pretty bad.
The hourly does look pretty bad. Yes, the recency is still pretty bad, but the daily is, we're still just floating up above this gap. This is what I came over and looked at after seeing your chart right there. Theoretically, this downside gap should get filled sometime. On paper, that's what they say. Streets are saying.
So they say.
But yeah, earnings. I don't know. I mean, this is a lot of momentum for AMD. This is one of those situations where I think it would be tough for them to sustain this momentum through earnings, unless this correction continues a little bit and we're trading, $10, $15 lower by that time. But if AMD earnings were tomorrow, well, I wouldn't trade them because I don't trade earnings. But if I did, I would be compelled to get short more than anything.
Thanks, Lone. I'll let him know. I'll let him know you said happy birthday.
Hey,
yo, today's Sahil's birthday. Let's tell Sahil happy birthday, Sahil.
No kidding.
Hope you're having a great day, brother.
Happy birthday, Sahil. Everybody wish Sahil a happy birthday.
Yeah.
What's this? GSIT.
GSIT.
GSI technology. That's pretty straightforward. Woof. I don't know.
Okay, cheaper underlying. Oh yeah, that's ugly. I don't even know what ticker this is, but that's looking like a penny stock. That's like that penny stock type looking chart where it gaps up off of some news that they drop for whatever reason.
GSI technology. Cornell validates its energy efficient AI chip.
Sounds like some BS. Sounds like some BS for them to throw out.
GSI Technology recently announced that researchers at Cornell University independently validated its Gemini 1 Associative Processing Unit, APU, as matching GPU-level performance in AI applications while using 98% less energy. 98% less energy? Are you kidding?
Oh, GSI Technology raises $50 million in registered direct offering of stock and warrants. Run. Run.
What in the heck?
They know what they're doing. You start seeing offerings and warrants and all that on a penny stock.
Yeah, see Surfair Mobility.
Yeah, watch out.
As soon as their price went up. Interesting. I mean, if that's legit though, that's insane. It's the same GPU performance, but 98% less energy. Also, I'll throw out GSI Technology. You're naming your AI chip Gemini? Are you serious right now? Your SEO is going to be so terrible. You guys need a new marketing team or naming team. I don't know how that works, but you can't name your AI product Gemini and expect to get anywhere.
These are the type
because people Google things.
Yeah.
You named it after Google's AI. If somebody searches Gemini AI, there is no way that maybe for all of ever will GSI Technologies be the one popping up. We'll see if I eat my words on that. It would be funny.
Yeah, no, I mean, things like GSIT, traders can trade things like those. It's a little bit more difficult. These ones are a lot more gamified. And if you guys have ever seen those images where it shows what a bubble would look like it shows the euphoria state, it shows the fear, and it shows like all those emotions. Have you seen that before, guys? That image where it kind of shows the different emotional states of like a bubble where it shows like euphoria and then it shows fear and then it shows.
I don't know what you're talking
It's like it's one of those images where it shows you
stuff like that.
The different cycles of a bubble. Have you seen those before?
I mean, I know the kind of image you're getting at.
Yeah. So those images look like all penny stocks. They look like most penny stocks because I mean GameStop when things were said and done looked exactly the same. Guarantee IONQ, RJTI, all those quantum community stocks going to look extremely similar. Whenever there's like that bubble type behavior, it almost literally all ends the same. Not that you can predict what stage it's in, but in hindsight, it's like, damn, it's literally almost plays out the same when it's just run off of hype at least.
Yeah, absolutely. Yeah, I mean, if they're planning to do a $50 million offering as well, like I do think that sounds legit to me. I mean, if this is a Cornell-backed research saying they can do the same with 98% less energy. I mean, energy constraints are the biggest concern that everybody has about AI right now. So it does seem legit to me. So this is one, I will throw this on the watch list, and I will wait until they do that $50 million offering and hurt themselves, at which point I will take some then. Thank you very much.
So I think my perspective on it is I think I just have a bad taste with a lot of these penny stocks because I remember during COVID, prior to COVID, whenever there's like something that's hot right now, whether it's crypto, whether it's COVID, so anything with like related to N95 masks, hand sanitizer, there were so many legitimate companies coming out with so much news articles to gap their stock up and make it run. Literally legitimate news companies sound so good. And it was like just taking advantage of the hype. So I just get a little skeptical sometimes when I see these companies and CEOs taking advantage of whatever is super popular right now. But, you know, the AI race, baby, let's see who wins.
For sure.
You know?
All right. Well, yeah, that pretty much brings us to our time. You got any closing remarks?
No, I think that'll be it. We'll see how the market closes off. Some increased volatility to head into Thursday is pretty nice.
All right. Well, that's all we're going to have for you guys today. Thanks so much, everybody, for being here. Jackson and Dan and Big Deal and Lone Sothos and Mark of Truth and all of you. We love all you guys. Thank you so much for taking the time to watch. If you want to get at us on Twitter, I am Gaines by Gus. He is
Errol Coleman.
Is there underscore?
Errol_Coleman.
Errol_Coleman. There you go. Get at us on Twitter. And be sure to stay tuned for Dr. Jim coming on next. We'll be right back here, same time, same place tomorrow, 12 o'clock p.m. Central Standard Time. We'll see you guys soon.
Peace.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch tastylive because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Wednesday edition of what it is that we are trying to do, man. Welcome to the Tesla earnings edition of what it is that we are trying to do. Welcome to the Is Dr. J on a little bit of a heater edition of what it is that we're trying to do, man. I don't know, but we are all going to find out here together. So welcome to the show. I am glad that you are here. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with our brethren who are also watching the program. Man, you can celebrate if you're a bear. You can be any type of bear you want to be. You could be a market bear. You could be a metals bear. You can be whatever you want to be. You are celebrating today. You can commiserate, of course, if you are indeed a bull. But I can assure you it will be a good time had by most. And, of course, you can drop whatever questions you have for me. They're in the chat. We're obviously going to take many, many, many victory laps on our Netflix position here for the next, 11 to 27 minutes. So if you have any questions about that, you've got plenty of time to get your question in the chat box because that victory lap, she's going to be slower than molasses. I can assure you of that. And then, of course, you've got Tesla tonight. I think IBM might also be tonight. So we have a lot on deck for the show. So I'm so glad that you are here. So Laura, bring us into the market. Do we still have a market? Man, I don't know, guys. Look at this. This is not good. EME S&P is down 63 on the day. You've got the risk-free instrument. The also known as the NASDAQ futures, not exactly risk-free on a day like today, but it's still a little bit early. We still have time to get back to unched by the close. You've got the NASDAQ down 400 on the day. You've got the boomers down 400, but it's like they're the boomers, man. Like, what would you expect? Then you've got the Russell 2000 futures index down 56 on the day. You got bonds are up a couple of ticks. You got notes are up, a tick. You've got oil up $1.20. Got UB40 even up a little bit. Got gold. Man, after yesterday's just absolute gorilla smacking, gold down another 20 points today. So what's silver doing? Look at here are my silver bros up here with my little SIL, my micro bros. Up there, you got silver up today. That's not typical. So I've talked about this many, many times before over the last few weeks. I'm not going to mention it here again today because we've just mentioned this so many times. But you don't normally see a gold-silver kind of divergence like this. You don't normally see, these two guys kind of parting ways. They typically follow each other. Now, sometimes you can see a different magnitude across the two, of course, but it's rare that you see gold up, silver down, or vice versa. And so then if you look at volatility, obviously, on a day like today, volatility is going to be up, I would imagine. Volatility futures up $1, up over 20. Then you've got the VIX, the old VIX, up $2.61, up to 2048 on the day. And so, man, some crazy, crazy, crazy stuff out there. All right, so what I want to do, it's been a while, man. It's been a while since we've been able to take victory lap after victory lap after victory lap. This is now 3 victory laps in a row. This has never happened. We've been on the network for 10 years. Like, usually it takes us 6 to 9 weeks to get 3 wins in total. We've got 3 in a row: UAL, Bank of America, and of course, Netflix. I was going to take it off this morning when I was looking at it, because on the open, it was down like 80 or 90 or whatever. I'm like, all right, I should probably go ahead and take this off. But then I was like, I don't know, man. I kind of want to leg this thing out. If for no other reason, we get to have the victory lap together here on the program. And normally I'm kind of forced and relegated to taking victory laps on just smaller losers, i.e. Chipotle, i.e. Oracle, i.e. so many to choose from that I've lost count. But now we actually have a situation where we have a true, legitimate winner. It's like, I don't know, man. I think we're going to be rounding the bases, David Ortiz style. So Netflix down 122 on the earnings number. I don't even know what they said. I don't know what they didn't say, but the market does not like it. And so what I want to do here, let's open this guy up. Again, there was nothing fancy about this, like nothing special, like nothing super innovative about this strategy. It was just a pretty straightforward, plain vanilla, at the money long put spread. That's it. Like, one of the simplest ways to take a directional shot when it comes to an earnings play. You can do this for Tesla tonight. You can do it for IBM tonight. You can do it for whatever. At the money vertical spreads, where you buy them, are a great way to take a 50-50 shot on the directional play in the underlying stock. I think it's better. I think it's more strategic than just buying a call or buying a put. I talked about this just a little bit yesterday, because you're going to get met with so much volatility crush if you buy a call or you buy a put that it can be difficult to make money, even if you get the move that you want. Like, even if that underlying, stock or whatever moves in the direction that you want, it can still be a little bit challenging to make money on the position because of that enormous volatility crush that you are up against on the options as the earnings release has indeed been released into the wild, and the volatility just comes out of the options. And so spreads, at the money vertical spreads, long specifically, are the way to play directional shots, in my opinion. And, it was funny too, watching Netflix. I saw it on the number last night, and it just completely fell out of bed on the number. I'm like, oh, well, that's pretty nice. But then it tried to rally back a couple times. And I don't know what that was with dark pools and phantom prints. And I don't know what that was. But I was like, oh man, here we go again. Is this going to be another I remember I remember NVIDIA did this a couple times in the last few earnings, where they would drop and then they would just kind of meander their way back by the morning open the following morning. I'm like, that's crazy, man. Like NVIDIA would be down like, I don't know, 10 or 15 points on the earnings release, and then it would open up unchanged. I'm like, it's all, what do we do? What are we even doing here? Like, this is crazy stuff. And so I was like, is this really going to happen again in Netflix? But now, instead of rallying back like 10 or 15 points, this thing's going to rally back 70 points in the morning. I'm like, if it does, I'm just going to have to call it a day. Like, I'm going to have to 100% call it a day. I'm obviously getting, an early start on my Publix shift later on tonight. But I was like, maybe I'll just work a double. Maybe I'll just work a triple and just call it a day on old From Theory to Practice. And, we'll kind of see what's what. But anyway, that did not happen. So Netflix stayed down. It stayed squashed, as they say. And there you go, man. So with Netflix here, I think that's it, man. We made about $4 on the trade, a little over $4. You can see that right here. And so I think let's close this guy down. Oh, check it out, guys. Look at this. Man, I color coordinated with my ghost today. So don't tell Autumn this, right? But I snuck out yesterday because we've only got one car, right? This is so challenging for me to do, by the way, but this is just between us now. It's me, you, and the other 575 people that are watching. So we only have one car. So I can't exactly sneak out, right? Like I got to book time like on the schedule. Like here, I'm blocking off this 45 minutes, but don't look at where I'm going, right? Don't worry about where I'm going. I'll be back in a little bit. And so I snuck away yesterday, like when Autumn was doing whatever. And I'm like, all right, I'm going to sneak out here. Ran down to Vitamin Shop, scooped up about 5 ghosts, right? Paid cash for it, of course. I'm like, I'm not letting her trace this. She's not tracking this back to me. She never goes in the outside fridge that's in the garage. Never, ever, ever. That's where I keep my ghost. That's where I keep Daddy's chicken. Like she has no interest in going in there at all. So I'm like, if I can just commandeer the product and get it into that fridge, I think I'm home free. Like, I think I'm safe. And guys, we got a little electric limeade for the show today. And I got to be honest, it's pretty good. I mean, none of the ghosts are bad. Like, some of them are better than others. The sour green apple is still number one. That's probably, I'd have to think about it because it's been a minute. We've been off of our ghost, protocol here for a while for my Mission Impossible fans that might be watching the show. We've been off this for a little bit, and it's so dumb. I know it's dumb. Trust me. I don't know. It's better than watermelon for sure. I think it's better than the cherry limeade. The cherry limeade, they maybe missed the mark a little bit. The peach is kind of a very acquired taste, but it's definitely behind the sour green apple and the sour pink lemonade. But anyway, got a little electric limeade, and so boom, there you go. So all right, let's go to let's see here. Let me do, let's take off Netflix because I want to get to, now that I got a little boost, man. Like I can feel is it beta-alanine in the ghost? I don't know that it even has beta-alanine. I don't think it does. No, you got a little neurofactor though. Oh, that makes sense. You got a little neurofactor fruit extract? Yeah, baby, that's what it is. And a little alpha GPC. Yeah, that's some good stuff. And so anyway, let's close out Netflix because I want to get into some Tesla and I want to get into a little IBM. So we do Netflix. It looks like we might be able to get out for pretty close to max profit. Boom, we got filled at $9.95. Look at that. That's crazy. So the maximum value on a $10 wide spread is $10. We just got out of that spread for $9.95. So we only left 5 cents on the table, but I mean, there's still 2 days left. Now, Netflix is down $122 today. And so, obviously it makes sense that we would get filled at a pretty good price there. But yeah, that ended up being a really, really, really nice trade. And there you go. So that is Netflix. Let's talk about, man, look at Rigatoni. Look at this. Are we going to get tested on the call side? This would be, come on, guys. Like, what are we doing here? We're going to get tested on the freaking call side. That's unbelievable. Like, that's crazy. That's so crazy. And so, yeah, I can't believe it, man. What did this strategy start as? Hang on a second. I know we went inverted, obviously, but what was our original put? I think it was maybe 20 or 25. Let me bring up a chains here really quick. Let's crack open a little rooster. Here we go. Oh, 21. Yeah, so I was right. I was in the ballpark. Man, wow. This is another good example, man. This is another good example. And I know some of the tasty research is kind of moving away from going inverted to begin with. And I'm like, okay, I mean, that's an option. I mean, maybe the straddle should be the final stop on the train tracks. Like maybe we should be looking to, straddle things off and then call it a day right there. Because then you're buying guts and selling wings when you kind of uninvert that guy, or not uninvert because it's not inverted. But if you go to a straddle and things are working out and you kind of want to reset the deck, you can buy back the straddle and sell out a new strangle in some later cycle. And you can still oftentimes end up with a net credit. And so I don't know, maybe that's going to become the final stop on the train tracks. I'm not sure, because I can assure you right now, man, I really kind of wish I had that 32 straddle on instead of a 32-42 inverted strangle. Now, of course, the rearview mirror is batting 1,000. Well, the rearview mirror is batting it's batting like 400. Roman Anthony's at about 430, and the rearview mirror is at about 400. So it's pretty strong. It's not quite Roman Anthony strong, but it's in the conversation. And so when you think about that, it's like, man, I don't know. I don't know about, these inverted strangles. We'll see. I'm not upset because, Rigetti was just at, 50 or whatever? And so this is a high-quality problem, of course. But it's like, it would be, had we done nothing? Had we followed rule number 1, our default setting? Man, we'd be in a really, really, really nice spot. But anyway, there's a little Rigetti commentary for you. I know a number of you guys are in Rigetti because you guys have emailed me, people coming by the house, like hopping in the ice bath. And by the way, it's open for everybody. I'm not going to tell you guys where I live, but if you do find me, go ahead and hop in. That's fine. And so, so we'll see. We'll see what happens with Rigetti. But hang on, I see you guys. Hold on a second. Look at you guys. Man, I see finance account 6628. Man, look at you guys. Look at you guys, man. I see you guys. We're just so scrub. Everything is in the house. Man, Andres Uzma's in the house. Man, you guys are just amazing. Look at you, Sam L's, and the Mark of Truth is here. Ranch in the house. Man, Armenian Muscle's in the house. That's not Armenian Muscle. That's Lone Sophos. Man, they're trying to tell me that's Armenian Muscle. It may be Armenian Muscle, but it's Lone Sophos. That's who I know that avatar as. And so anyway, all right, so we did Netflix. There's nothing else to really talk. We talked about rigatoni. There's nothing else really going on that's, wait, hold on. I take that back. Look at IWM. So this is an interesting situation too, and we have a couple extra seconds. So IWM is getting smashed today because all the indexes are getting smashed today. And so we are now in a situation where, we adjusted this guy a couple of times and we are now up on the trade by a little bit over $1. Does it make a lot of sense to hold this any longer? Not in my opinion. In my opinion, when you kind of go down the road of making adjustments and you're defending and you're rolling out in time and you're just really trying to, extend duration and just, live to fight another day. Like that's pretty much the goal here. That was our goal with Rigetti for so long. And so now that we've put ourselves in a decent spot with IWM, I really think that we just close it and be done with it. Like we're going to have so many trades going on. Starting today, we've got Tesla, we've got IBM, right? And then later on, like next week, we've got, Apple, Amazon, Meta, Microsoft, like they're all coming like next week. And so I'm thinking, all right, let's go ahead and let's release some capital here in IWM because we're going to be redeploying that capital here pretty quickly in some other names. And so, and not to mention, like we're up. This is economically significant. That's another term you guys hear me use all the time. And of course, what I mean by that is, you make an adjustment and or a series of adjustments, and you have a chance to get out where the position is profitable. But before you make that decision, before you go ahead and say, all right, I'm going to push the button, the closing order, I want to be done with this, I think it makes sense to actually stop and think, all right, is that profit economically significant? Which is not to say if it's not economically significant, that automatically means that you stay in the trade, but it's something to consider. From the standpoint of if you're up 10 cents or 18 cents, but you like the position in terms of where it's finally gotten to after having to battle it and struggle through and adjust, whatever, I would probably stay in the trade because you're probably positive theta. You're probably in a decent spot with the strikes, how they're situated relative to the strikes and whatever. I'm sorry, the stock, how it's situated relative to the strikes. I would probably sit tight and give it a chance to get to some level of economic significance. But if you look at a trade that you have been battling, struggling with, whatever, and now you're up 80 cents, you're up $1, you're up $1.40 like I am here with IWM, I don't know that it makes a ton of sense to stay in that trade any longer because you have a very, very clear off-ramp, very clear. If you don't take it and it totally blows up in your face, like that is really on you at that point. Like you can't say you didn't have a chance. And the reality is so many of the things that we do are high probability. So many of the things that we do are going to be, pretty effective most of the time. To take a trade that really didn't really fit into that category in terms of it being easy and high probability and like, seamless from start to finish, it wasn't really any of those things. But now all of a sudden, because of the adjustments and market accommodation, you are now able to take the trade off. It's like, man, that really means a lot. And those kinds of things matter quite a bit at the end of, a year, a quarter, whatever you might be kind of looking at, however often you might be looking at your trades. But yeah, I think for IWM, now all of a sudden we're only up 70 cents. So they just took 70 cents from us. But I think I'm going to go ahead and take this off. 70 cents is still economically significant. They must have just taken it out to the woodshed while I was talking, like while I was pontificating and waxing a little poetic there on IWM. They just took, oh no, hold on. We got 40 cents back. All right. These markets are crazy. These markets are absolutely bonkers. Let's go ahead and let's try to get off of 1544. And let's see here. I'll try like 1547. All right, so we got filled at 1547. Okay, so we're out of IWM. It's over and done with. It's almost like it never happened, other than the fact that we got like $1 out of it, so that was kind of nice. Let's now turn our attention to let's go to Tesla and let's go to IBM. And again, should you fade me? Yes, that is still the default setting. It's not too dissimilar from the do nothing strategy. It's not too dissimilar from, adjusting a strangle when one strike is tested. Like there's a reason why these things are default settings. There's a reason why this is your kind of your go-to adjustment protocol when it comes to the adjustments that you make and the decisions that you make. Yes, I've hit 3 in a row. Is it possible that I'm getting hot? It's possible. Is it likely? Absolutely not. And so, regardless of any confidence or conviction that you might hear in the following minutes, I would still continue to do the opposite. That being said, I feel so good about this Tesla trade. No, I do. I mean, I've got the father-in-law. What's so cool? So this is so amazing. Oh my gosh, I got to give a huge shout out to my father-in-law. Steve Mills is my father-in-law. Got to give a huge shout out to my father-in-law. Incredible guy. Have a great relationship with him. But here's what's so amazing. So he's 70 or 71, been a very successful investor. And, because of that, he's obviously, he's doing well. He's not like wealthy, but he's done really well for himself and worked up from not having very much at just 20 years ago. And so I'm really proud of him. Did an amazing job, like that kind of stuff. Anyway, when I did the career thing with my kids a couple of weeks ago, we did the stock market game, whatever. And then Penelope and Eli and Amelia were super, super, super excited about investing for the future. And I started thinking about man, honestly, I should have been doing this for them a long time ago. So I think it's time that we start doing this, of course. Well, anyway, Steve heard about all that, my father-in-law, and he's like, well, I want to help. And so he's actually giving them each of them some Tesla stock. He's giving them some Tesla stock. He's giving them like $2,000 worth of Tesla stock to start their portfolios. I'm like, that's amazing. Like, that's absolutely incredible, especially when we sell it and take that cash and put it into something else. But it's amazing. No, we're not going to do that. But it's amazing. It's amazing that he's doing that for them. And you know what else is cool? Like, Amelia's 5. Like, we actually ran the numbers last night. And, like $2,500 worth of Tesla stock. And I did just a basic time value money calculation. And I showed her, she didn't know what any of this meant, but Penelope kind of did. $2,500 of Tesla stock. If you assume 15% annual returns, which I know that's kind of high, but Tesla is also a mega growth company. For 60 years, right? From 5 to 65, how much will you have? Amelia will have $37 million. Like $37 million. That's crazy, man. That's so crazy. So my kids are excited. I'm excited. But anyway, I digress. And so I think we're digressing off of digressions at this point. But for Tesla, I'm super bullish, man. Super bullish. How can I not be? How can I not be super bullish on this stock now? Like now I have a vested interest, right? Like my kids are going to start their investment portfolios with Tesla. Now, obviously, we're going to add some short NASDAQ futures. I'm going to do some other things around the edges, but that's going to be how it all begins for them. And so I'm kind of thinking for Tesla, if you can't beat them, join them, man. If you can't beat them, join them. That means you're going to the upside, and that also means you're obviously going to use an expected move butterfly. So let's go to the upside, and we're going to do, you got the stock at 430. What if I did, let's play for an overshoot. Here you go. Let's go 445, 470, 495. Can I get this for less than $4? 370, 365. Wow, man, I really, really, really like this trade a lot. So I'm in the 2-day cycle. If you're listening to the show, welcome to the show from our audio only crowd out there. 445, 470, 495 butterfly in the 2-day cycle. The debit looks like it's about 365 or so. And so that's only about 1% of the account, a little over 1% of the account. And so this is a pretty small position when it comes to, an earnings trade. And I don't know. Let's see. Let's see if the hot streak can continue with a little upside move in Tesla. And again, if you knew what was good for you, you would be on the opposite of this trade. So 445, 470, 495. Let me push this guy out because then I want to do a little IBM action as well. Man, that electric limeade is amazing, but I have to be a little bit mindful because I did have one earlier, so or maybe more than one. So I have to be a little mindful of kind of what we're doing here. So let's see. Let's go 375. I want to get filled on this and move on. All right, so we got filled at 375. So there's your Tesla earnings play for the afternoon, and then let's go to IBM. If I go to IBM, so for IBM, here's what I'm thinking. I'm kind of thinking, man, I see you guys trolling me in the chat. I just glanced over and somebody was saying, he can't beat him, join him. Talking about me. And I see that scramble everything. That's really funny. And no, I wouldn't do that at all. You should still be fading. You should absolutely be fading sight unseen. But for IBM, this one also looks like a layup. This one also looks like, for all my NBA fans, didn't the season just start, I think? I think tonight is opening night, or it was last night or something. And so, congrats to your, your favorite teams out there. I don't really have a favorite team for the NBA, at least not yet. Give me a couple of weeks, and I'll let you guys know who my squad is. But IWM, 286. Oh, I'm sorry, IBM, I should say. So I think here's what we're going to do. We're going to do a little heat check, right? Because, shooters shoot, man, right? Shooters shoot. Let's do a little heat check. We're going to do, so IBM is obviously a downside play. That goes without saying. But I think what we're going to do, let's buy an out of the money put spread. So rather than buying the at the money put spread, let's actually challenge ourselves a little bit and let's buy the out of the money put spread. Now, I'd say challenge ourselves jokingly because nobody knows and whatever. We are going to be compensated by the simple fact that an out of the money put spread is going to sell for less than the at the money put spread. So if I did like a $5 wide at the money put spread, like here I'll even show you. If I were to buy like a 287.5, 282.5, with the stock just over 286, you can see very clearly for yourself that's going to cost me about $2.50, right? And so you risk one to make one. That makes perfect sense. But I'm kind of thinking, what if we moved out of the money a little bit and let's do, I kind of want to do maybe like $7.50 wide. Yeah, so let's do this. So let's buy. So the stock is at 286. I'm in the 2-day cycle for instant pain, instant gain for my Errol Coleman fans that might be watching the show. I know there are many of you, so I would assume a lot of you guys are watching this show since I'm right after him and Gus. It got the stock at 286. I'm in a 2-day cycle. I'm going to buy a 277.5, 270 put spread, and it's only going to cost me $2.55. That's really, really nice because in the event that we revert back to our norm of hitting about 11 to 13% of our earnings trades, this is not going to cost us as much as, an at the money spread would cost us if you had the same width. Obviously, the one I just looked at was $2.50, but it was only a $5 wide spread. I do want this one to have a wee little bit more bang for the buck. And so I'm kind of thinking, man, 7.5 points wide. I paid $2.50 for it. I have a potential profit of $5 if I were to hold it all the way to expiration or whatever. I really like this trade a lot. And so if we get a downside move, the expected move on the downside only goes down to about 267.5. So we don't have that much room available in terms of, the expected move and how far we would need the stock to go for this spread to be fully in the money. But you never know. Obviously, IBM could certainly go down. We only need it to go down, 15 points? 15 points on an IBM earnings. That's not that big of a move. IBM has certainly moved much, much more than that in the past. So I kind of think that's just a little bit of a heat check. Let's throw this guy up there. It's almost certainly going to be a brick. But let's toss this guy up there and kind of see what happens. So let's go with IBM. I keep calling it IWM. Let's go $2.40. All right, I got filled at $2.35. So we just got improved on the out of the money put spread in IBM. So there you go. There's Tesla to the upside, obviously. IBM to the downside, again, obviously. This is not rocket science. This is very much common sense. And so, all right, so there you go. And let's go ahead. Ooh, look, the metals are rallying now, right? You've got gold only down 16 on the day. You've got silver only up 20 cents now. So silver's on the move. Gold is on the move. Man, let's go. All right, let's see. Where are we at here? If I do, where are we at? Let me go ahead and see if I can surprise and delight somebody. In the middle of the chat. Well, this is pretty funny. Big Deal Donut says 35 million won't be much in 60 years. I actually said the exact same thing. I'm like, once you factor in like inflation and the cost of living and the simple fact that, I mean, fiat's going to be gone, obviously. I need to know, how do we price this? How do we price this in soybeans? Like, how can I price this in lean hogs? Because I don't think soybeans are going anywhere, and I don't think lean hogs are going anywhere. And so it's like, all right, you could pay me in dollars, but could you potentially just ship me, some crates of lean hogs? Because I'm pretty confident that they're still going to be around. Of course, they're all going to be created in a lab in 60 years, but still, we'll have some GMO labeled lean hogs. And so, but that's pretty funny stuff. Let's see. Where are we at? Here, Scramble Everything says, Dr. J, I'm putting your PhD to work. Quick math on your ability to push press an SI 5,000 ounce contract around. What's the question? There's Scramble Everything? I don't see a question there. Pushing around some silver contracts. Certainly done plenty of that in my day. Not necessarily proud of all of it, but it has happened, of course. And some of it I'm proud of, maybe. But I'm not sure what the question is there. If you're asking me, I'm just kind of reaching, but if you're asking me like how much capital you would need to be able to trade a silver contract, I would say 30,000 is not enough. Even though you have the margin for it, it's not enough. Because, every dollar that silver moves is $5,000. And so, that's not really, you can chew through that really, really, really fast. I would say it depends on what you're trying to accomplish, and it depends on how fast you want to move and how much leverage you're okay carrying. And that's going to be something only you can decide. But I can say 120,000 or more is going to be pretty safe. And I use safe kind of loosely. If you have 120,000 or more, you have plenty of capital to hold one silver contract and even one gold contract, for that matter. If you've got 80 to 100, I still think it's doable. If you have enough skill and ability and even experience, especially with options where you can, lay the options out against it to reduce your size and cut risk and whatever, 50, 60 grand, you're going to be moving pretty fast. And you have to be aware of what you're signing up for and that it may not end very well for you. And as long as you're okay with that, then hey, it's up to you. You got to make these choices yourself. But I would say 50, 60 grand is the absolute bottom. 80 to 100, you're going to be a lot more comfortable, but still be moving at a decent speed. 120 to 130,000 or more, of course. I would say that would be enough to trade it, comfortably. Comfort, I'm using that term rather loosely as well. But anyway, all right, let's go. Ranch is in the house. What's going on there, Ranch? Ranch says, hey, Dr. J, I'm thinking about being bold and playing into a BE reversal. BE. I don't know what that is. Is that a ticker? Bloom Energy? I'm assuming that's what you mean. They have earnings in about a week. I'm not going to trade it because it has earnings too close. But I'm assuming you're going to get bullish on a little Bloom Energy. And so I say, go for it, man. Like 100% go for it. I would personally wait until the earnings day on October 28th. But you got to do you, boo. Like, it's all your call. And so let's see. Lone Sofo says Tesla in general is literal trash. Okay, all right. Don't get me started on that Cybertruck. Good Lord, man, I don't know anything about a Cybertruck. All I know is my kids got Tesla stock now, and so I'm in, man. I'm 100% in. And so it's like, you love Elon, you hate Elon, man. I don't give a rip either way. It's like I am all in on Tesla, all in on Tesla. And so, Cybertrucks, Robovans. Let's go, man. Like, I'm ready. And so, but I appreciate you there, Lone Sophos. Let's see. The Mark of Truth says, what opposite trade are you giving us today, sir? I gave you two. Not just one, but two. right? Like you thought you were only going to get one there, Mark. You got two, right? So you, my friend, are welcome. And so there you go. But be careful, because from time to time, Dr. J heats up a little bit, and we could be in the middle of one right now. And so you have been warned. But let's see. Ranch says, yes, it was BE ticker. So there you go. I would wait. Ranch, personally, I would wait for the earnings because doing it now, you're going to make it kind of hard on yourself in that if you're selling premium, the time's going to go by, but the implied volatility expansion is going to kind of eat away at the positive theta that you would otherwise be earning. That just makes it challenging. That makes it a little bit more difficult than I think it needs to be, in my humble opinion. And so let's see. Dan Ducarn in the house. Trade is done. Rare earth and those nuke power plays are done. They trade lower, way lower. Okay, is there a rare earth play? Like obviously that's in the news and stuff with the US and China negotiations or lack of negotiations or whatever. But is there a rare earth like stock that we can play? I didn't know that there was. Or are we trading like, palladium or whatever? Like platinum? Like, I don't know. Like, let me know. Is there a rare earth play that we could kind of get into? That'd be kind of fun. So Steve is in the house, says, I read somewhere it might have to do with the whole Spanish colony. Man, that stuff is good. I don't know, man. It's up there. I don't know. Electric limeade. It's up there. It's up there. They have electric lemonade too. That's good too. I think, man, they're all good. Honestly, they're all really, really good. And so you really can't go wrong. And so I read somewhere it might have to do with the whole Spanish colony stuff hundreds of years ago. People getting it on everywhere. I think you might be talking about. Okay. All right. So Sam L. You caught me there, Steve. I won't let it happen again. So Sam L says, Doc, is the fade the Doc strategy finally coming to an end? It might be. But again, you've got to go back to the tried and true, right? The tried, true, and tested. It's the fade Dr. J strategy. Like, again, we're going to get a little hot here and there. We're going to this and that here and there. But again, I would not deviate too far from the default setting. It's a default setting for a reason. But again, I haven't felt this good about a Tesla trade. It's been a long, long, long time. But Sam L says another earnings trade success, all thanks to the pre-workout buzz and those dry scooped creatine gains. At this rate, even the P&L Open Bros might start subscribing to your supplement stack. Now, I don't know if they will, but if they can help me land this Go sponsorship, then they are welcome aboard. They're part of the family now. Like, they're 100% part of the family. Throw the shade, throw the whatever. I don't care. If you get me that Go sponsorship, man, we are besties. We are instant besties. And so that's where I'm at on that. So Dan Ducarn, let's see. Oh, that's funny. He says, I'll fade the trade. Ranch's trade. That's funny. Let's see. Ranch is trading bold. Bold like a 5D cash secured put. Huh. That is a pretty bold play. A 5 DTE cash secured put. Very, very bold. But let's see. Oh, Stephen Bivens. Dr. Jim, what is your preferred way to capture the risk-free rate with your uninvested cash? Some of the standard ways, and I haven't always done a great job of this. I don't do this really at all here on the show. But like BIL and like SGov are going to be great ways to do that. You could buy actual T-bills too. You can go straight to, and they actually have it. Like you can go to, because I actually do this for my stepfather-in-law, Doug, who he's an amazing guy too. And so I'm just surrounded by all these amazing role model men in my life. Like I'm so lucky and blessed to have these men in my life. But I help him like buy straight T-bills. He has a Tasty Trade account. I help him just buy straight T-bills, but he actually buys the actual bills rather than doing like a BIL or an SGov. At the end of the day, is one better than the other? I don't really think so. Those are a couple of ways. I think SGov or BIL is usually going to be your best option because it's very easy to do. Like you just buy or sell it like a stock and there's no commissions on, the shares of the stock. And so it can be very cost effective. It can be very easy to do throughout the day. And so that would probably be what I would suggest, most people do. But I haven't done a good job of that myself, to be perfectly Frankie Walsh with you all. But Big Deal Donuts, what color shirt are we thinking today? Green with the 3-button top. Yeah, man, this is it. We had to do it. We had to kind of keep you guys guessing because you're looking at the market. You're thinking is he going fire engine red for 2 days in a row? It's been done before. It'll be done again. Is he going magenta or is he going with the green? Those are the only 3 shirts I have really. And so I actually kind of threw you guys for a loop. Went with the green today. And so Samuel, Doc, time to burn some stacks of cash. Check out Beyond. I heard about Beyond and D-Nut. What's the play here? Protein Dreams or Sugar Coated Delusion? D-Nut, is that Dunkin' Donuts? It might be. It's Dunkin', right? Oh, that's Krispy Kreme. Look at this piece of garbage. $4. $4.20. I mean, it's up 50 cents today. And so maybe they have the last laugh, but man, Krispy Kreme, like they're still in business. That's amazing to me. That is really, truly amazing to me. Like, you know, Beyond Meat, I mean, they're obviously going to be insolvent any day now. I know they've had an amazing run the last couple days, you know, BYND, you know, it's up to $3.99. I mean, it got up off the mat. I mean, it was like 4 cents yesterday. And so obviously, you know, if you loaded the boat on Beyond Meat stock, you know, now you get the last laugh. There's no question about that. Like, you're going to be the one that's going to be shipping out the GMO lean hogs in 60 years. So congratulations. But for me, I have no interest in Beyond Meat. It's beyond me. But Krispy Kreme, I am pretty surprised that they're still a functioning solvent company at this point. And so I have to kind of, you know, use that, my shock here to maybe steer me away from these. They have earnings on November 6th. Remind me on November 6th. Maybe we'll do a little something. I am curious though. What is like a 30-day? Let me look at the options in Krispy Kreme. I mean, that's really, you can sell the 4-put for 75 cents on the mid price, right? And so you're risking $3 to make 75 cents, basically $3.25 to make 75 cents, because it can only go to zero, and it is going to zero. But man, Krispy, man, you guys, Poet. You guys had Poet. You guys brought me Poet a little while ago, and it's like, man, what is this garbage you guys are bringing to me? But I love it, man. I 100% love it. I mean, I'm not going to touch it, but I love it. Scrap everything. Here we go. Dr. Jim better get a second serving of rigatoni to carve out for that public shift. Man, I'm doing it. I'm 100% doing it. And nothing goes better with the cheese that I'm responsible for, because I run the cheese department at Publix, with a little rigatoni. Like a little rigatoni, a little cheese, get you a little Diet Pepsi, maybe a banana daiquiri if you want to kind of go in the other direction there. And it's good stuff, man. It's 100% good stuff. Mark of Truth says anything PLTR, I should say, Dr. J. Palantir. Yes, a little big brother for you guys. All right, let's do it. Palantir down $8 today. Do they have earnings coming up? Yeah, November 3rd. This is it. I mean, Mark, I'm going to pass again, right? I'm going to have to kind of pass on a lot of these because, again, I don't typically like to do a trade where a company has earnings coming up in like a couple of weeks. I really think you're making it too hard on yourself. So just remind me on the earnings day, and we'll do a little something in Palantir. No problem. And so let's see. Dan Ducarn, great job on the Netflix, man. I appreciate you, my friend. Thank you so much. Rant says, hey, good guess. Let's see. Joel James, Dr. Jim, any rule of thumb for, let me see here. Any rule of thumb for trading naked options based on account size? Is $20,000 enough to start, or better to wait for 30, 40, 50? No perfect answer, but what's your take? Thanks for everything. Man, I appreciate you. Yeah, of course, there is no perfect answer. That's usually the case for pretty much everything. But so 20,000 is enough. It is enough. Now, are you going to be limited? You are. You're only going to be able to do certain things in like lower price stocks, but that's okay. Like you can get started with that. I mean, you can do something in, you could sell a little Krispy Kreme. Like do a little short put in Krispy Kreme. Boom, done. There you go. You're welcome. Right? I mean, you only need $600. You could do that. Right? Maybe $800, but you can do that. You could do that with a small account, of course. But all kidding aside, you need to focus on lower price stocks. So if you focus on lower price stocks, I'm going to say $50 or less, then with a $20,000 account, you're going to be able to do trades where the buying power is only maybe $1,000 or so. And so that's going to be right around 5% of your account. That's a very, very good level to kind of get started with undefined risk positions. And so obviously, as you have more capital, 30, 40, 50, 70, 100, whatever, not only do you have more underlyings available to you, but the actual trades you do, and even the smaller underlyings become easier. They become easier because A, you're smaller. They become easier because B, you can make adjustments more easily because you're smaller. And so because the size is so much more, workable, it's going to open up a lot more avenues for you. And that's just the way that it works. When you have less capital, 10,000, 20,000, 30,000, it just is more challenging. There are more limitations and more concessions relative to when you have 60, 80, 100, and of course beyond. And so that is how I would answer that question. But I think 20,000, you can absolutely get started. You're just going to be limited. You're not going to be doing anything naked in SPY. You're not going to be doing anything naked in IWM. Like this is just going to be too big for you. But you could potentially do something in, all kidding aside, Krispy Kreme. You could do Bank of America. You could do, Intel, like these lower price stocks where it's like, if it's a massive move in Intel or whatever, where it moves, $10 or $12 in one day, which is a huge move, it's only going to be an $800 move for you, $1,000 move for you, which don't get me wrong, that stings. But the point I'm trying to make is, the problem or the biggest concern that most traders have when they get into undefined risk, it's not an $800 loss. They're concerned about, man, this thing's going to take me out. Like this thing is going to just completely just wipe the slate clean. And the reality is that's very, 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 very unlikely when you have really small price stocks. Is it always possible? It is. Theoretically, you are exposed to an infinite amount of losses if you have short calls. Is it practically going to happen? It's been a while since I've gotten to a state where I've just been continually losing money with no end in sight. I mean, it's happened a couple of times, but it's been a couple of minutes since I've gotten to that spot. So it's not something that's a practical thing that's going to happen to you, but you do have to understand that it, of course, is a theoretical max. And so that's how I would answer that question. Hopefully that gives you a couple of things to think about there, Joel, to kind of get rolling. But let's see. Wolf's in the house. What's up? Weiss in the house. I'm digging the lime wasabi polo shirt, man. Thank you, my friend. Thank you, my friend. Again, it's just my Publix uniform. I didn't choose it, and so it's just. I mean, this is the Publix hue. Like if you look up the hex code, boom, here it is. And so let's see. Jared Kramer says, Dr. J tailed that Netflix place steak tonight. I hope you're going to Bonefish for that steak because they've got the best steak in town. It's going to be very, very B quality steak that they're going to sell at an A+ price. And so if that jives with you, then this is your place. Like this is 100% your place. And so tell them I said hello, by the way, because I've been to every Bonefish in America multiple times. And so Sergio says, greetings, Doc. What's going on there, Sergio? Scrum everything better. Hop on over to YouTube to boost that Google share price. That's what I'm saying. There you go. Old dog Bronco in the house. Netflix for the win. I appreciate you, my friend. Armenian Muscle says, are you making money though, Doc? I mean, we're doing okay today. You can even see the P&L Open is doing okay. The P&L Day is looking good. P&L Open, and don't forget, we got rid of Netflix. We got rid of the big dog today. And even the P&L Open is like holding its own, right? Like the P&L Open bros, they don't have too much to work with. And so they're going to have to find new material, which that could be hard for them. And so, my heart kind of goes out to them a little bit in a not really kind of way. And so we're doing okay there, Lone Sophos. But I appreciate you. Finance account 6628. Dr. Jim, really hoping that gold trade played out. We appreciate you, Doc. The GLD trade didn't play out because I had to close it basically right before the drop. And so I don't know. Let me look, actually. Hold on. I'm actually curious now. So GLD, what were my strikes? Here you go. I found it in the activity page. We just did this on Friday, like while I was in the studio. 343, 338. Where is gold now? It's got to be. I mean, I bet you would that be? Oh my gosh, never mind. Wow, we weren't even close. Wow, even with like the biggest 2-day drop in gold in like a decade, we still were not even close to this thing getting back to out of the money. So it wasn't going to work. All the stars were kind of aligned against us on that one. And so that is GLD. But let's see. Where are we at? Rand says, Dr. J, look at BE. Yeah, I looked at that. I'm not going to mess with Bloom Energy because they have the earnings coming out. Dan Ducard says, what a hot mess that show. You might be talking about my show, and I would absolutely accept that as a rightful characteristic of this show, I think. I think that's very, very fair. Ranch, let's see. Joe YQ, what's up, Dr. Jim? What's up there, Joe? Appreciate you, my friend. Let's see. Armenian Muscle says, congratulations. Now you just need 344,000. Oh, wait, no. 3,445,000 more days like this to break even. I mean, I think it's more like 444,000. I think you're giving us a bit too much credit. I think we're going to need a few more like that. But Lone Sofa says, I'm just teasing. No, it's welcome, my friend. 100%. Enough corniness for now. I'll catch you later. Take care, everyone. I appreciate you, Lone Sophos. And so let's see. Scrum Everything says, I really dislike the Russell. It keeps burning me trying to go long. Yeah, I mean, that's pretty much the case with a lot of the indexes these days. Let's see. Dan Ducarne says, Dr. Jim, FXI to the downside. Man, I'm going to pass on that because I'm pretty much done with the show, and I don't really want to analyze any new trades. And I'm really kind of focused on earnings right now. We've done Tesla, we've done IBM for tonight, and then I think there's more things tomorrow. Definitely a bunch of stuff next week, and I've got Uncle Jay next week. This can be a first Uncle Jay together. Man, I'm excited, man. I'm super, super excited. And so, guys, I got to run, but I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com. tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, train them heavy, and stay grateful. We'll see you guys tomorrow.
So, Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammy is when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler. I'm excited about this one today because I got a real friend on the show, man. My buddy Kevin Davitt now works in NASDAQ, but we cut our teeth working at SIBO together, one of the many places you've been. How you doing, man?
I am doing so well, so happy to be here, so grateful for this opportunity.
Good to see you, man. Good.
Likewise.
Tell the people, tell the people your background. Because you've got an interesting background. You traded. You're a Chicago dude. Tell them a little bit, man.
Yeah, I came up into this business. I'll keep it relatively brief. In 1995. No, I grew up caddying, and I worked at this nice golf club where the people that were members there generally had been successful in some capacity. And my teenage brain put together that in many situations, these people were affiliated to some degree with the exchanges in Chicago. So either the Merc, the Board of Trade, or SIBO. And through caddying, I was fortunate enough to get this Evans Scholarship, go through college. And one of the guys that was influential in the Western Golf Association was Lee Tenzer. He happened to have one of the bigger market-making operations on the SIBO through the 90s. And so I started as a clerk at Letco. I'm really good at top ticking markets. 1999, maybe I'm in. I am in. I see in my first 6 months in the business, the NASDAQ, little did I know where I'd be 25 years later, the NASDAQ doubled and then lost in the ballpark of 80% of its value over the next 2.5 years.
By the way, we can't just gloss over Evan's scholarship. First of all, I had never even heard of that until I met you. That's a cool thing, and it's a cool kind of like brother sisterhood, right?
And I appreciate.
I know you
that.
could talk about that for like a whole hour, but like that's a cool thing. So that was pretty awesome.
You talk about changing lives for thousands and thousands of people. There's no better job, in my opinion, when you're young than caddying. You got to deal with all sorts of people. You get paid in cash. You're outside. I think the importance of that only grows as the world has sort of changed.
Yeah.
Couldn't support that big enough. I have a niece and a nephew doing it now, which really excites me.
Nice.
And the Western Golf Association has legitimately changed lives. I went through college without a dollar in debt, and I am forever indebted to them. So thank you for that.
Yeah.
And there are a bunch of people that have been influential in this business that continue to give back to that. So it speaks to the power and the life-changing impact.
That's a cool thing, man. Sorry to distract you.
Not at all. I learned options at the very tail end of fractions, and when for the most part products were singly listed, genuine or typically referred to as the good old days. And I have seen multiple transformations over the course of the past couple of decades, and it has been so fascinating to see how a business that when I told my parents, this is what I'm going to do, my mom shook her head and she's like, Kevin, you had potential.
Yeah, so like you told me you want to be a comedian.
Exactly. Yeah, might as well. And to see the growth and the broad appeal and the understanding of what used to be very niche sort of provincial markets. Mm-hmm. We're sitting here today in an amazing studio talking about what's going on in markets through the lens of options. That's amazing.
Yeah, and talking to retail traders and people who want to control their own lives and control their own money but it's the tools, right? And this is definitely not to ask us, but it is the tools, like not just our tools, but things that are created by the great Tom Sosnoff and Scott. And they created these tools that regular mom and pop people can trade their own money, which is a pretty cool thing. I mean, that wasn't a thing early on. No. Well, it wasn't even a thing when I came in the game late. I started in 2006, but prior to that, I got interested in trading in 2004. And it was really hard to kind of figure out how to trade things and where to trade them, and it just wasn't even easy then, and that's only 20 years ago, let alone before that.
Before we kicked off today, and I wasn't coming here to fluff, but I legitimately believe the likes of Tom, Scott, and others have transformed this business, and that understanding and the volumes we see across the industry these days are a testament to that. It's like if you try to build a business using jargon and having people think this is not for you is like who would try to run a business that way? And they took down those barriers and said, listen, if you look at it this way, these tools were used for exposure and risk management throughout time. And if you think about the size, the sort of scaling down of product that has permeated sort of derivatives over the past couple of years, with that in mind, we are broadening the potential audience, and that is such a positive thing.
Yeah, I mean, to that point, which we're going to get to at some point, you talk about size, it makes me think of the fact that you can trade gold and silver, right? Those things were damn near untradeable for a regular person a couple of years ago, whereas now there's plenty, not a couple of years ago, but, GLD and SLV has been around for a while, but once upon a time, they were untradeable for a regular person because the product size was just way too big.
Without a doubt.
SPX, it's still kind of big-ish, but the fact that people can trade it, right? There's multiple ways that you can trade those things is amazing. Yep. So now you're at NASDAQ. Talk about that. What do you do at NASDAQ? How long you been there?
So let's not skip over the two of us working together and exchanges, going out and having people that care about educating retail.
Yeah.
So we're doing that together, quick math here, 7-8 years ago.
Yep.
And to think of the transformation that's occurred since then.
Yep.
In the intervening time, I moved from one exchange to another, and really the hat is quite similar, talking about what makes options and markets compelling generally. I think you do that day in and day out too. But certainly from where is my bread buttered, I do so through the lens of the NASDAQ 100 generally. Now, if I could sort of say that, when I think long term, okay, you and I got lunch together before we kicked off here. We catch up about kids. I got a kid that's almost 11. You got a 12-year-old. And you got college-age kids. When I get in front of college-age kids now, and they talk about equity exposure, they talk about the NASDAQ 100. And my belief is that kind of benchmark or reference asset changes through time, right? Like our parents might talk about the Dow, but really, if somebody brings that up, they probably have an AOL address that they still check, right?
Yeah, no doubt. Well, I was actually going to say that because, they talked about the Dow because that was the things that were interesting to them at the time, the IBMs of the world, whatever the hell else was in it at the time. Right now is that time for NASDAQ. I mean, people are paying attention to AMD and NVIDIA and, with AVGO. Like, they're paying attention to those names. Naturally, there's going to be a gravitation towards NASDAQ for sure.
That is in no small part what I thought about making that transition, is that my belief, kind of very broadly, is that a derivative product is very much dependent on the reference asset. And so you think about GLD or gold trades recently, right? Why is that getting so much attention? Because gold's got a spotlight on it lately, or the metals have.
Yep.
And my belief is that assets will continue to move toward that reference asset, the NASDAQ 100. I think that when our younger kids are older, they will likely see passive dollars moving into something designed to track the NASDAQ 100. And I'm thinking about how transformations continue to happen in capital markets,
it's
right?
It's going to be the Bitcoin 100 is what's going to happen, probably. We'll see. You never know.
We'll see.
You never know. I definitely want to pick your brain about a couple of things that are going on. First of all, this trading environment, I think, is one of the most amazing we've seen in a while. You mentioned 2022. That was a time where it was really hard to trade, slow grind. Vol was there. Talk about this environment. What do you find interesting right now? What are you looking at?
Here and now? So again, I have to speak through the lens of how I tend to look at the universe. And what we've seen at the index level for the better part of the past 6 months, so like mid-April on, so post sort of real freak out about tariffs, until very recently, was a high dispersion, low correlation market. Like when you get into index lingo, you might have a day where, to use your example, NVIDIA's higher, but for whatever reason, Apple's lower, and all the others in the 100 mix, and relatively little happens at the index level, right? So we saw months where average daily moves in the NASDAQ 100 were well under 1%. I'm talking high-low intraday.
Range.
It was a low vol grind higher, and that shifted. Now, one of the points we were talking about before we went live was there hasn't been much follow through, at least on the downside.
Yeah.
Are we moving into a higher macro volatility environment? Possibly, but picking that point is difficult, and I think that your audience really looks to where sort of the crux of the activity is and where there might be opportunity there, and being nimble. And I love it. Just again, before we kicked off, talking about sizing and being able to get in and out and having a reason for what you're doing. The message you preach, I think, is super resonant.
Yeah, I mean, we're always talking to people about, staying small. Because, I mean, if you stay small, you can be convicted on idea. Just you might want to be small because nobody really knows what's going to happen. We have a lot of different indicators, right? I mean, that try to help guide you. You have expected moves. You mentioned ranges, right? Like, you just never know when that's going to change, right? Like, one of the things I remember when we started, because we worked at the exchange together and we worked in the educational space, and I remember, I feel like, and you can correct me if I'm wrong, I feel like at a time, like in 2018, and I've talked about this before, the idea of an iron condor. And people understand, like, we traded at, prop firms and the like an iron condor is not something you go in and you trade at a prop firm. Like, honestly, I probably remember seeing it in the book when I was learning, but I don't think I'd ever, when in 2018, there were all of these major, like, sort of, I don't remember how I want to say it, like a lot of like funds or whatever that were doing like iron condors. Remember that? And because the range was so small, it was post 2017. It was such a quiet time. It was the only way they could harvest a little bit of premium. And it was like, this is the new great trade. And then 2018 got a little crazy, and there was the U.S.-China trade war.
Was lever up. And to go back to your point about size, then when things change, your strategy, I shouldn't pick out specific ones, but your strategy that was marketed really well over the past handful of years can't withstand that sort of move that invariably happens at some point in markets. And so, sorry for interrupting. No, you wouldn't go into a prop firm and say, I'm going to try to continuously make money by managing iron condors. Right. But there's a time and a place for them.
And that's exactly what I was getting at, like a time and place. And I feel like that's the thing that we always try to figure out, what works best in the individual environment that we're in. Sure. I bring that up because I think this is a crazy environment. I've been thinking that for the last 2 weeks. When I look at the magnitude of some of the names that are moving right now, there is this push for rare earths, obviously, because of what's going on at the government level and what's been happening there. And you see investments in certain companies. There's this push for energy, right, because of these very tech names that we're talking about, and this push for AI and all of these energy names that you see, the Oklos of the world, these nuclear energies. Dude, it's so funny because we're of a certain age. And Tony talked about this one time on the morning show. Tony was like, I remember 3 Mile Island. And I was like, damn, Tone, like that was the 70s, dude. Like, I was like, but I feel him though, because when we were coming up, nobody was saying positive things about nuclear energy. No. And now you get on the show, one of the young dudes that I have here, they say all these interesting positive things about nuclear energy. And I'm like, wait, is nuclear energy good or not? Like, I still actually don't know, because that's how we came up, right? Because for us, it was Chernobyl, 86, right? Yeah. That was a huge thing. But nobody is talking about
86?
I think so. I think it was. But nobody's talking about that in that. I think so, because 3 Mile Island was like 79. I think Chernobyl that sounds was 86, about right? Nobody talks about them in those ways. And these stocks are going crazy. Now, I bring that up because the last 3 days, I've noticed there's been this pullback in quantum computing stocks. There's been this pullback in nuclear energy. There's been this pullback in rare earths. I don't know what that means yet. I don't know if it's a pullback for them to go higher, but I feel like that's the space we're in, all while this whole metals mania was happening, and then there's been a 2-day pullback in that, and now all of that preceded this mini pullback we have here in the market. So I just feel like it's an interesting time.
Well, everybody is a commodity specialist at some point, right? On Twitter, the world we live in now, right? You don't have to know all that much about nuclear energy. When you take a step back, though, and not to continue to make this about index stuff, but if you think about how much weight things like commodities have in broad-based indices relative to history, or healthcare relative to history, those sorts of measures through a historical lens are stretched, right? And so that big picture, like, are we going to see a reversion to the mean on some of these bigger, broader thematic things that have been playing out for like 2 decades, kind of, or at least a decade in the case of financials playing less of a role, or healthcare, right, or energy. I think energy has like its lowest weighting in the S&Ps anyway since like 2000. And there's a lot of comparisons. Now, that is not to say this sort of growth over value couldn't continue for many more years. Mm-hmm. But the momentum, when some momentum play ends, it typically does so semi-spectacularly. Exactly. And you're seeing some of that shake out in specific names over the past week or so.
Yeah, I think that's exactly kind of what we're seeing more recently. That being said, wow, gold just jumped back above 4,100. Maybe it's not over. It might not be over, guys. It might not be over. We'll see. I always like to pick your brain about natural gas because you traded it. You know a lot about it. I actually learned of the Widowmaker spread from you.
Sorry.
Is it me, or is that like not as much of a thing anymore? I feel like that spread doesn't seem, well, it doesn't. I remember last year specifically, it was basically flat. I think there's maybe, let me look at it right now. It's Jan to Feb to March, right? Feb to March.
It would be like the March, April. It's that spring where you have the shoulder season.
Yeah.
Typically.
Yeah.
But
it doesn't seem to be as big. Like once upon a time, it used to be somewhat of a wide spread, right?
Right. Fracking changed the supply-demand dynamics in natural gas very dramatically. So you'd have tremendous sensitivity because of how much offshore, like Gulf drilling, and then you have.
Can we pull that up on the
hurricane
platform,
season.
guys? Let's pull up the platform because I want to look at these different futures. Go ahead. Sorry.
Yeah. And so, I mean, the fracking, the energy that the U.S. creates within our borders now is very different than what we grew up knowing, right? Or maybe like our parents with the OPEC stuff in the 70s.
Yeah.
And so I don't think you see this quite the same reactivity. Now you go back a couple of years to the beginning of the Ukraine-Russia conflict, and that gas went bonkers. And Europe was very concerned about, do we have enough heat to power us through winter, right?
Because they get all their nat gas from Russia, right?
Yeah, a pipeline through, or maybe not all, but a significant amount.
Okay.
These commodity markets, kind of understanding that dynamic and looking at spreads, because that's expressing a relationship view, fascinates me. Probably not something you talk about a lot, but coffee has done some wild things this year. KC.
That's right. You always
looking
look at coffee
spreads.
a lot. I know.
These esoteric markets.
Yeah, yeah. You
I'm
can't keep
drawn
an
to 'em.
old commodity trader down.
But in natural gas, I was a absolute caveman. Like my rationale behind it a week ago was simply, I know I'm here in Chicago and I might still have shorts on, but it's gonna be cold soon. And you see my middle-aged sweater is on today. So I sold.
I mean, that's not.
I sold some puts, right? Like
that's
just
not crazy,
man. No,
because that's exactly what happened these last 3 days. I feel like
Right.
it popped.
Yeah, but my rationale was certainly not thinking about demand in Europe, or it was nothing beyond that. And sometimes that works, but again, sizing appropriately, because that's a big boy contract.
I know. I actually trade it now sometimes.
Yeah?
I know,
Look
I do.
at you.
I know. You used to
Next time I come on, you're going to be like, yeah, I'm in coffee spreads.
I know. It's been an interesting thing.
So how do you go about it?
You're gonna kill me right now. Honestly, I can't. Dude, a year ago, Jamal can't believe what I'm doing right now. I'm short of strangle in here. I'm short of strangle with 33 days ago. I'm short to 320. I was actually short the 510. I actually rolled my calls up.
Okay.
But I sold it like a week ago, and the ball came in, and I think I should just close it soon because it worked.
Yeah.
And I'm gonna be out. But it was just when it was on its lows, fall popped up, right?
Yep.
Like it usually does. And so I kind of did that. I just kind of wanted to be, and again, just looking at the prices, I know we all know that natural gas can get crazy, but like you said, it doesn't get as crazy as it used to unless there's some type of flare up, unless something's going on, Russia, Ukraine, things like that. So I figured, with my upside being, given where the chart's been, and my upside currently is like 460, it hasn't touched 320 all year, especially in this Z contract. That was kind of my idea, just looking at the chart. If I get beat with this jumping to 5 in a short period of time, well, again, it's going to be a spectacular story, I guess. We'll see. So,
what made you go out a month?
So that's kind of our mechanics. A lot of the mechanics, and again, people have their own mechanics, whatever. Tasty mechanics has always been, and our research has shown that 45-day window, how much vol collapses. And we know, like, near term is like that. Like, I don't necessarily sell big Vega anyway. I'm not trying to sell Jan. I don't know that much about it, and I don't want to have that position for that long anyway. So it's always usually sell within 45 days, close either at 50% profit or 21 days, and move on. You'd never really deal with expiration. Like, I hardly, outside of zero DTEs, obviously, and most of the time I'm trying to limit that to an index product that I don't have to worry about taking assignment on, right? So it's usually that. It's usually like in the 30-something day window. I'd say probably the bulk of my positions are in NOV right now, in like a 30.
Can I turn around a question on that last point? Because I think it's something that increasingly people are coming to value differently the cash settled element of it, right? Like, unless it's an index product and cash settled. For somebody like you that has been active in markets for years, how much value, how much premium do you put on that, for lack of a better term, right?
Mm-hmm. How much premium do I put on what? On
the cash settled element of it. And how much do you think your audience, how much does that resonate with your audience?
I think it resonates in a very massive way, the idea that you don't have to worry about taking delivery on something. I mean, you can, not that you want to turn people into robots and people want to be set and forget, but it's nice to know that you have a position on and you don't have to worry about, an assignment or something like that, right? Like just the idea of that. So yeah, I mean, I do think about that a lot when I think about different trades that I want to put on. Duration-wise, I think it was also huge for a lot of people who might not have a $25,000 account, even though that's going to go away. Thanks to Scott, that's supposed to go away at some point. But I think that's another reason, like it's huge. Like when whether it's NDX or SPX, when they're whipping around, right, and you're able to try it, because I feel there's a lot of people who want to do iron condors, but I feel a lot of people take directional shots, right? And when you're able to do that and not have to worry about, again, that type of risk, I think it's huge.
Totally agree.
I feel like a lot more things should be. I don't know how you do it. I don't, that's not. I mean, again, I'm staying in my lane. That's not my part of the business. But I know at one point in time I was like, there should be like a lot of stocks that operate like index products to some degree, because I think people like, it's nice, but at the same time, it is nice to do like a wheel strategy whenever applicable. Damn it, I should have bought a call spread. I can't believe I'm looking at this market just keep ticking higher. Yeah. We're only down 39 now. Sorry, we're today.
NDX back
sorry, folks. Today, I don't know.
25,000.
I'm not quoting in SPX anymore. As Kevin's on the show, we're quoting NDX today. So we're only down 207. I mean, do you formulate your brain like that, by the way? Because we all come in this industry thinking of spoos. Now, do you think of the market in terms of like moves in NDX? Do you think?
No, I am well aware of the dominant product in index. I've been in Chicago for the better part of 30 years in the trading community. My belief, though, is that could change over the course of the next decade. Mm-hmm. But no, it's not. And one of the other things that I think, if you're in a position where you speak to people about the power and the risk inherent in markets, is being sincere. And if you are doing nothing but relentlessly talking about, your thing, self-promoting, I think whatever valuable message you're trying to impart is going to be lost. At least that's the way I behave. If somebody's like, my firm, you can work it in organically without being a shill, in my opinion.
Yeah, for sure. I know one of the things, we got 2 minutes here.
Oh, it goes so fast.
I know. And you told you it was going to go fast, man, to a bunch of old friends hanging out. You know it's going to go quick. We were talking about, I know Tesla's coming up earnings tonight, folks. I have, so the other thing that I do now that I never used to do is calendar call spreads.
Do you typically...
I go upside
own time.
Yeah, but I actually do it like basically like I make them almost like just outright calls. I'm just offsetting by selling the upside and the premium, right? So I'll go further up. So in this case, I didn't put them on yet. Oh, I totally got to put some on. Wait, what's the expected move in here? Expected move is 30.
It's like
I plan for like a nice upside blowout, right? So it's like a $30 expected move in this case, and then I couple it with a chart, right? Which again, the upside here, what was the high? The high was 470. So I would, and so the nice thing, we have an expected move meter, which is nice, right?
That.
I would go, this is a typical type of earnings trade I do. I'll go to the 470. Let's see if this thing can get back to highs. I mean, 385 is not cheap. I will say that. I usually like to do these things for like $2.
Yep.
I just go a week apart.
Okay.
That's it.
Yep.
Right? Because then, it works better, especially on a Wednesday. If this thing gets up to 465, that's awesome. This near term is right. And then the further out is going to still have some volatility value to it. So, yeah. Wait, is this the lows of the day? Or has it been here? Oh, damn, it just bounced off the lows of the day. I'll go 385. We'll do one of these. So I've gotten, and you know what's funny? I used to hate calendar call spreads. I didn't, because again, they come from a time where nobody had all the information, right? I explain this to people all the time. Nobody had all the information. I'm sure you probably trade a lot of calendar stuff with stuff you were trading back in the day, right? Because
yeah, but then you're just responding to what's coming in, right? Like you'd back into it. But yes,
but it was.
You're talking about I'm going to get likely decay tomorrow, and then have optionality.
Yeah.
Do I want to continue to hold this for what reason? And knowing one, at least theoretically, is going to lose value a lot more quickly than the other, right?
Yeah, it's kind of how it goes.
Correct.
So yeah, I'm going to try and put that on. We'll see what happens. I mean, stock's probably going to go down.
You got Netflix some tuition to pay for.
I mean, yeah. Especially at Marquette, right? Your alma mater. That's my daughter.
I didn't have to pay because of WGA.
There you go. Dude, thanks for coming on the show,
Thank you
man.
for
It was
having
really
me.
good.
So fun.
Hopefully you can come again sometime soon.
Love to. Back to our old stomping grounds?
Yeah, exactly.
Bring it.
Exactly. Folks, thanks for watching this show. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
If you say way to go out on a ledge, what are you doing?
Way to go out on a ledge is just another expression when you make fun of another trader who's not willing to take any risk, who's very risk averse. So when somebody's very risk averse and doesn't want to do anything risky, you say, "Hey, way to go out on the ledge."
When you say you're going to whack the bid, what are you doing?
When you whack the bid, that means you're selling at the best available price.
A scoopy. What's that?
Scoopy! That's one of my favorite. That's when you're just like scooping something at the bottom, like, you know, you bought something and it never goes lower. Scoopy.
Back in the pits, you guys call them teenies. What are teenies?
A teeny is a 16th. So before we went to decimalization, we used fractions. And we used 16ths under a certain dollar amount.
Do you want the penny or the position?
Well, that's always something. The penny or the position is, do you want the trade? Then just pay up to get the trade. But do you want to squeeze it for a penny? That means you're just going to wait until you get filled.
When you say Omaha, what happened?
When I hear Omaha, I know I've gone too far.
Hey again, everybody. Tonight, and it is the Wednesday, the first meaty earnings week. The big ones today are going to be Tesla and IBM. And that's kind of it for the week. I mean, it's kind of boring after that. I don't care about Gilead Science or tomorrow and so forth. The real circus is going to be next Tuesday, Wednesday, Thursday. That's when all the big boys do their reporting. Microsoft, Apple, Amazon, you name it. So yeah, next week's going to be something. But this we've had some earnings come out last night, a couple more big ones this afternoon, and of course the CPI before the market opens on Friday. It's a good day. We're nice and red. I have re-entered at long last my palladium position. I'm keeping it. Yes, I'm not all in. It's kind of a starter position, see how things go, but it's looking pretty good. So we'll glance at that momentarily. Let's jump to the charts. So I'll just show very, very little. Usually we start with 7 or 8 ETFs. I'll show you like one. We'll get to the other stuff. And I'm only showing one because the patterns are all so similar. The wedge and the stall, and then a couple of Fridays ago, and we've been within that range ever since. It's chapter and verse the same no matter what you look at. We have unwound all the gains from this week because every alternate day the administration says something mean about China, and so people freak out. So we're back to that mode at the moment. But yeah, no change. It's just sort of stalled out of these levels. It has not bested its lifetime highs from a couple of Fridays back. And at the moment, it's just kind of earnings data dependent. Speaking of earnings, the two big ones that came out were both real stinkers. Netflix losing 1/10 of its entire value instantly. So you can see this plunge here. I had been short this. I got chicken. I didn't stick with it. And it's not a great chart. So I will happily beat myself up for stupid decisions. This was not one of them because it was just a meaningless meandering. But congrats to anybody who was bearish on this thing. It has basically gone to a multi-month low. And there we sit. So that's pretty rocking. And the Texas Instruments fell, although it has been recovering from its open. We're down not quite 6% on this. And this was interesting to me because I am short a whole bunch of semiconductor stuff. And that has been somewhat helpful in that regard. So, for example, I continue to be short AMD. I actually got back into this just yesterday. So we've got some nice sinkage on that, down about 4%. Also short Intel, which is also down almost 4%. For weeks now, it's just been grinding away at this line. And all that line represents was this peak right here back in July. And so this is a much cruder granularity here. Let's go back to the daily. So in this instance, Intel had been winding up for what looked bullish. It consolidated here, fell hard, pushed back, fell even harder, pushed back. And as it is now, like I say, I remain short this. On semiconductor ON, this one's down nicely, about 5.5%. I've pointed out this distribution top right here, and we've been slowly sinking within that zone, like so. It had popped above that level the past couple of days, but we're back below it now. And just semiconductors in general are looking kind of skittish because there's increasing chatter about, will this whole AI thing ever produce profits for anybody in our lifetimes? It's pretty well agreed. If the AI fad ever breaks, it's all over. I mean, that is it. Nothing else is holding up this market. Except for like short squeezes with Beyond Meat, there's nothing really going on out there. It's just all AI. One more semiconductor while we're at it. Micron. This was one of those rare instances where I managed to short it at the tippity top right on this day up here. And we had 3 red bars in a row. And I think there's ample opportunity for lower prices on this because tech is exceptionally expensive right now. And broadly speaking, and I'm also short SMH, the cool thing here is, and I must underline this, we have broken the trend line today. It has not happened ever before. That April 7 trend line has been intact for all these many, many months, but we busted through it today. At this moment, we're just above it. It doesn't matter. The damage is done. So we've cracked that trend line after, over half a year of enduring this grind higher. So this is our right triangle. We peeked our head above it briefly here and fell. Let's see if we can get any kind of follow through on the downside to that. What else? Well, we got to talk about precious metals. That's always key. Gold is it's up a little, but that sort of hides the fact of how much it's recovered. So at the moment, yes, the front month is up 0.11%. It sounds like nothing. It actually has had a tremendous recovery because it plunged last night, and it's had a complete reversal away from that. Very impressive turnaround, and we're basically going to see if that's enough. If the huge sell-off from yesterday and today has shaken out the weak hands, and we can go back into this general uptrend. As we look at GLD itself, the peak was on Monday, lifetime high, opened basically at the high, and it's plunged since then. But like I say, the long-term bullish pattern is absolutely intact. And precious metals fan, you know that. And I was wanting it to trim some of those heady, frothy gains. Perhaps it's done so. As I mentioned 2 days ago, I bought dust to good effect. And I was a little chagrined this morning because the dust opened even stronger, but it actually showing a loss now a little bit. I bought dust here, I sold it here. It opened stronger, so it's one of those, I should have held on sort of things, but that's unwound that. Of particular importance to me personally is, as I've mentioned endlessly, I've been waiting so long to get back into Palladium because the bullish setup on Palladium is just a jaw dropper. It's a wonderful consolidation, and it finally broke out not that long ago. It finished the task this month, October 6th, and it went up, and the higher it went, the more upset with myself I got. But I solemnly swore if it ever got back down to a good buy point, I'd get back in. I was kind of hoping we'd get back to around 115 or so. That may not happen. Frankly, if it doesn't, that's good, because the more robust it is against these sell-offs, the better. So early today, based on my observation that I don't have it here, but the long-term chart of Palladium futures had a line across, which was basically the fundamental base of the whole bullish pattern. And it was in a free fall last night, and it got like pennies away from it, and boing, went back up again. And at the moment, Palladium is up about $50. And so it's about 3.5%. Not bad. And so we'll see if that can stick. If it strengthens, if it's clear that this gold shakeout was a couple of 3-day scare, great. I'll just kind of add to that. But I've got a starter core position now, and we'll see if that holds. And for the stop, nice and tight, 125 on PALL. That's the stop loss on that. So keeping risk sensible. And all my shorts are profitable now, and so that's good. We've got a nice sell-off going. Just a few favorites here and there. Here's Axon, AXON. This is, of course, formerly Taser, the body cam company, so I like the head and shoulders on that. The neckline has been a little bit pierced, but not enough to spook me out of it. Lumen, LUMN. This does look like a bullish setup, but I'm counting on this thing being held back by that horizontal that I've drawn there. We've got Wayfair again, which is up a little bit now, but long term, as I pointed out, my perception is that we have got a triple top going on here, major resistance along there for Wayfair. There's also Corning, GLW, and we're down on this one, 2.21%. It's had a massive run of late since the April 7 bottom, but that seems to be flagging, both literally and figuratively right now. And some of the kind of really saucy tech stocks have been burning out today a little bit. Palantir down about 3.5%. And it hasn't done so yet, but it may well finally break this trend line, which goes way, way back like so. It's anchored here and also to the April 7 bottom. So that's looking pretty interesting. I'm just glancing Palantir's. I'm glad to be back in it. I'd be very upset right now because it's flying. And then Roblox, RBLX, also down about 3.3%. We matched this peak here. That's what this horizontal represents. And we've gone sinking below that. So that's kind of stalled out as well. So just good results there. I'm not in this one, but I did want to point out that this very hot stock, ASTS, that is AST Space Mobile, this doesn't look like much of anything. That's a third of its market cap. I mean, in the span of like a little more than a week, a third of its entire worth, poof. So that easy come, easy go. And the whole quantum space, which I've been sort of like puzzling over for weeks now, is really falling to pieces. Because everyone's always looking for the next big thing. You know, missed out on crypto, missed out on what have you. But it's like, okay, quantum computing, that sounds futuristic. Let's buy that. And it worked for a while. But as I've been pointing out, the bullish breakouts failed. And since then, it's just been a fiasco. I mean, so we've gone here from almost $26 down to about half that. So we've lost about half its value since early this month. Negative 50%, not good. Any quantum you look at, it's kind of the same thing, but just one other example, RGTI, Rigetti. This is down bang, 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 like so. And I suspect it's got plenty more to come because the fundamentals are obviously pretty terrible. The two biggies, wow, go Palladium. The two biggies today are Tesla and IBM. I don't have a strong opinion about either of them. I do not have a position in either of them. Tesla, and its lifetime high was back here in December. And of course, you had a fall from grace and the recovery. But if I had to guess, I'm guessing this will soften up. This oval consolidation pattern, as I say, I don't feel strongly for the position on it, but if I had to guess, I'm saying lower rather than higher. That horizontal will be the one to beat to get people really excited. And IBM is a little more interesting because we had a lifetime high here by way of the shooting star, and we sank beneath it, starting to recover. And I would say this often surprises people. I'm not even offering an opinion on this one. Anybody's guess. So in any case, it's bottom of the hour. I will say farewell. And for once, I'm going to see you not tomorrow, but in about 5 minutes, I think. So see you soon.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Everybody, welcome to our very special edition of Last Call. We are honored to have Tim Knight as our guest today. Thank you so much, Tim, for joining us.
Can we get the round of applause? Can we get the sound effects?
Oh, thank you. That's about what I expect. Okay. Yeah,
we're excited to have you. You are
You are a crowd favorite, and you're one of our favorites. So thank you very much for giving up your precious time to join our little last call today.
It's certainly a pleasure. Absolutely. It's been a long time.
It has been a long time. We haven't seen you in a while.
I know. I can't remember what city we were all in together, but it's been years.
No, actually, I remember the first time we met because it was many years ago, like in the earliest days. And I walked in and you two were like, oh, you're so cute, because this was like when I was like young and not gray. And it was like, oh my God, I'm getting female attention from these two women. This is the best. And so we sat on the couch and chit-chatted with Tom and Tony, I think. But yeah, we're like the original gangsters,
I know, and I remember that, Tim, because you brought a Star Trek outfit that time, didn't you? And didn't you film something in a Star Trek outfit?
Oh, maybe I could have come in spots.
Jenny, can you do this? This is hard to do. It's genetic.
No, I can't do it. It's too hard.
I can do it, Tim.
Yeah. No, listen, I can throw these all day long. Yeah. I was born the same year as Star Trek was, so it's in the stars, it's magic.
I love it. Yeah, no, we are the OGs, I think. You and I, the three of us have been there since the beginning. I mean, Tony is the only one on the network, I think, that has still been here as long as us.
Yeah. Well, it's, like I said in my, I did a little reminiscence for Tom, and, our own history on this dates back to when it was just a domain back in 2006. They didn't know what to do with it. You just owned tastytrade.com. So, but here we are.
Okay, and we love it. So Tim, we're not going to take a lot of your time. We kind of talked a little bit about what we want to ask. We like your expertise, and we don't even have to pull up the charts. We just want to know what a couple of your favorite setups are. Using however charting you chart, what your favorite setups are. And then Jenny and I want to use our expertise. Then we're going to let you go. Then we're going to use our expertise to overlay a complex option strategy on top of it, taking advantage of putting two things together, your chart expertise and our trading expertise.
And that sounds great. But I also have some questions. I made a little Post-it note with some questions for Tim. I wrote them down as I was listening to his segment, because he talked about a couple stocks that I do have. So I want to see how.
Oh, I know you're going to talk about Intel. He's bearish. You're bullish. I get it. Done. That one's put to bed.
Okay. Well, I mean, as far as, and for the viewers, they should know that we didn't, do any pre-interviews. So there's nothing agreed upon yet. So as far as setups go, I mean, for one thing, before we went on air, we were just mentioning my obsession with palladium. And I'll say that kind of ties into what the real answer is. Because the trouble with PALL is that it's pretty thinly traded. The bid ask is usually 10 or 20 cents wide. But long term, I think it's going to do extremely well. And by long term, I'm, a year, even 2 years, that kind of thing. But if there's any sort of theme that I keep hitting back upon, it's this whole, because I'm kind of obsessed with ratio charts, it's the idea that any precious of any kind, be it gold or silver, and those are obviously a lot easier to trade, is going to really beat the pants off of equities. And so like, GLD divided by QQQ, for example, or the spiders, or just about anything. And it doesn't necessarily mean the stocks are going to fall, but what it does mean to me is that precious will absolutely outperform equities in a big way. So,
I don't know if you know this, you're speaking my language. I'm a gold bug.
Cool. Yeah. Well, you're both vastly more sophisticated traders than I am, and I mean that very sincerely. And so you can construct something out of this. Maybe the only thing that doesn't work as well for you, but is this longevity of the idea, because it's not like an earnings play or something. It's more like, I'm highly confident 6 to 12 months from now, this will ring true, and the patterns are already completed. So, but that's my kind of, safe answer. But you had some other questions. Toss them at me, sure.
Okay, well, Liz already brought up Intel. Fine, I'm long Intel, but I do value your opinion. We've been on the air for 15 years. I've been watching you for 15 years, Tim. You're one of my favorite shows. I would say favorite show on the network, but I don't want to get myself in trouble. And Lumen is another one that I have, and you were bearish on Lumen, but that's fine. That's fine. Maybe I'll scale back my position a little bit. But will you ever take symbols and then come back like, would you ever take a symbol from me and look at it and maybe talk about it on tomorrow's show?
Absolutely. I take requests. I'm like a friendly DJ. You bet.
Okay, so SO Southern is a position that I'm building up a long position in SO Southern company. So will you maybe look at that tomorrow on air for me?
Sure. I mean, I look at charts all the time, and my vague recollection is that it's kind of I may be wrong in this, but it's kind of what I call a permariser. It's basically just like incredibly reliable climbing stock, in perpetuity, but maybe I'm confusing it with something else, but I'll definitely.
Yeah, SO is the symbol, and I'll be listening tomorrow. I'll be listening tomorrow if there's something worth looking at.
That's one of those from the nuclear sectors, Tim. Just to give you a heads up.
It's like a power company, but I think there's dabbling in nuclear
component. Okay, so yeah, we'll be watching tomorrow.
Okay, you got it.
But so I know palladium is your number one, and that kind of trickles into some of the precious metals. And you kind of touched on some of the other ones, and I was writing this down. So you have, what is your strongest conviction that isn't metals, in bullish or bearish? I know you're probably a perma bear.
I am. Yeah, I don't recommend it. Let's see, strongest conviction. Let me just glance at my screens a little bit. This is also kind of thinly traded, so I'm going a bit on a limb here, but Axon is worth looking at. That's AXON. That's the taser / body cam company.
Oh.
Yeah, and it's I like it from a long-term bearish perspective because it's you can see right there it's got a nice head and shoulder short term, but long term it's mushed way up at the top of this multi-years channel. So I'm hesitating because it's so thinly traded, and you can always get surprised with these things. But Axon on the short side, I like.
Okay. AXON. Okay. I'm actually looking at this. Okay. And it looks like they do have options. Because you bring a very unique perspective to things, Tim. And I know a lot of people are always asking how people get their directional assumptions. And you, every day for the last, 15 years, give us 15 minutes of your time telling us your directional assumptions. But you actually put your money where your mouth is. You're trading options and or the stock and or anything. You're bullish or bearish. You don't necessarily think it's going to be immediate. I want to be clear. Like when you put something in, like you had just said, gold long term or palladium long term. It's not, you're not. I remember years ago when then Tom would bring you on and be like, "What's Tesla doing for earnings?" And you'd be like, "I don't know what they're doing for earnings because that's not really what you do. You're just guessing with the direction."
Yeah. I mean, if there's anything kind of unique about it, what I do try to bring is a certain historical perspective. I really enjoy history measured over centuries, really. I even wrote one book that is historical called Panic, Prosperity, and Progress that focuses on big financial events through the centuries.
So, I have your book right here, but it's in my shelf. I have to search through it. I have it.
So I mean, my perception is that what's fascinating about the markets is that we're able to witness kind of the human experience by way of these little wiggling price bars. The politics are there, the history is there, the society is there, and the culture. And so, to my mind, when you look at the chart, it tells a story. Just like an archaeologist can look at a pottery and tell a story from that. For me, it's just the charts. They do the talking.
I love it, Tim, and we owe you many dinners. There have been many ideas over the years that Liz and I have profited on. I can remember, like Liz, I'm sure you can remember some in your mind, like Footlocker or Etsy or like certain products you'll look at, you'll bring up, and we place trades, and we're like, yeah, toast to Tim Knight.
Or if we bring assumptions, we're like, well, Tim said.
I consider the source. I don't know. But all right, well, SO, that's the deal. You got any others, just drop me a line. I'm always happy to conjure up charts and talk about them.
We appreciate it. Thank you very, very much for your time, Tim. We appreciate you coming on. Anything else you want to ask before he goes?
No, it's already 2:45. So I know you have a puppy to get to, so we'll let you go.
Yeah, Dookie needs me. I'll see you later.
All right. Thank you, Tim. We appreciate it. Take care.
See you soon. Bye-bye.
That was fun. I love the crossover show, right, Jenny?
Oh, that was so much fun. Hopefully he'll come on again.
I know. Hopefully we can get them. Okay, so if you want to jump into the platform, we're going to take a look at a couple things real quick because it is earnings season. So here, these are the earnings for today. Tesla, IBM, KMI. We're going to take a look at some of those. I wanted to show you one of his most shorted stocks, right? AXON?
AXON. Yes.
Problem. Same problem that Palladium has.
Oh, wide market or closing only. Yeah, I'm gonna closing only. So then if you're gonna short it, you just have to short it, right? So
do they set it to closing only? And I'm actually asking, I'll contact my favorite brokerage firm, but I think they can set it to closing only because the bid ask is so wide. Isn't that correct?
So I think that's the trigger. I believe the trigger if you get that message set to closing only, it's a trigger if the market is very wide, and you can see those markets are very wide.
Yeah.
And I think if you want to trade something that says set to closing only, you could probably call the brokerage firm and see, because some of these products that say closing only might not be. And it's just like a trigger if the market's too wide. So
I think it sticks. I think it sticks there. But to Tim's point, it's pretty thinly traded, meaning 382,000. There's a K instead of an M. Contracts have traded.
I know. So we can make some phone calls and see what we can do, but otherwise you can just sell it, and we can keep an eye on it. How much is it to just sell one share? I know, like, I'm not afraid to not buy.
It's going to be sell. It's going to be $300, right? Because you're 50%.
Well, I don't know. That's what I wanted to see.
Yeah, $349. So if you're selling one share, it's 50% of the buying power.
Okay, let's sell one share and keep an eye on it.
So that's what I was going to say. Keep an eye on this. We're filled. Okay.
Yeah.
And it's going to be at the top of our little list. There it is.
Yeah, and I'm going to go in my account and sell. I'm not going to get crazy, but one share, if it goes from 698 to 650, hey, well, I'll take $48 out of that.
That's a number I can live with. And this is, for those of you just joining, this is what Jenny wants him to look at. It's what is it called? I'm going to type it slow. So
it's Southern Company. And it's a power company. It's a Southern power company. So it's been around a long time. So it's not like Oklo or SMR. I know you mentioned nuclear, like there's a little bit of nuclear, but
I thought this was something you got from your brother. That's the only reason I thought it was nuclear. Isn't he the one that told you to buy it?
He's the one who told me. He's the one who mentioned that he was interested in Southern. So I bought some, but I'm curious to see or hear what Tim would have to say about the chart.
It's gone up, yes, but I don't think it's gone up too much.
No, it's not. No, it doesn't. It has not. It has not. It's not like those nuclear stocks that went crazy on the nuclear rally. No, not at all.
No, because this didn't move the nuclear stocks. Bloom Energy did.
No, Southern is a power company, and it's been around a long time.
No, so BE is a power company too. It's Bloom Energy. It's a power company. Oh no, I guess it's just an energy company.
Yeah. So it's just something I'm curious to see what Tim thinks of the chart. I don't know. Yeah, I'm wondering like what my commitment could be when my brother says like, "Oh, you might want to look at Southern Company." What should my commitment be to my position?
Like, I want to see if my brother's actually telling me the truth. No, but I do like it. I do think that what Tim sees is something different than what we see, and I think that's a very hard learned trait. So he has a skill set that would take a lot. I mean, you and I are derivatives traders, right? So we can look at the numbers and we put something on top of it. Tim looks at the charts. And I think things can get really interesting when they overlay on top of each other. I was listening to him today, and this is what broke my heart into a million pieces.
Oh, I know. But okay, so I have a lot of intel. It's probably one of my bigger positions.
We have a lot of intel.
No, we have one put. What do we have?
I thought we had Zebra and a put. Hold on, let me see.
I think we changed it. We just have one short put. Yeah, we have one short put or one Zebra. Like either way, that Zebra is defined risk. This is defined risk, or this isn't defined risk, but we have one put. I'm not that worried about one put.
I thought we had more intel than this. Usually, sometimes we'll double down. But I think that's where I was like, ooh, Jenny's listening right now. She heard his various intel.
Well, and I used to have my intel protected, but on the way down, I had some long puts. On the way down, I sold out all of them. So I don't have any protection against my intel stack anymore. So when he said it, I was like, ooh, that's painful. But I don't, right now I just have a stack in intel. That's all.
And I know we only on the heels of Tim, only because he was talking about gold. We put this on yesterday on last call. We're up $50, 25% overnight.
Yeah, sure. Go ahead and close it.
I'm just going to replace the order just to get out of it.
Yeah, that's fine. $50 in a day. Sure.
In a day? And we get
now
back
when he talks about long metals versus short, the Nasdaq or the metals are going to go up more than the Nasdaq. That's his prediction. You could do a pair where just notional to notional, you're buying GLD, selling QQQ, and do notional to notional. Like if you do that, Liz, if you pull that up on the pairs trader, and we could do it on like a small scale.
QQQ to GLD. We have to do the notional to notional. So it would be almost 2 to almost.
Yeah, sure. You could buy 2, flip it and buy 2.
It's going to be 2. And then you flip
GLD and 1 QQQ. So sell 1 share QQQ to 2 GLD. Now you could make the ratio.
It's a little heavy gold, but that's okay.
Yeah, like you could make this ratio perfect by doing a different ratio, but for us to keep it on a small scale, and
it would almost be 2 to 5, right? Wouldn't it be 2 to 5?
Let me see. 2 QQ.
Or 3 to 5. 3 to 5.
Would be 1,200 times 4. Or I don't know. Do you want me to do the math?
No. I mean, you can eyeball it. That's good. But for our purposes, we're gonna be weighted a little bit heavy on the gold side. Now we have to keep this in mind because I just took off our gold silver ratio. Now we're going gold triple Qs.
Wait, hold on.
1 to 2 is as close as we get it. I'm not going 5 to 3.
It would be 3 to 5. 3 to 5.
3 to 2.
No, like 3 GLD to 2 QQQ, right? Because 3 GLD, 377 times 3 is almost 1,200, 1,130, and then 2 QQQ is 1,200. So 3 to 2.
So this is 1,300. You're still heavily weighted. I'm gonna go 2 to 1.
No, it's not. 377 times 3 is 1,131. And you're at 1,200.
It's 1,200. So you're still heavy. You're still weighted more in gold, even if you're 2 to 3 or 3. It doesn't matter. I'll ship this. I was just going to use less than $1,700 by going 2 to 1.
No, yeah. You can go to 2 to 1. That's fine. Either way, it doesn't really matter.
Because this is as close as we can get is 2 to 1 by spending the least amount of money, the smallest we can get, and then we're spending $600 instead of $1,700.
Yeah,
and I'm shipping it. Let's see how it goes.
It's 2 to 1. It's very small scale, like 1 share, 2 shares.
Yeah, these are very small. I kind of like having those pairs. That's the one thing I was talking to TP about. I was like, I wish that they would put the silver and gold next to each other. He's like, Liz, you can do a lot of things. You can't change the alphabet. And I was like, that's a good point. It's a good point. So now we've got GLD to the triple Qs right here.
Yeah, just 2 to 1. Okay. Now.
Oh, but look at these markets. I don't think we actually made $50, Jenny.
Oh, because those markets are so wide.
Yes, look at this. So 70 cents at 203, 84 cents at 128. We didn't really.
So at least we rallied a little bit. Can you check SPX? Because Blue Wackadoo, he had these short, I want to say 66.95 is his short put. So I'm hoping and praying, fingers crossed for Blue Wackadoo, that his iron condor is okay. And I think his short put is right.
Oh, he's fine.
Yeah. I think he's good. Yeah,
he's fine.
I was thinking about you today.
He's totally fine. Now, like I said, we were going to look at love. I kind of didn't see, I read it today, so I didn't see AAL. I'd like to take a look at the AAL. Tesla has earnings and IBM has earnings. Those are the big ones today until next week. Intel and Newmont Mining are big because I have them, but not big because they're big. Do you know what I mean?
Oh, Intel's tomorrow.
Intel's tomorrow and Newmont Mining is tomorrow, and I have both.
I'm going to get on a plane and draw. If Intel crashes on earnings, I'm just going to get on my plane and draw my sorrows. I'll get the...
It's going to be fine. But once again, I just want to be clear. Tim Knight, when he says that, that's not through earnings.
Oh, I know. And maybe I shouldn't have taken all my protection off, but if I have puts to protect my stock and the stock goes down, if I don't sell out those long puts, then, then it's not helping me really. Like I always do that. I always sell out my puts. Like Oklo today, I sold some of my puts. but not all of them.
And Oklo is down. Oklo is down huge. I want to take a look at that. I will take a look at Oklo, and then I'm going to close with looking at Tesla. I don't know that we're going to put anything on in Tesla, but here, Oklo is 118. Take a look at this rise and fall. But I mean, it doesn't. When I look at this, I mean, don't get me wrong. It is from a high of 190 all the way down to 118 in quick succession, but it got up there just as fast.
But here's what I'll say, Liz. This is what, like, any tasty trader who's watching is so lucky that we understand options and know how to use them to help us. So am I losing money today in Oklo? Yes. But would I be losing a lot more if I didn't have some like downside ratio spreads or brokering butterflies or other things on top of my position? Yes. And so I had two people today who really, don't understand how to put on a downside brokering butterfly or put on a ratio spread or sell a call to buy a put spread, and they're in worse shape. Like I had someone text me today who's just long stock and said, what should I do with my Oklo stock? And they don't know how to use options to protect it. And I just said, easy come, easy go. What are you going to do?
And this is what you also said to the UPS person, because the UPS person asked you a question.
Oh, gosh. I walked into the UPS store to mail my son a box of Halloween treats. And he's like, thank God you're here. I'm short in the money puts in.
Why did you give it to me?
I didn't want to task you with something else.
You were there. Did you have it in your car?
I didn't want to bother you with something else. You have so much going on.
I'm seeing him on Friday morning.
And the delivery is coming to him on Friday. But I didn't want to put one more thing on your plate.
That was nothing. I totally could have. Now I'm going to have to carry a case of beer and the bag of candy I got him down the block to the coffee shop.
Anyway, I walk into UPS and the guy's like, thank God you're here. Hood has earnings. And I don't know. I've got in the money puts. What do you think? So... But again, I said, well, maybe a downside brokering butterfly to help you on the downside. But he didn't know how to do that.
He had short puts, so the guy's zinging puts.
Yeah.
I like it. I like your UPS guy.
Well, I gave him a word of caution. I told him, as far as I can see, Hood earnings are not this week.
No, I don't. They are November 5th.
Okay. I didn't have my laptop with me in the UPS store.
You're like, I'll be back before next week.
I don't know. I didn't know what to say.
And I do want to look at this, and I want to look. Wait, do we want to put anything in an AAL? Probably not. I mean, we can do an after earnings trade. This is the only thing my eyes are going to be on today. Tesla after the close, because I have to email or text my son immediately following because he's long.
Oh, he's long Tesla. Should we get long with JD?
He's been long for a while. So when was his birthday?
January. He got in long in January.
Yeah, he got long in January. His birthday's in November, but he didn't get long until about right here. So he's doing okay. He wrote it all the way down. Once I say he's got 2 shares. So the expected move, and that's why I was trying to tell him, I was like, you're either going to be out $60 or you're going to be $60 richer tomorrow, because the expected move
is 2 shares and $30. Can you believe the expected move is only $30?
Well, the rank has slightly come down because I've been keeping an eye on this. And I mean, that's small. It's small.
I mean, I don't know what to think about Tesla. But I know everyone I know who has Teslas are just giving them away.
Are they?
Yeah. I don't think you get much for selling them. So I have 2 friends locally who are just giving their Teslas away to 16-year-olds because they don't want them anymore. Really? Nothing political. Nothing political. Just because it's they don't hold their charge here in the winter in Chicago.
Oh, I did not know that.
Well, and I don't know. That's what they say from using it last winter. If for people who have to drive far.
Yeah, I mean you can't. I mean that would scare me.
That's they're very cold. And very very cold. And I don't know. That's just what I've heard. But I'm not reporting bad news for Teslas.
I know. Wow, Jenny. Should I get JD out of his stock real quick before the Chicago winter comes?
No, but one of my friends drives far, and he says he gets nervous with the battery charge when it's when we're having
the cold snap. I mean, the Chicago is the rip your face off cold. Yeah. Okay, I just want to look because we're going to take a look at it after the fact. Let's look at AAL. AAL is a $12 stock. It's got a 27 rank. Earnings are tonight, and it's down 2% already today. I'm just saying because I might want to jump into after earnings tomorrow.
Yeah, or sell the 30-day. Sell the 30-day. It's only 60 cents.
That's what I'm saying. I looked at it and there's nothing. I mean, it's got a 27 rank. It's kind of that's what we were looking at.
Hey, just buy a call.
if you're looking, I don't know that it's going to go up. That's what we're looking at in love. If you're going to take, I like love a lot better. I can go to the 32 and the 30 day and get $500. Should I ship it with 30 seconds to go?
No, because I'm only going to say, like, put your money where your mouth is. Like, we've all kind of switched. We all used to be Southwest fans, and now we all fly United.
Now we're United or bust. They're down 4% today. There's no earnings on the horizon. This is what we're going to do tomorrow, Jenny. We're going to put a Jade Lizard in and you all.
Jade Lizard and you all tomorrow.
Because we missed it. It's so hard with last call. All right, Jenny, we are out of time here. It's done and dusted.
But you know what? I liked having Tim Knight on. I think that would be great if he would come on again and we could have a little crossover. It's nice to talk to him. I'm going to be listening tomorrow on my way to the airport to hear what he has to say about Southern.
Oh, I love to cross over. I thought he was great to have on. I would love to have him again. We'll see. You're going to have to ask this time. I asked nicely last time. All right, everybody out there, stay tuned for overtime. The boys are waiting in the wings. They are a wealth of knowledge, and they are our macro guys. So stay tuned for them. Other than that, remember to trade small, trade often.
Laugh with us, learn with us, and watch Last Call. We'll see you tomorrow.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so back, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the four little things as
four things.
One big...
The four little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
Be nice? Be nice?
The best part.
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field, most likely before the game.
You're going on the field, most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof.
You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live.
We're already out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
And we are back on what is still a confounding week for all kinds of assets. I'm OSP back here in San Francisco. That's Dylan Radigan in Milan. Mr. Mike Butler back with us, our returning champion in Chicago. Of course, this is overtime, and we're going to try to make sense of what these markets are doing after hours while keeping an eye out for these Tesla earnings. They should be showing up any moment now, theoretically. Obviously, Netflix didn't do us justice yesterday. The markets didn't like them, but it doesn't seem like today's indigestion in the markets had anything to do with that. Gentlemen, what do you make of this? We kind of gave up momentum today after barnstorming at the start of this week.
Yeah, it was kind of crazy. I mean, we had I was on the show today when we had that flash 30-point sell-off that has since been gobbled up. But we're seeing some resistance here. I thought it was just going to be a rocket ship like up here, but we didn't get that. We're getting another big range today of uncertainty. However, I will say volatility futures did not move at all today. We are still in contango, and that's, I think, even more interesting than this intraday move. Like this move today, I thought would have created more of a flat vol curve and more of a spike in vol futures. You did get a little boost in the VIX itself, but even that got crushed to end the day. So it may have just been an algorithmic digestion of something that was said about two countries working together or not working together. And then maybe it was walked back. I don't know. What do you guys think about it?
I mean, Dylan, at this point, I'm going to go back to my sort of default position. Forgive me, which is that all thought is bad thought.
That's fair.
Thought, the enemy of progress.
Well, I don't know about progress, but it's the enemy of profit for sure. So I've been through this more than once, as we all have, and I'm actually very grateful that our celebrity guest host for the day is Mike Butler, who is a strong subscriber to the buying of the dip, as it were. And I would say anytime this thing gets squirrely, obviously a little squirrely today. But again, like I fooled myself with some thinking a few days ago because we had that big sell-off. You can see the chart. All things. I didn't care about this. We fought our way back. But then last Thursday, 6 days ago, we found ourselves in another sell-off, which I misinterpreted as a result of my thinking as, oh, this is a negative sign, blah, 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 blah. But actually, it's all an opportunity to buy the dip. I mean, there's nothing more reliable than buying assets when they are on sell-off cycles. So if you have a sell-off cycle today, it has to be an opportunity to acquire assets. It's the only reason, it's the only reliable thing in this entire market is the tendency or the reliability of buying these sell-offs, including the one today.
In fairness, the sell-off today does ultimately find support where previously it had resistance. So that range that got carved out last week as the markets were digesting the holy moly sell-off on October 10th, that carved out a little range. At the start of this week, we stormed through the top of that range, of course, ran directly into the highs and stopped cold right there. Couldn't make it over. And as we pull back today, we pull back to the top of that range, but pointedly, we don't get back into it. We don't break back down. So whatever upside breakout there was on Monday seems to be holding for now. Obviously, Tesla pending. In my mind, when you start to unpick what the markets did last week and this week in the wake of that big sell-off, I don't think we're prepared. I'm certainly not prepared to declare that that big sell-off wasn't the mark of a major top. Obviously, that major top was going into a week with lots of earnings. And last week, we tested this theory. Last week, the markets attempted to rally and attempted to rally again and attempted to rally again day after day, and they couldn't stick it. This week, obviously, they started much stronger, ostensibly because we have actual tech earnings with significant market cap this week. We didn't have that last week. We just had the banks. So you go into this week and the markets even out, essentially. They erase the October 10th sell-off. They basically reset. S&P resets, NASDAQ resets. They don't manage to do anything more. And then the day that the earnings actually start, which is yesterday, because Netflix is kind of the first of the two that matter, the two big kind of market cap behemoths this week. Before Netflix, everything stalls. Netflix overnight disappoints. We get a pullback. Now we get Tesla. In my mind, we're still looking to figure out whether October 10th was the real deal. And we don't know.
But don't you think we do know? I mean, we've been at this for a decade.
I don't think we know, because I think there is the obviously correct assumption that we are in the midst of a technological transformation akin to telecoms, akin to railroads, akin to the radio, transformational things. Our friend Andrew Ross Sorkin just published a book called 1929 about what led into that debacle. And he was just talking about it on Bill Maher's show last week and sort of very nicely illustrated. We went into that with this level of exuberance. Only that time it was the radio and RCA. And the RCA was the NVIDIA of that day in terms of market cap, in terms of level of speculative fervor. That doesn't mean that we're going to collapse here. Now, who knows? But it's not like we haven't seen this movie before, and it's not like that collapse canceled radio. It didn't. The collapse of the .com episode didn't cancel the internet. So when we talk about, okay, well, there's a supernova afoot, obviously there is. The question is, at what point do you get the kind of initial washout before the real thing has a longer arc? Where does the kind of hype cycle initially that always accompanies these things in the beginning, where does it hit a wall?
But don't you think that that's like the exception that proves the rule? In other words, that like it's easy to point to the situation that says this horrible thing is going to happen.
Right.
But 99% of the time, the horrible thing is not what happens. And worrying about the horrible thing that's going to happen is a way to not make money.
I mean, if you're talking about 99% of the time on a given day on the way up in a bubble, the horrible thing isn't what happens, then yes. But if you're talking about 100% of the time, these kinds of things end in a debacle, that's likewise the case. And we can go back to South Sea warrants or railroads or whatever great technological breakthrough you can think of post the Renaissance, which is about as old as we have.
But the
data.
fact that you can refer to these situations indicates how exceptional they are. The fact that there's a book that's a bestseller, that's super popular, that everybody's talking about 1929, it's not an indication that that's going to happen. It's an indication that it's so unusual and so extraordinary when it does happen that it's worthy of a book 100 years later.
What it is a distillation, and we've seen similar ones from Dalio, from Howard Marks, from you name it, people who study these things. is that when these types of frothy situations occur around the advent of revolutionary technological change that is transformative for the economy, this happens every time. So the question isn't, is this exceptional? It's not exceptional. It's not exceptional at all. We don't get transformational technological revolution on a regular basis. That's the part that's not exceptional. But every time we get one of them, there's this kind of sequencing to it. And so the question here, in my mind, isn't is it going to happen again? Of course it's going to happen again. The question is obviously from the perspective of timing. And to your point, if you're an investor, then of course this is exceptional in the grand arc of equities generally being biased higher over a period of decades.
But if you're a Tasty Trade customer or a Tasty Live viewer,
yes.
Are you going to spend your life being Mike Butler and buying the dips when they happen because you make money 99% of the time?
Mm-hmm.
Or are you going to spend your life trying to set up for the one time in 100 years that the whole thing falls apart?
I think you set yourself up for both, and the watching of price action becomes a critical exercise in that sense. Because, again, it's not that this happens once in 100 years. It's that this happens every time that there is one of these transformational technological booms. I mean, the last time it happened was 25 years ago. So when you look at this and you say, okay, all the ingredients are there, but the price action doesn't tell me the holy moly is upon us, well, then you do the Mike Butler. But if the price action tells you, hold on a minute, something is different, you back up. And if you're a glutton for punishment like me, then what you do, despite all of your best risk management efforts, is when you see the thing get weak-kneed, take a stab at it, take a little loss, and that's going to be inherent because the bubble is going to be the bubble until it's not the bubble. So there's going to be a lot of this that goes wrong. So as long as you manage the risk and lose a little, the hope is when the inevitable is upon you, you make back multiples of the little losses that you made along the way.
Yeah, I think there's something to be said about both angles, but this is where like the Tasty Live viewer comes into play in the sense of like making more intelligent decisions. Like even if let's say you want to buy the dip all the time, I'm always going to revert back to the vol futures. Like if I see a 60-point sell-off in the market and I see no movement in vol futures and contango in vol futures, I am way more willing to buy the dip in that environment than if I see a Friday movement where you've got a 150-point sell-off paired with a 3% move in the front month future, which put it 2 points ahead of the next one. The second you go into backwardation, all bets are off. And I think that is the most important thing to learn from a vol curve standpoint, because it speaks to both of your points of, I don't want to think, I just want to buy every dip. That applies to me in the contango futures market where we have low volatility. But when we go into backwardation, if you look at the past 10 years of big sell-offs, 20% or 30% of the equity markets, every single one of them had backwardation in the vol futures. So if you just pair that with, if we are in backwardation, I take the foot off the gas. But if we're in contango and I see a sell-off, I'm just going to buy that dip until proven otherwise. But at the same time, you can't go crazy with it because these vol futures will change on a reflection of something that's already happened. So we were in contango on at the beginning of the week where we sold off 200 points. But on Friday, we went into backwardation after a 200-point sell-off. So you have to be mindful of that as well. But I think buying the dips, it still makes sense to do so, especially as those moves grow and grow to the downside. Like the tariff stuff is a great example. At a certain point, and that speaks, I think, to how markets are now versus how they were before. Now you have 10 companies that basically control the market. Before, it was similar, but not as extreme. Like the extreme valuation of these companies that rule the market, at a certain point, when people see and when retail traders and institutional traders see that these companies that are not going anywhere are down 30, 40, 50%, at some point, somebody's going to step in and that creates the reversal. And I don't think we will be, I don't foresee a situation where we have markets that don't have those velocity moves to the upside and downside, even when we have super turbulent times. But even in like the worst case.
My whole concern is that there's 1,000 reasons always for why the market can crash or can decline substantially or whatever it is. But I'm just going to come back, not like a broken record, but that so much of the time it's a situation where that doesn't happen. And so you get yourself into a situation where all the thinking tells you that this is not a good idea, that this is not advisable, that you don't want to do this. But at the same time, 99.9% of the time, the correct decision is not to get lost in that analysis, but rather to take advantage of the fear and the anxiety, and then ultimately buy the assets.
Which is, I think, exactly right. And why you have to look at the price action, to Mike's point, and not just the sort of baseline price action, but the architecture of the price action. What's vol doing? What's price action doing relative to vol? Sort of, where are you? Because you can't, I think, blindly buy the dip in this environment. But also, that's been the thing that's worked, and it will continue to be the thing that works until it doesn't. And there is no telling when that is. Macro, my discipline du jour, is notoriously terrible at timing. And so if you don't anchor yourself in the price action and you just spend all your time thinking about all the bad things, Dylan, to your point, that could happen, you'll miss everything all of the time. You have to let the price action be your lens.
I mean, what price action exactly are you talking about? Because the only price action that I see is every time you get a decline in prices, the beneficial trader is the one who buys the decline.
Take a look at the S&P 500. It hasn't made a new high since October 10th.
And since anytime there's been a pullback, it has ultimately returned to an ascending.
It got rejected from it again today.
We're sitting in a range now. Short the S&P, or are you better off to buy the dip?
I think if you're a trader, then you are much better off short the S&P as a new allocation of capital, because the risk reward is orders of magnitude better. Now again, as a trader, laying out fresh money, not a long position you've been sitting on, not anything where you're fighting other exposure that you might have. If you're looking at this with fresh eyes and you're saying, okay, right here in the S&P, am I closer to a top? Do I have more room to go up or more room to go down? And I think very clearly, until you break the October 9th, 10th highs, you have very little room to go up because they're still holding you in. Now, if you break those levels, it's a different story. The whole risk-reward math is reset. But as long as you're sitting under those highs, you're much better off short. That's much better odds. Your risk-reward is many times over better. Because if you're wrong a little. And if you're right, you're very right.
And
I just feel like, go ahead, Mike. Sorry.
By short, you mean like spreads? Like, are you saying like
risk
shorting?
Carefully, small risk defined verticals that, for example, I'm doing in SPY and the Qs because I don't even want to go to MNQ. Even that's too big because you're fighting a market that's not going that way. So what you're doing is you're taking opportunistic pot shots with the idea that anytime you have no idea when this thing is going to turn, and chances are it'll rally in your face until it doesn't. And so what you're doing is when this thing looks weak kneed and the risk reward looks good, you take a little nibble and you see. And if it goes, it goes. And if it doesn't go, then you lose a little. And you can do that 10, 20 times. But if the turn becomes what it becomes, and as it inevitably does in these scenarios every single time that we have records of anyway, then all those 10, 20 micro losses get absolutely swamped in what is an avalanche of selling. And then you buy that dip.
It all comes back to buying the dip.
But that dip is a 20% dip, not a 2% dip.
Yeah. No, I hear you. But yeah, I think when markets that are at highs, when volatility is low, in hindsight, that was the perfect situation to try and take advantage of something like this that we did not yet know was going to happen. But now we have a little bit more elevated IV, which is going to increase the cost of something like this a little bit more. But yeah, I mean, a 20-point wide diagonal spread where you're reducing the cost basis by 30% on the long option you're buying with the sale of a short option that has half the amount of time is a nice hedge to the downside. Even if you're wrong, you can move this 20-point wide that you paid $8 for. You can move this into a 10-point wide and reduce basis even further. And now if you have bigger long-term upside plays, this doesn't even matter because you've offset it. So
no.
Yeah, I think
that's exactly it. You're opportunistically saying, okay, yeah, vol's a little bit higher, right? There's no free lunch in markets, but you do have a range that extra vol has now carved out for you in the S&P, in the NASDAQ, where you have a near-term bottom where the October 10th thing landed, and you have a top. And so you have risk-reward guardrails where you say, okay, if it goes above this high, I'm wrong. If it goes below this low, it's a bigger sell-off than just another point of consolidation. And so if you're near the top of that range now, you go, okay, yes, I have to pay up a little bit more for vol, but I have very clear risk-reward parameters. So in waiting for this range to set up and in waiting for vol to go up, I've basically spent a little bit of money inherently to have very clearly defined barriers to say, let's take a stab at this thing while the risk reward of 2-to-1 better could be had, and let's see. And if it fails, it fails. And the next time you attempt that isn't when it makes a higher high, it's when it gets cold feet again. And so you try again.
Yeah, I think it's fair.
I just don't see how you can advise. I just don't see how you can advise. I mean, how do I say this? I just do not see how you can advise anything other than buying the dip. Yes, there is a chance at some point that something will happen that is horrifying and a catastrophe of sorts. But at the end of the day, 99 times out of 100, what you're dealing with is an opportunity to buy assets at lower prices in advance of a rally. It's just what it is. I mean,
I think exactly why you have to look at the price action. You can't just be selling into rallies because you think that eventually they're going to fail. That's a recipe for disaster.
What specific price action are you looking for, and what does it communicate?
On October 10th, we set a high with a massive sell-off we have not been able to overcome that high. Every time we attempt to come back from that high since that sell-off, we fail over and over again. So when you fail again at the same high, you go, okay, maybe this really is a top. Let's take a stab and let's see. And if it takes out that high, then it's not the top and you lost a little. But if it is that high and the thing turns into an elevator down, you have made many times over what you're going to lose, which is why you use verticals, risk defined, why you use smaller instruments like the ETFs, in my mind. But why you would also run for the hills were you to break that high.
Yeah, fair points. But yeah, I think, again, it's hard to time when the collapse will happen. But
Almost
even
impossible.
when it does, and this is why, like, if you're exclusively investing in SPY or the Qs, for example, even when it does, your worst case scenario is 30-40% down in a year. And to Dylan's point, if you can absorb that, you now have a basket of opportunities to do whatever you want to the upside, because
long as you didn't tie up all your capital in holding forever and you were nimble as a trader. Again, if you're an investor, and I do that also, just not with the same brain and with the same strategy, but if you're an investor longer term, then all of these washouts are just reasons for you to keep some powder dry so you can buy more without getting out of your long-term holdings and just accumulate forever, decades on end. But that's not what we're doing here. We're opportunistically trading markets. And in a 45 DTE world, when you've had the kind of run we've had, and when the history of these runs is what it is, they end in tears every single time. You just don't know when. The question is, could it be in the next 45 DTE cycle that it ends in tears? Yes. And you just have to know that and be ready for it. And if the opportunity presents itself to say, well, maybe the market, the price action is tipping its hand that it might be here, take a little nibble. See what happens.
How about Tesla? Down 8.
So interesting reaction here. Shall we go over the results here?
Sure.
So Tesla, third quarter adjusted EPS of $0.50 or 50 cents. That's a miss. Expectation was 54 cents. And the GAAP EPS is 39 cents. That's a miss versus 62 cents expected. Revenue of 28.1 billion. That's a little bit of a beat. 26.4 was expected. Operating income of 1.62, a little bit below expectations of 1.65. Gross margins of 18%, better than 17.2% expected. Free cash flow is the real standout. 3.99, almost 4 billion versus 1.25 expected. So really a huge beat on free cash flow, but soggy on the earnings. Obviously, the real question is what happens here going forward, because that EV credit is expiring, and that's going to change this landscape completely. So the guidance will be really important here.
Yeah, it's well within the expected move. Only down 7 points now, rallying off the lows. But yeah, I feel like we've seen this a few times with Tesla, where we have this implied move that's significantly greater than what we actually get. It is very interesting to see.
Yeah.
But I mean, don't you think, again, that's an opportunity? Tesla, anything is an opportunity to buy Tesla. I mean, there's nothing more significant than what we've been talking about for the last whatever half hour. Then it's an opportunity to buy Tesla. I mean, whatever it is, any decline is a decline that is an opportunity. I mean, there's nothing more, there's no better example.
I mean, this is really the key, right? Like when we say every decline is an opportunity, I think we have to qualify the size of the decline, because clearly not every decline is an opportunity. We can see it in the Tesla chart. There are days where you get a sell-off and then the next day you get more sell-off. So if you bought the very first down day, there's plenty of instances here where you've lost money. So in a trading world. So, and in fact, if you look at where Tesla is at the moment, I mean, we can see it, I think, clearly here on the chart that we have up on the screen. Tesla is only back to where it was essentially mid-December of last year. It clearly had a massive sell-off from mid-December all the way through mid-March of this year. If you blindly bought every one of those dips, you'd be down money most of the time. And at this point, if you just held, having bought that first dip near the top, you'd be barely break even now. So obviously, not every dip is a buy. Clearly. The question is, how much of a dip is a buy? Because when we say, oh, we'll buy every dip, buy every 1 day dip, every 1 week dip, every 1 quarter dip, none of that is consistent, especially for Tesla, which is just barely back to square after its early in the year sell-off, in the sort of grand scheme of things. So again, it comes down to price action. In my mind, anyway.
Well, I think it comes down to price action. It comes down to liquidity. It comes down to company size. Like, yeah, when we say buy every dip, I'm agreeing with 20%, 30% discounts on Mag 7 stocks or tech stocks that are not going away, or even airlines. Like when we see a sector get bailed out, that's a green light for me if it ever gets back down to those lows. Like it's a scenario where if we are not letting a company fail, I think that's an even better opportunity to invest in a company. But that's, I guess, maybe another discussion. But to Dylan's point, if you are SPY, QQQ only, it makes a lot more sense to buy more dips, because these are not companies that are going to zero. These are charts that, if you look at these charts, even in the worst case scenario, these get gobbled up quickly. Like this is obviously a longer time frame, but this has been insane. We've seen big velocity to the downside and upside. Here's COVID right here, and then we just rocket shipped. But that's again because these companies benefited greatly from everyone being locked inside of their apartments and homes. Yes. But yeah, these products, the Qs and SPY, I think I'm more inclined to buy more dips. Companies
of course, they're much more liquid. Their dips are likely to be shallower almost by definition.
Yeah, totally. Products like Tesla specifically, I want to see a bigger dip. Like I want to see 10%, 20% or more before I'm like, yeah, definitely getting into this. But like Nvidia, I think I'm more inclined to buy more dips on smaller moves, because this is kind of rating the companies that I personally believe are not going anywhere and will continue to go to the upside. But naturally, you have more volatility with Tesla. So higher vol products that give you realized moves, I think it's easier to be more patient because you've seen bigger sell-offs, bigger moves, and bigger opportunities in the past, where Nvidia, I guess you could say the same in this short period of time. But if you think this thing is going to 400 eventually, and that's your thesis, then I think you need to acquire for that idea ultimately in whatever way you want to, whether it's short put spreads, long stock, long call leap options, like, and that's another layer. Like if we see another tariff situation where Nvidia gets cut from 180 down to 90, I'm going out to the 2028 leaps and I'm just going to buy the 200 strike leaps. Like
which is a whole, yeah. I mean, that's a totally, yes.
Yeah.
That's no longer a 45 DTE conversation. It's no longer the kind of opportunistic thing you're talking about. Now you're saying, okay, forget investing into cash equities and big funds over a 20, 30-year time horizon. Forget also the kind of jumpier, more opportunistic month in, month out, month and a half in, month and a half out type of thing that we're talking about here. Let's talk medium term, somewhere in between that. I mean, I'm doing this with EWZ, which is one of my big, long equity positions, where you had a big breakout. If you look at a weekly chart, you can really see it. You had a long structural decline. Take a look at a 1 week. Yeah, there we go. So you get a long structural decline, and then you broke that decline. I mean, that to me is okay. So buy a bunch of leaps and wait, and when there's a dip, buy more, because you're not going to figure out what's going on in Brazil to this level of granularity day in, day out. But obviously, something has changed. The big picture is different. Take your shot. Which, I mean, I think I've been holding them now. Let's see. I have been holding these EWZ calls for 170 days, and they don't expire until mid-January, and I'll probably roll them for another year.
Yeah. I like it. There's layers to these things. There's layers.
I mean, it's a different type of an idea.
Speaking of layers, there are gold shavings flying from the rooftops.
I love
Dylan,
it.
I know you were short gold, long dollar. Are you flourishing in this move, or what are you doing here?
I mean, what I'm doing is kicking myself because I really just popped up on being more short gold than I am. Long dollar, fine. But again, if you saw the conversation with Jamal, I was all verbally like, oh, short gold, blah, blah, blah. But I honestly didn't do it beyond the sort of existing sort of Radigan trade, which is marginal, and kicking myself. And so, so I got a big mouth and a small bank account as a result. So good luck to you with that, but at least I have the sort of moral gratification of being right.
There's always that.
That doesn't pay the rent. And so the real question is, what do you do with gold now that it's broken?
So I have a whole spiel on this that I'm going to do on macro money right after this, but I'll give you guys the sneak peek. What this sell-off did in gold was end a 9-week rally. Consecutive 9 weeks of gains. The last time we had a sell-off of this size, over 5% in a day, we also ended a 9-week rally. And in fact, that was the last time we had a 9-week rally. And that was early August 2020. Going into that month, Jackson Hole, where the markets, and this is just context, where the markets thought, the Fed is going to do something on top of open-ended QE and rates to zero because COVID, yada, yada, yada. And then as you started to get into August and into mid-August, and it started to be more apparent that no, the Fed is not going to do more, that they're not going to do negative rates, that they're not going to do yield curve control or some other form of extravagant, unorthodox easing that gold topped. And so then as now, you had 9 consecutive weeks. Then as now, you get an over 5% daily sell-off to put the top on those 9 weeks. What happened last time, and again, this is a sample space of 1, so this is exactly Dylan, the kind of situation that you were talking about where sometimes, rarely, a thing occurs. So 5 years ago, this thing occurred that was almost identical to this in terms of its setup. And in fact, the last time it set up this way was then. You got a decline from that high then of 19.2%, which amounted to a $398 decline at the prices that were there then. If you look at it now, if you had the same dollar price decline, $398, that's a 9% decline in this market. You essentially already ran that move. But if it was a 19.2% decline like it was last time, then you'd end up at somewhere around $3,400 for gold. That'd be a decline of $841, give or take. We're maybe halfway there, but we have more to go. What's interesting is that if that's the model, then you're back to exactly those swing highs at around 3,400. That would be the natural support, or at least point of friction on this chart. So in my mind, who knows which of these scenarios it is? Are we done or are we not done? But I was sharing my annoyance yesterday. I had no idea, Mike, that we had 1 ounce gold futures, because when I saw it roll over overnight, I was like, oh, damn. I don't want MGC or GC as a futures short outright overnight. If only there were something smaller. No, I have to wait to do this through GLD when the cash equity open occurs. Had I known, and this is my own ignorance, that there was a 1 ounce gold future, I would have sold it overnight and participated to a much greater extent. Instead, I'm selling calls, a call vertical in GLD. And it's making a little bit of money, but not much, because obviously the bulk of the move happened before I got that off.
Yeah, this is a nice small product. I have not personally traded this. I have some short positions in GLD that one of them I put on many moons ago, 345, 335, which somehow is actually still possible. But this 370 calendar is what I put on. Speaking to, like, if you're going to short something, stay really small, defined risk. Like if we get down to 370, this actually was doing a little bit better this morning when we were closer to it. But this is a $200 trade that I'll be able to get $100 out of it if we go to 370 in the next week or two, or tomorrow. But yeah, strong return on capital for very little risk. And this diagonal is certainly more return on capital for a larger amount of risk. But yeah, when these products are moving, especially GLD or gold futures or whatever, we've seen the realized move far exceed implied volatility. And what's funny to me is now with gold selling off and showing some resistance from the moonshot it took, you're seeing volatility collapse a little bit, which still 27% implied volatility for a product like gold that is whipping around every single day. These do not match. So I'm not selling premium undefined risk in here. You can still sell premium defined risk to create more of a range to be profitable. But these are the environments where I like to be debit directional when I see a 20% IV product moving around like a 70% IV product.
Yeah.
I was going to say something else, but I forgot. The 1 ounce product. Have you traded it yet?
No, because I realized that it was there belatedly and frankly by accident. I was typing in the quote for the 10-year future, and I sort of mistyped and stumbled out. And I'm like, wait a minute, what is this? I didn't know that it was there. If we get a meaningful break, I might use it to add to this exposure, because I mean, a tenth of the margin that you would pay up for MGC, and yeah, it's probably not going to be that liquid, but okay, do market orders. It's small enough.
Yeah.
You're going to get probably a little bit of slippage on the way in. All right. The same way that you would do with M6E, M6B, M6C, all the kind of micro currency futures. You can, there's no options on them, but the margin requirements are so small. I've just been putting them on. Just directly buying the futures, selling the futures. With these 1 ounce gold futures, you can do the same thing. It's comparably small margin outlay. So I'm probably just going to go straight. If I wanted to add to this gold position, I'm probably not going to be adding at this point through more GLD. I am probably going to be adding through those futures directly, just buying and selling them.
Yeah. That's how I prefer to do it too with some of these products, like not necessarily MGC, but MCL.
Yeah.
That one is, I've been trading this for many years, just straight up long and short, not mostly long contracts or short sometimes, but usually long if we dip down here. I closed this one today for like $160, but I prefer to be
mine too.
I prefer to be static long when you have a two-sided market like this. Gold is tougher because we have not seen a two-sided market until the last couple of days. But if you look at any annual history of crude oil, you see opportunities to get in on the downside, opportunities to short on the upside, and there is plenty of two-sided action. And I love these as a vehicle for trading because as long as you're small enough to where you can absorb literally a move to zero or doubling it, it's great. It's just kind of like a set it and forget it. Wait for something to happen that's an extreme and then take the other side. It's been a nice trade for sure.
Well, yeah, and when it's small enough that you can just use market orders on the way in and out, and you don't really care terribly about a little bit of fuzziness, you don't need to force limit orders on it because it's small enough that's okay. The flexibility this affords you is amazing because you can manage your exposure overnight. If you see, for example, like this case was a perfect use case. Gold was starting to get weak need before the U.S. cash equity open. It started to come off overnight. The futures are the perfect vehicle to go, uh-oh, here we go, and take a shot. And the 1 ounce futures let you do that in a size that's reasonable. Unless, of course, you have deep pockets, in which case, Godspeed. But I'm trying to keep my size contained as a risk management thing.
Fair enough. How about the moves in bonds and rates today, or really this week? It's been kind of wild.
I've enjoyed them. I'm long a TLT vertical that I've been adding into. I've had it for a while. I don't think there's any reason to get off the boat. It's part of the reason why I've been bashing the desk, screaming that this gold move on the way up or on the way down is obviously not any kind of debasement narrative, because since mid-September, bonds and the dollar have been going up with gold. So obviously it's not acting as any kind of foil. Obviously this is not some sort of debasement of U.S. Dollar-based assets. If you're arguing that, stop it. The price action is telling you that that's not what's going on. So I'm still long. It seems to still be working.
I like it. Yeah, it's been a week for these markets. That is for sure.
I did take off my crude oil short today. That bounce today spooked me out of it. So I made my money. Thank you very much. This is a hat tip to Mr. Westwater, who said, "Oh, we've probably hit a new level of support there at the April lows, and we're probably going to carve out a new range." Certainly made a move to do that today. So once it started to come off that support, I opened the markets this morning about 10 Eastern, 9 Central, as I was about to take the kids to school, and said, okay, it's that time. I've overstayed here. Time to go.
I love that. They're like, "What are you doing, Dad?" "Just closing my crude shorts."
Yeah, don't worry. Just eat your Cheerios. I gotta get out of these crude shorts.
Dylan, you've got a ton of the big tech names reporting earnings in the next week or two. What are you most excited about? If there's one or two that you have handpicked to not miss.
Amazon. Amazon is my favorite name in the Mag 7. I've said this over and over again. I mean, I like how Apple's behaving on the back of the iPhone 17. I like Google on sell-offs as a result of sort of ChatGPT browser jitters. But I think of all the names, Amazon is the most interesting name, full stop, just because it has not really performed the way that some of the other Mag 7 have. I think they've got I think all of them have rabbits in the hat. And I think that Amazon is the one that's due to pull a rabbit out. I don't know that that's earnings related specifically, but I do think of the Mag 7 that Amazon is the most interesting name to load into a little bit on the expectation of a big bump. And I think Google is the most interesting in terms of any sell-offs that happen as a result of ChatGPT jitters. And I think Apple is the most interesting in terms of its overall behavior, just in terms of a trading perspective.
Yeah, I would agree. I think there's opportunities in the market now, but when we're at all-time highs and the VIX is at 10 or 12, like wherever it is, you may ask yourself, how can this thing keep going? And then you look at names like Amazon and you say, oh, this thing is 5% or 6% off of its highs. There could be a rotation into this and out of others, and that's how that works. So yeah, I think calling out the tech stocks that are not yet at highs while these others are, I think is a strong conviction point for those looking to get long into a macro move like this with earnings on the horizon for sure.
Yeah. I mean, this is now going to be very interesting because, of course, we are basically done with the big cap earnings, at least in the kind of Mag 7 tech adjacent holy moly space for the rest of this week. And now we've got these CPI numbers on Friday and the PMI numbers to come with them. Yes, we're going to get earnings, but I mean, just look at the bank earnings last week. It's not like those were insignificant names and the markets could not make hay of any of it, this way or that. It was a hodgepodge. Some missed, some did well. Which ones rose or fell had nothing to do with the earnings results. Some rallied on bad results, some fell on good results. There's no rhyme or reason that was easily discernible until you got basically to Friday and you said, oh, okay, on down days, everything is down. Even when they beat on up days, it's kind of a wash. So for the rest of this week, I'm not even sure the earnings calendar matters. I think we're going to have to get some big tech names again next week to even think about this again.
Yeah, you've got Amazon, Apple, Google next week on the 29th and 30th. You've got Microsoft on the 29th as well. And Coinbase actually was after the close today. No, sorry, misread that. On the 30th. So yeah, Coinbase, handful of the big tech stocks. Intel is tomorrow. That could be interesting, given the recent surge here. But yeah, we got plenty more action on the next earnings reports coming out for sure.
We do. Next week is going to be heavy with all kinds of stuff.
I mean, is earnings the thing right now, or is it really more price extremes? I mean, what is the dominant consideration for this market right now? I mean,
my theory is that since October the 10th, it has been price extreme, and that the market has fundamentally changed in its risk appetite profile. But of course, to your point, we could be one great tech earnings report away from the markets going, the hell with it. Run it up again.
Agreed.
With that, I suppose, overtime is out of time. Don't go anywhere because this conversation continues in mere moments as I try to make sense of this gold move, what it is and what it isn't. And in the meantime, we'll come back to this conversation in 23 hours' time. I'm Ilya Spivak in San Francisco. That's Dylan Radigan in Milan. Mike Butler in Chicago. Thank you, gentlemen. Everybody stay put. We'll be right back.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days. I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Watch the world fly by. Watch the world fly by. We're making our own way. We're making our own way. We're making our own way, yeah. We're making our own sun is up, it's a perfect day. Hitch a ride on an ocean wave. Take my hand out, show you the way. Woo! Saw you talking to somebody, telling them it'll be okay. Got the sand and we're running away. 'Cause you know we're getting lazy now. We gotta show you how. We'll do it even if it's not allowed. We gotta show you how. Sweet and sour, you pucker up.
What in the world is going on with gold prices? That's what we're going to attempt to figure out today. Obviously, there's been less of an exciting story to be had with stocks that have oscillated back and forth, though, of course, we'll take a look at that as well. But gold prices have really stood out this week with some tremendous moves. And we're going to try to figure out how, in the absence of a clear lead from economic data or monetary policy or some such thing, that all this is going on and what it might mean. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And this is going to be another one of those fun exercises that we've enjoyed since the start of the government shutdown, where we try to divine the macro narrative without the benefit of any economic data or anything immediate from the sort of usual channels from where such things tend to be inspired. And instead just go to the price action and try to see what the market is actually saying here. So let's look at that price action. We have here today's performance. I think we can clearly see here it is a soggy day for risk sentiment. S&P off a little bit more than 0.5%. NASDAQ off a little bit more than a full percent. Rates down, so bonds are higher by about 0.3%. Crude oil storming higher, 3.5 There's a number of things going on here. Gold manages to finish the day with a very tenuous gain. So we were down quite a bit. We then fought our way all the way back to 0.25% rise. Obviously, put that in the context of yesterday's historic 5% decline. So obviously, what we've managed to do here is effectively stall. The euro basically not going anywhere, neither is the yen, so the dollar is idling today. But Bitcoin is, once again, doing its risk appetite on steroids thing, and in an environment where stocks are down, it is down more. So that seems to all be right with the world relationships-wise. And the rise in crude, an interesting thing. This seems like there was a variety of things that are on the menu here. There was some headlines about maybe India is going to dial back their imports of Russian crude in a bid to mend the relationship with the U.S. It's been a little bit feisty around the buying of Russian crude. Modi and U.S. President Donald Trump have had a little bit of a tense few months of conversation around it, but there were some headlines that maybe we're going to get to the other side of this thing and India is going to dial back, and we're going to, against that backdrop, get a little bit of a rise in price because, of course, Russian crude is sold at a tremendous discount because beggars can't be choosers. And when you're completely buffeted by sanctions, you got to sell to who's going to buy at the price that they'll buy at. So there was that story. There was the little bit that came out around maybe the U.S. is ready to buy a little bit more for the Strategic Petroleum Reserve, the Trump administration refilling that. So that may be added to the demand a little bit. And of course, the little tiny corner of economic data still reporting, the EIA numbers on weekly inventories gave us a decline of almost a million barrels, 0.96 million. So almost a million barrels out of inventory against expectations of a 1.2 million barrel build. So a surprising decline in U.S. oil stocks as in inventories, and the first decline in 4 weeks. So that sort of adding to the overall atmospherics here for crude. Of course, it was also at a critical level as far as positioning goes. Prices sold off back to levels that marked important bottoms in, let's call it the first half of April, and again at the beginning of May, right around that $56 figure on the WTI contract. And so all kinds of things coming together seemingly here to give us this bounce in crude. It's starting to close in on the 60 level again, which was the bottom of the range that we attempted to break and successfully cleared going into October. That's what got me short, a short that I'm out of as of this morning. And we'll see if that holds. And if we then have a new range to work with, perhaps somewhere between, let's call it 61, 62, and these new bottoms around 56 once again. But the really interesting bit here is perhaps elsewhere. And that, of course, is what this gold sell-off was all about, to begin with what it is and what it isn't. Because really looking at what it isn't seems to tell us not just about gold, but the broader markets too. So, was this some sort of a debasement trade gone into reverse? Obviously, there's been all kinds of chatter about there is this massive rally in gold. And what this is evidence of is the debasement of US dollar-based assets and of fiat-based assets in general, and a desire for gold as an alternative. It's a cute story, really. But unfortunately, for the people that are clinging to it, it doesn't seem to match reality. And the way we know that is we can look at where the bottom was in gold in, let's call it near the middle of August into early August. And we can see here's the gold rally. And here's how both long-term U.S. bonds, in this case, this is the ZB contract, the 30-year note. This is the DX contract, the dollar index future. Through that period, we can see the dollar actually gains, and so do bonds. So if there was a loss of confidence in U.S. dollar-based and generally U.S.-based assets, if this was a sovereign risk, a currency crisis, some sort of a debasement concern, what we would see is a parallel sell-off in the dollar and a parallel sell-off in U.S. treasuries. Because what we would be looking at then is capital fleeing fiat U.S. assets and going to gold. It's just not what's going on. In fact, it's even less so what's going on from this starting point. I just didn't want to cherry pick this for sort of evidence clarity. We wanted to go to the start of the move in gold, not the start of a move in another asset to sort of bias the evidence in favor of this argument. But if we look at right here, this is the Fed on the 17th of September. Since then, the dollar has gone up. And had we started at this inflection point where the dollar's move appeared to turn, we'd be looking at a more sizable advance than just 1%. But nevertheless, very clearly, these are not, first of all, adjacent. Gold is up, even with this latest sell-off, almost 13%, whereas the moves in bonds and the dollar have been much more constrained. Certainly no collapse there. And also, they're not even moving in the wrong direction. They're not even down on net through this move. So even if you wanted to make the argument, well, look, gold is jumpier, dollar and U.S. treasuries are much, much, much more liquid, and so they're not going to have the same kind of volatility. Well, they're not even going in an inverse direction. So it's very difficult to paint this as some sort of a debasement narrative, whether gold, by the way, is going up or down. Is it maybe something having to do with Fed policy? Well, that also seems unlikely. The likelihood of a October cut still approaching 100% in the high 90s, where it's been for at least a week and almost there going back a month. That's this right here, but at least a week. Same thing for the December meeting, fully baked in and has been for at least a week. So we certainly aren't seeing anything here that would suggest that there is the kind of Fed policy volatility that would give us these kinds of swings, again, up or down. Things have been just generally stayed here. We still, of course, have a disparity into next year, and that's giving us this interesting situation where the markets now have 73 basis points on the menu in cuts for next year, and about another 2 cuts. Obviously, the pricing is imperfect when you get into the dates of these futures contracts, but we can see here where essentially 40 basis points baked in, even at this sort of top-down view for this year. So that explains how we have, once we adjust for the meeting dates, the other two meetings, October and December, that we just looked at, approaching 100% likelihood. So that much is clear-cut. And in fact, the outlook for this year has been relatively steady. For next years, where we have volatility and the markets are much more dovish than the Fed, we can see the Fed is only forecasting one rate cut next year. But clearly, the markets have shown no appetite of substance to deal with this disparity, at least for now. It just keeps growing. And we can see that the outlook for this year has been steady through this adjustment. It's the outlook for next year that's on the move. That's how, over the course of this most recent move, from essentially a sort of late September peak in the wake of the Fed's move, that's right here, that's about September the 29th. Since then, over the course of now almost a month, we've become more dovish, and that's been because the 2026 outlook has been that. And that could be supportive for gold gains. But also, this hasn't exactly turned the other way to explain the gold losses. And it's certainly not anything that you might have expected to go down without notice for the dollar. And yet we can see, and we'll come back to this momentarily, but you can just see here immediately, as you've become more dovish, the dollar has nevertheless rallied. So the dollar just plainly does not care that the outlook for the Fed is becoming more dovish for next year. It's interestingly a similar story in stocks, which were rallying with an increasingly dovish perspective for months, going all the way back to where the post-Liberation Day kerfuffle and the correction thereafter petered out mid-May. That's right here. Since then, more dovish policy expectations have meant higher stocks until these most recent peaks in October, where you're getting more dovish on the outlook, but stocks can't do anything with it. So for whatever reason, this disparity continues and has widened, and no market seems to terribly mind this way or that. It certainly doesn't seem to be inspired toward anything. Risk sentiment dynamics appear to be either disconnected or looking at something else or doing something else. And if you were to look at the makeup of them, stocks have stopped rallying. The dollar is rising despite all of this, which seems to all suggest that there is a sort of risk-off flavor to what's going on. Now, if there is, how does that make sense with gold doing what it's doing? Well, it doesn't seem to. Unless you start looking at some of the more granular details. And this is where we start to look at the price action. So this massive decline that we saw this week, the last time we saw something like this was August 7th, 2020, over 5 years ago. That's the last time anything like this one-day sell-off occurred. Now, what's fascinating is that sell-off on the 7th capped a 9-day winning streak, or a 9-week winning streak, excuse me. Here, a winning streak that ran through the week starting August 3rd. Obviously, we can see here the week of August 3rd is where we get the 9th week of gains in this sequence. And then, by the end of that week, we get a massive sell-off that caps it. This is the same scenario. We've had exactly 9 weeks of gains here that we have now capped with a move like this. So this was the top in a 9-week advance. This was the top in a 9-week advance. And the last time we had either this kind of sell-off or a 9-week advance was this reference window 5 years back. Now, the last time that this happened, here was the peak. This is that week of August 3rd peak. And we can see until we got to what became a bottom, until this down move, series of lower highs and lower lows, worked its way down, found a bottom, and then started to do something else, we saw a decline of 19.2%. At the prices that were there at the time, that amounted to a decline of $398.23. If we look at what that would look like here, both in terms of dollars and in terms of percentage change. If it was in terms of dollars, then we've run the move. I mean, essentially, this week, the sell-off has given us the $398 sell. But in this environment, prices are obviously much higher than they were 5 years ago. This is a 9% decline, not a 19% decline. If you were to look at this in percentage terms and look at it in terms of magnitude of swing relative to the price as it stands, not in dollar terms, then we're not nearly done yet on this sell-off if we follow these same dynamics. Then we get a 19.2% decline. That ends up being an $840, almost $841 decline, which tellingly takes us right here within striking distance of this range top right around the 3,600 level, give or take. And so it could be that what this is a pullback to retest this before we sort of attempt to figure out what's going on. Now, why is this occurring? Well, if it's not the debasement move, if it's not anything to do with Fed policy, it may very well be the same kind of thematic dynamic that we are seeing here and here, which is to say maybe we've just reached a price extreme. Stocks can't rally on Fed rate cut expectations building, though they had. And so perhaps we're running out of steam on that. Perhaps we've reached a kind of speculative wall. The dollar was selling off on things getting more dovish and can't anymore, and hasn't in fact set a lower low since July. Again, maybe we've reached a speculative wall where everybody that wanted to have this exposure either has it or is already on the way out. And so perhaps what's going on here with gold and these wild swings isn't anything at the macro level at all, and is just a market that hit a record high, not unlike the S&P or the NASDAQ. Dollar didn't hit a record low, but it certainly had a record-setting sell-off in the first 6 months of the year. And maybe these moves are just out of gas, and speculative interest in them has dried up. And so we're turning. And that would perhaps give us more interest in considering this dynamic, if in fact things are just getting started on what is a sort of speculative reset. As far as data is concerned, we got a little bit from the UK. Inflation numbers came in softer than expected overnight. We're going to get Japanese numbers coming in, so they basically bracket our calendar here as we go into U.S. inflation numbers on Friday. Special release even amid the shutdown. We'll talk about that in exhaustive detail on tomorrow's show. You can see here the thing we end up with is UK inflation holding unchanged for a third consecutive month at 3.8%. That's obviously after a spirited rise, and we can see the expectation was actually that we'd go all the way up to 4%, and we didn't. So a little bit soggier here, but because the surprise factor was on the downside, the pound weakened a little, but ultimately, since there isn't really a downtick here as much, doesn't seem like we could make a tremendous amount of hay out of it, and so the pound is ultimately a little changed, as is most of the anti-dollar universe. On the earnings front, Tesla came out a little bit better than expected on EPS. That's the last big earnings release for the week. Obviously, there are a gazillion others. The calendar for tomorrow and for Friday is still very thick, but we can just look at the market cap here. Obviously, Netflix was another big one, about $500 billion there. We can see that there's just not this kind of heft in a lot of these other names. Not surprisingly, everything is locked up in the Magnificent Seven, and so the next time we have to care about earnings is probably next week when the next batch of big tech names comes across the wires. Positioning-wise, going into the overnight here, I'm still long the dollar since it seems to have stopped falling even in response to a dovish Fed expectations. I'm a little bit short gold here, looking more so for vol extraction than anything directional, but I'm short a call vertical, and we'll see how that goes. Obviously, I'm biased toward this speculative excess around markets unwinding across assets and gold being a part of that story. And so I'm biased short by selling calls, but because I'm short premium here, it would be just fine if vol just came out of it. Also, since we're looking for that kind of a correction in risk taking, I'm still short some risk on stalwarts, S&P, NASDAQ, Bitcoin, which has been soggier than the stock indexes and is attempting to take out its range bottom, and still long the bonds, which are begrudgingly cruising higher, especially at the long end. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I usually co-host with Dylan Ragan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Likewise, writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
All right, we're back. It's the Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, Dan, aka Cess, C-E-S-S. Dan, what's the origin of the screen name? If you don't mind me asking.
No, yeah, my last name's Cecilia.
Okay.
And I think people just shortened it to Cess, like Cecilia, kind of emphasizing the beginning of it. So I just ran with it.
I like it.
Yeah.
It works.
Okay.
Yeah.
All right.
How you doing?
I'm doing good. I'm glad to be back. It's been a minute. How are you doing?
I'm a little scratchy, honestly. This is getting a bit out of control. And it's not looking good for me either. So I don't know. I don't think I'm going to shave until ETH gets to 10K.
Okay.
And given at least what I'm seeing at the moment, a little bit of a flush here after the market, I guess when we say the market, traditional equities markets and other assets have closed. Crypto's 24/7. But into the close here, got a little bit of downside action.
Yeah, we've been in this really weird choppy range between 115 and 105 really. I don't know what that signals other than other things are going on in the market, and we just kind of have this kind of weird trading range. I bought a little bit last week at 106. We pumped briefly yesterday, I think. We had that brief pump to 113.
Yeah, you had the Fed's conference, digital asset innovation, blah, 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 I believe. And some interesting developments coming from that. And so maybe that was where the pump was, but quickly sold off. You read into that anything?
No, because I think this market in general, because it's smaller, it's certainly affected by macro. It's certainly affected by the news in traditional markets. But I also think because it's a global market, because there's a lot of leverage in the system, you can get long 50x on perpetual futures. You see these random pumps and then kind of flash crashes. So it's just there's weird idiosyncrasies in the Bitcoin market and in some of the crypto markets. I was listening to some research analysts today, and they were talking about what happened back in October 10th, this huge liquidation, and they're saying that it's still going to take a few weeks to see what firms are going to get carried out because there was such a huge leverage flush. So maybe there's this weird choppy range because there's still more to come. Maybe we get a Trump tweet and we spike back up to 120.
Never know with those Trump tweets.
Right. But I think it's indicative of where we are in the cycle too, and what this market is saying. It's we're just choppy, and this is the hardest time because you want to do something, but I don't think you can do anything. I think there's only one thing to do, and that's buy some of this weakness.
I love it. There's only one thing to do. Buy the dip.
Buy the dip.
I suppose. Just taking a look at where we are right now. So 107 and change, weaker here at the moment. You go back to those liquidations you talked about back on that Friday. What was it? I don't know, the 18th,
October 9th.
Or whenever.
Yeah.
I don't know what the date was. But yeah, a couple of weeks ago, we had the unwind in the perpetual futures market. You saw a ton of volatility going into the weekend there. And we're kind of trading back towards the bottom of that range. You can see here, just put the line on the chart. 103, a little bit above 103 is that area that we'd be looking at there. Volatility has come up quite a bit. So implied vol in Bitcoin right now, I've got that at over 50%, almost 51%. which if we go back to just recently, I mean, the beginning of the month prior to blasting off, hitting all-time highs. That's what's kind of crazy about it too, right? The volatility, and you kind of become like just immune to it, numb to it, I suppose, over time. But we're talking about this as if I saw something from Standard Charter. It was like, it's going to go under 100,000. It's the last time ever to buy it under 100,000. 3 weeks ago, it was at an all-time high. People were just jubilant.
I know.
And, here today, it's doom and gloom, and we're worried that we're going to slip back underneath 100,000. That said, your one standard deviation range in here is 101 to 116. So, pretty wide.
Well, I also want to call out, you have the ranges, you track some of the trading volatility on Bitcoin, but if you can go to my screen real quick, I like tracking this BVIV, this Bitcoin Volatility Index, basically the VIX for Bitcoin, right? And I remember I first started tracking this. It hit right around the beginning of end of September, beginning of October, where we were looking at the Bitcoin volatility, 30-day Bitcoin volatility was between 36 and 38. We're up at 52 right now. So I think there is heightened. I think that is a signal in the market that like we're chopping. There might be some good intraday moves to catch in this, but this is like the highest volatility we've had since the start of the year.
Yeah,
I'm looking at a 1 year chart here, by the way. So
we were at 1 year lows just prior to this, right? And quite often that's what you see. You get to a point where that spring is coiled and then you bounce back, but really nowhere near those highs either.
Right.
So to that point, I think you'll probably see, or typically you see those highs more so when the market's ripping to the upside and you get that bid-in calls and people kind of have that FOMO. But we'll see if it in fact does kind of move higher on a drawdown. I mean, if you go back to April or so, and that's when I think we bottomed out around 75,000, you did have a spike in volatility. So it's not always just positively correlated in terms of price and vol, but that is what we often kind of observe. I mean, again, in this environment, you should expect, as you mentioned, you're going to get some chop. You're going to get much bigger swings. Even when we look at the 1 week expected move, we're 7, almost 8,000 now versus 5,000 not too long ago at those lower volatility levels. So you're buying the dip. Is it fair to put words in your mouth? And Dan, you're stepping in here.
Yeah,
I
think that 100K level is something you got to watch. Again, we do this market. There's periods of massive drawdowns, right, on the way to 150, whatever. Like this, there's
the stars.
Yeah, like so. I think you have to be paying attention here. I'm not necessarily buying at 107, but I think if we get below like 105, maybe like closer to 100, I might step in and start buying a little bit, maybe 3,400 on ETH, 150 on Sol. But again, I just think we're in this choppy, like coiled spring. Like you could just see it on the chart here, the VIX, the Bitcoin VIX, BVIV, 30-day Bitcoin implied volatility. Kind of, we were trending lower and then boom, spike up. So I'm paying attention. Maybe I'll buy a little bit. Maybe I'll go and buy a little bit right now. I'll eat my words. I'll just buy, it might be,
I haven't done much in the last couple of weeks since we got that flush.
Okay.
I did buy some ETH. I bought some Tau, which I'd love to get your thoughts on in a second.
Oh, we can get
some
into that.
Solana. Okay, yeah, let's talk about that. I've been selling puts in ETH, and my position is growing in losses at the moment, unfortunately. So at the bottom of the screen here, we can put it at the top.
Let's go over to Ryan's screen for a sec.
Yeah, I think we got it up there now.
Okay.
But yeah, so I've got I'm carrying some positive delta in ETH, but that's continuing to move lower as well, unfortunately. I've got a bid at 28.17 versus the last price of 28.75 on the close. So this is not 24/7 where crypto is, but this has given me the opportunity to sell some puts in there. So you can see, a decent amount of stuff that I'm kind of racking up. I will take assignment of those and maybe sell calls against some of it, but I'm putting the trade on. I do think that there is some time left to this cycle. I do think that you'll see a new all-time high in ETH, but again, you got to trade the market that's in front of you here, and we've got some volatility. We've got a momentum unwind in a handful of different names. We obviously saw the massive move in metals. We don't often see much of a positive correlation between gold and Bitcoin, even though we often will describe Bitcoin as digital gold. But we are seeing a very strong positive correlation between equities, whether that's the S&P 500 or the NASDAQ, and Bitcoin over a very short time frame. So if we look at the last 3 weeks or so, the correlation in there is about 0.8. So 80% of the time or so moving in the same direction, both up and down. I don't think that's going to hold, but long run, it's about 0.4. So something to keep an eye on. I'm also stepping in, buying the dip, but again, has been in ETH, have been doing some risk reversals following the show with Greg in IBIT, but haven't gone back into the spot market just yet. Might add a little bit. We'll see.
I really like that Greg trade that he's always pitched, where it was selling the heightened implied volatility on MicroStrategy and then financing the risk, financing that deltas on ETH. Because his logic was that realized vol on MicroStrategy always is lower than implied. So you do that like 30, 60 days out and finance ETH, which he was bullish on, which we didn't really get to that 5,000 mark that he was claiming we would. But
yet.
I do have some comments from the chat. You think this is from Edward. You think it's a weird 4-year cycle. Yeah, I mean, I don't know. I think each cycle things get bigger, new participants come in. Hard to say all markets are the same, but I don't know. It has been a weird 4-year cycle. I feel like in past cycles, altcoins would run and all of these altcoins would run, and this cycle and I think that's due to a couple reasons. I think it's the institutions, I think it's the ETFs coming in, that dampening effect from MicroStrategy, some of these DATs. And then I think there's more applications, there's more chains, there's more money. So there's pockets that you need to focus on versus like everything rips, right? Because typically you'd see that rotation. Bitcoin goes to all-time highs. You see that rotation into like Dogecoin or like these alts that are like have been around. But I don't think I haven't seen that, right? I think
yet. Yeah. So I guess that's my question then, right? So to Edward's point here in the chat, and if you're not in the chat, get over to the tastylive YouTube channel and we'll pop out the chat, type some crazy shit in the chat, or a question, I suppose. When we think about a weird 4-year cycle, are we talking about something where it's shorter than we might expect? Or are we talking about something that's elongated, right? Because if that's the question, that it's shorter, like that we've topped, right? 126 was it in Bitcoin. You got 4,900 or so, close to 5-ish in ETH, and it's all over. And we should be selling here, or are we, looking at this and thinking about this as like it's going to be extended versus what we've seen? And it is tough because you don't have that much data to go off of, right? This stuff hasn't been around that long. We use the post-halving cycle, the 4-year period, as a measurement, but you only have a few of those. I tend to think that you could see an extended cycle. That's due to some of the broader like regulatory catalysts, right? The shift in terms of the U.S. government's approach to this, the adoption by institutions and those flows into ETFs. And what I mean by that is you have investors now in this space that typically allocate capital on a much longer time frame, right? They're not as finicky. They're not like probably you and me, Dan, where we're trading a little bit more frequently. Large institutions are probably less likely to trade as often as us or other retail investors that primarily made up the majority of participants kind of in those earlier cycles. I think a lot of it's dependent on liquidity too. But I guess that's my question. Back to Edward, it's like, is this, are you referring to this as a shorter in nature or elongated in it being weird? I'm just of the view you haven't seen it yet, right? And the other thing that you do often see, at least in past cycles, is you've had this kind of run up, pull back, and then at the later stage of that where you do, and it might not last that long. It could be 6 weeks, couple of months, but you just get this absolute ripper. Same thing that you see, that blow off top in other assets, in equities, but you've quite often have seen that recently, right? You go back to, well, not so much recently, but you go back to 2017. I mean, it made the move, and then it made the move.
Right. Right.
And a lot of people got out, like, made good money, and then watched it go up another $10,000.
Yeah.
And I'm talking about Bitcoin here.
Yeah, because I think more than anything, the reflexivity of this asset class, that's what happens, right? Like, especially in the later stages of these markets. I also think about how 2021, 2022, you had it hits 60,000, draws down to 30 on its way back up to 65. So like that's where I talk about, and we had this back in I think April, right? April. Kind of hits 100,000, 110,000.
Pulls back about 20, 30%.
Yeah, and then on its way to 125.
Yep.
So that's where I'm like, this market is tough because if you're if you are at mercy of these swings, you'd get shaken out instead of just kind of trusting where we are and understanding that there's a lot of leverage that gets built up too, right? That unwind back in second week of October, that was people going super long perps. That wasn't like some massive macro unwind, right? Like I know Trump sent out some tweets and we had some tariff stuff and that's always going to affect it. But yeah, like there you go. I mean,
yeah, so that's the recent move here going into that liquidation
is what?
A couple weeks ago, but that was about, call it 20%.
20%, yeah.
Off of the high.
You just get that in this market, right? And instead of calling for tops or being like it's dead, just if you want to get involved, be ready to buy this weakness, right? And I think that 100,000 level is where I'd look on Bitcoin, right?
If we go underneath 100,000, people are going to lose it.
Yeah.
And then if it does bounce in hindsight, you'll be like, oh my God, I should have bought it, right? That's the same thing with 75 to 126.
Yeah. But
the time though.
I think I've talked with you about this though. It's like, sure, there's a couple times where I'd take a trade and it'd be a short-term trade, or it'd be like, I think even I would take out some leverage and do perps. But I'm okay owning Bitcoin under 100K. And like, I'd start buying, right? 90 hits 80. I'm okay holding it for a little while. So I think that's
what's your time frame for everybody? Because we've been in this space for a long time, and I can remember when I first got into it, when I was talking to other people about this and trying to explain to them at the very least like why I'm in it. It was always like, okay, it's a 5 to 10 year trade, right? And those 5 years have since passed. But when you think about it today, if you could buy Bitcoin underneath 100,000, what's your time frame then in terms of holding that as like an investment?
I think closer to 10 years.
Yeah.
Bitcoin, right? Because I think that's Bitcoin to me in my portfolio. It mimics gold with more volatility maybe, but like I don't, I always look at it like I don't necessarily need that money. Right? If I need the money to do things in my life or make investments or whatever, then I'm probably not buying this asset class. So like,
right, yeah, this is kind of a store of wealth.
Right, for me, Bitcoin is
very volatile store of wealth.
But there's other things in the space. Since I'm in it all day, I know how to use wallets. I know how to move money on chain. I know how to use stable coins. And maybe some of our viewers don't. If you want to learn, Shelly and I do that on Friday. We could teach you. But there's other things where it's like, I know the narrative. I know where the hot ball of money is going in this space on chain. I can follow that. And that's where I'm shorter term, kind of like getting in and out, riding up coin narratives, random pockets. The AI trade was a big one. There were some meme coins you could catch. I just did one called Punk Strategy, which, we can get into this, but it was tied to, it was a mechanism that somebody launched with a token tied to CryptoPunks, which are the most valuable NFTs. So, you're hitting these pockets of wealthy on-chain investor, wealthy crypto investors that hold these assets. They have money. They're going to pump this thing. You can front run those narratives and make sure, that was like a 30-day long trade, a couple week long trade. And I can pull it up here.
But when you think about Bitcoin, definitely longer time horizon, you're probably less prone to trade that.
Right.
Okay.
And I don't I don't necessarily think it's bad to, sit there and say, okay, the thing went up from, I got in at 60, 30, whatever, a couple years ago, and it goes up to 125. Like, you can take 20% off the table. You can take profits, right? I'm not saying don't take profits, but what I am saying is, like, I'm comfortable if it draws down 30%. I'm comfortable holding it and buying more if it goes under 100K, 90K, because it's not going, it's a store of wealth in my portfolio. It's digital gold. Like, that's the narrative I'm following. That's what I believe. I'm okay holding it for 10 years.
Has the attributes of a long duration tech stock is explained probably best using the digital gold analogy.
Right.
But you have to have that long-term time horizon.
Right. Now, there's some pockets of risk that you could always sort of take a look at, right? Like the thing that you've talked about with me about gold, how people think it's a commodity, but it trades like a currency.
Yeah, I think you probably should view it as a currency. It'll be categorized as a commodity in most people's minds, but it, in terms of what drives it, interest rates largely are the main factor.
Right.
It's a currency, in my opinion.
Right. But the thing about Bitcoin, because it is digital, it's divisible in some ways. It can be wrapped, it can be encoded, it can be bridged. There are these products popping up that financialize it in some way. You can borrow against it in a protocol, right? Like you can they call it wrapped Bitcoin. You can financialize Bitcoin in some ways. Michael Saylor is doing that with MicroStrategy, right? So
I think it's only going to play a bigger
right.
part in all of that as this becomes, the world becomes more and more digital. It's not going the other way.
Right, exactly. So like, I guess I'm okay betting on that 10-year time frame, knowing like I'll pick it up under 100. I'll take my 30, 40% drawdowns on its way to $500,000 mil, right? But that's because that's the part of my portfolio I'm comfortable with, right?
Well, I think that's the key point. You're looking at this as an investment. It's not necessarily a short-term trade. Obviously, it presents short-term trading opportunities like anything else, but you're putting a portion of your portfolio, not all of it, but a portion of it in this, holding it long-term. And I think that some people struggle with that when they look at it, right? There's this short-termism, and they look at the recent move, and they'll argue that that's not a store of value. It's way too volatile. It just went from 126% to 100,000, or 126,000 to 100,000. You guys are idiots, right?
Yeah.
But if you've been in this, and the longer that you are in it, which doesn't make it, it doesn't mean that it's going to trade like this forever. But given some of the characteristics of it, given that it is largely driven by liquidity on the margin, and arguably we're going to continue to see the debasement of fiat currencies, and it's global, it's digital, it's accessible, et cetera, right? There is a pretty strong case, and I think the longer you've been in it, you look at the returns, you become much more comfortable in it as well. This is one of the best, if not the best performing asset of the last decade.
Right. Right.
Like, I don't know if I have it up in front of me right here. Let me see if I can get the, sure. It's down a little bit here today, but, last year, I want to say it was the best performing asset.
Yeah.
Doesn't mean that there aren't areas where there's other opportunities. It doesn't mean that the equity market isn't going to go up or, it did. It's just, this has worked pretty well. Maybe it's going to have a couple down years, but if you have that longer term time horizon, I think probably looking for an opportunity if this does go under 100. I don't want it to, but I'll buy it under there.
Well, I think that's like if you were not paying attention, you hear it hits all-time highs, you hear about, all this stuff, you pay attention when it hits all-time highs and then it goes below 100K instead of, I don't know, if you want to participate in the market, this type of asset class, like that's a buying opportunity, or at least should be signaling to you that you're getting it on a discount relative to where it's been the last couple years. Now, could it touch 70 again? Could it touch 80 again? Sure. But I think that is a bigger, that move down to like 70, really, really a big drawdown, to your point, is macro driven.
Yes.
I think, yeah.
And I think you would have some signals that could probably get you out, right? If you're looking at this as a trade, those sorts of moves, to your point as well, I mean, that's the growth is collapsing. Inflation, disinflation is what's being reported. And granted, the government's been shut down for, I want to say, like the second longest period on record. Maybe I'm off there. But for a while now, it feels. We haven't had any of that data reported, but I don't think when it's reported, it's going to be all that disinflationary. That doesn't seem to be the read in terms of most of the forecasts.
Right.
And so my point is, it doesn't appear that we are currently, given what has been reported, in an environment where it's all that bearish, right? In terms of where you might get those larger moves. And that would impact the NASDAQ. That would have a large impact on risk assets as a whole. So that said, Dan, we're about to wrap up here. You trading anything else at the moment? I've been pretty active over the last month. Been able to jump back into it.
Honestly, me, no, not really. But I know you've been doing a lot with commodities, metals.
Yeah, the metals trade has been fun, right? You've got a ton of volatility in there. Been in platinum now, long platinum, some gold miners, trading in and out of silver. Crude oil is starting to become a little bit more interesting to me. We don't have the signal just yet. I do track this from kind of a momentum perspective, but nice move here today. We'll see if it has legs. You've got some headlines, I think, related to big sanctions on Russia. So we'll see. That could have an impact on crude oil. Kind of globally, you're seeing oil trading closer to 60 right now on that front month contract. So that's one that I've got an eye on. And then the other trade that I've just been kind of trading around, I suppose, building more of a position in there over time, has been related to uranium, some miners in there. There's some ETFs, so small scale nuclear reactors people are familiar with. SMR is NuScale. You got Oklo, I think, is obviously another one that's been quite volatile.
That's one that I wrote up from like $20, $30 back in May.
Nice trade.
Yeah.
I think that's going to continue, right? Again, in my opinion,
it pulled back a lot today. I think it was down like 15. I don't know.
Let's take a look at that real quick. Yeah. Back down to where we were at the beginning of the month, trading a lot like crypto.
Yes.
100 to 190 and back.
that is 100% a crypto chart right there. Real quick though,
would you step back in here at 110, 100? Sell a put spread underneath?
Maybe. I don't know. I had such a good trade. I feel like I should just take my profits like that. Have you looked into this company at all?
Not really.
They're not even going to have a nuclear reactor online until 2027. So a lot of this is driven by narrative and hype. And, I think there is some bullish signs there around the Department of Energy gave them a contract. But I just these are the type of stocks that things get a little bit ahead of, in my opinion, they get a little bit ahead of where.
Yeah, absolutely. It's a profitless tech company essentially,
yeah.
Right? Yeah, so I guess I shouldn't say I haven't looked into it. I'm familiar with the space and the theme to that extent, and there's an argument around how it might be a little bubbly and overvalued they are, but from like a trading perspective, love the volatility in there. And these sorts of moves where you come off of 190 back down to, call it 100, not quite there, 120, you're going to see those puts get pretty rich on that, and you can go kind of far out and sell some downside volatility there if you want. But yeah, I think the trade, still is one in which this chops. It's not just straight down from here.
I know that's kind of the thing with these crypto markets is periods of chop and then exponential moves up or sometimes down. So I don't know. Hold on. Real quick, Juan. Real quick. Have you looked at prediction markets? This goes out to the chat too. Does anyone look at Pi Market? That's something I really want to dig into because I know there's some.
Start to do more of that.
Yeah, we really should hit that next show that we do because there's some interesting stuff there, right?
I like the market for will the U.S. government admit aliens are real, right? Yeah. It trades at a 4% yield if you want to put that on, right? I guess like there's some negative convexity to it. I guess the government could come out and say the aliens are real, but you can bet on that not happening and generate effectively a 4% yield. I think it's 96 cents, 4 cents. So it's not like it's zero.
Right.
Which is amazing. We should take a look at that.
We should. I'm going to go to Polymarket really quick.
The one other thing you just mentioned in the chat, then we got to wrap up for these guys too, but you mentioned in the chat, decades away. I agree in the sense that like you think about the relationship between the AI data centers, the power that's required, and to some extent this relates to crypto, but more so AI and the power requirements over time. And everyone kind of points to, okay, we're going to put these small scale nuclear reactors right next to these things, and this is what's going to power it. But that still has a bit of a tail. The bridge fuel in between, in my opinion, is natural gas. And so that's another area that we can get into on this show. When you look at natural gas infrastructure, you look at some of the ways that you can play that. GEV is the ticker that I'm interested in. But we can talk about that in more detail later on. But that said, what do you got real quick for Polymarket?
Will the U.S. confirm that aliens exist in 2025? Yeah, there we go. You could buy it, yes, for 4.4 cents. That might be one to take a flyer on.
Or you can sell it and generate 4% there, 4 cents.
Wait, what do you mean sell it?
So you sell it, you are taking the other side of that bet.
Oh, no.
You get if it's no, when it expires, whenever that is, you get the 4 cents, right?
Oh, in 2025. Okay.
Yeah.
I mean, we should just this is $1,000 to win.
I don't know, right? Like I guess my point is just if you think about it as like a yield, right? There is some risk, I guess.
Okay, here's another one.
But you're going to generate that $43 by putting up the 1,000 on whether or not the U.S. is going to admit that aliens are real. Like maybe in a couple months.
Yeah.
I don't mean crazy stuff is happening.
Also, when will the government shutdown end? I like this one too. I like the.
See, there's good information in this.
Yeah,
too,
that's
right?
what I'm trying to say. Is like, and it is crypto in some ways. Like, it is backed by crypto. There's crypto infrastructure building this. It's not necessarily a token, but we this is something we'll have to hit. I think this is something we should get into. But I don't know if anyone has any interesting Polymarket prediction markets that they want us to cover. We can take a look. We'll keep doing that. But November 4th through 7th, I think this November, early November is a good bet.
Okay.
I have no insight into this or really even know kind of how the government is going to determine this, but I don't know.
It'll never reopen. This is it, man. Yeah. All right, Dan, thanks as always for coming on the show. Thank you all for popping in the chat here. Pretty active today. Love to see it. Shout out to E-Media, Big Deal Donuts, Edward, what up, Flower Power, gang's all here. Grumpy Mike, of course. Nice to see you. We'll be back. What's today? Wednesday. We'll be back next Monday, I think, if they let us back on air. We'll be back Monday. Until then, I'm Ryan.
I'm Dan.
Peace.